theme music. Let's go.
Let's do it.
Our leading story. Breaking news.
Breaking
Across the wire. Our leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's March the 27th. This is part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
So ready.
Yeah. Hey, Barclays is the latest Wall Street bank to slash its outlook on stocks. Had a nice little reversal in the day, started up, and then things just went swiftly lower. S&P's down around, 68, 69, 70, like yesterday into the close.
We closed at 57.50 or 57.56 or something.
Yes.
Yeah, I have 57.50.
So I was gonna wait before I get to that. So Barclays slashed their 2025 S&P price target to 5,900 from 6,600. Again, this is out to the end of the year. The estimate reflects Barclays' expectation that S&P 500 companies will have reduced earnings power, but more importantly, we don't care about Barclays. We care about Tom Sosnoff's end of the quarter prediction. The game is gonna end on Monday, and what's your number?
Right here.
Really?
Literally.
Wow. Mr. Tom Sosnoff, everybody.
If we stay here, I win.
Julia, did you put in a number? Do you participate? I think the whole thing's rigged, so I do not participate.
How can it be rigged?
Because you're winning. I don't know. It's just rigged. It just is. I don't know.
It's not rigged.
I actually say the same thing. I think
And I can't win, so I have to let the next closest person win.
Well, tune in to Monday's show because we will name a viewer who will have been our Q1 winner. So stay.
Actually, tomorrow we'll tell you. We're not going to.
It's Monday.
No, I know, but tomorrow we'll tell you who's in the running.
Oh, okay, great. We will find out. Hey, the other thing kind of driving market activity and action today is that President Donald Trump yesterday said he's going to impose a 25% tariff on all cars that are not made in the United States. Auto stocks fell in after-hours trading following the announcement. In 2024, America imported $219 billion worth of cars. That's a lot of autos. So we will see what happens. What did you make of the tape action yesterday and the reversal?
I mean, I don't understand this at all. I think it's one of the dumbest moves ever made by a U.S. president. I don't know what else to say.
Well, I'm glad I have my Toyota RAV4 already.
I think that RAV4 is made in the U.S. anyway.
It maybe parts of it. I'm not sure like what percentage because I know some, but some of the parts like not 100% of
That's
it.
what I was gonna say. It's also on the part, so it has to be completely in the United States.
Conceptually, is, I mean, the level of stupidity is.
Well,
you can't quantify it.
We will see what happens, but just gonna keep it moving. In other news, this is fun. Every day is just a joy, just doing financial news because it's just like what's gonna happen today. President Trump said he may have a chance on the table for China to reduce their tariffs if they just give America TikTok. Yeah, this is a real thing said by the leader.
Well, China doesn't own TikTok.
He says, maybe I'll give them a little reduction in tariffs or something to get it done. TikTok is big, very big, it's huge. But every point in tariffs is worth more than TikTok. He also said it was possible to extend the TikTok deadline again. What do you make of this?
TikTok's not going anywhere. It never was. It never will. It never was.
Again, the law was passed.
It went down for 2 hours.
Yeah.
Nobody... The biggest donors to Trump are all the largest shareholders of TikTok. There's no chance TikTok goes anywhere. And I don't want TikTok.
But why would TikTok give up the majority of its equity and its algorithm to America?
They're not.
Isn't that the terms of the sale?
No.
What are the terms of the sale then? Lay them out for me then.
There is no terms of a sale.
There are terms of a sale.
TikTok hasn't agreed to anything.
That's what I'm saying.
Yeah, so TikTok hasn't agreed to this.
But I'm saying what America is asking
This
for.
is what Trump's asking for.
Okay.
Trump's not smart enough to make a deal like this. One of his
No, I'm just saying
one of his lackeys is feeding information into his ear. This is this goes in the list of the dumbest things a U.S. president's ever done. Just forget about it. Let's move on.
All right. What are you doing in China, though? Can we talk about China, or I'm not allowed to talk about that?
Nothing. I mean, we have positions on in Baba Baidu, PDD, Kweb.
No FXI?
No.
Up a little tiny smidgen
They're we're just short premium across the board.
Okay. The CME Group is testing Google's cloud blockchain technology as they seek to improve market infrastructure amid the global shift towards round-the-clock trading. They're piloting payment solutions and the tokenization of assets using a distributed ledger from Google Cloud.
Yeah, I think it's a smart move by the CME. I don't know how close we are to actually implementing something like this, but I like the fact that the CME is ahead of everybody else in this regard.
Okay.
And, the problem is these are all futures, but we like where the CME is going with this. And because we fundamentally believe in the tokenization of different commodities and asset classes.
CME is one of the first U.S. exchanges to test this technology. So
yes, and I think it's a really positive step in the right direction.
Julie, what's Google doing this morning?
It's doing a whole lot of nothing.
Google.
It's doing a whole lot of nothing. It's interesting. I wonder, do you think this would make markets a little bit more resilient, technologically? Because it's decentralized, right? It's dispersed over a large number of nodes.
That this would have two advantages if it ever comes to fruition. Number one is that it would have to reduce costs. It just has to reduce costs because it's cheaper. And number two is that, at least to get the quotes and everything out there. But number two is that it allows the CME to compete on basically any product, any commodity product, anywhere in the world, any futures product, and offer it to especially to retail customers like us. I don't see any downside to this. I think it's gonna be great.
Okay. Cool. Wonderful. Hey, in other news, Trump's SEC pick pledges rational crypto regulations. Paul Atkins, the pick to run the Securities and Exchange Commission, said that regulations under his leadership and tenure would benefit the crypto sector and would prevent politics from stifling capital formation.
I mean, if that's true, that's a good thing for all of us.
It is a good thing.
I think so too.
Okay, hold on. It's a good thing. What that means is, what is rational crypto regulations? Does rational crypto regulations mean we all have to support a Trump stablecoin? Does rational crypto regulations mean that anybody can launch meme coins? Or does rational crypto regulations...
It means anyone who donates gets the charges dropped against them.
Or does it mean that rational crypto regulations means that consumers can participate in the markets and derivatives markets, derivatives of crypto and everything else?
I think it's a little from column A, a little from column B, and a little from column C.
It really depends. I hope by pledging rational crypto regulations, it means fairness for everybody.
Is the market telling you, though, that it doesn't think that this will be the case? Is that why it's selling? I'm just asking. I don't know.
Well, I mean, if you look at
what is it pricing in?
Crypto's dead. It's right at 85,000, 86,000. Bitcoin is, and all the other digital assets are right in the middle of their range. But stocks like Coinbase and MSTR and things like that are all kind of on the low end of their range.
Yes.
So I would say that they're losing a lot of the premium. So a lot of the regulatory premium that had been pumped in prior is gone now. So I don't know. I think things are probably fairly priced.
Okay.
Fairly priced, and the market seems unconvinced.
Definitely unconvinced.
It's completely unconvinced. Yeah.
Let's put it this way: there's not a lot of, there hasn't been a pickup in buying. That's for sure.
What are coin and strategy? It's so weird calling it that.
Doing this strategy.
Coin's down $1. It's nothing.
Okay.
Strategy is down a bit more.
I guess we throw GME, GameStop in there now too, because they are also a synthetic crypto play.
Well, they're down $2 now, but they also had a really big move yesterday.
Yes, they did. I know. I'm just being cheeky. I'm just being cheeky. Hey, congratulations, because bonus season on Wall Street runs through March, and based on estimates released yesterday, it's been a lucrative start to spring for the more than 200,000 people working for New York City-based securities firms. Their total bonus pool was up 34% from last year, with a record $47.5 billion. Your girl's headed to New York next week, so finance bros. No, what are your, because I'm going to contrast that then with my next story, going to the next one here, is that Wall Street job cuts loom as market turmoil stalls deals. So I was like, why are you making giant pools of almost $50 billion of bonuses, and now you're going to now have to also lay off thousands of people? It seems like one could fix the other, no?
Well, the problem is that the investment banking business,
Yes.
since Trump won, has died.
Why?
A couple.
Because there's less regulation, like there's more IPOs and stuff, right?
But no, there's a lot. Everything's died. It's actually down, I think, by almost 9%, which is a huge.
It's down a lot, yeah. And there's a lot of uncertainty.
The reason is
right
that a lot of foreign countries now, a lot of non-U.S. buyers,
Sure,
have backed off.
that's true. That does.
And
that
so
does
because
make
they're
sense.
pissed.
How about this, though? Wall Street banks like JP Morgan, Bank of America, Goldman Sachs have already begun their announcing, plans for culling the herd, as you like to say. But these big bank stocks are going to be the first to kick off earnings in just a couple weeks now. What are you thinking or doing in bank
It really
earnings?
depends on what implied volatility is. Because right now, I mean, we just have to see. It's
Okay.
too early.
Vol is high right now in all of these, but it kind of falls in a funky time. The expiration cycles, April 11th, for example, is when Wells Fargo reports.
Okay.
I kind of wouldn't expect any of the concerns around like the new administration and their policies to
Sure.
impact this earnings cycle. So
Sure,
most
sure.
likely hit next earnings cycle
Sure,
anyway.
that makes sense.
But yeah, we've just seen a lot of uncertainty around financials, and any kind of optimism die pretty quickly once we actually.
There's just not a lot of deals. The only thing killing all these banks right now is there's no deals.
Sure, need the M&A and the TNA. Got to get in there. No, okay. Coreweave, the cloud computing group that is seeking to launch a blockbuster $32 billion IPO tomorrow, violated several key terms of a $7.6 billion loan last year, triggering a series of defaults. All this information came out yesterday as they do their IPO roadshow. So they're basically just going around being like, okay, guys, so what happened was we needed all this money, but then we just straight up violated all the terms that the money was given to us. But then it was cool, but we just have to tell you. Okay, thanks, bye. No? Okay.
We don't.
Coreweave didn't miss any payments under the loan facility, but they made a slew of serious administrative errors. Is this cause for concern?
This is giving me like SMCI
It's not even public
vibes.
yet.
No, I know, that's what I'm saying though. Like, but they haven't even gone public. But then they're already saying like, hey, we couldn't even adhere to these contractual standards,
Yeah,
and
I
maybe
mean,
our accounting got a little wonky. But they're not even public yet.
Who cares?
Well,
They're not public. We can't even trade it. I mean, who cares?
I know, but shouldn't like if you?
Shouldn't what?
Why are you so sassy today?
Just ask you a question.
They are
Shouldn't what?
significantly tied to NVIDIA business risk wise, so there's some diluted exposure in there.
Well, no, if you're just getting like a whiff of like a Nikola company, like some sort of just like
this is a
corporate shenanigans. And I'm not saying that Coreweave is corporate shenanigans, but if already
they
from
obviously
jump,
have some administrative incompetence. I'm sure they've cleaned that up.
okay, sure, great.
Goody.
Just going for it, just full speed ahead there. What is NVIDIA doing? Because you can't trade Coreweave, but
Down
tomorrow you might be able
It's
to.
down
Down
$2.
$2.
Okay.
Down $2. Yeah, it's giving me kind of SMCI vibes a little bit, but
Right, yeah.
the concerns came out before it was in the S&P 500,
Right.
which is great.
Right.
Which is
Right.
that's good.
OpenAI expects their revenue to triple to $12.7 billion this year. The company is facing increased pressure to live up to its sky-high valuation. Currently, as of last month, SoftBank was going to invest $40 billion in OpenAI. That makes them worth $260 billion. They're worth $250 billion.
Yeah, it's crazy.
Okay, and so...
It's not that crazy. They were like, going to give Google a run for their money.
Yeah,
Right?
but
That's
it is
the
just
idea.
interesting though, because I don't know. Microsoft is OpenAI's principal investor and key strategic partner. What is Microsoft doing?
It's up a little bit this morning. Not too much.
Okay. Hey, Oracle customers confirmed their data was stolen in an alleged cloud breach is valid. Oracle denies that the breach ever happened, but customers who found their personal details offered online for sale were like, excuse me, nope, these are mine. And Oracle was like, yeah, we don't know how that got there. Last week, a person named Rose87168 claimed to have breached Oracle cloud servers and began selling the alleged authentication data and encrypted passwords of 6 million users. Oracle. That sounds bad. No, it's bad.
That's pretty bad.
The threat actor released multiple text files consisting of a database, LDAP data, and a list of 140,000 domains for companies and government agencies that were allegedly impacted by the breach.
I haven't heard anything about this.
Dude, I don't. Well, Oracle's not doing much this morning. I don't know why. It seems like, I don't know, we undervalue cybersecurity breaches, and there's been a whole bunch of them.
Sure. Yeah, I think this problem's only going to get worse.
No, of course, yeah.
Yeah.
It's only going to get worse. Man.
But this does seem like real bad. Like 6 million
real
people
bad.
is a lot in like government agencies and other like super important businesses. Like,
I didn't know Oracle had customers.
okay. Oh,
No, I'm saying other than businesses. Like, I didn't know they had. Why would they have individual customer information?
Well, I might be not phrasing it correctly.
It sounds to me like it's
Because what Oracle does, like if you're a small business, that's an individual customer information.
I understand. I'm thinking that this has to be a customer of Oracle. Like, it's customers of Oracle's customer.
Yes.
It has to be that.
Sure.
So I'm not exactly sure what this means.
Okay.
Like,
Just
I'll give you an example. We're a customer of Oracle.
Sure. Well, we should probably check our shit then. Should probably get somebody on that.
Well, Oracle has probably hundreds of thousands of customers.
Yes.
And we're just one of them. But I'm guessing that that's what they're talking about breach-wise, because it's not Oracle.
Oh, okay. If that helped, whatever. I don't know what you want from me this morning, so I'm gonna just say yes.
They're a cloud computing company, and they don't store user information for their clients.
No, I don't.
They don't have individual clients. They have clients like us.
Right, which we could use that service to store customer information.
We do,
right?
and we do. But so it would be our customer, not their customer.
That I don't. Okay.
He's so pedantic. I'm just gonna just make
it's
keep
okay.
it moving.
This is no bueno, and Oracle is not doing much this morning.
Yeah.
Okay. Hey, Utah governor has signed an online child safety law that now requires Apple and Google to verify user ages. Utah's App Store Accountability Act is the first in the nation, and it represents a significant shift in how user ages are verified online. So instead of Meta's Instagram being like, okay, you need to verify your age, the state of Utah is like, no, Apple, before you can even download apps or anything from the App Store, Apple has to verify your age. And you're like, how the heck do you verify the age of a 10-year-old? And they're like, oh, well, using a credit card. I'm like, what? Be so for real. They're like, well, then the parent has to register, and then all the, this seems like a nightmare. And companies that have been subjected to this age verification before, namely Pornhub, porn sites, they've just straight up been like, look, we're just not going to operate in this state, because they don't want the onus of like keeping people's IDs on file. Like, here's your license and your credit cards to verify all your age. And then it's like, now we have minors that are involved in like, who's keeping track of all of this? Like, I don't know where this goes from here, but it did get approved. What are your thoughts?
This is trash. This is such trash. I appreciate what they're trying to do.
Sure.
But there's no good way to verify age.
Right.
You have to verify everyone's age, right?
Right.
To verify that that someone's over a certain whatever minimum. And so how do you do that? Is it like, do you upload IDs? Do you do like biometric scanning?
Right.
How often do you have to re-authenticate?
Right. And then where's that data locally stored?
How is it used?
Who
Does
has
it violate
access to
privacy
it?
laws? We saw the same thing happen in Australia. They implemented a similar law like a couple months back, and just the enforcement is just such a nightmare.
Sure.
That I don't know what's gonna happen. It's
like no Apple or Google in Utah. I don't know.
I mean, it sounds like a disaster, but who knows? I don't know.
It's just a privacy nightmare,
Sure.
and it's just really, really difficult to enforce. I appreciate what they're trying to do. Like, I get it.
Sure.
But like, You have to find a good solution for this that doesn't massively invade people's privacy.
We checked on Google earlier. What's Apple doing?
Apple. Nothing.
Nothing?
Nada. Zip, zilch.
Hey, here's some good news. 9.7 million student loan borrowers became past due on their bills after the COVID-era payment pause expired. Now these people are at risk of serious consequences to getting hits on their credit score or defaulting. It seems like a big kind of mess that like 10 million people all of a sudden just...
Doesn't the Department of Education handle that?
We don't have a Department of Education.
Well, that's what I'm saying. So, like, how are we going to... You know what?
It's going to go to the Small Business Administration. They are actually, under the new plan, the Small Business Administration would be, I guess, the overseer of student loans. But you're right. Yes, the Department of Education normally handles this, but it's in the process of being dismantled.
I don't know how they're going to be able to enforce any of this.
Sure.
With, like, reduced workforce and,
sure.
With, the Department of Education maybe not.
But our student loan system has been broken forever. It's not just one person's, problem or whatever. It's been, there's like trillions of dollars of student loan bubble that's out there.
Yeah.
Hey, Dollar Tree is offloading struggling Family Dollar chain for $1 billion. They had the chance to do the funniest thing. But Dollar Tree said Wednesday that a group of private equity investors would acquire its Family Dollar business for $1 billion, bringing an end to its nearly year-long search. I know they had earnings. I know you don't really trade Tree. Which is Dollar Tree or DLTR.
DLTR is, yep. Not doing much this morning either. Yeah. Family Dollar chain to $1 billion.
It seems cheap.
It seems kind of cheap. Yeah, they're everywhere.
Yeah,
That's what
they
they're
are
most known for.
Yeah,
their most competitive factor is that
Dollar General's everywhere. Yeah.
Yeah. Oh man, Tom feels unfazed. He feels nothing.
Nothing. Hey, can I tell you? I went to a Dollar Tree for like the first time the other day, and it was nice.
It was nice?
Yeah. I needed like little plastic containers to put like protein powder in, like when I am bringing it to work, because I didn't want to just use 1,000 plastic bags. And I was like, I just wanted like little plastic containers. I was like, maybe the dollar store has them. And they did. Except for everything in the dollar store, it's $1.25. It's not $1. I was like, well, that's
inflation's hitting us.
I know, inflation, right? Man.
More like $5 Tree, am I right?
Hey, Stripe minted more than $2 billion in cash last year. So why even go public? A new crop of IPOs are coming from companies like Coreweave, Klarna, and StubHub. But most of tech's top performing private companies are staying put. What are your thoughts on to go or to not, to IPO or to not IPO?
I thought Stripe would file for their IPO, or they were filed. No?
I mean, they've probably filed it, but they're not rushing it. They're not.
Oh, well, they were raising money at $90 billion last time I saw it.
Well, they doubled free cash flow last year, and revenue was up 28%.
I find Stripe to be one of the most miserable companies I've ever dealt with in my life.
Wow.
Yeah, it's the weirdest thing. I'm shocked that anybody uses Stripe.
Why?
Because they are just so freaking incompetent.
So you use it for your coffee house? Is that what you're saying?
Not anymore. We got rid of them.
Who's their competitor?
We use Square.
Oh, okay. Interesting. I don't know anything about.
But no, they're such a pain in the butt, Stripe.
Okay.
Yeah, I could not stand dealing with that company.
Hey, here's something interesting. I wanted to get to this. Chinese tea chain Chagee has filed to go public in the U.S. on the NASDAQ. The company's planning to open its first U.S. store this spring in Los Angeles. The fast-growing chain generated net income of $344 million from 6,400 locations. I'm bringing this up because remember the last hot Chinese beverage chain that swept the U.S.? It was Luckin Coffee, remember? Yeah. And how well did that turn out for all of us? Another fraud sort of situation.
Don't they still exist?
They got maybe they came back. Then they went to Pink Sheets, and then I don't know if they're back or not. I don't know.
See, this could be your tea franchise.
I mean, I'm a tea kind of like
aficionado.
Well, I can't even tell you what it is because their only store in America is not even open yet. So how?
It does seem a little cart before the horse is in the front. Yeah.
I think they make like bubble tea though.
Probably.
Their ticker CHA. CHA.
That's pretty good.
Cha-cha-cha.
Cha-cha-cha. That's pretty good.
So they were founded in 2017, and they have 6,400 tea houses in China, Malaysia, Singapore, and Thailand.
6,400 seems like a lot.
It seems like a lot.
Seems like a lot to only bring in $344 million. Like, that math is not mathing.
The math is kind of not mathing.
60.
Also,
What?
What
is wrong?
What?
They can't.
They have 6,400 stores, and their net income, $344 million, revenue, $1.7 billion. So, there you go.
1.7 million per store.
they're a bubble tea chain?
Yes.
I don't know about other cities, but Chicago is just like so saturated with bubble tea shops.
Yeah, in our Chinatown, like really good.
All
like,
over the place.
Small, yeah, like
They're all
locally-
over like
oh yeah,
Park, Wicker Park.
oh yeah, in the North Side too. Yeah,
North Side,
We
yeah.
do have a lot of
like
bubble
all
tea
over the
chains,
place.
yeah.
So maybe I don't know. Maybe it's
$344 million in revenue.
No, net income from revenue of 1.7 billion.
Oh, 1.7 billion.
Yes.
Oh, got it.
Listen, the words
Calculators
are coming
out.
out of my mouth. Yeah, there you go.
1.7 billion divided by 6,400 stores.
Okay, well that's I guess that's one way to do it.
That's awfully weird. $265,000 per store. Something's wrong.
Okay, look, I don't sit on their board.
I mean,
I just wanted to do a story about a bubble tea chain, and now I want some bubble tea. All right, I gotta keep it moving here.
Let's go.
Walmart is touting a cheaper Easter meal for 2025, but there is one caveat. If you are going to get the Walmart Easter kit, which retails for it's around $6 per person, it includes ham, russet potatoes, corn on the cob, and a cream cake. Serves 8 people for less than $6 a person, but no eggs. Walmart's like, we cannot afford to put eggs in this basket because they'll give you eggs for dying, right? Right? So they had them in the basket last year, but this year Walmart's like, ixnay on the eggs, yay.
Yeah.
I don't know what people are gonna die this year. Like, can you dye a potato? Like, what do you?
So you
like,
die like.
If you dye an egg, you better eat that egg. You know what I'm saying? Like, because before, when I was growing up, we could just dye eggs and then just throw them away. But now, if you buy eggs, you need to eat those eggs.
I mean, with all due respect, eggs at Trader Joe's are $3.39.
Are they?
Yeah.
Yeah, but those are sweatshop chickens.
Well, you're dying.
We like
right?
happy chickens.
So what were they last year?
I don't remember. I don't
$2.99?
have kids. I don't dye eggs. I don't know.
$2.99. I mean,
I don't know, but I'm gonna get some to whip at your car though.
We always drained the egg bit out the bottom.
Oh, you made like a
little
like
hole
an
and then-
eggshell, like you.
Yeah.
So you painted the. Oh, okay.
No, we would hard boil them.
Yeah, we'd hard boil ours. Because that's what I'm saying. I was like, who wants to eat a dozen hard boiled eggs?
But who wants to eat it? Oh my God! I bought
Squirrel.
I bought deviled eggs last weekend.
From where?
Why would you? Okay.
I bought deviled eggs because they were the best looking deviled eggs I've ever seen from a place in Three Oaks, Michigan.
Oh, I love Three Oaks, Michigan. There's a nice
Froilic's.
distillery there.
Yeah, that place. You ever go to
Yeah.
that place? Froilic's? Froil something?
Okay, yeah.
They had the best deviled eggs I ever had.
Wow.
Yes. I bought a dozen of them.
How much was a dozen deviled eggs?
Oh no, maybe it was a dozen. Maybe it was
Half a
6.
dozen?
Half a dozen.
How much was it?
$12, I think.
Whoa.
$12.
They-
What were they? Were they flavored or just paprika? Just paprika?
They were the whole egg.
Oh. Then how is it a deviled egg if it's the whole egg?
What they did was that's the whole thing. They had to take a whole egg, they cut it down the middle, and then they don't slice it all the way through, and then they stuff it.
Oh, well, is the stuffing flavored with anything? That's what I was trying to
Yeah,
ask.
all the typical egg stuff.
Devilish egg.
Typical eggs. Okay.
You would have loved it.
Hey, I don't want to step on the research team. I'm going to skip a story here real fast. Cleveland looking to move its stadium out of downtown. No more Mistake on the Lake. They want to move to a suburb called Brook Park. But a survey shows 57% of adults want the Browns to play in
100%.
downtown.
100%.
Do you think all teams should be forced to be in the actual city?
Absolutely.
I think so too.
Absolutely.
But what do you think of a dome? That's what I think makes weather great. Like I mean,
don't care. I don't.
You're not a purist. You don't care that the
No.
football should be played in the elements.
No, I don't care if it's played in the dome, but it should be downtown in all these cities. The biggest mistake, like San Francisco, moved it like an hour away. It sucks.
Sure.
It looks like a big like LLB
Yeah, I don't
or
like that at
outdoor
all.
store. Or
Horrible.
something like that.
Also, yeah, it's going to cost $1 billion. Of course, they're going to have to levy all sorts of stuff to pay for this and get it
You
done.
build half of that for $1 billion.
Okay, great. I'm going to just keep it moving. Finally, today is opening day. I misspoke yesterday, but today is opening day. Driving in, it was cool. The Comiskey was all lit up. So they have the lights on already. So it was cool because stadium should be downtown. So driving into work, I drive past Comiskey and it was all lit up.
Guaranteed rate.
So it's Comiskey. It's actually not even guaranteed rate. It's just the rate. So check yourself before you wreck yourself, boomer. But the Mets stealing an idea because I believe the Brewers invented this. Other teams have copied it. And that's the mascot race. Yeah. So in the Brewers, they have the sausages and it's iconic. And other teams have tried to do this. What are your thoughts? I'm going to play this video. The Mets announced the 5-borough mascot race. What are the mascots of the 5 boroughs? Here we go, New York.
New York.
I don't like this.
So Brooklyn is a pizza. Manhattan is a skyscraper.
From Staten Island, the ferry.
The ferry. That is nightmare fuel.
From the Bronx, the giraffe.
From the Bronx Zoo.
I don't like this game.
And last but not least, from Queens, the subway car.
Wow.
I don't like this.
So I will say, though, the Mets released their food for Citi Field. I think Citi Field probably has some of the best food in the league. I've never
Stevie
been.
Cohn's going all out.
But it looks really good. Their menu. They got like this smoked turkey sandwich that I got to get my hands on.
I saw a bunch of TikTok videos about the Mets food.
Yeah.
Stevie Cohn went all out.
Yeah.
They really gave that giraffe a white, dirty T-shirt. They made it dirty.
Anyway, hey, that's my time. What's coming up next? Confirm and send. Tom and Julia answer viewer emails. You're watching Tasty Live.
Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. We are back. It's Thursday, March 27th. I'm Tom Sosnop here with Julia Spina. Miss Spina.
How are you?
Julia's sitting in for the bat. The bat will be back on Monday. I talked to him last night. He's doing fine. Everybody's concerned. He's all good.
He's all good. Catching fish.
He's catching fish.
Catching big old fish.
He's catching fish. He's frying fish. He's, I don't know what the hell else he was doing.
What else do you do?
But we got a ton of stuff to do. You ready?
Yep, let's do it.
Okay.
Hell yeah.
So emails that came in, and by the way, I guess there was no Lulu earnings this morning.
I'm seeing it after the close.
Possibly.
I'm
So
seeing it listed as after the close.
I guess I was a day early. Bummer. But
yeah.
So we didn't play any earnings then for today.
Nope.
Okay. When comparing iron condors and strangles, this is emails that came to us from viewers all over. When comparing iron condors and strangles, it seems that iron condors can do better and introduce less variability into an account. But in terms of defending, strangles are way easier to deal with and they're easier to roll, especially when they become losers. So I'm a little torn. What are your thoughts on the differences in defending these positions, an iron condor versus strangle?
I don't really defend condors, really, just because sometimes I'll like roll to the next expiration cycle, but I don't manage them a ton just because the max loss is known. I think management just personally is a lot more important with like undefined risk strategies with strangles, and like which kind of makes sense. I don't know. What do you think?
Well, there's no question that adjusting strangles is way easier than adjusting iron condors.
Sure.
Because you have more flexibility. With strangles, you can go inverted. With iron condors, you can't. With iron condors, you can't buy the guts and sell the wings in iron condors. Like you can't truly recenter. You can only go to an iron fly. With strangles, you have a lot more flexibility. You can roll down the call side. You can roll down the put side. You can go inverted if you have to. You can buy the guts and sell the wings and recenter the entire trade. So no question there. But iron condors obviously have less risk, and they move around. They're slower moving.
For sure.
So I think what you wrote here is accurate. I think a lot depends on how much capital, what's your capital availability,
right,
and how you want to allocate your own capital. My preference, because strangles are easier to defend, is to put on more undefined risk strangles than iron condors. We're probably about 7 or 8 to 1 would be my ratio. 7, 8 strangles to every 1 iron condor. So I'm heavy strangle versus iron condor, but it really depends on how much capital you have and your tolerance for and your need for capital efficiency.
That makes sense. I think your time a little bit as well, because strangles, it is a lot more important to actively manage those, although it is important with condors as well, obviously. So it also, I think that how much time you want to be putting into it on a regular basis is also a consideration.
That's fair. Resources and things like that. Let's go to the next slide. Do you always have on a SPY 16 delta strangle, 45 days to expiration, managed at 21 days? In other words, is your core position always have a SPY position on? Or do you only put these on in high IVR? Next, do you try to defend your strangles, roll up or down the untested side when the market makes a 5% drop, or do you just abandon the trade at that point?
There's a lot of questions in here. So what I will say is that, like, at least just looking back at SPY, doing some back tests, like these tend to be profitable in all volatility conditions. So like whether IV is high, whether IV is low, it's just your risk factors are different depending on where volatility is at. Kind of personally, I don't like trading undefined risk when volatility is low, but I'll still usually have some kind of condor on or some kind of defined risk strategy that's maybe directional. We talked already about defending. But when it makes a 5% drop, in terms of like just having a big move, I think it's important to remember that expected move tells you where you're expecting the stock to be 68% of the time by expiration. So to me, it depends a little bit on where expiration is and how much it's skewed your deltas after it has had a 5% move. Like if you're still 45 days out and there's a 5% drop in the market, I wouldn't necessarily adjust a position there. But if it's a lot closer to 21 days, that's maybe when I'd consider closing early or something like that.
Yeah, I would say that about 80+% of the time we do keep a SPY strangle on, but it's not 100% of the time. If IV rank gets down in under 20, we're iffy, and if it gets into single digits, we're definitely out. 100% of the time we're out. So it does depend on the IV rank. So it's not 100% of the time. We only put them on. We only open. We try to, like 95, 98% of the time, try to do it only in periods of high IV over 30. Do you try to defend the strangles when the market makes a 5% drop? Well, we defend the strangles when the market makes a 0.5% drop. So I'm defending strangles every time the S&Ps move 10, 20, or 30 handles. A 5% drop is 300 handles, right? So I'm defending it way before that, at 1/10 of that move.
Sure.
To be fair. Sure. Would we abandon on a 5% move? Not really, because we probably just keep recentering, and IVR is high at that point, so we probably keep the trade on. It's just we're defending it all the way down to that point.
Sure, that makes sense. I think also I mostly trade condors, and so management's pretty different with a strangle. It's important to really actively manage that.
100%, I agree. Let's go to the next slide. So I was wondering if it's okay to take assignment on an MES naked put contract. That's the micro S&P. If I'm okay with the notional value. The notional value of that, by the way, is about $30,000, just so you know what we're talking about here. It's about a $30,000 contract. So is it okay to hold an MES contract, or will it expire at a certain time frame? Basically, SPY is too big for my account and my risk tolerance. Can I treat MES assignment as if it was a SPY contract, or are there any special considerations? SPY is about one SPY contract notionally right now is about $60,000, a little less, $57,000, and one MES contract is half that. Just to put context around it.
That does help. I think you'd probably give a better answer on this one. I don't really trade, I don't really hold futures outright. So what do you think?
Okay, so a couple of things here. So an MES contract, like I said, is just under $30,000. When this person says take assignment, let's just say they are naked a put, and the naked put turns into a future. Okay, and what they want to know is it okay to hold the futures contract, the long futures contract, and would you sell a call against that if that was the case? And the answer is sure, it's okay. Now remember, they're going to expire quarterly. So this MES contract, if it's an April contract right now, it's going to turn into a June future. If it's a May contract, it's going to turn into a June future. If it's a June contract, it's going to settle for cash and disappear. So we're clear about all that stuff. So you want to roll those forward, a week before expiration. But other than that, sure, of course it's okay. It's the exact same thing as a covered call. Exactly the same. Cool. Let's go to the next slide. In the SPX, do you have a rule of thumb for implied volatility, IVX, and when do you decide to put on a zero DTE trade? For instance, today the IVX is showing 23.2 for zero DTE, while the VIX is trading around 18. What is your general thought process in a case like this?
That's interesting. I don't have a rule of thumb for IVX actually for the 0 days. I'm not sure if there's mechanics around it. I'll usually look at the size of the move that day, like how big the overnight move was, to drive the decision a little bit more. Do you have a rule of thumb for IVX?
Well, it's funny because Jacob did a couple of pieces on this, and we are doing a zero DT piece today too, cool. From a research team. Jacob did two pieces on this. One was to show that in our zero DT series, one was to show not IVX, but the VIX 1 day. Are you familiar with that?
I am, yeah.
Yeah, so it's VIX 1D.
Yeah.
We looked at VIX 1D and said if it's higher than 15, which this doesn't mean that this is, by the way. If it's higher than 15, then that's kind of interesting for a zero DT. If it's lower than 10, then it's a lot less interesting. In between is kind of no man's land. We also did a piece that Jacob showed where if overnight volatility was lower, like right now tonight, volatility is basically unchanged, up slightly. Mm-hmm. And it showed that if volatility was up overnight, that zero DT trades made sense, and if volatility was down overnight, zero D trades performed a little bit worse. So we have two things. One was the VIX 1 day, and the other was the zero DT. And the other was the VIX overnight trading. Nothing we've shown had to do with IVX.
Yeah.
And remember, you're not going to look at the 30-day IVX when you're trading the 0 days.
Sure.
So the reality of 0 days is the volatility doesn't matter that much.
It's really interesting, yeah. I don't trade a lot of these, but when I do, it's usually when there's a big overnight move. And one standard deviation for overnight volatility is 0.7%. Right? So basically if we're opening up or down more than 1%, that's actually a very volatile overnight move. And that's when I think it might be, at least personally, maybe more interesting to look at 0 day options. I like the idea of using the VIX 1 day indicator. That's a really cool study. I'm going to have to check that out.
Yeah, it's a good study. It's in our archives.
Cool.
And that's so we don't use the IVX, but you can use the expected move for 1 day for sure. That's what we do use.
Sure.
Next slide, please. Should you adjust the days to expiration choices around earnings, assuming IVR is high for an underlying and the 45 DT lands right around earnings? Should you pick an expiration series after earnings or just stick with 45 days?
I mean, you're managing at 21 days, right? So you're managing kind of far away from when earnings is actually going to be. That being said, you could still have volatility inflation, that far out from earnings. So, I mean, I don't know. It might have, cause profits to come in a little bit more slowly if you don't have that volatility contraction, but that's not necessarily a requirement as a company's approaching earnings. So if it's right around 45 days, I think it's okay to still put on the trade in certain cases. If it makes sense.
Yeah, you know what? This is interesting because we get this question every single earnings cycle, and we get it from lots and lots and lots of people. Should you adjust the days to expiration choices around earnings? We do not. Period. We don't. Assuming IVR is high for underlying and the 45 days lands right around earnings, just like Julia said, since we're going to adjust at 21 days anyway, doesn't matter to us. And we're always going to look at earnings the day of and adjust our positions. So the reality around earnings for us is it doesn't matter. As long as our trade, we would make it normally, we would still make it. And when it comes to earnings, we'll make the necessary adjustment. So we just stick with the 45 days.
Cool.
Next slide, please. And this is the last one. Wanted to ask you a question about pairs trading. Everyone's been talking about the gold-silver ratio being very high, almost 90. If someone wanted to do a pairs trade, for example, long silver, short gold, is there a strategic advantage to using either, one, the ETFs, silver versus gold, two, the options in SLV and GLD, the futures SI and GC, or the futures options in SI and GC?
God. I feel like it really depends on your account size and how much leverage you're comfortable with.
Yeah. So this is a very tough question.
This is a hard question. Yeah.
So let me give you my answer, okay? And you can say whatever you think. So the gold silver ratio is trading around 90, which is quite high. It's very liquid. You're not going to, and I'll go through each one of these one by one. Number one, you're not going to use the ETFs, silver versus gold, because A, you don't know what the ratio is. It's something like, I want to say, can't remember if it's 24 to 1. Like gold's GLD is like, what, $280 or something, and silver is $30.
Trading the stock outright or the ETF outright.
You're not going to do, whatever the ratio is, you're not going to do that ratio.
Sure.
Can't remember exactly what it is offhand. And it's totally capital inefficient, and it's just forget that trade. You're not going to do it with ETFs. And if you're not going to do it with the ETFs, you're definitely not going to do it with the options in silver and gold. It just doesn't make any sense. Could you use the futures? That would be my recommended way to do it, using SI and GC. But those are exceptionally large contracts.
Yeah.
And that spread's going to move around thousands of dollars a day. So what I recommend you doing is using /SIL, which is the micro, 1/10 the size, and /MGC, which is the micro, 1/10 the size. The ratio is 1 to 1, 1 to 1. So what you're going to do is use the micro contracts /SIL and /MGC. Also, futures options in SI and GC, you could do those if you wanted to. Those are more capital efficient, and they're a fraction of the size of SI and GC. So those would be acceptable, but I think using options in a pairs trade is hard. So my suggestion is to use the micro contracts, SIL, MGC.
Sure.
We're going to take a very short break, come back with the research team, trades and the research team.
Thanks.
S&P's down 775, Julia. The Russell's up $1.60.
Guess what's up?
NASDAQ's down 44. The Dow is up 28. It's a mixed market. And bonds, which were down 28, 29 last night, are only down 12 or 13 right now.
Guess what's up?
What?
Gold.
Gold's up big, right?
Gold's up big.
$34.
And you were making fun of my put spread.
I was making fun of you.
You were making fun of my put spread. There's still a lot of time left in that trade. Okay, thank you guys.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
All right, everybody, we are back. I'm Tom Sosnoff. It is 8:13, almost 8:14 in the morning. I'm here with Julia Spina. Julia, how are you?
I'm surviving. How are you?
She's survived. That's better than I thought. Most women don't last this long with me. So
I know, and it's been, 4 days in a row now?
4 days in a row.
4 days in a row, yeah.
She's going to need a vacation.
I am absolutely going to need a vacation.
Anyway, thank you for sitting in for the bat. I have TP coming in at 9 p.m. We have Victor Jones coming in at 8:40.
Tom.
Which one? Oh, I'm sorry,
Pete
Pete
at
Momat
9.
today. You're right. Thanks, John. Today's Pete Momat. TP will be back tomorrow, and then Victor Jones coming at 8:40. But now we got the research team. We got to move fast.
Yeah, we got to move fast.
We got a bunch of trades. S&P's down 1150. Nasdaq down 60. And look at this sharp dressed shark.
I like that.
Sharp dress.
Sharp
I
dressed
like that.
Shark.
Yeah.
Like I said, as soon as I
Coming
walked
for
in,
you.
Julie, I'm like, you borrowed that from Gad.
Yeah, you do have fins though. That's kind of nice with the shark theme. I dig that.
It elevates it a little bit. Yeah.
I think so. Yeah.
This is not Gad's, I promise. Okay.
It's not Gad's, it's yours. No. You should not be allowed to walk around the office. That you'll be, you're too hot a commodity.
Okay. Thanks.
Commodity.
Yeah.
Very nice. I like the
Julia,
blue.
you keep your paws off him, okay? Just
I gotta control myself.
No, I like that blue fins, shark.
Blue fins, shark, all the pieces are coming together. Yeah, I dig that.
all right. I like this.
Hell yeah.
All right, what do we got going on?
What do we got?
We got Baba.
Ooh,
Alibaba.
Baba.
Yeah.
What do we got in Baba?
What do we got in Baba?
Iron Condor. Short strikes right at the expected move, so 120, 150 with the $10 wings.
Hold on, you doing May?
May. 50 days.
Babalicious, 50 days. Give me the short strikes again.
120, 150. It's right at the expected move because it's up,
120. How wide?
50.
with $10 wide wing.
120, 110.
Yeah, 120, 110.
150, 160.
And 150, 160 on the calls, yeah.
I think it's going to be a good morning. Vol should be up this morning.
And it's up about $1.50 right now.
Oh, the stock is?
I think so, yeah.
It is.
Yeah.
That is correct.
Mm-hmm.
It is.
And a very nice BPR, 666, so you know this is going to go well.
That's how you know it's going to go well?
Yep.
Avianca 37 earnings kind of towards the end of the trade.
So
but
this thing
managing
should
21
trade a little
days.
bit richer this morning because it's got a little bit of short delta, so it should work.
This is schmidgen. And yeah,
So-
this thing's had a
I don't know. It maybe trades around 350. I don't know. Let's see. All right, I got it. It's working.
Hell
All right,
yeah.
sounds good.
Thank you. Thank you, Shark.
Thank you.
All right, we're going Iron Condors today. Gad in the house.
Ooh, get in the house.
Morning, Julia.
Good morning. How are you?
I'm good. Morning, Tom.
Good morning.
It seems like he's in a good mood today so far.
Yeah, it's a good one.
All right, what do you got in Costco?
So I got a shot in Condor in Costco.
Ooh.
It's pretty expensive right now, but you gotta try.
It's got a high IV rank. It is expensive.
High Ivy rank, no earnings.
I have so much trouble getting fills in Costco, but maybe I don't do a lot of Iron Condors, so let me try because maybe Iron Condors will be easier to get fills.
Yeah, okay.
What are your strikes? 875?
875, 865,
875, 865. Got it.
990, and 1000.
990 and 1,000.
And 1,000, yeah.
You give it a little bit of
Skew.
false skew?
Yeah.
Yeah, look at that.
What price?
You?
You think you can get filled at $2 on this?
3.
Okay, what am I missing? 990, 1,000.
You're in 50 days?
Oh,
Yeah, that'll do it. I'm seeing your quotes.
It's in May.
I'm seeing the quotes. I wish it had a little bit of, like, a little bit more open interest, but directionally, I think I would match this assumption because it has been sideways for the last couple of weeks, and it's well within the sort of range that
Sure.
you pitch. This
got
is
it.
pretty cool.
Sorry. Yeah, it's just under $4.
Yeah, it's May, yeah.
Yeah,
Okay.
perfect. All right, I got
We
it.
got there eventually. That's what counts.
That's right. I
Hell
had
yeah.
the wrong month. It was my bad. Yeah.
Okay, thank you.
Thank you.
Thank you.
Well, that shows you what you can make. I like it. What is this? Iron Condor Central today.
It's Iron
I know,
Condor.
yeah. It's Ivy dropped a lot in the past 4 or 5 trading days, right?
Yeah.
Since last Wednesday.
You got a little Tesla position on.
I know you already is loaded up already, but
I have a bunch of Tesla positions on. That is for dang sure.
In May?
I'm in May. I already rolled. I have the 210 350. That's my strangle.
10.
oh, very close.
350.
Okay.
210 350.
Very close to
Very
mine,
close,
yeah.
yeah.
Yep.
Because mine is strangled, so I pushed the delta to shorts 20 and make it $10 wide. Try to get a 1/3, getting close, but not there yet. But $3.36 for $10 wide Iron Condor is not that bad.
Okay.
Yeah, that's not bad at all.
But we have to manage this because the earnings is in April.
Yeah, earnings is like
Yeah.
right around 21 days,
Yeah,
but
21
the
days,
IV
yeah.
rank is already really high. It's 62 in Tesla right now. We've had some really crazy moves.
Yeah.
And yeah, like the width of the strikes.
I have the strangle on kind of the same strikes. I'm going to adjust my strangle this morning. So I'm going to pass on this just because I have the same strikes already in the strangle.
Sure. Yeah.
I kind of made my position bigger yesterday. So
Oh,
anyway,
Hell yeah.
there you go.
There you go.
beautiful.
Awesome. Thank you, Kai.
I like it. Ah, little Dr. Data.
Hi.
That's me. That's me.
There you go.
Man, that's a fun way to start
So-
the day.
So on Tuesday, Nikki and I, we sent out a cherry picks, and in that cherry picks we had a cheat sheet, which is of all the main ETFs, and it was pretty good. You know, it had the broad market ETFs, the commodity ETFs, sector ETFs, yada yada yada, and we had them sorted by IV ranks.
Okay.
And one of the highest IV ranks right now within the sector ETFs is XLF, which is the financials. So that's what I'm doing today. I'm looking at selling this 48 and selling the 52, selling the 48 put, selling the 52 call. Looks like I could do this for about $1.15. Now the strikes are, I'm not the strikes. The bid offer is quite wide right now, but it's going to tighten up on the open.
Mm-hmm.
We actually have on right now. This is May. Is yours May?
Yes, I'm doing May. 50 days away.
We have 48.51 currently.
Oh, that's good.
Very close.
Very close. Yeah.
Very close.
Yeah. This is 48.52, so we can just add to the position a little bit.
Awesome.
Oh yeah. Nice.
Yeah, and I'm already in May, so perfect. Perfecto mundo.
Perfecto.
If you want to get cherry picks, you can send an email to research@tastylive, and I could give you the cheat sheet. I can also give you the sign up for that.
Sick.
Research@tastylive.com.
.com.
Okay.
Hell yeah. That's awesome.
Cool.
Cool. Thank
Thanks,
you so
y'all.
much.
Thanks, Data.
It was my turn to do the ping pongs this morning.
Got
but
it.
I wouldn't do that to Janet Jackson. It was Janet Jackson, right?
I have no idea.
Black Cat. I'm not gonna lie.
Yes, it is.
Yeah.
Yeah.
The first time I heard the song is when it was suggested for the walk up, and I dig it.
It's not bad.
It's not bad.
It's not bad.
You know, very opinionated about the songs.
It's not bad. I kind of miss the Dead Squirrel.
I like the Dead Squirrel. I do like the Dead Squirrel, but I think this is a vibe. All these they're pretty jazzy, I guess.
Yeah, they're
like
jazzy.
Fun,
Yeah.
poppy songs.
All right, what do you got? What do you got?
Oh, I can't wait for you to not buy my wings. So today I'm looking at XOP.
Oh, there's no chance of buying wings in here.
No, absolutely not.
Yeah.
But I was looking at the wings. I don't know.
I actually don't have a position on this.
In XOP, it's one of the higher ETF, higher IVR, I should say, ETFs. Higher IVR ETFs, decently liquid. I wish there was a little bit more open interest, but the spreads are not too bad. So I went around 20 delta for the short strikes. I went 121, 146. I went $5 wide.
Are you going May?
I'm in May. Yeah, the 50
What
days.
strikes do you do?
I went with the 121, 146 short strikes, $5 wide. I kept this as a baby trade. It just, I don't know. Like
What's the stock doing this morning? Nothing, right?
Pretty much nothing, yeah.
I'll do it, but I'll do it as a strangle. I'm not going to do it as a iron condor.
For me, the capital requirements were just too high. It just kind of made more sense for me to slap wings on there, even though the pop's a little bit lower. But I'll take the hit in the pop for that much of a reduction in position size. And your max profit's still 126. Your pop is 67. So I don't know. With this one, I like to do the wings, but I wasn't expecting you to do it. It's okay.
I'm not going to do the wings. I just entered it as a strangle, and I'll adjust the price once we open. You can't put orders in on XOP prior to the opening. I mean, you can put orders in, but you got to put them above the market and then lower it when they open.
Yeah, sure.
Yeah, market's too wide there. It's too funky.
You're funky.
All right. Again, I'm Tom. She's Julia, and this is Tasty Live. We'll be back in 90 seconds with the opening bell.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, Just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do. Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Hello, everybody. We're back. She's Julia Spina. I'm Tom Sosnoff, and this is Tasty Live. Julia's sitting in for the bat. He'll be back on Monday. All right, Miss Spina, you ready? Get your helmet on.
I got to get my helmet.
Get your helmet on.
Buckle
Get
up,
ready.
ready to go. S&Ps are dropping a little bit. Down
S&Ps just got a little bit soft. They're down. They are down 18. NASDAQ down 95. Got a little ugly. Dow's down 60. Russell's down 3. Bonds down 16. That's actually about 10 or 12 ticks off their lows. Notes down 5. Let's see. VIX futures up 20 cents. That's 1%. Big mover, like Julia said before, is gold up $30. Silver's up a lot too, 35 cents, and everything else is no buenos. Looks like pre-market. My biggest loser pre-market is gold and the Japanese yen, and we'll see what happens and bonds. I have 3 losers actually.
I put bullish positions on in copper and gold, so the gold one's working out. The copper.
I put a bearish position on in copper yesterday.
Which that must be working out.
It is.
That must be working out nicely.
I faded.
Copper's been on it.
Hold on, I wasn't going to.
Oh, until you
opened up the you KO'd it, and as soon as I heard you say you wanted to sell a put spread in copper, I sold a call spread. But don't take it personally. I do that to all my friends.
Oh, of course.
It's a sign.
No, I'm really flattered, actually.
It's actually, yes.
Really flattered.
It's a sign that I really respect you, that I fade you.
That, of course, no, always. Well, I mean, we're pretty 1 for 1 then. If we're doing, if you're a contrarian on gold and copper, it sounds like we're pretty even Stevens.
Yeah, it's pretty even Stevens this morning.
Pretty even Stevens this morning.
Yeah. There's the opening bell. It's 8:30 Central Time.
Moving.
We are in Chicago. Markets open at 8:30 in the morning here. It's a little bit of an quiet, but ugly morning. S&P's down 15, just waiting for kind of the numbers and stuff tomorrow. We entered a bunch of trades. Let me see what we got here. Just taking a quick look. Biggest losers for us, GLD. I really hate GLD. I can't make any damn money in that stock.
When gold moves, it really moves.
I can't make any money in GLD if my life depends on it. And I got to roll my position from April to May. Tomorrow's the official roll date. So I'm just going to get rid of this crap today.
Mm-hmm.
I'm going to go way out of the money, get to something interesting. Anyway, let's see what else we got here. So
GM's down big this morning.
What's GM down based on the
down
news?
$3.30. I'm not used to dollars. $3.30.
Yeah. So
330?
GM is down big, which is such a ridiculous. I mean, these tariffs on
Tell us how you really feel.
It's so freaking stupid. It's like I don't know. I don't want to get into that whole discussion, but it's so freaking dumb.
Well, it's evidently hitting GM pretty hard this morning. Some other big movers in the S&P, Morgan Stanley down big. AMD as well.
I mean, Tesla's up, so they must think it's good for Tesla because Tesla cars are made in America, I guess.
Well, isn't Carvana used cars, right?
Carvana is used cars. Why?
Well, because if there's going to be significant tariffs on automotive imports, wouldn't that inflate the used car market pretty significantly? Which we also don't know exactly what we're going to get. We've seen discussions around the tariff situation change quite a bit, but given the current state,
maybe I don't really understand. I'm not so sure that it works exactly that way, but we'll see.
It never works as you would expect, but we also have Palo Alto Networks down 444, Goldman, another financial name, down 50.
I think Tesla's the most interesting one because I think the marketplace is interpreting this a little bit like, okay, what's bad for the rest of the world's good for Tesla. It's almost like
contrarian indicator almost.
Well, but it's almost like could anybody do anything more blatantly obvious? It's so conflicted.
Yeah.
It's not what American free markets are all about. It's the level, and I don't have a horse in this race, but it's just ridiculous. Let's see. So in Baba right now, we put an iron Condor on. It's a lot lower. In Costco, let's just see in Costco. I kind of feel like we should be filled in there.
Baba's having a very strong morning, up 1%. Costco is pretty much sideways, relatively unchanged. IV rank of 37.
Yeah.
Excuse me. Yeah, this was an interesting trade. Costco's
We're close
a
in
funny
Costco.
name. Yeah.
We're close.
So expensive.
It's just hard to get fills in there.
Yeah, the open interest is not great. But look, the spreads could be worse, and there's a lot of available strikes. There's a lot of available expiration cycles. So it's about being careful trading this, but it certainly seems tradable.
I've been pretty aggressive on my orders in there. Yeah, interesting. And General Motors, by the way, has really bad markets.
I do not trade these.
Really bad.
Do not trade this. I'm seeing a good amount of open interest.
XOP, your trade.
Is it thriving?
Thriving, no, but I'm working it. And Baba up $1.50 from this morning.
Yep.
Those markets are also a little bit wide. I just adjusted all my.
Yeah, you do see that in some of the ETFs. I do like trading the ETFs because they're less sensitive to earnings as we're kind of moving into the next cycle. But the liquidity, you just kind of have to watch it. I usually go defined risk in there as well. Let's see what else is moving at, like NVIDIA down, SMCI down.
Everything's kind of down. It's a nasty.
Not Dollar Tree. That's up 2%. Sorry, $1.42.
Everything's a little bit soft this morning.
Communications are not doing too bad. Verizon and T-Mobile.
Those were the only stocks yesterday that were up.
O'Reilly Auto Parts.
We just got filled in Costco. The first trade from Trades and the Research Team, 396 on the Iron Condor. Made him come and get it. Come and get it, boys.
Come and get it.
396. And let's see, anything else here? Russell's down 11. S&Ps are down 27. They're back to 57.31. NASDAQ's down 128. Question is, do they get ugly here? Let's see. And looking at the, just to see if there's anything crazy ugly.
Anything crazy?
Worst losers for us today are General Motors. We do not have a large position on there, but stock's down significantly. And so worst positions for us are General Motors and GLD. SoFi did what?
SoFi is getting pretty beat up this morning, down to 75 cents. Reddit down 631.
Where's SoFi trading now?
1231.
1231. So they actually did kill that stock.
Yeah, pretty bloody. VRT down another 429 this morning. I'm looking over at the Tasty Fast Movers list. I like to take a look at this. I'll usually reference like the S&P 500 just to see how the index components are moving. And I like to check out the Fast Movers list as well. BABA up, percent. Sorry, $1.84. Moderna on the Fast Movers list this morning. I wonder what that's doing. Moderna's an interesting one.
Moderna,
yeah. Man, it's got one hell of a Peloton curve. Look at that Peloton curve. Whoa.
Well, I'm looking at all the different stocks on my list, and it's not a pretty morning for the stock market.
Sure.
Apple down, Affirm down. These are just my A's. Apple, Affirm, AMAT, Amazon,
Just my A's.
and AVGO are all getting wackadoodled, and none of them are pretty.
Wouldn't say it's Hims taking a bit of a beating this morning. I don't know if you've ever looked at that one.
It's untradeable. So just for future reference, if you want to trade to Hims, don't.
It looks like kind of decent.
I'm telling
liquid.
you, it's untradeable.
Untradeable. Define untradeable out of curiosity.
Untradeable means once you get into a position there, you literally cannot get out. You can't do anything with it.
I'm seeing like a couple thousand contracts in open interest. The spreads look good. I'm kind of surprised. I believe you. I'm just surprised to hear it.
Yep. I've been in there multiple times. It is not pretty.
Woof. On.
I'm just going through different stocks just to see what kind of we got here. And
Shopify a lot of things are taking a hit this morning, but Shopify down 367. Affirm down 4%, 196, almost $2. Reddit, one of the larger movers.
Affirm's had a really dark move. I mean, it's gotten beat up ever since Klarna said they were going public. Affirm kind of topped out.
Yeah.
And it's been in kind of a little bit of a free fall ever since.
Yep. IVY rank 47. Earnings around the 50-day expirations.
This is kind of an ugly opening for the stock market. This is not a pretty.
It's crazy. It's actually like not that big of a move. We're opening down 0.6%, right? Almost $35. Which that's like within a standard deviation for the S&P.
No, half a standard deviation.
For overnight moves.
Oh.
On the open. It's within a standard deviation of
moves,
right?
Totally.
So it's not that big of a move, but we're just seeing like a handful of companies just having pretty large moves. I wonder what else. Maybe do the liquid. Where'd you go? Liquid symbols. Take a look.
Yeah,
Hertz.
not my favorite opening for a.
Why is Hertz up 20%?
Well, what is it? A $2 stock?
But 20%.
Who cares? It's a garbage stock. It's a pink sheet stock. No, it's untradeable. What is the stock trading for? Hertz?
412.
Yeah, so 20%. Who cares? They probably sold 3 cars. No, Hertz is up. I'll tell you why Hertz is up. They have cars for sale.
Yeah, they have cars. Well, thank
that's
God.
Why.
Oh, Hertz. What else?
American-made cars for sale.
American-made cars for sale. Actually, I would believe that. Let's take a look. What else? Moving to the downside. I'm kind of curious. Opfi, I've never heard of that.
As a quick little market recap here for those that are curious, S&P's down 35, NASDAQ down 171, Dow's down 195, Russell's down 16, and bonds are only down 12. Gold's only up 20 because it's come back down a little bit. And so far it's been slim pickings for us. We haven't really done much. We're a tiny little bit long into this down move here, and I'm reluctant to roll everything down aggressively.
Mm-hmm.
But and I'll try to get my trades posted in hopefully in a couple minutes. So let's take a short break here, And Victor's going to come on. Julie's going to leave. Thank you so much.
Of course. Thanks for having me. You and Victor can go get us in trouble.
Beautiful. Let's do it.
Easy peasy. Thank you, guys. Peace.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. What is going on over there, girl?
His hat was a late entry today. He came in, it's all jaunty now. You gotta move more towards your left.
I hate when that happens.
Your other left.
Like when you can't get your
Yeah, there you go.
you can't get your bangs right. I hate that.
I know, you know?
I hate that.
What's going on with you? I'm watching you walk. What did you do? Did the corned beef king of Chicago get taken down by his own corned beef?
Looks like it.
Is that what happened?
Looks like
You gave yourself the gout, so you use your phone to take a picture. Like if the print on like a bottle or package is too small, if you take a picture of it, you can make it bigger.
Yeah, I do that all the time.
That. My eyesight's perfect.
We literally tweeted a photo of you out this morning.
Put that photo up.
Be so for real right now.
Hold on.
My God. You can hear them
There you
laughing.
go.
You can hear them laughing.
Studio, but that's Tom right now. That's my view of Tom. Beautiful. He came in wearing that today.
Wait, what does the back say? Does it have your name on it?
No, I would never wear a shirt. Now, I'm glad you brought that up because only the biggest loser in the world would wear a jersey with their name.
Hey!
JJ.
Put him up. Put him up.
Only the biggest loser.
There they go. Scott, what's up, my man? How's Japan?
Scott, you better have not worn the jersey with your name on the back. Nobody wears a jersey with their name on it.
Look how good that looks.
That is so lame. I'm sorry. You can't do that. I'm so embarrassed that JJ's wearing that jersey.
What does it matter to you what someone else wears?
There's a code.
What is the code?
It's all right.
There's a code. In Chicago, if he wears a jersey with his name on it, somebody's gonna throw a beer on him.
Would you like to say hi to Mr. Tom Ricketts?
We're having an argument on air right now, and you got to put it to bed for us. JJ's wearing a jersey with his name on the back, and we're arguing whether or not, according to the Guy code, you can wear a jersey to a game with your name on the back if you're not a player.
Mr. Ricketts, sir, my argument was that these beautifully crafted jerseys were a gift from your organization and that it is an honor to wear the jersey with your name on it.
And my argument is no guy in the world should wear a jersey with their name on it and not expect to have a beer.
And I'm trying
not expect to have a beer thrown on them.
I'm trying to stay out of it so I get one of those jerseys one day.
I think it's okay.
Yeah!
I've gotten jerseys. I think it's okay. If you're a big Cubs fan and you go to a lot of Cubs games, having a jersey with your name on it is 100% fine.
There you go.
Did you see Ricketts after we talked to him?
Yeah.
We asked him if he thought it was okay if you wore a jersey with your name on it.
I did see that. He said
and
yes.
He said he would never do it, but, you know.
No, he did not. He said yes.
I think it's okay.
Okay, revisionist history. It's recorded. I saw it.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hello, everybody. We're back. I'm Tom Sosnoff, and I am joined today by the Victor Jones. Mr. Jones?
Well. Oh, yeah. Tom, I guess no Tony. Tasty Nation, how you doing, my friend? Flying solo.
And then there were two.
I miss Tony already. We're 5 seconds into this segment, and I miss Tony already. But Tom, we're gonna make it work. We're gonna make it do what it does. How are you?
I'm great. Never better. I mean, this is like a holiday for me. Tony's not here. I'm on holiday.
You're such a liar. You're such a liar. You know what I mean?
I'm on holiday. Don't ruin my run. I'm on a holiday right now.
You miss him, and I know you miss him. That's why you're saying it. You know
nope,
what I mean?
I'm all good.
I feel like if he was away for too long, you would suffer sort of like that broken heart syndrome. You know, if you've had two dogs for a long time, and then if one's not there anymore, then one will have like a broken heart syndrome. I think that would happen with you if Tony was away for too long. You agree?
No, I'm good.
Hey, before we get to the meat and potatoes today, I'm sort of fascinated by this 23andMe saga that's been playing out.
Okay.
Without getting into details, the most interesting thing to me is just like, can I ask you, did you ever do this thing, whether it's 23andMe or any of these, put your genetic code in a box and mail it off to some corporation?
I did. Only because we did it for the show. So I had some fun. We did it for the show. But I don't know if I used 23andMe or Ancestry.com. I don't remember which one we used. I did it with Lindsay. We did it together. Lindsay's I did the Untrainable series with her. But we did it for fun on the show. And yeah, I did it.
I actually, you know what? I should have known that. And this isn't where I actually wanted to go. I was just this was gonna be a little throwaway before I got into the meat and potatoes. And now I can't help myself. I should have known you would have done this. I was gifted this on a Christmas morning a few years ago. And this was, these things are $100, $200 or something like that. Normally I get a gift. I don't, and I know I'm not going to use, Tom. I just smile. I say thank you. I put that thing away.
Sure.
This thing was a couple $100, and I said, hey, I know how much this was. You should take this back. And I said you should take this back because there was no way in hell I was going to put a sample of my DNA and mail it off to some corporation. No way in hell. Not because I'm a crazy person.
Yeah. No, you're crazy. You are crazy. Yeah, I know that. You are a crazy person, but it's good that you can finally admit it, and it's okay. I'll put my DNA anywhere. I don't care.
Somebody put that on it. Somebody clip that. Somebody clip that and send it to me.
Anybody wants a DNA sample? Sure, I'll give you one. What do I care?
Please keep talking, Thomas. Please keep talking. But I think there was no way I was going to pay somebody else to put my DNA in a box for somebody else to tell me something that my grandmother had already told me about our family on one side and my grandfather on the other. And now sort of there's this risk. This company's going through bankruptcy. They're trying to figure out how to monetize their existing assets. And now everyone's freaking out because the company's trying to sell their existing data to try to monetize whatever value they have left. And I find it absolutely fascinating. People are trying to delete their data off of their platform. They're freaking out about this. But it's like when you were paying $50 or $75, $100, $150 just to figure out you were 2%, I don't know. What are you, 2% Croatian or something like this? What was the value proposition? And I can't help, you and I have always had a difference of opinion about the price of privacy. To me, not only am I not going to send off this data to somebody else, I'm certainly not going to pay for it. And you have always sort of not had an issue at all with people collecting and harvesting personal data, with monetizing people's personal data. And I've never quite understood why this commodity, why one of the most valuable commodities of the modern day and age, to you just don't care. You'll gladly give it away, all of your personal data, for free. And I don't understand your position on this. Well, the price of privacy to you is zero, and to me it's infinite. Yeah, and I don't get your position.
Your position on privacy drives me insane. It's the most ridiculous thing in the world. So great. So when you die, who is Victor Jones? Nobody knows. Yeah, he didn't share anything with anybody. All we know is we got this picture and that's it. what's the big deal? Like, you're so worried about your privacy, your DNA. Who cares? Well, I know why you're worried, because you think there's Victor Jones is running around somewhere. But, you know, like, you know, sure, yeah.
Coming from the guy who says, "I'll put my DNA anywhere." No, it's deeper than that, Tom. I feel like our internet activity is being harvested and it's being monetized. It's being utilized in many cases.
I love this argument, because how is whoever I used, Ancestry or 23andMe, what's being harvested? What's being used? I'm curious to know, because I'm fascinated by this. I'm fascinated by all these crazy, I call them, like, it's a different version of preppers that you're one of them, by the way. You know, you're a different version of a prepper. And like, you're trying to protect your privacy, but for what? What are you protecting?
Right. Let me separate out this issue. The 23andMe was an opening, and the deeper issue behind that opening was your position on internet data, your position on internet privacy, which has the likes of Mark Zuckerberg and many of these internet titans have harvested a lot of people's digital exhaust and have monetized it for their own personal benefit, to predict people's outcomes, to predict their spending behavior, to predict how they can attract their attention. They've monetized all of this stuff, and I believe it has value. And I, to the extent possible, would like to protect my digital likeness. I'd like to protect my data to the extent that it cannot be monetized against me without me opting in. And I feel like the internet, the modern internet, has not offered an option for me to opt out. All of my digital exhaust is being harvested to try to use to monetize against me. And my issue with you is you just never cared. You've never thought this was a big issue. That digital privacy, that internet privacy has never mattered to you at all. And this I do not understand. As somebody, you're tech savvy, you're a technologist, you understand the value of this data, but you've never cared about digital privacy. You've never cared that, Mark Zuckerberg and these guys are just trampling over
I don't know what
digital users' privacy.
You're right. I've never cared. I don't care one bit, and I never will care. And I don't know what you think Mark Zuckerberg's done with my data that has somehow enhanced his life. Like, I'm going to tell you right now, one of the reasons that we're successful is because we don't care about this. People that care, it's almost impossible to, if you care that much about the privacy of your data, it's almost impossible in an internet age to be successful. When you think about the people that have somehow monetized, the digital age, and I like to think we were one of the first people that created digital content, especially in the world of finance. I know we were the first. And I'd like to think that if we didn't pretty much put ourselves out there in every single bit of who we are and what we are and all that this company never would have been successful and never would have been the largest digital financial network in the world. And so I am going to take it very seriously and very personally that one of the reasons that we've been successful is because we've never had that fear of, oh my God, Mark Zuckerberg is going to use my data against me and get me to buy, an extra smoker from Costco or whatever the hell they do. I mean, like, this stuff doesn't bother me one bit. It has zero impact on my life. And I think people that guard, their personal, we're not talking about like, it's a little bit different than, let's just call it like just let's just call it personal data, but not the kind of data where you could go, steal somebody's identity. Let's just call it just everything else. You want to know anything about me? I'll tell it to you. Like, you want to know what I want to eat, what I wear, where I sleep, who I'm sleeping with. What do you? I'll tell you everything. I don't care. Like, it doesn't matter. Like, I never understood why any of that matters. Like nobody's monetizing that. And if they are monetizing that, Godspeed if you can monetize that. In fact, I'm going to take it a step further. Hold on one more sec. I'm going to take it one step further. The person that figures out how to help individuals monetize that information themselves is going to recreate or reinvent social media. Like that's where the real value is. And that doesn't exist yet because everybody's so paranoid about all this stuff.
I would 1,000% agree with that last statement. I just, some part of me wonders if I could take us back to like 2008, 2009. People were just sharing their birthday photos or their vacation photos on Facebook. If you actually knew what you were exchanging, if you knew what you were giving up over the longer term period of time, if you knew that you were effectively giving up data to these algorithms that could in turn predict your behavior better than you could predict your own behavior, I wonder, would we have made those same choices to the same extent that if you really understood you're giving up your genetic sequencing to this private corporation, just to say, hey, I'm 2% Croatian or whatever. Like, did you really understand the value proposition and were you correctly monetizing that? Like, there's a part of me that thinks I shouldn't have been paying for you to get my DNA as a private corporation. It's the value proposition was inverted. You should have been paying me for that amount of data.
Yeah.
And for some reason, we as consumers didn't understand the value proposition. We gave things either away too cheaply or we actually paid when we should have been on the receiving end.
I think that's very misleading. I think people did it not just to find out that they were 2% Croatian or, they were, whatever, they had a few percent. I think also there's a lot of things in there, like, I had cousins that reached out that I didn't even know they were cousins, like it was just like, it was kind of cool. And yeah, you should pay for that. I mean, somebody had to do all the work. I mean, nobody used my data from 23andMe in any way that hurt me. And if it can make the world a better place, I'm okay with that.
My family found a couple of brothers and sisters that they didn't know they had. You know what I'm saying? Like
Tony,
that happened in my family.
Tony had no idea he had 3 siblings.
Yeah, that's the old days when you could move to the other side of the town and there was no social media.
But I'm just saying, like, until
go get a pack of cigarettes and never come back.
Until a couple of years ago, Tony didn't know he had siblings. So like, I mean, it's not crazy.
It isn't. I'm not going to go political, but I am curious.
Okay.
I'm not going to go political, but I think the 25% auto tariffs were in play as of yesterday, and it's causing some volatility across markets, but in particular in autos. General Motors down like 6.5%.
Sure.
Ford down 3%, something like this.
I'm looking at it.
I'm curious when is the right time? How do you know when do you switch from being defensive or this is crazy or this doesn't make any sense? When do you switch from that mode to the opportunist? When does Tom Sosnoff look at General Motors at 47, or 30 or whatever the ultimate price is going to be and turn into an opportunist?
I mean, you could buy Ford here at $10, I think, but I mean, to me, this tariff is just a game and it has no real meaning. This is just Trump trying to play mind games with, like, he has this incredible power. There's this something in his brain that requires that he controls, there's some powerful thing and there's somebody in his ear telling him he's not smart enough to pull anything like this off in an intelligent way. So I just think this is just like him, just a power play. And I think it's incredibly stupid because it really destroys, like if you're Ford or General Motors and you're any automobile company, you're any big manufacturer anywhere in the world, it's just mind games. That's all it is. It's just a joke. It's just like, it's just a stupid, like, I can't even. It bothers me so much because I hate games more than anything else. Like I hate people that play games because they think they can move markets. Like they're good poker players when they're the worst ever. Like that bothers me. And there's a beauty to free markets, and they shouldn't be gamed by the executive branch, period. And that's all this is. And it just bothers me that this is news, because it shouldn't be. It's a waste of what our energy should be focusing on. It doesn't make the world a better place, Vic. It doesn't make the world better. And that's the problem. People should be focusing on making the world a better place, making the economy stronger for everybody, making the world a better place, working together. And it's the exact opposite. It's going backwards. It's going backwards into the days of just the idiocy of trade wars, and to intentionally start them makes no sense whatsoever. Zero.
Can I
give this?
Why do you think
I give this zero stars?
The April 2nd sort of date. Are you in any way surprised? Like when I look at the vol term structure around April 2nd, it sort of seems like there's no real event risk priced into April 2nd.
Of course there's not.
To me,
think about it.
That's where I'm going. To me, this makes sense why there isn't an actual binary event risk on April 2nd.
Of course.
I can explain why I think that's the case. You go ahead, lay it out why you don't think there. It makes perfect sense to me that there isn't actual binary event risk priced.
There is no binary event risk. A, because he won't stick to this, and B, because the world, including investors, have already discounted his importance down to virtually zero. He's lost all credibility with the street, so nobody cares anymore. It's already off the table. Nobody cares. You blew your credibility in 60 days. That's what he did.
Yeah, I think from my point of view, there's a very low probability that April 2nd becomes like this vol damping date. There's this great saying that like knowledge is vol damping. And I think what happens on April 2nd is you get a little bit of information and then you get a new date. If that's the case, why would you price in this big binary event risk when you know the most likely outcome is a little piece of information and a new date to string along and have a new conversation? I think that's the most likely outcome. And I think all the poker players in the marketplace probably see it the exact same way, Tom.
You are 100% correct, because you know what? Nothing is smarter than the flow of hundreds of billions or trillions of dollars of capital. Nothing is smarter. And the money is telling you the story. That's all there is to it. There's nothing else to it. Like you can read these headlines till you're blue in the face. Nobody cares. Nobody gives an F. Nobody cares.
Can I ask you? I've sort of made this theory. I don't think it really matters, but I've had this theory out there that I think from a negotiating point of view, it probably helps to advance discussions if you can time box it. So at some level, the administration or whoever thinks that by having a date or a deadline, you can sort of advance a negotiation or discussion. And I think that's why we have these dates. I think that's why we're going to keep getting these dates. It's to try to put some sort of urgency on a discussion or box people in for these discussions. Do you think what do you think about that theory, that the idea that the reason we keep getting these dates is for negotiation?
You're giving a bunch of knuckle draggers a lot more credit than they deserve. This is pure stupidity playing out in real time, and don't give them any more credit. This is the Howard Lutnicks of the world trying to flex, and it's so ridiculous. And none of it. The market's telling you it's a joke. The market is flat out telling you it is an absolute joke. The market is not buying one bit of this. It's not buying one bit. And the market's smart. It's a joke. We got to stop. The world needs to focus on other things. Okay? This is not the place we want the world focusing on. It's embarrassing.
So, you once told me I had to make a choice. I had to make a choice between being a humanitarian and being an opportunist. And you said that in periods of chaos, you have to just care about the opportunity that chaos brings. And I wonder, is that the mindset that you have right now? You see these wide distributions, you see these dislocations and the chaos that's sort of playing itself out in geopolitics and everything else. Are you sort of excited about the dislocations it brings, or are you concerned about the humanity and the potential pain that the chaos will bring? Which side of this coin are you on as Tom Sosnoff, the capitalist and opportunist?
That's really interesting. It's funny because I'm always an opportunist. Like, I feel like that's as a trader, that's been my role. As an entrepreneur, I'm an opportunist. As a trader, I'm an opportunist. I've never been different in 45 years, but I feel as I get older, there's a humanitarian side to me that there's like, I have the, good angel, bad angel type thing. And I feel like, we need to be more vocal, and we need to say things. We need to do things. See it, say it. And I think that, what we're witnessing right now is actually the exact opposite of that. And it really bothers me. I don't think I ever understood it before, the whole see it, say it, do something. And I think now more than ever, see it, say it, do something about it. That doesn't mean you can't be an opportunist at the same time. I'm an opportunist, but see it, say it, do something about it. Absolutely.
See it, say it, do something about it. Good words to go out on, Tom. Appreciate it.
Thanks, Vic.
All right. Take care, man. Don't dox me like you did your
I am so sorry.
Previous segment.
I'm so sorry. I feel bad. I threw her under the bus. Coming up next, we got Pete Momat. Thanks, Vic.
All right. See you, man.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
All right. Perfect. I would like to buy Park Place.
No.
What?
There is no Park Place in this game.
Yes, there is. I'm looking at it.
No.
I
This
will
is mine.
take it.
It's mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly, this is the mayor, and I'm overturning everything, and
You're
I'm
in over
allowed
your
to
head.
buy. Excuse me?
You're in over your cute little head.
Don't
right.
patronize me.
You
This
don't
is a
come
board
down
game.
to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it. Earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads. And what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue. A beautiful car worth 10 times more than your dog who is gone. Got to deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
Hello, everybody. We are back. I'm Tom Sosnoff. He's Pete Momat.
Hey, my friend. How are you?
Sitting in for Julia Spina, sitting in for Victor Jones. And
so you go to the attic and you find the extension cord you're looking for. It doesn't work. You go to the back of the attic. I'm kind of with the broken doll parts, like not quite the B list, maybe the C list when you're bringing in.
Oh, no. You're the top of the food chain.
There you go.
Yeah. You're the top. You were the first choice.
I have not been on the air with you for the longest time. And again, I was listening the hour before, and I'll put my DNA anywhere, and Victor's digital exhaust. The topics on the network have changed dramatically recently, which is really interesting to see.
Well, Victor, as I mentioned before, he's
digital exhaust. I like that. That's a new one.
Everybody gets freaked out about DNA, but I've been showing my trades for 40 years. I'm okay.
What's left to hide? I know.
Yeah.
I mean, the fact that somebody making money off of it's a different story.
Ever since, I agree. But ever since we started this network, we've thrown everything out there.
Right. Why would we stop now with our blood? Yeah, absolutely.
Corinne always says to me, she goes, "Can we keep anything private?" And I'm like, "Not at this point."
No.
She's like, I'd like to have some privacy. I'm like, nah, not at this point. Nothing much.
No, last weekend you run into a viewer,
yeah.
And then you run into one of my guys in a deli.
Yeah, but personal life, anything private? No, not really. It's okay. Anyway, we're gonna do a little market measure. Then we got Scott coming on.
Fantastic. That's great.
Easiest 50 minutes of your life. Pete's the CEO of tastyFX, and this is what you dreamed about.
Yeah, this is it. It's all about it. So, and we've got exciting stuff coming out with FX in the next month. So that'll be really interesting.
When are they putting it on the platform?
That's what's coming out. So
finally.
Yes, finally. I know. I've decided to put full days of work in the last couple of weeks, and I think we're going to make some progress on it. But no, I'm hopefully by the end of April, we'll have Forex in the all 82 FX pairs. Spot FX pairs into the platform. It's really exciting. It's the first time in a while we've brought a whole new product set in for traders to trade.
Yeah.
And it's a different type of exposure. We've done Forex pairs and futures. Yeah. They're difficult. Euro yen is difficult to construct, expensive to margin. Here, you've got all the setups and you've got all the mechanics done for you. The weightings are done. So it's a very straightforward, interesting product exercise. And we'll spend some time talking about that when that comes live.
About 20 some odd years ago, I built that into TOS.
Yeah.
And I built it with, on the interbank spread market, both ways. You could trade it off of commission based off the spread market or
just spread based.
Or spread based.
Yeah.
Commission free, let people choose what they wanted to do. What's interesting is I was surprised by the number of people that traded, spot markets, because I didn't grow up on spot markets.
Yeah.
So I always grew up on the futures markets.
Right.
By the way, did you see the news this morning on what the CME is doing? Vanetta talked about it. With they're going to be the first exchange that kind of connects to Google Cloud technology.
And blockchain clearing.
Yeah, blockchain clearing.
Yeah.
I think that's a really smart move on their part. And I think they will be the first. I mean, if that's the case, they will be the first to kind of a two tokenization.
Absolutely. And I think that is the measured step towards true 24/7 trading that will get part of the way down through the exercise of being able to offer the product around the clock.
Well, for sure. I mean, you already have around the clock trading, but the difference is that this will be a little bit more. There'll be some aspects of it that are, I think, more peer-to-peer,
right?
And they'll just rake off the top. And there'll be other parts to it that will allow you to be much smaller size, because I think you'll be able to dictate your own size. And then the final piece, which will be,
I didn't read it. So they're thinking about building smart contracts within this.
Okay, perfect.
Yeah.
And then the other piece to it, which I'm thinking, is that, nothing would stop them at that point from just annihilating the existing event-based business and just taking the whole thing over.
Right. Well, they've had a run at event contracts, and they
didn't do a good job.
No, they weren't quite built
I'm
right.
saying if they put it on an exchange, and they actually bring in real market makers,
right,
and they create a product where all of us can trade it, where the fees are a lot less than what they are now.
Right.
I think it could be successful.
Yeah. So I think it's funny. JJ and I met with them a couple of weeks ago, and they've got a lot of new stuff coming down the pipe. So I think this summer we'll see a lot of new product coming out. So that'll be exciting.
Yeah. So again, that's good news. It's fun. It's good stuff to talk about. Pete and I are going to do a zero DTE piece. You ready?
Yeah. Let's fire away.
Since you've done a zero DTE piece. But Liz and Jenny went down this path yesterday on the floor of the SIBO. By the way, did you see that piece they did yesterday?
No, I didn't see it.
It was really good.
Yeah?
They did a piece on the floor of the SIBO with Kathy Clay. It was really good. I enjoyed it. Stop losses and defined risk zero DTEs. I did not do a zero DTE trade today. I did one yesterday. And I did one yesterday, about 8, what time did we do it? About 8:45 in the morning. And by 9:15, I had my 25%.
You were done.
I was done. But I find, and by the afternoon, it was a $5 loser.
Right.
So, I can't stress this anymore. If you're going to trade zero DTEs, take your profits early and get out.
Right.
That's it. Yeah. And then you come back the next day. Let's go to the first slide, John. Stop losses in zero DTE, defined risk. So the zero DTE markets in the most popular underlyings, which is really the S&Ps, are extremely active and liquid. Unfortunately, BPR realities mean that trading in them is largely restricted to defined risk positions. Right. I actually did an Iron Condor yesterday, defined risk position. Last week, we examined the effects of Iron Condor initial trade parameters, the short strikes, the win width, and everything else, and closing winners at 25% of max profit, which is what I did yesterday. The extreme liquidity of zero DTE options allows active traders to practice almost any mechanics they want. Today, we'll examine the effects of defensively closing losing positions.
I think this is really interesting because you've got this great opportunity with massive theta decay, but you're also taking on gamma risk. So it brings in the question, this piece is really interesting because it talks about, okay, how do I tame the beast? How do I make sure, coming from the world of futures and spot FX, they're Delta One products, they're static Delta. Yeah. Management's an important component in that. Here we have the same exercise we're going to talk through right now, where we talk about how do we harvest winners and how do we manage, what is the sweet spot around management as gamma starts to take hold on these.
Absolutely. And you know what's for people that are confused by what the thing popular underlyings here, most people who trade zero DTEs, some people trade NASDAQ, so the Qs and NDX and NQ and that kind of, but most people, I would say 90+% of the business in the zeros is in SPX,
right,
SPY, ES. There's a little bit in XSP. There's a little bit in MES, but those are a little less liquid. And the majority of the business comes from defined risk spreads or long positions in SPX, ES, and SPY. The advantage of SPX is that it's cash settled.
Right. And don't you think it's also the liquidity? You want, especially for a fast-moving trade like this,
there's massive liquidity in all these.
Right. But you want to be able to get at that price quickly.
Right.
Yeah.
But the advantage of the SPX is that it's cash settled. ES settles to futures.
Right.
And SPY settles to stock.
Right.
So that's why most people kind of lean on the SPX.
Okay.
And if you're wondering why the ES can't settle to cash because it makes the most sense, or why the stocks can't settle to cash SPY, it's because it's a regulatory reason.
Right.
It's not because they don't want to.
No, it's something
they can't.
We've battled long and hard over.
Yes, we've battled this same.
Yes.
Trust me. Let's go to the next slide. So we did a study. We used 2 years of data in the 0 DTE SPX options. We sold iron condors at the market opening with 20 delta short strikes and wings at 20 past. Trades were closed when they reached 25% of max profit. We repeated the study using $40 and $60 wide wings, so really wide wings, and filled everything at mid-price, which is a little misleading, but close enough. You can take off a dime if you want. And let's go to the next slide. So there's a couple things. Now, remember, this is a stop loss discussion. And the stop loss that we talk about is
it's not something we often talk about.
It's a mental thing.
Right.
Okay, where do you stop yourself out?
Right.
So with iron condors with $20 wide wings, all right, if you notice here, the average P&L, if you take profits at 25%, these are not times 100 or whatever. These are just the profits. $10, $11, $12, $11, $3, and $24. These are with, everything from the losses being unmanaged to the losses to taking a stop loss. The C bar is obviously lower if you take a stop loss, which the one thing I wanted to point out here is that the win percentage with stop losses is a little bit lower. The other numbers don't change that much. And this is just the first slide. This is $20. This is 20 delta short strike, $20 wide wings.
CVAR is that estimation of the
worst loss.
Worst 5%. Loss, 5%. So 1 out of 20, what your worst loss will be.
Yes. And it's all those worst losses are factored into these numbers.
Right.
That's why the number is only $10. Like your normal trade, like I think yesterday I sold a trade for, I want to say $1.50 or $1.60, I don't remember. And I bought it in for $1.10. So I made 40 cents, which was 25%. Like, so if you're doing, if you're doing a one lot, it's $40.
Right.
And so the numbers tend to be like about probably 4 times these, but then you have to factor in the few losers that wipe out some of the winners. Okay. But just so you see, so this is with $20 wide wings, and this is with your stop losses across the board. If you push your stop losses out further, you give yourself a much higher win rate. And that's the takeaway from this slide.
Right.
Let's go to the next slide. So with $40 wide wings, you can see here, the numbers are going to be very similar. The win percentages, very similar.
Yeah.
The difference here is that, you'd have let's put it this way. You have a hard time arguing that the stop losses really help you much. It's really just about the 25%, taking profits 25%.
Right.
Because the stop losses, I don't know. I don't know. I think I'd rather have the higher win percentage.
Yeah, but if you're depending on your account size, and I mean, part of the goal every day is to make money, but part of the goal is to be able to come back the next day. You do want to be mindful of statistically what you're exposing yourself to in that 5% outcome.
I hear you, and I guess my takeaway from the first 2 slides, and John, you can go to the next slide, is that if you push your stop loss way away, your win percentage is so much higher. And this is $60 wide wings. It's the same story. And
absolutely, if you're going to 200 or 300%, that doesn't make any sense. You might as well just let it go.
By not using stop losses here, which is our general approach, we don't use stop loss. We take a loss at some point early in the day, or we take profits.
Right.
And that seems to be the best approach, because the argument here is if you use a stop loss, you don't really make that much money.
Right.
And if you don't use a stop loss, or you put it 100, 200, 300% away, you do actually better.
Right. Right. And you're saying a stop loss, the traditional, keeping it tight, 25, 50%.
You can't do it.
No. Here, I mean, and it's great to see the numbers kind of reinforce the concept that at 100%, that lands in that sweet spot.
Yeah, 100%, 200%, 300%, or not at all, way better and a much higher win percentage.
Right.
So higher win percentage, and you make more money. without using a stop loss.
Right.
I hate stop losses anyway. This just goes to validate everything. Let's go to the last slide. So the zero DTE option markets provide active traders with an opportunity to quickly and efficiently manage their positions. And so far, quickly taking profits has proven the key to success. I have found that 100% of the time. Stop losses, whether they're automated or through alternative active trading, which just means attentive active trading, which means just watching them, are not guarantees. In a fast-moving market, they can result in losses larger than their intended levels. But even only checking once every 10 minutes, defending these losers quickly was effective at curtailing the worst losses at the expense of giving up the frequency of winning trades. Large stop loss limits, however, generally performed worse than letting losers ride. If you are comfortable with exposure to occasional large losers, then it may be best to stick with only closing winners. I feel like
would you go with tighter wings if you were concerned about that CVAR number? Would you go with tighter wings to limit that and just let them go?
It really depends how much capital you have.
Yeah.
It's all based on the amount of capital you have.
Right.
Everything's based on how much capital you have and how much you can use. I find the 0 days, if you have the ability not to look for a few minutes, the 0 days are kind of fun. If you're one of those people,
tape the platform for 5 minutes, and
if you're one of those people that has to really look at the trade all the time, the zero DTs are really hard.
Yeah.
They drive you freaking nuts. I don't enjoy them personally as much as I thought I would.
Yeah.
I enjoy like my other trades way more.
Well, I think, again, when you remove that, you bring that gamma component in, it feels very much like you've got to have everything fall just right at the right period of time. So this was an interesting walkthrough, though, in terms of, being mindful of the scope and the scale. Now, if you did straddle, do you ever do zero DT straddles?
No. Okay. I usually do. My go-to is whatever the expected move is.
Okay.
So, like, if I did,
so you're front loading it already with an edge.
Oh, yeah. Well, yeah. That's my default. I don't even mess with it. Like right now, if you were to do zero DTs right now at 9:30 in the morning Central Time, expected move today in the zeros is $30.
Right.
28. I would round it up to 30.
Right.
So I would go $30 away from at the money.
Okay.
And that'd be my short strikes. I don't even mess with anything else.
All right.
Before we take a short break and bring on Scott, S&Ps have had a nice rally. Pete Moment
we're back up.
Is good for the stock market, good for the world. S&P's up 50 cents, 75 cents. They've been sitting right here. NASDAQ's only down 30 now. It was down almost 200 earlier. The Dow's up 25 points, and the Russell's up 60 cents. S&P's up $1.50. Bonds are down 14. They've been dead all day. I think they're going to stay dead until the number tomorrow.
Yeah.
Notes are down really small, and commodities haven't done much except for gold.
Gold's back up, lifetime highs. We had a little $15 sell-off below, right back at $3,090. And copper put in multi-decade highs yesterday, sold off a little bit this morning, but that's coming back in the game too. These precious metals are unrelenting to the upside right now.
Yeah, some of these stocks have had some pretty decent moves this morning. Netflix is up 10, Microsoft's up a little bit, Baidu's up, Baba's up.
Yeah, Amazon, Meta, Apple, all have gone from red to green.
Yep, they've all gone. So there's been a little bit of a bounce here.
Yeah.
We're going to come back in a couple seconds with Scott.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap.
hitch, 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 turn, shuffle, rock, shuffle, rock, shimmies, shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
Right, together, spin it around. Yup. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
Perfect. And you got the bed. You got everything.
That is not even close.
Drop, bitch, stole my. Oh, it's flawless.
Oh, look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God. You watched the debate. You knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank
VHS
VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute. Was it always 8:30? Yes. The opening always was the same. The closing has changed.
Like, what has
Wasn't
changed? I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Engage.
Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hello, everybody. We're back. I'm Tom Sosnoff. Pete Molmat.
Sir.
We're going to bring in Scott Sheridan. He has to play his music. He's like, he's weird that way.
Hello, okay, sir. How are you?
White boy. There you go.
You know, every player's got their song.
Yeah, but you don't. You're not.
Hey, I'm going opening. Don't Don't rain on my parade. I'm going opening day today.
That's right. You got D-backs
Second
opening day.
Oh.
That's right.
Yeah.
That's why when I asked you yesterday, what were you doing tomorrow? And you got nervous because you thought I wanted to go on a date with you, which I didn't. I had plans. I was just trying to give you a pro tip to go to the Bulls-Lakers game tonight.
I don't have tickets to the Lakers-Bulls game tonight.
Okay, give me your credit card. I'll get you tickets. Actually, I have your credit card. I'll just buy your tickets. I'll send them to you. You should go. It's going to be a great game.
Last night's Laker game was a great game. They won on a tip-in at the buzzer in Indiana.
Oh, did they?
Yeah, I just don't know if I want to go to the UC tonight. I got a lot of stuff going on.
He's a busy man, Scott.
You seriously, when did you turn into a complainer?
I'm not a complainer. I said I got a lot of stuff going on.
No, you are. But that's a complainer. That's a backhanded way of complaining. Okay, you have time. Put the computer down. Go enjoy yourself for a little bit. And if you happen to see, I don't know if you watched the highlights, Celtics Suns last night. Oof. Celtics took them by like 30.
Oh, I didn't. Why would I watch the highlights of the Celtics Suns?
Well, you said you watched the highlights of the Lakers tip-in. You weren't watching that game.
Oh yeah, I watched that. Yeah, but not the Celtics. Not the Celtics Suns.
Celtics.
No, I would like to go. Actually, I would like to go to the Bulls game tonight, but I need. I don't have tickets. I got to find. It's a lot of work. It's
he's got to dial. Okay. He's got to call.
I got to make calls.
He's got to.
You have people. Don't you have Tony's guy?
It's a lot of work.
Tony. And he's probably on the boat. Call
There's
Tony.
The parking, the walking.
Parking, walking.
Hey, parking. Pete, you understand. He's got K-Lot parking. Just pull
I need
up.
somebody to go with.
Yourself as Trust me. There will be people to go with you. First of all, Nicky Bat said he'd go. Kevin will definitely go. If you're buying, he's going. Todd 100% would go. Pete might even go, although Pete wants to get back to the suburbs. Suburbanites don't like
I don't know. I'm
kind
of busy.
Yeah, Pete's very busy. Very, very busy.
Well, I think you should do that. So
Scott, what time's the game?
Pete,
7:30.
Bulls game should be 7, whatever. So Cubs game's tonight, 7:10.
Fantastic.
So 9:10 for you, which is past your bedtime.
That's right.
But if you go to the Bulls game, right? But if you go to the Bulls game, you could at the end you catch the beginning of the baseball game.
See, that's perfect. And I like.
Oh my God.
I can make that window. That window works for me.
I like it. Well, first of all, I like seeing you here. I don't know if I've done a show with you. So nice to have you on. Did TP was 3 days and done. He couldn't do another day.
No, he was never able to do today. He had a conflict, but he'll be back tomorrow. TP has conflicts.
Dude, don't announce what it is on air, but I want to hear what this conflict is later.
He has very important conflicts.
The pork butt needed attending.
Yes.
I do say TP does come on with some good food choices. He's a consumer, which is good.
No, he is a consumer. He's always been a consumer. Yeah. That is a good thing.
Talking about TP, how is Tony doing? Because I know you guys are chatting. I haven't talked to him. So Tony, if you're watching, I hope you're having a good break. How's the fishing?
I talked to him last night.
You've not talked to him. Oh,
no,
good. Okay.
No, I talked to him last night. He's fine. He's like, he goes out on the ocean each day.
Don't take a shot. Just be nice.
I mean,
he's in the midst of Stockholm syndrome right now.
Tony is. He actually was like in the chat most of yesterday. Like he doesn't even know how. Like he's so paranoid we're talking about him, and then he really wants to find little parts. Like I don't like to talk about him because that gives him bullets. Because then he's like, "Oh, all you did was talk about me," so I don't really talk about him.
Yeah, but that's not answering. How's his vacation?
Oh, he's fine. He's good. Catching fish, and he's catching fish. He's putzing around the house. What does Tony do? He's like an old Italian guy. He's an old Italian guy that stands in the backyard. He yells at neighbors for, walking down the pathway near his house. He takes the boat out. He comes back, Gets
the paper in his robe and slippers in the morning at the end of the driveway.
I mean, if I had to,
A little Soprano-esque.
It's very Soprano-esque.
Yeah.
He walks. I don't know what he does. Like, I'm not sure.
Yeah.
He loves the fishing. So
he's a good. Actually, Tony's really good at doing nothing. Like a lot of people. No.
And I think that's actually, I know what you're saying, and that's a great compliment.
It is.
Unwind
But you know what?
and enjoy it, and not be thinking about the next thing.
Going fishing is not doing nothing. That's not nothing. It's going fishing. So why don't you say Tony's good at separating from work and going to enjoy himself? That to you is doing nothing.
I mean, he's digging in some good ground here. That's a fair call. That I say probably. Yeah. If I'm not producing something, I'm not.
See, some people live to work.
I was going to say.
Other people work to live. The rest of us.
The rest of us.
Right. All right.
So anyway, he's doing fine. He was out at some. I talked to him. He was out to dinner. He's doing fine.
And here it comes. Olive Garden. What restaurant? Go ahead, pick on him.
I mean, it didn't. They were calling names over the loudspeaker, so I don't think it was like,
Batista, your order's ready.
Yeah, exactly. So I don't think it was very fancy. And they're like, Batista, number 432, your order is ready for pickup. So yeah,
All right, fair enough.
So I'm not sure where he was.
More importantly, what's for lunch today?
Oh, you're going to be jealous.
Well, I didn't look. What is for lunch today?
Fried the coop.
Oh, good stuff.
That hurts.
Yeah, we had the K-Fire on Tuesday. Not so good.
I love K-Fire.
See,
No,
that's
you
like,
can't love K-Fire. It's 6 pounds of rice and an ounce of chicken.
It's not even chicken, I don't think.
Good kimchi. You got to dump all the stuff on.
I love it. Dump the
pile
stuff on in the hot sauce. I think it's one of my favorite lunches.
Really?
I know.
And you're giving me a hard time about Arby's, and you like K-Fire. The K-Fire is the Arby's of.
No, I like it.
Okay.
And today,
Pete, I can't get behind the Arby's. I'm sorry.
I know. It's kind of a weird thing.
Arby's gets surprisingly.
Woody loved.
Arby's
loved
gets
Arby's.
surprisingly good reviews by my food critics.
Yeah.
Arby's gets surprisingly good reviews, across the board by all the in-car food critics.
Well, in fairness, it's been decades since I've been to an Arby's.
Right.
Last time I was at an Arby's, there used to be an Arby's, if you remember, it's on North Avenue in Wells.
Yeah.
It's now Starbucks. That was an Arby's. It's got to be 30 years since I've been to an Arby's.
There's not many left. There's one in West Glenview. No, we were talking about it. Like in comparison, if I'm driving by a KFC, Chipotle's, and an Arby's, I'm going to pick the Arby's. And Tom was like, "You're insane. You have no taste whatsoever." So I'm not like comparing it against.
Do you remember
Michelin star restaurant, Arby's, and Girl in the Bill? I pick Arby's.
Do you remember when they used to do 5 for $5?
Yeah.
See, $5 gets you 5 roast beef sandwiches.
Yeah, right.
We would send our
that's like
clerk.
30 years ago too.
We would send our clerk. This is like the 80s or 90s. We'd send our clerk. Go get like 25 sandwiches. There'd be 4 guys. Okay.
And don't forget the cheese.
And don't forget the horsey sauce.
The horsey sauce, that's what it is. Right? Yeah.
Get 25 sandwiches for $25.
Oh, God.
And bring back the change.
Yeah.
And don't forget the horsey sauce. Then we get sick.
True.
Yeah.
All right. I'll have to give it a try the next time I'm in the mood for fast food.
There you go.
Okay. Should we get to some business?
Supposedly, according to my girl,
yes.
Eat, drink, and be Mandy.
You drink and be Mandy?
Yes.
Okay.
She says the burger's really good there.
The burger?
Yes.
Wow.
I didn't know they made burgers.
Of course you did, because you don't watch Eat, Drink, and Be Mandy.
What are some of the other highlights from each? What are the other highlights from Mandy?
The food, like, I have a series of guys like Wayne Dang, Luke Foods, Eat, Drink, and Be Mandy, all these. Kaylee. I watched like 10 different people. They're all great. And they sit in their car and they each have a different style. And it's all just, they go from place to place.
And they're all over the country.
They're all over the country.
Okay.
I've been to like probably hundreds of the restaurants they've been to.
Right.
So, but some of them I obviously never been to, but it's fun.
Okay.
They're
It's all fast food, Or they take
it's all
it to the
takeout.
local spot.
It's all takeout.
I mean, could they, if like you're in Chicago, could they go to Salt and Pepper and take something to go and eat it in the car, or no?
Well, they go to Chicago a lot, but different.
What would be a place in Chicago?
They'll go to like, it's usually pretty fast foodish. So they'll go, a lot of people do like Wiener Circle or Pequods or there's other places.
Pequods in the car?
Yeah, and they'll do a lot.
Do you need a detail like after that one?
They'll do a little taco places and stuff like that. The place next to the pizza in a bowl place, next to Ricardo's.
Pizza in a bowl.
Pizza in a bowl.
Yeah, the upside down.
No, you're talking about oven grinder. Chicago
Oven grinder.
Oh,
That's
okay.
pizza in a bowl.
Yeah.
That's big on social media. It's been that way for 20 years.
Yeah.
That place, I haven't been there in probably 20 years. That place always has a line.
Yeah, it always has a line. I'm telling you, it's very popular and big on social media. They cook it in a bowl and then they flip it over. Haven't you ever had it there?
I've never had it there.
Oh, their pizza. They cook pizza in a bowl and they flip it over on the table. It's pretty good.
Okay. There you go.
I don't know if that's exactly like I've had it, but it's been literally 20, 30 years since I've been there. But that's not what I would call car food.
I didn't say it's car food, but it's all just part of the whole eating in cars. Ate everything in cars.
If I ever go on TikTok, I will ask you for some suggestions. And I have to say, my daughter's TikTok got hacked. Somebody stole her account. And TikTok has quite possibly the worst customer service ever. So unless you have 10,000 or more followers, they don't care. So somebody has total control, which she doesn't care about the account. There's no, credit cards. There's nothing attached to it. But they literally got in somehow, changed the email, changed the phone number, and they own that account now. And TikTok's answer is they open a ticket, she opened a ticket, they close the ticket. That's bad.
That's bad. I can't believe you're not on TikTok, though. It's so good. I would rather have TikTok than cable TV.
That's a strong statement, man.
You do have TikTok and don't have cable TV, so that's good.
I don't care about getting my TV fixed because I'd rather have TikTok than cable TV.
You're leaving the TV unfixed.
I don't care.
Really? You're getting everything you need from TikTok.
Yeah.
What about sports?
Yeah, I can watch sports.
I'm calling massive BS. You can watch sports where?
I have like the app.
The app. So you're going to watch a Bears game on your phone.
No, I'll get it fixed eventually. But I don't really care. Okay. I don't want to sit in front of it. I purposely do not want to be that person that sits in front of their TV 24 hours a day watching stupid shows and going, "Did you see this on Netflix?" I don't want to be that person.
He doesn't want to be that public person. He's next generation. He's next gen.
I have a lot of things going on in my life. I don't want to be the person that talks about what they watched on Netflix or Disney or Apple TV or whatever.
Pete, do you watch Reacher?
Yeah, I just watched it yesterday, actually. So, see, this is totally, this is no good. He's not going to be connected to that.
You have so become your parents because that's such a parental comment. I don't go outside and play. I don't want you watching TV.
But I don't tell others to do that. I just do. That's just me.
Yes, you do because you just made the comment. You made the backhanded attack. I don't want to be like those people.
That's not a backhanded attack. I just said I don't want to be one of those people. Just because you're one of those people, I wasn't directing it to you. I just don't want to be one of your people.
Scott, the new one on the SAS. Have you seen that one?
Great.
You have seen that, yeah. Isn't that fantastic? Again, you're busy.
Right.
You wouldn't
busy.
You don't have time for this, but it's really good.
If you watch this, here's the best part about it. If you watch SAS Rogue Heroes, you come back and say, "Okay, guys, I actually watched this show. It was amazing." We'll let you take credit for it. Okay, you can have credit for it because I know you can only, unless you get credit for it, you're not going to be interested. So you're going to say you found this show. Great show. And it's the way that it's based on a true story. Like you can go, that guy's insane.
Right. They all.
He's full on.
He's amazing.
Full on nuts.
Yeah.
But yeah, absolutely amazing. Okay, we'll be done. Should we go to some business?
Sure.
Good rally in the SPOOs, by the way.
Yeah.
Strong to quite strong.
It caught me.
Yeah, strong to quite strong.
Gold about to cross 3,100. Yeah, I know.
Pete, could you help me process gold at 3,100?
Again,
it was $1,800 to $2,000 for 20 years.
Jeez, Scott, we spent a lot of time when we first started. It had a hard time breaking over $300. I remember how many failed rallies to get it above $300. Yeah,
you're dating yourself, but yes, totally agree with that one.
I can't process what's driving this right now.
Can we just sell gold here?
With both hands. With both hands, 3,100.
I think so.
Mean,
where's the gold silver ratio?
It's got to be up because silver is not rallying to the same degree. So I don't know these. I don't have the number.
I don't think that's really a hedge.
But I got to figure it's 91.5. What do you think about it? Hey, you want a better, again, less correlated, but better gold platinum.
I want gold silver because I like that ratio. What is the ratio right now? Do I need to figure it out on my?
It doesn't make a difference. You have no.
He wants to know the number. Let me do the math.
Just do a little less gold naked. Yeah, just do a little less gold naked. Forget the hedge. It's not going to be a hedge for you. Okay, while you're doing that, I'm going to get to some business.
Okay.
And I want to. Then you go ahead and make a trade.
Let's see.
Top 15 symbols going through the. Oh my God! Could you not talk while I'm doing this? Top 15 symbols going through the system first 40 minutes today. No broad-based indices or futures. Tom, I know you're not listening, but in case you are, number 15, Netflix at an 82 for everybody else. Tesla to 65, Nvidia to 23, Meta to 38, AMD to 25, PLTR to 58, AVGO at a 45, Amazon at a 39, GME at a 6, GLD at a 20, TQQQ at a 53, BABA at a 41, MSTR to 22, Apple at a 44, GM at a 73, and number 15, Netflix at an 82, rounding out the next 10. SoFi at a 51, Microsoft at a 38, Goog with an L at a 44, SMH at a 31, Costco at a 37, Hood at a 47, SOXL at a 52, and Intel at a 57.
Did you figure out the ratio?
Yeah, 88.
88?
It's 88. Silver just rallied 80 cents. Sorry, Scott. Silver just rallied like 70 cents. So it's 88.3 right now when you're doing it. June futures against May platinum. Now remember, it was
I'm doing silver gold.
That's what I meant against May silver. It's 88.4 right now.
I hate that. All right. So
80, I'm agreeing, but just step up. Come on.
All right, then I'm just going to sell as much gold as I can get my hands on, which is
I think they're going to be more than willing to buy it at whatever level you're willing to let it go at now. Where are you now? It's the famous phone call you never want to get.
I'm at 3,100, but I just missed it.
Right. At 3,100 for sure.
I missed it.
Take it from you.
I missed it.
Give it a minute.
Don't worry.
It's breathing.
Give it another minute. Right.
I missed it. I have an offer in right now. I bought gold. I was selling silver. Then I said, you know what? I don't want freaking silver up here.
Right.
No, you don't. I don't think. I think Scott's right. You don't want the silver up.
I don't want the silver.
Not at 88. No.
Yeah,
and you don't want the platinum 2-1.
I don't want the platinum. I just want the short gold.
Okay.
All right, you're about to take a fill, Phil.
Not really. There you go.
There you go.
Possible. All right. Well, I'm hoping to get filled.
You're on the cuff.
There you go. Look at this. Real live trading. Look at this. We're sitting around going.
I'm just all staring and waiting for the next 50-cent print.
Yeah, that's pretty boring.
There you go.
What do you think?
All right, listen.
They just.
What?
Celtic sold last week for $6.1 billion.
Yes.
Weren't they publicly traded?
No.
I thought the Celtics were publicly traded. Is Green Bay the only publicly traded sports team?
But Green Bay is publicly traded, but it's not real. Like,
what do you mean?
because it doesn't.
You can't sell
They
the
just want
share.
to let people have a share.
Yeah, you can't really trade it. It's not. There's some other company. There's some other sports team I think that was publicly traded, but I can't remember. But the Celtics, no, the Celtics were bought by some guy. He paid $320 million for them in 2005, I think. Sold them for $6.
He just sold it for $6 billion.
Yeah, it's a good scalp.
Nice trade. So what are the Sox worth in their current state?
The White Sox?
Yeah.
White or red? White Sox about $4.
I would say probably $3 to $4 billion.
You really think so?
Yeah.
Yeah.
Yeah, because you can't get a team. I mean, there's 30, whatever. If there's 30, whatever, you got somebody that's going to say, I don't care. Let's have at it.
Well, they just sold a piece. Actually, they just sold a piece of the White Sox to that one guy. He just paid, I think, 2-point-something billion.
Really?
I mean, he's up for that was the valuation.
Right. He bought in at 2.2.
He bought in. I think it was 2-something. Yeah.
So who's the person about the Celtics?
Was it a hedge fund? I think it was a hedge fund.
Why not? Let's see.
Scott cares. There's no money in the Celtics. They don't make any money.
An investor, William Chisholm, an investor group led by this guy, a billionaire who amassed much of his wealth from private equities, buying the Celtics.
Yeah.
The group also includes Bob Hale, a current Celtics investor, and Bruce Beal Jr., president of real estate giant-related companies.
There you go. And you can decide. You can decide what kind of food they can sell at the Garden.
There you go. Never been to the Garden.
Either have I.
Speaking of food, I hope you enjoy your fry the coop.
All right.
I'm jealous.
All right, we'll see you later, Scott.
Enjoy the game, Scott.
Pete, thank you very much for sitting in.
Love being here. Thanks for having me.
S&P's up 16, NASDAQ up 60. What a rally. What a turnaround. Dow's up 17, Russell's up 3. This has all been an S&P rally. Bonds are back down 20, 21. Kind of a wild.
How does do it? Hitting the high.
No, this is not.
It doesn't feel like it doesn't.
What's your bid for gold?
Nothing. I'm not putting a bid in.
I like it.
But I got some bad positions on today.
I like the comment, but I'm not believing it because as soon as you have 10 plus ticks, you're taking it.
No, I got bad positions all over the place today. This is not going to be good. I did not do a good job today.
All right. Well, I wish you guys well. Enjoy the rest of your day.
See you later.
Bye.
Yeah, dollar.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers. ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to the Liz and Jenny Show. I'm Jenny, that beautiful blonde in a red jacket with a cherry on their t-shirt is Liz. Love the look, Liz. Love the look.
Thank you. This was gifted to me by a friend of ours. Well, actually, one of your high school ex-boyfriend's older sisters dropped this off at my house.
That's pretty funny. I know exactly who you're talking about.
Yeah, I figured instead of saying her name, I'd go that route with you.
She got you the cherry t-shirt?
Yeah, she said she was at it was at Aerie. And she's like, I was at Aerie, I saw it. And so there was like a little gift bag on my front porch. It was so sweet.
The cherry is everywhere. It's everywhere. I walk down the street, every store, cherries, cherries, cherries. It's hot. Like Tom picked the cherry before he knew how hot it was going to become in 2025.
In fuego. He waited 14 years for it to come in vogue. It's pretty funny.
And okay, do you remember, and like shame on me because I should remember this, and we've over the years, like we've gotten gifts from some viewers, and someone gave us this, a tiny cherry. It's a tiny cherry. Yes, bring it out.
Can you see it?
Yes, that's it. So that sits on like above my kitchen sink on my windowsill. I see it every day. Every morning when I wake up and making my coffee, I look at that. And I was thinking today, I can't remember who gave us that. And I don't remember if it was like Kim from California or Annie from Colorado, or like one of the women gave that to us. And I love it. And I still have it on my windowsill, but we got it over a decade ago.
Jenny, if you don't see, I know we have these backgrounds as if we're in our studio, our graffitied studio, but we are in our home studios. I have turned this into a paraphernalia. So every gift we've ever gotten, every article we've ever been in, every album cover we've ever signed, every T-shirt that we've ever gotten are all surrounding me right now. It's as if I'm in a Liz and Jenny museum.
I'm glad you have it all because I don't think I have anything. So I'm glad you have it all. I'll take pictures of it so I can remember it when I'm old.
I will. It's funny, like all the clothing that we've got over the years, and Mikey, yours is folded nicely in there too, and maybe I can bust it out. I just got to find out which bin it's in. I've got everything right here.
That was probably pretty good. I think someone got a Tony Batista T-shirt from the Goodwill down the street because I am always cleaning out my closet and sending things. Although don't worry, Mikey, I never got rid of your shirts.
I've got my trading coat sitting right there. Remember we were talking about that yesterday with Kathy? Mine's the same color as hers. We should have done that. We should have worn our old trading coats.
You know, all I have around here is my badge. That's it. I've got my badge around here.
Didn't you want to
what I forgot? I brought certified badass option trader cards to give to Kathy, not necessarily live on air, just to give to her. And I forgot to give them to her. My jacket pocket is loaded with them.
And there we go. See? I've got them everywhere. Wait, Jenny, I know we talked about doing this. Let's do it first. Okay. And then we'll get back into pleasantries. Okay. So if we can jump into the platform, please, super producer, we are going to look at or adjust or put on a Jack Tucker style trade, right?
Right. We decided instead of a Zajun, we're gonna, and we may not do $25 wide, but let's look at a trade and make it maybe $15 wide.
Yeah, I was going to start. Here we go. This one is you're getting $2 on a $15 wide on the puts. All I did was go to the expected move. So I've got a 25 delta, 15 delta. Then I'm going to go to the upside and it's an 18 delta. I'm just starting here. So we're getting $4 on a $15 wide.
Sure. Ship it. I mean, if you want more delta to delta, you could bring the call down to the 23 delta. I don't know how much that changes our collection from 475 to 475.
I'm not going to do that. I'm going to go here. And I'm going to ship it because I don't want it to get away from us. Whoa, come on, give me a buy. There we go. 410.
Okay. And ship it.
Shipped. We'll see if we can get filled.
And
our study,
we're not going to leave this to expire. We're going to put in a GTC to take 25%.
Look at this. I just want to show you. This is well, maybe we'll get filled.
As time ticks on, unless we get, if we're going to stay spoos up 18, spoos up 19, spoos up 18, spoos up 19, as time ticks on, it's going to get cheaper and cheaper and cheaper.
It is getting cheaper. I'm watching.
So you're not going to get filled unless it starts going towards one of the strikes. Just move it to 410, 405.
But you can see, it's so funny. Okay, so I'm going to go 405.
Like that's how quickly these things decay if we don't move.
Filled. I went in $4. I'm actually going to take 25% out, Jenny, per our study.
Yeah. And honestly, so we got filled at 402. 25% is.
I'm going to have it do it for me instead of me.
So what I was going to say.
20%. Yeah. We're going to take $80.
Yeah, $80.
I'm telling you. So Jenny, we're willing to take 50 out of Jajun.
I know. We're just so. I think let's try this. This is a higher probability trade than the Jajun. Maybe we do this instead of the Jajun.
I put it in for $50. Let's see if we can get filled. If not, we can play with it or cancel, replace it.
Well, okay. And so this is what I would say: if we take $50 out of Jajun, but Jajun is 2 legs and this is 4, so we got 4 legs in. Maybe we look for just try to take $60 out of it, just like enough to try to cover the extra legs. And if we put this on at the beginning of the show, if we don't move, let's see if there's a chance if we get out of it by the end of the show.
Yeah, we're just testing it during this. Now, this might not be during the show, get out, but we're going to keep an eye on it. We decided to do this instead of Jajun. More risk, but we'll see. We'll see what we can do.
More risk, but higher probability trade.
I just glanced at the chat, and I actually just want to say something. We talk about this on a daily basis, and this is pretty interesting. This is the SPX. SPX is called the SPX. We use this all the time. These are the SPOOs. The E-mini S&Ps are the SPOOs, and they do not trade the exact same price. I just wanted to clarify that. The SPOOs are the futures because it used to be SPU, and that just kind of stuck. So Frank the Great answered it too, but SPX and SPOOs. This is the SPX. These are the SPOOs. The SPOOs are the E-mini S&P futures.
Now, I don't know if you were watching the market yesterday after the close, but 3 o'clock close, SPX close, ES close, you see $18 below where we are here. But right after it closed, market rallied to right around 57.70, 57.75, right around there. So that, and then it stayed there. So I thought, okay, we're going to open right around, we could have opened right around here and it would have been where the market was right after the close, shortly after the close. And then we opened down and I thought, oh, bummer, because we were down even more. Down 36 was we needed to be up 16, 17 just to, what does Tom call that when we close like that?
An underwater close.
But it was that underwater. It was just supposed to trading higher than we closed, minutes later.
Yeah, underwater close. Okay, so we have the Jajun trade in. Our gold seems to be doing well. What do we have here?
Okay.
We bought a. That's why it's a 1,600%. We bought a call spread and sold it. But this was my trade from the other day.
Yes, this is a trade you brought on that when I was like, Liz, bring a trade onto the show.
You were so mad and then you forgot yours. So we're up 1,600% on this trade. I would just like to state for the record. We are really, we're 30 cents away from our GTC. Let's just leave that.
Oh, what did we say we would make on this trade? $80. We're up 66 in 2 days.
Yeah.
Now,
66 in 2 days.
Now, the call spread, you can't look at the percentage because we trade.
I know. I'm teasing about the percentage, but yes.
But what I would look at is we're the 279, 282, we went through this on the show, 279, 282 call spread. It's only a $3 wide call spread. What we said, what do we think we'll make on it? And I'm shifted everything and said, well, if GLD moves up $3 or so from when we put this on, we'll make about $80. Here we've got it trading 281, almost at our short strike of the call spread, and we're up $67.
Would you like to take my winner off? We might as well, because you're right. This isn't an unlimited profit potential gold trade. This is you can make this. You got to have time march by because it is a call spread. When this becomes the at the monies, which it is, it's going to have a lot more extrinsic value. Oh, you know what I wanted to show you too? Hold on.
Gold's been moving, so I will get in both ways. I will take this off and then put on a bearish trade, and in a day or two, take that off. Like if you get two-way action in gold, you could see we only needed a $253 move to get out of this for $70. I don't mind. I've been putting in both sides, trying to get in and out for small amounts in a short amount of time.
And I've been riding the wave. So this is my MO in gold. I like it, small bits, and keep plugging along with the bullishness.
So then you'll just wait for a little pullback to get back in, where I'll put in the other side and then look for some two-way action.
A lot of times I'll do something different. I don't even wait for a pullback because gold has been so strong. So sometimes if I'm getting out of a bullish trade and I want to get back in, I'll do something like this.
Oh, like a downside ratio spread.
Where I'm taking in a decent chunk of credit, but if it goes down $2, I don't mind getting back in.
Yeah, right. I got it.
It's too expensive for us because it was $5,000, but yeah, that's a lot of times what I'll do. Let's leave that for a second. The one thing I wanted to show you was this. FCX is down. We put in a zebra 2 days ago in FCX when we were looking at it, but it's beneath our zebra. So somebody had asked.
Okay.
And this was in Twitter 2 days ago that we didn't get to when we had put this on. They said, "What do you do with the zebra when the stock?" It's so funny because it was like it's like a self-fulfilling prophecy. What do you do with the zebra when the stock is down 20%? We're almost right there, not 20%, but like 2%. So you'd have to reestablish.
So, and let's talk about this. So go to the position page for a second. So when we put this on, we washed extrinsic value. So there was no theta component to this trade. Now the entire trade, it's all out of the money and it's worth 216. So the way I look at reducing basis on a long position is if you have these zebras and it's all out of the money, sell that 211, get that 211 and put that into a new zebra if I want to keep the long position going.
Correct. And I don't mind being long FCX. I really don't. But we have to manage this. And this is what we had talked about yesterday when we put it on. This is the smart man's. We thought about, remember, we looked at this, putting it all the way out in January, and we said, no, we want to manage this. So to Jenny's point, we're not saying we're up money because we're down money, but these at the monies now have extrinsic value. So we're going to close it and just reestablish.
But we're down. If you want to look at this before you close this,
okay,
we're down. When we put this on, we know we sold the at the money. So we know FCX was trading, what's our at the money strike?
43.
43. And now it's trading 40. So this 40, 41, 42. So $250, the stock has moved, right? And we're out.
And we're only down 195. The extrinsic value is actually helping us. We're down less because we're going to take some management on it.
Right. So I wanted to show how this trade isn't down as much as the stock is down. And now we're going to put this to our advantage. I know you said you have to close this. If someone put this on and they said, I want a long position in FCX for 21 days and I don't want to put more than $400 into it, then you can just leave it and do nothing. You don't have to adjust it, but know that it needs to come back and then some to start making money on this trade.
Well, yeah. I mean, if you want to be educated in options, you have to close it because otherwise right now, it has to go all the way back up to 43 before it becomes a stock replacement again.
But if someone says, I only have $400 to put into FCX, I want an unlimited profit potential, bullish trade, synthetic stock position, and all I have is $400 to put into it, their only choice is to leave it.
It's not the smart choice, though.
It depends. Okay, so I think it goes both ways. If FCX falls and you keep following it down, then it's no more, oh, this is a defined risk trade and this is all you can lose. You keep adding credit into it. So let's say you have a zebra and the stock's going up and you roll it up and you roll it up and you roll it up and you keep ratcheting it up and riding the wave up and keep your profit potential going. And then you think, oh, well, I've made all this money. I can only lose here $400. Well, if it falls and you follow it the whole way down, you could lose all your profits by following it all the way back down.
Hold on. Original intent with this. We said this is stock and we're smarter than that. We want to do something with stock. Here we lost less. In order for it to be stock, you have to reestablish. Because if FCX keeps falling and you're in stock, it's going to keep falling.
And I think we should do it. We should do it, and we have the money to do it. But if somebody says, "I only want to put this much into it," no. Every time if it's dropping and you reestablish it,
I don't know. I think, Jenny, this is personal opinion. Once again, personal opinion. If I wouldn't put this in my kids' account because they don't. If you only have $400 to do it, do something else. Buy 10 shares of FCX.
Right. And so that is So that
when
is
we
the
put
issue
this
with
on,
it.
we just wanted to show how you can put a stock, because we were going to put it all the way in January. If you put this thing in January, it wouldn't be out nearly as much as this. And you could probably kind of leave it if it's out farther in time, because there's still so much time on your side with everything. But with this, we know if it's a stock position, it's a stock position. If I only had $400 in FCX, I would not be putting this Zebra in, because to your point, you're going to leave this. It's not a high probability trade. I would buy 10 shares of FCX if I only had $400.
But after the week, the 2 down weeks, if someone had zebras, and you, every time we were down, those 2 down weeks, and every time you're down and your zebra was out of the money and you reestablished, you were in a world of hurt by the end of those 2 weeks.
But you're less of a hurt than you were if you were owning the stock. So your question to you is, and that's what I want to say, this isn't a high probability options trade. This is a stock replacement. So if you would sell the stock, then just get rid of the zebra.
I think I've known people who have said, I'm tapped out. I don't want to put any more into this trade. And I think then if they're tapped out, then they can leave it. Like
if you want to leave it. I mean, you could.
If you're going to follow it down,
I just don't think it's the intelligent way to trade. If you only have $400 to put into FCX, buy 400 shares of FCX. If you want to be long the stock, which we said we wanted to do, we wanted to manage it instead of put it really far out in time.
So when my zebras get out of the money, if I want to keep the stock position going, I'll move it. If the vol spikes a lot and premium increases, I'll change it to a short put. And I have no problem putting more money into this. I just don't want people to think that's they have to do that. Like
nobody has to do anything. Like you don't have to push this trade, and you don't have to trade FCX. Do you know what I mean? And nothing we do is a trade recommendation, but people want to know when you're at the monies, and we even say this in the video, when you're at the monies when your longs become the at the monies is when you should manage the position, or you will lose more than the cost of what FCX did. So if FCX went from, 43 to 40 and a half, you can actually lose $4 instead of $3.
If you leave it till expiration, which is why we like to manage these with it when they get down to 10 days till expiration. If you're going to follow it the whole way down, you could lose it. Then you can't. Then it's more of like, I'm just owning the stock. It's not as much as this is defined risk, unless you're worried about like worst case scenario, open down huge and it's so far away.
Yeah, no, I agree.
Otherwise, it's just like, you have the risk.
So I'm gone next week, so you can decide what you want to do with this, because I don't want to leave you with a position that you don't want.
No, I want to roll this down for sure. I just, when you said you have to roll it down, I just want people to know, like, they don't have to reestablish it.
Correct. Nothing I say is a trade recommendation, but leaving this, you could be out more than the stock price if you owned the stock.
If FCX expires in 21 days at 41.
Or if it expires right here, even if it expires at 40 and a half, if it goes up a little bit, you could lose more than the price of the stock.
Right. So we know at 43, we paid $4 for it. So if it expires 39 or higher at expiration, we'd be out the $4. And if you just had 100 shares of stock and it expired at 41 and you bought it at 43, you'd only be out $200. There's a lot of nuances to this zero extrinsic value ratio spread. That's why it's more of a I don't want to say it's a complicated trade, but
I think this is a crazy complicated trade.
It's kind of like some people use it to use less capital and to have defined risk, and which it does give you use less capital and have defined risk. But if you're going to follow it the whole way down, then I don't know if you look at it as much as defined risk.
If you're going to use it as defined, I'm sorry.
No, if you're going to follow it the whole way down.
And I agree with what you're saying. Like you don't have to do anything. I get it, but we don't have to follow it the whole way down. It's just when we were putting this on, we were going to put it so far out. And I guess I'm kind of stuck on our original intent in this trade, because we had talked about putting it pretty far out in time. And we said we want to narrow it because we're going to pay less for it and we know how to manage it.
Yeah, and manage this. I think we should manage this. I'm thinking back to those 2 weeks where the market kept falling, and I had some zebras on, and if I would have followed them the whole way down, it would have been really ugly.
Oh, but it was ugly. So even if you have the stock, it was equally as ugly. Do you know what I mean? Right. So you kind of have to decide if you want to not have that stock position or not stock position.
Right. If you want to keep, if FCX pops up $1 tomorrow and you want to make that $1, you've got to move this down and keep going with it. Once it gets out of the money, you're not going to have that 1-for-1 profit potential.
No.
Until it comes back up to your original trade.
Okay, so I'm totally cool with either way. So you do want to move it, right? And then we'll move on to something else. Okay, so 50 delta, 70 delta. Let's see how much it is. You're going to put another 173, but anything above here, you'll make money 1-for-1. You're going to put, so it'll have 575 in that trade.
Right. So now we've got 575 instead of $4.
175 in. Yes. Now, to your point, if you want to, and I think we should put this to bed because we got to move on. Because I think we're just looking at it from two different points. From my perspective, I was thinking about our original intent in this trade, and I feel bad that I said you have to, and I think you wanted to clear nobody has to do anything, I think was your point.
Yeah, and when I was talking about you have to or don't have to, it wasn't referring to FCX. It was just zebras in general.
Yeah, you don't have to. You don't have to do anything. So I just wanted to. I think you and I were kind of got on two different pages with what we were talking about.
Yeah, I wasn't even.
Like I said, if you want to, you got a high rank. But we had a high rank when we put this in. If you want to, you can just sell a put, but it's going to be more capital.
Right, it's going to be more.
So I'm just going to move this. You can, if you decide to close it next week, I don't know what FCX is doing, but it did have a little bit of a move down. It's not going along with the gold.
Are you surprised copper's down when the other metals are up?
Well, and copper's been hot on the news lately. The headline I saw yesterday, which I think is hysterical that FCX is down, is copper's going to be more valuable than anything else. We need this more than something else, which was pretty funny. So, I mean, that's what I'm saying.
Then keep the zebra going.
If you can't, no, but those headlines, that's what I love about headlines is they mean nothing, right? Like even if they gave you the news in advance, what are you going to do with it? But we'll do this. You can always reclose it though. Do you know what I mean? If something happens and you don't feel comfortable with it, you can always reclose it.
And again, my comment did not refer to the FCX. It was just in general, in zebras in general.
Right.
So when you're looking at managing them, if someone has a limit of this is all I want to put in this position, then you don't have a choice but to leave it.
You don't. Well, you could close it. You can always close it.
Yeah, close it, and you can close it and take the loss, or you can just leave it.
Yeah. Okay, I don't know if there's anything else. That was the one thing that I saw when I saw the copper headline. I looked at our copper zebra, and I was like, huh, that's weird.
I do think, I didn't expect copper to be down today.
I didn't either. Here's our Medtronic. This is one of our only straight up long positions. Now, we got this from Twitter. I just wanted to say that this is not each day that ticks by, we're going to keep losing extrinsic value. That's fine.
This is $1.17 in extrinsic value. We bought that. That's another synthetic stock replacement. So when it's the same kind of discussion when you buy an in the money call as a stock, as your synthetic stock. If Medtronics dip below here, would we keep moving it down and paying for it? It's up to you of how much money you want to keep putting into it.
Yeah, so I think once you learn options, you are using less capital, but are you looking at it as a stock replacement or are you looking at it as a high probability trade? All stock replacements are not high probability trades. They're all 50-50 shots.
Well, and when you buy an in the money call as a stock replacement, you're losing that theta, you're giving something up, which is the nice thing about the zebra. You're not giving up any extrinsic value. And then you see how it could work for you when you're reestablishing it.
Yeah, it did work for us. Okay, hold on. You know what, Jenny? Let's go to. I want to show something just because it was so fun yesterday. So, first of all, Cupcake, thank you very much. Just finished watching the show from yesterday. Absolutely fascinating piece. Loved seeing the SIBO floor in full as well, like something from a movie. I love it.
Oh, and again, the pit was. There were a lot of people missing from the pit yesterday. I think a lot of guys on spring break. So normally it's a little busier than we saw it yesterday. But it was fun. I loved having Kathy on. If you missed it, let's show them where to find it.
Okay, so if you missed it, you can go to Tasty Live. Number one, here's James. We love James. He's one of our producers. And you just go to On Demand, Liz and Jenny Show, and you will see it live from the SIBO right there. You know what was kind of cool about yesterday's show, Jenny? We were in a different location. Usually we're literally in the pit. And they moved us kind of out so you could see a little bit more of it.
It was nice, and that's what I think Cupcake was talking about, the view of the whole pit versus our typical Wednesdays. You don't get that whole view. You just have a real tight view. You've got the few guys behind us. So I do like that new view of the whole pit behind us.
Yes, I do kind of like that too. And I also heard from, and I'm going to keep saying his name, Frank the Great, this is for you. You can see people walk by a little bit more, so Jeff can't get out of the camera angle.
That's funny.
He can't.
So we'll let them know, because I do think I like that angle more. I mean, I'm not saying I like the angle, like the full body shot of us more, just the bigger view of the pit behind us.
Yeah, and if you go, I'm gonna actually, can I press play? I just want to show something when it's just the two of us, which was kind of cool. I'm gonna press play. This.
I do. You can see the queue, right? There's Porter, and you can see the date too.
Just the two of us. I wanted to see what the angle was there, but that is, you can still see people walking by. So Jeff, you're gonna be in our. We got you.
Frank the Great's nephew. He always comes over and says hello.
He does. He's a sweet guy. He's just camera shy, but I'm gonna keep working on him, Frank. I promise you.
And it's crazy because he looks like he's 28 and he's getting close to retirement. He says he's older. He's older than us, but he literally looks like he's like 28 years old.
And a lot of people are retiring down there.
I know. We had to say goodbye to someone yesterday who's retiring.
I know. They're getting ready too. Okay, I'm going to go back to Cupcake. Let me refresh. We'll go top down because I think we've got some things coming in.
Mikey, listening to you both talk about the pros and cons of zebra, all I hear is there's always a chance with the zebra, Mikey. Always a chance.
There's always a chance. So you're telling me there's a chance. Happy Retro Thursday, ladies. This is from Mikey. As I look at the cherry on top of my windowsill, sipping my morning coffee from my favorite cup. Oh.
Absolutely, Mikey, from my favorite cup.
I love it. Okay,
there's
so
Mikey.
then,
and then Mikey, in this picture, Mikey's got his apron on. He's got... Why? Can you remember why? Do you remember the apron and all the apron...
Oh, please.
All the apron stuff. Like, what was going on with the apron back then?
Hold on. I got the apron right here. First of all, I got Mikey. Mikey, here's her shirt. Is it the Tasty Trade apron?
Well, Mikey has his own apron on.
But this is the...
Yeah. It says like sauce mash, sauce burger.
Look at this. There's Mikey. Can you see him?
Yes.
I can't. I've got everything so folded. I don't want to unfold it right now. I'll find the apron though.
Who made the aprons? Where did they come from? And weren't people all supposed to be wearing them or wearing them to one of our live event? Or I can't even remember. There was a story with the apron and maybe Mikey recalls.
What color is the apron? Is it black or red?
He's in a black one.
Okay, I'm doing this against my will. Is it this one?
Liz, when you're on camera.
Is it this one?
Yes. What does it say?
It says, put a tasty sauce mashed burger between your buns. Better to trade up to a better bougie burger.
That's it. That's the apron Mikey has on in the mug.
Oh my goodness. The Polish warrior.
All right, today is the day, Lulu, end of an era, end of earnings season.
It is the end.
So that means two things to me. Number one, we could look at Lulu if we want to trade to Lulu. And number two, we can start looking for earnings setup calendars.
Ooh. We have, okay, so let's take a look at Lulu. And then I want to see, implied volatility might be high.
I know. Well, when you say might be high, she's not referring to Lulu. She's referring to earnings setup calendars because we don't like high implied volatility. So we'd have to kind of search for lower implied volatility.
Yeah, we would have to search. Okay. So Lulu has, let's go to the trade page. It's got a 68 IVR. Now you've recently been there and you said no one was there.
I went there twice. No one was there except the bulletproof vest man with the gun standing at the door.
Okay, so take a look. This is the November's last earnings. Now it jumped from 344 all the way up to 409.
And I saw this today, and you're not going to like it. I saw a reel where they said the Lulu sling bag, wearing that is out.
You know what is so funny, Jenny, is I've been wearing my sling bag like that well before anyone else, and I will continue to be wearing it well after everyone else. They took it from me. And you've been doing that, can't you?
You've been doing it forever. As long as I've known you. You've been wearing your fanny pack, sling bag over you. For as long as we've been doing the show. For 14 years, you've been doing that.
And I've been doing it before 14 years. And it's so funny because when it caught on, I was like, why is everybody doing this? It was me.
Yeah. So now then everyone was doing that. Everyone's wearing them. Everyone's wearing their sling bags over. Well, I saw a reel today saying that that's out. I don't know what you think.
It was not in when I was doing it before, and it'll be out when I'm doing it later.
So when we were on,
I like to have my hands free, and I don't want to strap something around my waist. So I will continue to wear it like this.
Well, so I had some shocking news this week. When we were on the Disney cruise, my daughter left her Lulu sling bag on the cruise, left it on the cruise ship, and I thought, we're never going to see that again. And I got a message from Disney this week saying, we found your daughter's Lulu sling bag, and we're shipping it back to you. And I thought, whoa, I can't believe that. But now I know it's because they're not in style and nobody wanted to steal it.
Nobody wanted to steal it. And you finally just got one like 2 months ago.
I know. So that's why I was like, okay, I'm finally using this, and now they're out.
No, I will never, ever give up mine and mine's like an original. You know, those ones that are like really little? Mine is like the long, lean ones that are way better to go over your shoulders like this. Yeah, I'm staying with it. Okay, so what do we want to do? Lulu. So here's all I'm showing you is that Lulu's got a 67 rank, and it's got a $28.55 expected move for the 1-day cycle. And this is what Lulu did last time. It went from, like I said, 343 all the way up to 409. So that is about a $60 move. So almost double the expected move the last time. I don't think lightning strikes twice. I don't know that it's that big of a deal. I just want to go back and see what else it's done over the earnings. So there's another up move. Here's like small down moves. Other than that kind of moot. What's a new subscriber to do, Jenny?
I don't know. It's tough because Lulu's expensive, $343. Any kind of diagonal would be expensive here for sure. We'd be looking at like probably a $1,500 diagonal.
Too expensive. No, I don't really feel like risking $500. I think we're gonna have to pass. I don't always trade Lulu. Do you know what I mean? Because and do you remember this has happened a couple times when I saved you because I was out of town? Yeah.
You were out of town and Lulu plummeted. That time you're leaving to go out of town. The last time Lulu had earnings and you were out of town that I was here and I had, I think, Frank Caberta on as my guest, Lulu plummeted.
I don't know that it was in 2024 because Frank wouldn't have been on in 2024. But
no, it was a while ago. But
it's got some. Look at this. It's a mover and a shaker. I mean, one earnings it went from 319 to 368. Here it plummeted. You know what I mean? I don't know that we're going to trade it on earnings.
I might put on a bearish trade myself because I don't know now because the sling bags are out and the store seemed pretty empty. But that's just one store here.
Yeah.
That's just one store here. The only people in the store were workers.
It is interesting though, because I do think whatever the kids are wearing is where it's at, and everybody I know is still wearing Lulu.
Oh, the kids, the high school kids. Yeah.
Those the kids these days.
That's high school. You know what? I have never been a fan of their like tight leggings, but I like their loose pants.
Their loose pants, yeah. Well, I think they had something for everybody. Okay, let's go. Let's table this because we haven't been in earnings just because the market's been so wild. Suppose it's only up 2. We'll take a look at Jajun.
It's not Jajun.
I'm not Jajun. We can't blame him anymore.
No, I know. Leave it. I mean, we have to leave it. We're leaving it.
Yeah, we'll leave it until at least after.
We saw the study, the stop loss study. Guess what? We're leaving it. We put in our GTC to take a profit out of it. We're not doing the stop loss.
Well, we did see the stop loss study, and then Tom and Pete did it today together. I didn't see it. I saw them start it. I didn't see what they had to say for it. But stop losses, I think, are a little bit tricky for us, for me at least.
They talked about instead of putting in the stop loss, just having a mental stop loss. But we saw the results. The results were not. It wasn't like amazing results using the stop loss. So I think we just leave our order in to take a win.
Yeah, let's leave it. Okay, we've got it.
But that study was done with putting them on the open. We put this on at 10 o'clock.
Yeah, I mean, we were down on the open, so that wouldn't have won either.
Right. Well, we'll leave this and see what happens. We need a 15-point rally, and it's coming off. 15-point rally, and this thing's closing.
So let's take a look at some. I'm going to go to the watch list.
Yeah, let's talk about how we find earnings setup calendars.
So watch list, let's go to, I'm just going to go to Tasty Default. We're in it, right?
I think so.
So do I have the earnings on here? I don't. So hold on. I have dividend yield because I put that on when I was with TP. So I'm going to take off X date, dividend date, and I'm going to put on earnings date. X dividend, not X dividend. Where's my earnings?
Earnings date. It's up. It was in there. It was in there. There it is on last one.
Okay. So that's put in. So now we can see where the earnings date is. So then we're going to sort by, want to sort by price?
Or low IVR, because we want a low IVR-ish.
So low IVR, here we go. You can see.
I don't think it's sorted.
Whoa, that didn't sort. I was like, that's a 7. Okay, so if you're going to scroll, now keep in mind, I scrolled, so I sorted by IVR. So you've got the lowest IVR, but what we're looking for is the earnings date over here. And actually you want it to have the purple thing. So that's where it's confirmed.
Right. So here we see Citigroup.
But take a look. It's already 55. Our usual cast of characters. IBM is usually one of our.
IBM is usually IVR 100 for IBM.
Uh-huh.
Let's look at it.
That's sort of crazy.
That is crazy. Let's take a look at IBM. 100 IVR.
I mean,
I'm not saying look at it for an earnings setup calendar. I'm just saying look at it to see how much premium can you get in the 21 day with the Strangle. I know it's 21 days, but I wouldn't go through earnings right now with the Strangle.
I wouldn't either. Hold on, let me go. I don't know why I don't have that extra room right now, but that's fine. That's where it's trading.
I can't believe it's got 100 IVR. How much premium is in that 21 day? How far can you go? Pretty far. 230. If you're looking for a dollar and a dollar, quick $200 in 21 days.
I just want to make sure. I'm going to take a look at the volatility. Yeah, that's right. So what I'm looking at here is you can see the 21 days got a 25% implied volatility. The 29 day has a 40, meaning that the earnings are after. I just wanted to glance to make sure that we weren't, selling something in there. That's not bad. Do you want to do? I don't love iron condors, but that's
we can. Let's just do a small. You can do 250 wide. Sure. You can just do a baby iron condor.
70 cents.
Yeah.
Okay. You got 21 days. Hopefully you make $35 while I'm gone.
I mean, 100 rank.
We were talking about earnings setup calendars, and the reason we don't want to do it in with a high rank is you would take the at the monies, and you're going to try to go. I have to go 50 or 45. 50 or 45.
They're going to be expensive with the high rank.
I just want to show why we don't want to do it. I'm going to go 45 just because. So you're going to sell the nearer term, and then you're going to buy the one in the earnings cycle, and it's $5.70.
And we're not going to expect. So what we're hoping for with an earnings setup calendar is the vol increases in that 29 day, and then the 45, the 15 day rolls off or decays. But we can't expect a vol expansion when the rank is 100.
Do you know, and I want to show like this, if you're putting a calendar in, it should not hold up this much. It's because we have another trade in.
It's like crossing with the other trade.
Yeah, it's crossing something over the other trade.
What else? Citigroup was on there. Take a look at Citigroup.
Citigroup at a 55. Like I said, these ranks are higher than we're used to seeing them, but earnings are coming up. So Citigroup's a $70 stock. It's got a 55 rank, which was the lowest of the ones with earnings coming up, right? Let's see. So if I was going to do an earnings setup calendar, I want to see if they have Yeah, they have all the strikes. So I'm going to buy 73 here.
It's cheap. Like Citigroup's going to be pretty cheap.
That is cheap, 60 cents. Now, you could make it more expensive if I took expirations down by $1. So watch this. I'm just going to show you where I'm at. Let me close this. So you're selling the nearer term and buying the farther out term. You're buying the one that's in the earnings cycle. There's not that much of a differentiator right here. So you get 8 days for that to roll off, and then you're buying the 21. Can I put this in? It's $1.
Yeah, sure. And then you've got another roll. There's another roll in between.
And that's why it was more expensive, because I took it from the 15-day to the 8-day. Remember, it was 60 cents. We're paying actually 107, but there is another roll built in.
There's a roll. And what this wants is Citigroup to stay right around here. If Citigroup moves, we could be out $1, but.
Do you know what I went over with TP when he was on the show while you were gone, which we haven't talked about in a long time? And this doesn't apply. I just want to be clear because TP and I talked about regular calendars and the old trader trick to see what the calendar could actually be worth.
Oh, how funny. Yeah.
You know, where you cut the days in half. It shouldn't necessarily work here. Number one, because we have only 8 days. And we know we're buying something with a more inflated volatility. But what you're looking for is the front month option to be worth at least, your front month option to be worth at least what you're paying for the calendar.
And that's if we're doing a traditional, traditional durational calendar. And you see that here. So with 8 days to go, that 73 is worth $1.09. Now, if that expires, we'll have the 73 and it'll have more than 8 days to go. It'll have 2 weeks to go and it'll have earnings cycle in it. So it should be worth a lot more than $1. So if we stay around here,
this one looks fantastic.
Push that button, Liz. I've been pushing everything out. I've been pushing everything out on the follow page. I know yesterday, so we've got our SPX trade, our gold, IBM, and see if you can get filled on Citigroup, and I'll get that pushed out.
Okay, I'll do that too. Hold on. Let me see where we are.
Who's down 6? I don't want the market down today. I'm tired of it. Every time we think it's going to rally back.
I know. It's kind of crazy.
I know.
Okay. We're filled 108 on that, which is fine. That's a good fill. Okay, I'm going to pop into Twitter real quick. We'll come back and look up some more earnings out of calendars. I just want to make sure we got to everybody. Jack Tucker's also in. We put on a trade so we can kind of see where he was compared to where we were or where we are. He's the 70-35, 70-40 there, and then 75. Hold on, let me turn that down. 56-75. I can't see these numbers. Let me make it bigger. So 56.75, 57.40, 56.70, 57.35. Let's see where we are compared to ours. And I'm just going to pull
40 and 75. And 35 and 70.
And ours are 70.55. So we're higher than Jack Tucker because he did it earlier this morning. And we're 57.05. We're pretty high.
57.
I'll show you because I had it up at the same thing. So we're pretty high. 57.05 is our put.
Oh yeah, right. Because when we put it on, SPOOs are up 18.
Yeah, and when he put it on, they were probably down.
Mm-hmm.
So Jack Tucker wins again. I'm just kidding. He's probably out.
Well, again, we'll leave it. I mean, can we get a little rally? Maybe. Yeah, I was surprised. Honestly, when I opened it up and saw SPOOs were down, I was.
I was surprised too.
All right. I know Liz and Jenny is a family-friendly show, but this is the story of the apron. I promised Pat if he sent me an apron, I would wear it commando. Tony never did accept the challenge, but Daria from Canada did. Yeah, I knew there was some kind of apron thing going on, and I wasn't part of it, but I remember it happening.
I got the apron. I did not fulfill this request either.
Oh my gosh.
So funny. And for those of you, this, ladies and gentlemen, is our Polish warrior.
Mikey. Look at him grilling.
That is so funny. It's hysterical. Thank you, Mikey, for putting that
Thanks, Mikey, for I couldn't remember the apron story.
let's take a look while we're doing this, just because I was over there. I want to see Mikey again one more time, but let's go to the SIBO data. SIBO's most active. So this is something that we look at from time to time. And this is not something that only Liz and Jenny have access to. You just go to SIBO.com.
Pfizer. What's going on?
That's crazy. Pfizer. Okay, so there's a lot of Pfizer put action.
And the January of 27 call.
Well, let's take it to the tape.
And the puts are June and April. So 46,000. They're just rolling. That's probably a roll. Probably rolling the put from April to June.
Yeah, but that PFE call seems to be a standalone.
Yeah.
Do we see anything else? And then let's take a look at SPX, then we'll go in there. So
I wanted to look at Tesla again, because Tesla had a nice rally today, but I don't know, with the market turning around, did it lose its rally?
Are you surprised by that? I do want to look at Pfizer too, but are you surprised? So did you see all the tariffs went into effect yesterday for all the autos, and Tesla's up, and then I was wondering, and Ford's down a little bit. And GM was supposed to be down a lot. GM's down 7%.
Yeah, that's a big move for GM.
Yeah.
I just didn't know if Tesla was going to hold its rally. We went on air when you were when we were talking about what you read about Tesla.
Oh, no, it's not. This is not a. I'm not making this up because so Kathy Wood. I wish I could just pull it. I think I could probably pull it up. Can I Google it? Because that's what I did to Tom. Here, hold on.
Yeah, sure. Google it and read it to us.
Live show. Hold on. Give me 2 seconds. Where does Kathy Wood see the price of Tesla going? Like I said, I couldn't make this stuff up. I thought Tom was going to kill me.
Oh yeah, he got really crabby about it. Oh
yeah. I've heard this. I heard it, and I was like, Tom, I'm not saying this. Kathy Wood is. So Kathy Wood, ARK Investment Management, remains bullish on Tesla and expects the stock price will hit 2,600 in 5 years.
And
right now, I heard this. I was listening to the Bloomberg interview.
10 times its current price.
Yeah. So, I mean, nobody knows anything, right? Nobody knows anything.
Do we have a Tesla position on right now? Did we sell a put spread to buy a call spread?
No.
Okay. I thought we tried to put that in the other day, but maybe not.
We do not. Tesla has it's come up a little bit from its recent lows, but this still isn't much of anything.
No, but it had a bounce. Like, it was one of the only green positions I had today.
And just for the record, Kathy Wood is, ARKK. She's the brain trust behind that.
So,
but I'm not saying
keeping its rally with that.
And I'm not saying I think Kathy Wood is good at it. I'm not saying anything. I was just giving the news to Tom, and it was pretty funny, his reaction.
She was just repeating what she read on the internet, and Tom got really mad about it.
It was pretty funny.
But because of that, after reading that, honestly, it just might make people look at it and say, oh, let me take a look at Tesla. Do I have a position on in there? I don't. Let me put one on. It just brings a market awareness, and you look at it, not thinking like, oh, I'm going to put on a play thinking this is going to go to 2,900 in 5 years.
No, I agree. So here's my question, though. And I don't know this, maybe you can help me out, or maybe the chat can help me out, or maybe Twitter can help me out. Why is Tesla up and GM? Why is GM taking the blunt of all and not Ford? So GM's down almost 8%.
Okay. I don't know,
Ford's
but
down only
it's like,
2%.
Oh, we're going to tariff everyone that's not made in America. So
yeah, but I mean, isn't Ford made in America? That's what I'm saying. Ford's only down 2%.
But they get a lot of parts from overseas. I don't know. I really don't know.
So
I thought, oh, okay, maybe Ford will be up today. That's what I thought.
You did? Because they were tariffing it?
Well, because I thought, oh, well, if they're made in America, if they're American car makers, maybe they'll be up.
Oh, I see what you're saying.
Yeah.
Tesla and Rivian are 100% US. Let's see what Rivian's doing. Thank you very much, Chad. You guys are awesome.
Thank you. So they're up. So if they're 100% American, all made in America.
Yes.
So, and so people might think like, oh, Ford, GM, but I think too many parts come from overseas.
Okay. So back to this. What do we want to do in Tesla? What do we want to do in Ford? I would actually at some point these tariffs are going to come off. That's the one thing I was thinking. Like, do we jump into GM?
I don't know. I mean, I have a bullish Tesla position. I usually have bullish Ford on, but I had short puts in there. I just got out of them. I don't know, but can I tell you my funny car story?
Love to hear it.
So Logan comes home from college. He says, Mom, there's a rattling coming from the engine. It's when I'm on the expressway. And when I shift gears, the rattling changes. So I make the appointment, take the car in, go in and tell them exactly that. There's a rattling coming from the engine. And when he's on the expressway and when he shifts gears, the rattling changes. And so they take the car. They're like, we drove this all over the highway, everywhere. There is so much shit in this car. How could you tell the noise is coming from the engine? Because I didn't clean his car out before I took it in.
You didn't?
He got home from school. I got an appointment and I brought it in. I wasn't going to clean it. He's got pickleball paddles, pickleball balls, golf balls.
It's probably his golf clubs rattling.
And so the message from the car dealer is like, we're sorry, ma'am. There's so much stuff in this car. We can't tell like what rattling is coming from where.
Come on.
Yeah.
So you just have to go pick it up?
I went last night and picked it up.
My goodness. Well, at least he's got his car back. Now he can drive. Why don't you clean the thing out? See if it's still rattling. Because you just had the engine rebuilt on that, right?
Right.
Yes. Oh my goodness. Rattling.
Yeah.
I'm sure it was golf clubs.
I mean, I took the golf clubs out. I didn't give him the car with the golf clubs. So I took the golf clubs out, but but there's still like stuff all over the car. I mean, it was kind of embarrassing going and picking the car back up.
You had to have that. You got your head down when you go pick it up. I'll take my car back. Sorry. That's
sorry. I'll clean it before I bring it next time.
That is pretty funny. What do you want to do in Tesla? Let's take a look at this.
I have on my long call spreads, short put spreads.
Where do you have them?
Oh, I have them all over the place. I've got
every single.
Well, nothing after earnings. I don't have anything beyond April 21 days. So just go to April 21 days. You'll be back in town.
So, and I know you put these in a lot. I'm just going to take a stab and then we'll adjust from there. Okay.
Mm-hmm.
Because I know you pay a little bit for them. So you're paying $148 for the chance to make $350. What do you think of this?
Yeah, I'll usually, because Tesla moves. So I'll usually move my call spread up a little bit so I pay less for these. Because if Tesla's going to move, it moves. So I'm not so worried about having it. I mean, maybe lower it. That's only 60-cent debit. That's not bad. Lower it down a little bit more.
So I'll go 290.
Yeah, 290, 295.
So like $1.
$1. Yeah, so pay $1 and this can make 400. You're risking 600.
Okay, so here, I just want to kind of walk through, because you're going to have TP on, so you're going to need to start looking at these numbers. Okay, because here's where he's going to hang his hat, is this P50, and it's got a very high P50 number. It's a very low pop, because because you're paying a debit for it, right? If you changed it to paying a credit, this pop would pop up.
If you widen, right, like widen
we're just going to take a look at these numbers. We're going to go back to this trade. I like this, but I just want to look at these numbers. So if I was going to widen this to make sure it's going to be.
And so for me, Liz, I have $20 wide put spreads. So I'm not paying for them. So like I have $20 wide put spreads. I don't have $5 wide put spreads. So then mine are high pop because I'm not for these that I just put on in Tesla.
Yeah. And that's what I was just going to show. The second you start taking a credit, and I think I can even, let me move this. Hold on, delete lag. There's still a credit. So you get a high pop when you're putting it in for a credit. The second you switch it, it doesn't. But take a look at this. The P50
this is
goes
not
down.
bad. It's a $10 wide put spread, and you've got a $5 wide call spread.
Yes. Your P50 number doesn't like this, though. Oh, is it because... I don't know. That's kind of weird.
Well, yeah, because then is it like it's looking at trying to make 50% of a 3-cent credit or something like that. Do you know what I mean? I think when we put these on for even, when we put on trades for even, it messes with the P50, I think.
So this, and it holds up the width of the put spread. So it's going to hold up the full $1,000. Do you want to put this one in, or would you like me to alter it a little bit?
My thought behind these is if we don't have like a massive move down, even if we drop down in between this put spread, my plan with these, even if it drops down into this put spread, I'll roll the put spread out in time.
That's a good idea. So this is where your put spread. This is the middle of your put spread, 247.5 right here. That's not bad.
It's not bad.
So is there any adjustments you would make? So this is something similar to what you put on.
Right. So it's for our account. It's like, do we want to? Yeah, sure. I don't mind it. $10 wide put spread, $5 wide call spread.
Yeah, you'd have to manage it. You can't make it really any smaller in order to get that credit. So I'm going to ship this. It's going in as a debit or a credit? Hold on. It's going in as a debit. That's okay. It's a 2-cent debit.
That's why the pop is low. Like normally it would have a higher pop. Yeah.
Because it's switching back and forth.
I don't think it matters, right?
I'm going to put it in as a 1-cent credit because it keeps going back and forth between these two.
That's fine, and let that work. If Tesla drops down a little bit, it'll fill.
Yes, that's in as a 1-cent credit. Oh no! Look at this. We got to leave it. We're at our point.
So here's a question for you on these. Would you ever just buy back that call spread? With the way the market moves and we seem to have some two-way action, would you ever buy back that call spread for 30 cents?
The call spread is 30 cents, and that's what Jenny's looking at right here. It's a 30-cent call spread. It's not bad.
Because then all we need is like
less of a pop.
Less of a pop up, and then we could get out of the put, right?
It is something that you could take a look at.
Yeah.
So if I canceled this order, no, we're paying an extra 30 cents for it. You're paying an extra 30 cents.
And we don't have to. It was just a question.
No, because it's less of a pop in order to get out of it. Although I don't think this is really doing much of anything right now.
Yeah. You could just leave our working order to take $60 out of the trade.
What I might do if it doesn't fill or get close to during our show, you can maybe change the order to take even less. Do you know what I mean? Where like a very tiny pop and you can get out of it.
But I guess what I want people to know with these trades, I don't expect to get out in 30, 40 minutes.
No.
I don't expect
Jajun, you're looking for a pop. This has to sit.
Yeah, and you don't expect the market to just sit in one spot and not move. And I'm sure, and Jack Tucker can attest to this, there are plenty of times where he's taken some pain on these, and then you need the market to come back to where it was. Like he probably took some pain this morning. He put it on when the market was down. Market was up. Now it's back down. Now his is back in. What I won't do with these is like roll my call spread down to try to take in more credit.
Oh, for sure. Like, and to your point, I'm glad you kind of said you take it off instead of being like, do you want to roll that down? No. But I'll push out. We were filled on Tesla, so I will push that out. So far today, we put on the SPX. We took off our gold trade, put on the IBM, an IBM Iron Condor, Citigroup, a calendar, and Tesla. What do you call the buy a call spread, sell a put spread? It's Super Bowl.
Put on the Super Bowl.
It's a Super Bowl, isn't it? Isn't that buying a call spread and selling a put spread? Isn't that Super Bowl?
Super Bowl. So the Super Bowl and Tesla. That's in honor of Kathy Wood. Just kidding.
We could put that on next year. She said in 5 years, $2,600. I mean, that's an insane price.
What's the farthest out leap? Like, how far can you go? What's the farthest leap? You're an SPX, but if you go to Tesla, what's the farthest you can go in time?
2027.
So,
and it's pricing in a $200 move in 2027. She's got 3 more years to make it to 2,500.
Oh my God. And a zebra here, how much is a zebra here?
Oh God. Okay.
Like if you're going, this is an example where if you're going like so far out in time, where like, I'm going to put this out years down the road, I'd probably that's where he might put on a zebra and just forget about it.
Well, this would be so, hold on one second. So to buy the stock is $1,400. You might be there because with this, we usually say 50 delta, 70 delta. You kind of just have to wash your extrinsic value. So I'm getting $110. So I need 54
So then
here.
the 220. Yeah, that 220.
So here you're paying
$16,000.
It's the same as buying the stock. Right? So to clear this out, watch. If I buy the stock, it's $14,000.
Yeah, then you're better off. Just buying the stock.
I mean, this is out to 2027. but it's only $16,000. Where if you're in a cash secured account, it's $28,000. So it's half for that.
Hey, and you know what? If you're like, okay, $16,000 take me out to June of 2027, go to May and find a call for $1,000. Like, just go to May and see where there's a call for $1,000 in May. You can go up to the 345 and get $1,000. So you figure if you could get $1,000 every cycle, $1,000, 16 months, it's paid for.
Well, it's the same thing as if you own the stock. If you're buying the stock, it's like $14,000. Yeah, 16 months it's paid for. All right, Jenny, I think we are out of time.
Happy Red Shirt Thursday.
Happy Red Shirt Thursday. What are you and Logan doing? Anything fun?
Yes, we're going out to dinner with my parents tonight. So another busy day.
Fun. All right, everybody, good luck with their Lulu earnings. We did not do it. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. See you tomorrow.
See you tomorrow, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I went out this morning, out my front door to look to see my pumpkin.
Yeah?
It's gone.
Your pumpkin is gone?
Gone.
Seriously?
Gone.
After we just talked about it?
After I brought it back all the way from Wisconsin, carried that monster of a pumpkin, it's gone.
It was huge, you said, right?
Huge.
I mean, it was like a really, really big pumpkin. I was on Google Earth last night, and they found your pumpkin. Like, they must have taken a picture exactly when your pumpkin...
Yeah.
You must have put it out there.
Did you steal my pumpkin?
What pumpkin?
Did he take my pumpkin?
I don't know anything.
Because my neighbors have pumpkins outside and they don't, and all their stuff is there. My pumpkin's missing.
It's a nice looking pumpkin, Tom.
You drove down to the city and you stole my pumpkin. Oh my God.
What are you talking about? Seriously. Seriously, I don't know what you're talking about. This pumpkin came willingly. It was being...
Oh my God.
It's very happy.
This is a conspiracy. I hope people watch this and realize who you really are. You stole my pumpkin.
I live for this crap. Are you kidding me?
He came to the city and took my pumpkin.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, and of course, Katie McGurgle in the house with me today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, get to spend it with my buddies. Mike and Katie. Katie, how are you?
I'm good,
Yeah?
other than the fact that I've been demoted to special guest.
Oh, Frankie, you're catching some flack here, Frankie.
Yeah, for those
You're on
not
the
watching
hot
on YouTube, Frankie just called me special guest Katie McGurgle in the chat.
No.
I thought I was a co-host of the show, albeit only once a week, but
You are the shining star.
You're the one that brings everybody back. You know, they get sick of us for a couple days. We gotta, rein them back in.
No.
With your presence.
I'm just messing with you, Frankie. Yeah, I'm fine.
It's all right, Frankie. Pack your bags, buddy.
Is he still
Nobody
in
messes with
Arizona,
Katie.
or is he back in Scotty?
I think he's Arizona.
I don't know.
Arizona still.
Nice.
I saw him post like an Arizona picture the other day. So yeah.
Yeah. How are you both doing?
Doing good.
Yeah?
Wonderful.
Doing good.
Yes.
It's just another Thursday, E-minis fluttering around.
Indeed.
Got some people in the YouTube chat saying they closed their 0 days for some profit, which is nice.
Shout out.
Yeah, the market just being flat is going to be great for any short premium and 0 day, that's for sure.
Yes.
Yeah. Any big plans this coming weekend?
It's getting warmer.
Yeah, it is.
The vibes are happening.
Is it?
I can feel my hips turning.
Like Chicago's like starting to vibrate a little bit?
No. I'm just thinking the vibe for golf.
Oh,
I
okay.
can feel like sometimes I stop myself, in the middle of the day and just do like kind of a little
A little muscle memory.
Yeah, a little hip action. When that
Lubricate the joints.
when that part of like my mild Tourette's starts going, like when you start getting that little movement.
Yeah. I got a new driver yesterday.
Okay.
I mean, really, shout out TaylorMade, because I cracked my driver and I looked on their website and it was like, oh, all clubs have a 2-year warranty. So I was like, okay, how do I do this? And it's like, oh, fill out this form, take a picture with your name on it and smile. And that's literally all I did. The next day I got a brand new driver and I'm just shipping the old one back and there's zero cost to it.
Wow.
So I literally just got a $600 driver for free.
Nice. Publicly
So you just
traded?
love
Any
to
way to
see it.
participate from a market perspective?
I mean, you just smash the like button on all their stuff. I don't know if they're
Publicly traded?
publicly. They're
Probably
it's
not a lot of
definitely
premium.
Definitely not TaylorMade. Maybe like a parent company.
It's a good
But
question. I don't know.
Yeah. So yeah, I'm in the same boat as Nick. I'm getting these new items shipped to me, and I'm just like, we gotta get out there. Gotta get some outdoor steps in,
Well, I think it's supposed to be nice-ish tomorrow. Maybe rain, though. Like warmer temp,
Yeah.
but possible rain.
But yeah, it is also opening day for baseball.
Ooh.
So that's fun. I think the Mets are playing, so Chris is going to be in a buzzing mood, I'm sure.
Oh, yeah.
But yeah, that's all I've got.
Okay. Nice. Nice.
Mhm.
Very, very good.
Yeah. Another little PSA. We got the
Oh, yeah.
Saturday.
We do.
Sign up for that.
tastylive.com/events.
Yep.
Get it.
Sign up
Get it
like now.
now.
Yeah.
Today, right now.
Literally sign up now, because I know at a certain point, I believe there is like kind of like an email cutoff.
Yeah, I'll pin it. I'll pin the link to the top of the YouTube chat. You can sign up for free. Streams this Saturday, March 29th, 10 a.m. Get your robe on, get your coffee.
Yes.
And sit and listen to us three talk about managing options positions, options on futures, options on equities. Nick walks through a handful of his real trades that he did. It's literally everything you need to know about managing short premium trades.
Yeah, good stuff.
Beautiful.
And then soon, more information about in-person events.
Yes.
So just keep an eye on tastylive.com/events.
Yes.
More coming soon.
I think those are going to, from what I hear, they're going to be, the sign up is going to be not too far in advance like we normally do.
Yeah.
Because we're going to do very small little venues.
Yeah.
More
Personal.
personal. There will be some libations.
Yeah.
Which will be fantastic.
Yeah.
You know, have a couple.
You're gonna have a little old fashioned on stage. Is that what you're?
I think the marketing budget for it has limited us to beer and wine only.
Oh yeah, that's right.
We will take what we
You
can
get Keystone Ice.
Yeah, we're going with Natty Light. You know, and
Beer 30s. Did
Yeah.
you guys ever drink beer 30s in college?
No, what's that?
They were in like a purple can.
Beer 30s.
Literally called beer 30.
I've gotten a handful of 30 racks, but beer 30, I've never embarked.
I have some rough memories with involving Mickey's.
Oof.
Oh yeah.
The wider can with the wide top. Oof.
Those were the 40s. Dude.
Yeah.
Those were.
Yeah.
Anything
Old English
malt.
40s.
Yeah.
Anything malt
We did
just
the-
destroys your life.
Yeah.
Yeah.
It got. You know, but those are learning experiences.
Yeah. I've seen like a lot of memes lately about the original Four Loko and how we were in the age group where you could actually do that and like drink that.
Yeah.
But frankly,
Risk your life.
Yeah, exactly. I was like scared. Like I would never drink a full one of those because I have like I was born with a heart murmur. So I was like, if I do this, like it's not going to go well.
The effects of the long-term effects of that period of time have yet to be seen.
True.
So we
It's a longevity study.
There are, I'm sure like 20 years from now we'll be like, oh damn, I shouldn't have been pounding Four Locos.
Yeah. Yeah. Wild.
You know.
Oh, college days.
It's all right.
My liver can't take it anymore. But yes. being events coming up in person, tastylive.com/events. More information coming soon. Should be a good time.
It's gonna be a grand old time.
Get them.
Get them.
Job security for us.
Yes.
And you get to own a piece of us
What do you mean by that?
because it's our content.
Oh, okay. I was like, are you talking lock of hair?
Yes.
Or
We could do a lock of hair. We could do that. Yeah.
maybe you guys?
Yeah.
I'm trying to grow my hair out. Got to keep it that way. Anyways, as you kind of alluded to, definitely a little bit of chop in the market. I've
Yes.
seen myself kind of go positive and negative today in terms of P&L.
Mm-hmm.
Shout out though, Rivian up 8.5%.
Ooh.
My little zebra.
There you go.
Real nice.
Damn.
What's going on here? Because Tesla's up too. Tesla's
Yeah.
up 5%. Rivian's up.
American made.
Yeah, I don't know exactly.
Except Ford and GM getting smacked today.
Are them? Yeah. Have not looked
Auto
at two of
tariffs.
those. Yep.
That's why you just buy a Honda and never look back.
Well, that's going to get tariffed too.
They can't tariff me now. I've already got one.
I know.
Can't tariff something I've already got.
Great hindsight out of you.
That was great. Yeah. So I'm actually going to try to look at kind of covering my Rivian Zebra.
Nice.
I did that. It's the 1012 Zebra for $350 back in late Feb. I try to work it a little bit higher since it has been kind of bopping around. We'll see what I can get filled at though.
Mm-hmm. Love it.
Yeah.
Love it. Quick little market update. Get into some trade ideas.
Yes, please.
E-minis unched. Pretty incredible considering the craziness we've had in the last couple months here. We've had about a 60-point intraday range. They looked a little bit weaker when we opened in the overnight session. They've since bounced back here, completely unchanged. NASDAQ down 18. You got the Dow down 72 and the Russell down 5. Everything very, very flat today. catching a little bit of a bid, up 13 cents. It has been very, very strong. Volatility futures up 22 ticks. The higher end of where we've been trading today, we got as high as 1955, as low as 1865. So definitely some swings in volatility as the market was up like 16, 17 at one point today. Bonds down 19 ticks. They have been very, very weak here. Rates moving higher. Gold and silver both blasting through their highs here. Gold's up $42, almost 3,100. Did we get there? We did. 3,102 was the high of the session. Silver reaching the near highs here, got up to 35 and change, 35.10 right now. Bitcoin has also had a little bit of two-sided action, about a $2,000 intraday range on the futures. Spot here is down about $400, so definitely some two-sided action, some chop, a lot going on today. Trades, I don't know if Mikey, if you did anything. Did you do anything in Lulu? We had a Lulu earnings this morning, right?
After the close.
Yeah, I think they were later.
Oh, it's today after the close. So we had nothing in the morning.
I may or may not have done a Lulu trade.
Oh, that's coming soon. Okay. All right.
Yeah, tease.
Yeah. So for me, today was not as active as yesterday. Just closed out of the Tesla put spread that we sold yesterday. That was a nice little trade, and then I got a trade idea for you today.
Did you do anything in Chewy?
I did not.
I know that was your old apartment participation trade.
Yes.
It was the easiest buy on the board.
Yeah, that was a good one.
His apartment was just filled with Chewy boxes. So what are you going to do? Short Chewy?
Yeah.
In that environment? I don't think so.
Blasphemy.
Yeah.
No.
But yeah, Chewy's got some nice implied volatility, $30 product, decent liquidity. Strike selection's limited in May, which I don't love, but
I think it had earnings
a couple days ago or something.
I think it already had it.
Who?
Chewy.
Yeah, they did. They already came out.
Mm.
They
March 26th.
They beat
yesterday.
Earnings. Did not see what actually happened to the stock though yet.
Basically unchanged.
Got it.
Over the last week. Hasn't really gone anywhere.
Yeah. They beat EPS, missed revenue, resulting in a non-move.
Nice.
But yeah, if you want to join us on YouTube, we're streaming live. Just pop over to Tasty Live. You can see this video on the homepage there. You can pop in your trade ideas, questions along the right-hand side chat. I've got the live event, free digital event pinned to the top of the YouTube chat. I've also got a link to the cherry picks in the chat. And I've got a link to the Lululemon earnings preview that Thomas did. And that will kick off our first trade idea if we want to pop over to the slides.
Beautiful.
So Thomas wrote a earnings preview for Lulu. You can find it on the News and Insights tab. I also put a link in the chat here. But ultimately, I asked him outright too, and he said maybe it moves lower based on increasing competition, et cetera, et cetera. We're Viore boys now. We're no longer Lulu boys.
Oh.
So
have been for a while.
Okay.
Yeah,
Okay.
yeah.
Nice.
So I'm just
why the switch in athleisure? Better fit, better price,
a little bit of both.
better styles.
Yeah.
I like the way that the Viore pants are.
Okay.
Yeah.
They're not like frilly, like you know how the inside of this is like you know like the frilly
brushed.
Yeah, they're just like straight up.
Like dry wick.
Yes.
Okay.
Yeah.
Mm-hmm.
So you love to see that.
Yes.
But yeah, I'm going with an iron condor here in Lulu.
Okay.
I went to April, which still has a sizable volatility crush priced in there. 60% IV in April, 47% in May. If you want to go to May and be more conservative, you can totally do that. But I'm comfortable with this range here with the 21-day cycle. Normally, we don't sell stuff in the 21-day cycle, but this is an earnings trade at the end of the day. And I just want to have a couple weeks of potential safety if we get blown out here on either side. We can see it reverse over time, potentially. So 28-point expected move for earnings. This is trading around 340 now, Lulu is. And I went and I sold the 100-point range. So I went to the 300 put, 400 call, sold those options in April, and then defined risk at 290 and 410. So created a 10-point wide iron condor, collected a little less than $3, but I'm covering more than the expected range in April and well over the expected range for earnings. This is a 100-point range on either side, and the expected move for earnings is 28 points from the current stock price. So about twice the expected move before my strikes are tested. So yeah, just looking for a non-event for Lulu. Don't care if it goes up or down. Just if it's within that 28-point range, we'll probably take out $100 from this trade and call it a day. If not, I'll just hold it through April. I probably won't roll to May unless it's like right at the spread and I can roll it for a decent credit, and I'll just get rid of the other side. But my intention is to just close this if it's within the range tomorrow, and if it's not, I'll just hold on to it.
There you go.
Covers a big portion of the range that's been trading in.
There's something satisfying about creating a 100-point range with nice numbers, like 300, 400. It just feels better.
Feels good.
Yeah.
Yeah.
So.
Yeah.
I like it.
All right.
Thank you.
I might dabble. We'll see.
Cool.
Very nice.
All right, Nick, what you got on your radar?
So I'm looking at, Thomas was kind of talking about copper the other day, and metals have been super, super strong, and he's very, very bullish on just metals in general and whatnot. There's not a ton of ways to get, there's really no way to get pure exposure via equities or ETFs. There's like CopX, I think, is one of the like ETFs. It's just not like liquid.
Yeah.
FCX is really the only liquid way to trade it. It's got a pretty high IV rank, sitting at 65-ish here. It's a $40 stock. Monthly implied volatility is sitting in like a 44 handle, so it's got relatively decent implied volatility. Doesn't use a ton of capital, so I figure it's an interesting way to kind of trade a little bit of a neutral / upside bearish, upside skewed copper position. Not bearish, it's bullish / neutral to bullish. So I'm selling a put. I'm selling.
That was a lot.
That was good. It's bullish, but it's neutral, but maybe there's a little bit of elements of bearish, but also it's...
You have risk on the upside, okay? You gotta get, it's an omnidirectional.
It's an omnidirectional.
That's why we created the omnidirectional wording.
I know.
Okay?
It's the only way to describe anything ratioed like this.
Yeah, it's a little bit average.
I know, I'm just giving you a hard time. Keep going.
Okay. So the stock trading at $40 and change. I sold the 36 strike put. It's about a 30-ish delta, we'll call it, 32 deltas. I did the call ratio. So I did the long the 41, short 2 of the 44s. The whole position nets you out at about, I think it was about 10 deltas on it. Let me see. 17 deltas long here on this position. So omnidirectional. You can gain some long delta on the upside if you get like $1 or $2 move to the upside. But I basically did that ratio spread for a 10 or 15 cent credit, and the rest of the credit coming from that naked put. So the put being, most of where that value comes from. Synthetically, you have this very similar risk to a strangle because you're naked one option on both sides here. You finance the call that you're selling finances buying that call spread on the upside. So you have this extra profit potential to the upside there. You can see from 41 to 44, that's going to be where our peak profit potential is. You would realize the credit of the trade, the $1.55, plus the extra $3 width to the upside. That's why you have $4.55 max profit there. If all the options expire out of the money, so somewhere between 38 and 41, you would just keep the credit. Obviously, you're going to manage this position or do something at some point, not trying to keep this on until expiration. Again, risk is similar to a strangle, but you have that extra upside room. So our risk doesn't start until about 49 on the downside. We're at about 36. And it only uses $675 in buying power. So even if you realize just the credit on this, it's still a relatively high return on capital. Pretty nice implied volatility here. Just a nice little short premium position.
Sure. Would you ever consider doing something more like a Jade Lizard, where it's also kind of an omnidirectional neutral to bullish play?
Sure. You could do something like the 38 and then like the 42, 44. That that's marked at like a $2.10 credit. So that's a more neutral-ish setup because you don't really benefit from the move to 44. It probably doesn't hurt you all that much.
Right.
But it is kind of at a $40 stocks, it's tough to do Jade Lizards because the spreads you're selling are so tight.
Right.
They're 1 or 2 points wide.
Yeah.
I think you could do it. I played it more as like a, upside.
Yeah, a little sweetener.
Omnidirectional.
Little sweetener to the upside.
Yeah.
You're not going to let me forget that.
No, it's okay.
Also, my chair is still squeaking. I don't know what it is, you guys. I'm really sorry. James QA'd it for me.
Did he?
But apparently, the way I sit on it just makes this chair
Is it your chair or is it my chair?
I think it's me.
All right.
It's still me.
All right.
No, I'm just razzing you, buddy.
It's okay. I can take the heat.
It makes sense. I mean, and like you've
I'll remember it
captured a
forever,
large
though.
range. I'll write about it in my diary tonight.
Oh, my burn book. You're the next page, Katie.
Well, there's probably a ton of horrible pictures floating around this place that you could paste in.
Today,
next to
Katie
it.
made fun of me.
Yeah. Don't communicate with her
Yeah.
again. Yeah, love that. All right. Well, apparently it's Thomas Appreciation Thursday
There you go.
because I also consulted Thomas for my trade.
Ooh.
I said, "What's up, friend? What are we thinking in wheat? Is it wrong to be long?"
Ooh.
And he said, "No, I'm actually thinking about dabbling here myself."
Very nice.
So I just went with a pretty straightforward long call spread. This is using the N5 contract, so that is the
57 days.
Yeah, it's a little bit farther out in time. I just trying to give myself a little more time to be right. That's the July, just like from the symbology nomenclature, ZWN5. So I just bought one strike in the money, bought a couple strikes out of the money. So I'm long the 540, 560 long call spread, a little bit less, or like I paid a little bit less than it, like the classic 50% of the spread width. So max profits looking right around 587, and I only paid 413 to enter this trade. So just hoping to squeeze out $100-200 from this thing. See a little bit of a pop after it being at a relative price extreme in the grains.
Followed you.
Okay.
This is wheat.
Didn't he mention there's some sort of
There's a report. Yes.
next week, a big one?
Yeah, so there is a quarterly grain stocks report coming on Monday, and some farmers' intentions, like planters' intentions, like what they're going to do. So I think we will see a little bit of binary movement early next week. But hence why I kind of want to find risk, and we'll just see if the price action works out in our favor.
I'm in. 8250. 8004.
Did you do the same strikes?
Yeah. 540, 560 in May.
Is that Mike Jones you were just referencing?
Yeah.
Okay.
You got it. You got it.
I like it.
Beautiful.
Cool. So we have wheat, Lulu, and copper. Ish.
That we do.
Omnidirectionally.
That we do.
I'm just being silly, Nick. Come on.
It feels like a silly day, It's just one of those Thursdays.
We got chicken for lunch.
Yeah.
What kind?
Ride the coop.
Ride the coop.
It's a good one.
Everything's just falling into place here.
Okay.
All right. Beautiful. 3 trade ideas for you. Popping over to the YouTube chat now. All right. Let's kick it off with Deborah. I always open a can of worms when I say this stuff. Please elaborate on how you would sell a cash secured puts on SPY in a $5 million account.
Oh, dear. Yeah, loaded question
Would
for
use
sure.
SPX.
Yeah, first of all, use SPX instead of SPY. SPX is 1256 tax treatment, which means 60% long-term, 40%
Oh,
short-term.
Mr. Accountant over here, 1256. Woo, woo, woo.
Yeah.
Want to talk about wash sales now?
Some people don't want to flee the country. They want to pay their taxes. But yes, SPX, you can get tax treatment that's favorable for short-term trades as opposed to long-term trades. So if you're cash secured, the world is your oyster. You can do whatever you want. But I would say nothing really changes between 30 and 60-day short premium. You sell the contracts. If you're cash secured, you can get to like 8 or 9 if you're like 200 points out of the money. 40 grand in extrinsic value premium. If you start to get tested, you can roll down and out. This is why you really need to sign up for the digital event that is being released on Saturday, because we talk about these things like rolling out in time, rolling out and down, and how the math works out. So in SPX, if you're in like the end of month April contract, you know, the 5,500, let's just say, you can do that 9 times for $5 million in risk.
No,
in total risk.
Yeah.
And then again, you just sit there, you wait, the time goes by. If it gets to 50% profit, you close it, you can move it up, you can move it out in time. That's really up to you, depending on where you want your risk to be. But really, the defense is, if it gets tested at the money, probably buying it back, rolling it out in time, or moving it down, giving up some of that credit to be more conservative, and that's it. And then over time, you're just left with the extrinsic value premium you've collected. If the strike goes in the money, it turns into a covered call risk profile. So it's just a very easy cookie cutter trade.
Yes. Just keep size
in check.
And, you know, I don't know if I would ever just have this as my only thing. I mean, I think it's a great, like, core position.
Yeah.
You know, it's just your month-over-month thing. You can do it every 30 days. You can do it, you know, SPX has weeklies, monthlies, quarterlies, dailies. You know, you could do this on any time frame you want. You can roll. You have a lot of flexibility with, you know, strike selection, expirations, all that good stuff. It's highly liquid. You know, you never have an issue with fills or anything like that. It's cash settled. So even if something crazy happens, you know, it settles the cash. There's no equity, you know, risk there. Nothing, no dividends, nothing to worry about there. It's all priced in. It's a good, you know, way to get pretty heavy delta and, you know, have a positive decay. Big position.
Yeah.
Yeah, for sure.
Yes.
All right. Trade management question for UAL.
All right.
Started with the 90-120 straddle or strangle on February 14th. Today, I've got a 95 put, 80 call inversion with a total credit of 1752. Nice. What would you roll to next? The 95.80.
95.80.
I assume you're in April.
I think so.
But I mean, good on you for managing this. You have a credit that exceeds your width of the inversion. So you have 1750 against a 15-point wide inversion. So your break even is down at 77.5, pretty much. So you're right there. In terms of rolling out, what can you do? Again, you can. It's just the math. So if you roll the same strikes, 80, 95, you pick up $1.85. You could roll the 80 up a little bit or down a little bit to the 77.5 or the 82.5, but I don't mind just leaving the same strikes. Yeah. If you're trying to keep the same credit, I don't mind just rolling to the same strikes here. You'd pick up $1 in extrinsic in the 95, you pick up almost $5 in the 80, and you're just widening those break evens.
Yeah. I think, you know, I think a lot of people get caught up in trying to, like, when you think about this position, you're short the 95 puts. Mm-hmm. They're 20 points in the money.
Yeah.
And you're out $500 on this trade. So if you didn't manage, you didn't do anything, you'd be out $2,000. You're out a couple $100.
Yeah.
That's, you know, a win.
Yeah.
You could take this position, like, you don't have to sit with this position.
Right.
I talked about this in the slides for our collectible, you know, and this underlying, it's got high implied volatility. It's liquid. You know, you can close this position and start a new position or do something else in this underlying. Like, you don't have to be married to this position. You could take this and instead of, you know, obviously you're taking a loss, but you take this position off and you sell the 75 strike put. And now if the stock stays here or goes up a little bit, you know, you'll make your $500 back. That's what you're waiting for. It's the same amount of extrinsic value as you need to get back to flat on your current position. There's so many ways that you can massage this. I don't think it's a bad trade to roll it. That's totally an option too. But I'm just saying, like, a lot of times people get stuck with, like, I have this position, I've been battling it, and I need to make this trade a zero, you know, a scratch.
Yeah.
You can, you know, you net out a scratch if this put expires out of the money on your total position. You can be flexible. You don't have to always just roll or look at your position as like, I need to continue this exact position.
Right. Yeah. And by the way, somebody else asked this in the chat. If you can't tune in live on Saturday, still sign up and it will be delivered to you.
Yeah.
So if you have stuff going on Saturday, not a big deal. But if you want to guarantee that you'll get the collectible, still sign up.
Yes.
Mm-hmm.
You can watch it anytime afterwards too. You have it forever.
Yes.
Forever and ever and ever.
Unless the grid goes down. Then you've got bigger problems.
Yeah, then we got bigger problems. Then I'm going to steal Mike's rice. His rice.
20-pound bag of rice?
20-pound bag of rice.
I'll guard that with my life.
Where'd you get it? H Mart?
Costco.
Costco. Okay.
That's the beauty of the Costco on Ashland on the south side is that it's close to Chinatown, so they have so much more Asian food than other ones.
Yeah.
It's exactly where I'd want to be, obviously.
That's where that's my Costco too.
Yeah. I'm surprised I haven't seen you there.
I know. Why don't we rub elbows? Why don't we go get a chicken thingy? What do they call them?
Rotisserie?
No, not the rotisserie. Like the chicken.
Oh, the chicken bake.
Chicken bake.
Yeah.
Yeah.
Seen those diabolical combinations.
I've never
Chicken bake, slice of pizza, chicken bake with the hot dog shoved in there. Can't we just
Yeah.
tone it down a little bit?
Let's just get it a little simpler.
Yeah, just eat the chicken bake.
Yeah.
You don't need to shove a hot dog in there.
Yeah. It's very what's that show where the guy just goes and does eating food competitions?
Adam something. Adam.
Yeah, but there's a new guy. He's like a redhead.
Oh, really?
I think so.
I'm thinking an older one.
Yeah, you're thinking of the other guy. Yeah.
The guy who just does the sit down here and try and eat
15
600
pounds of ice cream, stuff.
Just insanity.
It's just embarrassing to be American.
Yeah.
In that regard.
That man is in a lot of pain. The
Oh,
next
yeah.
day. Let me tell
His
you.
heart.
When we did the Wow Bow challenge.
Oh, yeah.
Oh, I forgot you guys did that.
That was.
I felt hungover.
I beat him too.
Yeah, he did.
You did?
I felt
came in
literally
second place.
hungover. What did you get? 8 Wabaos in 2 minutes?
8 Wow Bows in 2 minutes.
Just dunking it in water and just swallowing them whole.
And they're big. They're like this big.
And they're dense.
They're dense. They're filled with curry chicken.
Yeah.
Not
I wonder if that still exists on the site or not. But
we have that video. Somewhere.
I literally felt hungover.
Hungover.
The next day.
Yeah, no.
It's crazy.
Yeah. I mean, when you shovel 5,000 calories into your gullet in 2 minutes.
3 minutes. Yeah. Oof.
Yeah.
Sorry for taking us down that little
It's all right.
side
Memory
road.
lane.
But
H. Montero, 50-point expected move tomorrow. PCE number doesn't matter. It appears that it does, at least a little bit. But yeah, 50-point expected move for one day is something. It's not. It's not too
food
crazy.
Versus food. James.
There you go.
Food.
Thank you. But that was with that guy Adam. I forget his last name.
he has just a travel show now. I'm sure his doctor was like, "You have to stop."
Yeah. Adam Richman.
Oh yeah, thank you.
I knew I had that. Yeah.
Yeah.
Yeah. He probably had to have a reality check with his life
Yeah. I'm sure his life insurance was.
through the roof.
Yeah.
FCX is a nice trade from Sergio.
Thank you, Sergio. Appreciate that. Hope it works out.
The trades from the show should be on the follow page. All of these were filled before.
Yes. Yeah, we had a little issue with the follow
This morning, yeah.
Little buggy boo.
Buggy boo.
Got fixed. We're all good now. But yeah, you'll see him on there. FCX. Got Lulu in there. Katie's ZW.
We there.
Mm-hmm.
Okay, I have a question. Since there's not really a bunch of questions coming in the chat, a question for the chat. Where are you all looking at selling naked puts? That is my question of the day.
FCX. I mean, I think that's an interesting one if you just want to lean directional there.
Okay.
What's Jason's flavor of the month?
Jason?
Jason from the trade desk.
What's he looking at?
Yeah, he's a short put guy.
Yeah,
I remember he said something.
What about a little GM?
He's
short
always
put?
Was it GM? I think it might have been GM.
I mean, it's down.
Or Ford.
Almost 10%.
It's always forward for him.
Mm.
Let's ask him.
Yeah, he likes the forward puts. I try to explain to him, listen. You can't be selling these 30, 40 cent puts. You can't be teaching people this on the teams here. You got to have them, diagonal.
Gotta start somewhere. IonQ.
Big wide diagonal spreads, $900, $1,000. You know, you 30 cents.
Everybody's got to start somewhere. You know.
True. I know. IonQ, short put candidate. Maybe IBIT. Yeah, I like IBIT a lot for short puts for sure.
I'm doing a little GM. I'm gonna sell the GM 45 strike puts in May.
GM.
Getting killed on the tariffs.
45s in May.
Yeah.
$700 in buying power.
$1.62 is what I just got filled at.
All right. I'll nibble. Why not?
IBIT's a tougher one because it's a little bit more capital intensive, so you might want to buy a wing somewhere.
Yeah.
What was the other one that they mentioned? IonQ.
IonQ.
Yeah, I don't really mess with these, but.
Related question then. What are your typical parameters for a put ratio? In terms of credit collected? How do you, like if I wanted to do a put ratio in GM, where I did maybe like the 47-45, pick up 86 cents in credit, more buying power. So that's kind of the trade-off, right? Is you get the 160. I mean, I don't know. Actually, now I'm kind of working through this in real time.
What are your thoughts? What are you thinking?
Maybe the 45 is just the way to go.
I agree. I think with put ratios and any sort of ratio spread, I try to get them as wide as possible.
Right.
And do it for basically nothing. Maybe even a small debit, because the tighter spreads, they're going to act a lot like just selling the naked put.
Yeah.
Like the $2 wide, for you to get any value out of that $2 wide spread, you're going to have to hold it to expiration,
Totally.
or close to expiration. I'm just not going to do that. I'm going to want to cycle out of my trade. So I want to go as wide as possible, let's say to the 44. And I know that doesn't seem like a lot, but it's 50% wider than your $2 wide spread, or even the 43 for a small debit. And on these sort of trades, same with like a broken wing butterfly, the ideal situation is maybe a little bit of a rally, 2 or 3 weeks to go by, and I can buy in the risk on the downside. You know, if I'm doing the 47-43 and I can buy this, 39 strike put for 10 cents or something, and I have a 20 or 30 cent shot at $400 with no buying power being used, that's sort of the goal for me for ratio spreads, is to get like that free shot that 1 in 10 will, you'll hit.
Right.
And the rest of them,
Participation.
Yes, exactly. Because I just, with the 47-45, I'd rather just be short the puts and take 50 cents out of that than wait for this,
For an extra 50 or 30 days or something.
Yes.
Fair enough. All right, I'm going to do the 45 put. I'm going to try to get filled at like 158. Might walk it down a couple pennies.
Beautiful.
In GM.
We got Connor looking at Micron, short put. Carvana, short put. Carvana's expensive. Micron, I have a diagonal spread in there to the upside, so I'm with you on the bullish nature.
Let's see what this 85. Oh, yeah. Okay.
Sure.
Oh, yeah. How are you managing your AVGO in the Johnny account?
Let me get to that in a moment. I'm going to sell out this 85 put again.
Why not?
I sold this on the 21st for $2.45. I bought it back at $1.85 on the 24th, and now it's marked at $3.25.
In Micron?
Yeah.
I'll jump in.
The 85, right at kind of the lower end of where it's been trading.
Sure.
$1,200 in buying power. $3.25. Let me get that trade. Oh God, I almost spilled that whole thing. That would have been interesting. I spilled my water every.
That would have been crazy.
Sorry.
That would have been crazy.
Okay. I have to remember what my trade is at right now. So I have the 195, 185 on the put side, the 210, 220 on the call side. I have this on for $5.40 credit. It's trading now at almost a $300 loss here. AVGO just getting killed. I closed out the call spread in this account today, but currently with the trade, the 195, 185.
Short put spread?
Yeah. Well, that's what the call spread is basically worthless.
Yeah.
I'll probably leg out of that at some point in the next day or two. I don't think it's really a rush here. But this, you have another $250-ish to lose here. So, the stock was here 2 or 3 days ago. When I was looking at this, I was like looking at managing a winner. This thing like moves pretty quickly. So I'm going to hold into this move. And the stock's down 15-20% in 3 days. Right?
Yeah.
Yeah. That's correct.
It's a big move.
But yeah, someone's got the 160 put in AVGO. So taking some heat, but still out of the money.
Yeah.
How about SoFi puts at 12? May expiry to collect $1.
SoFi.
There you go.
I like SoFi.
I like that. I'm
actually
covered Strangle position. Short a put, long stock, selling 2 calls against it.
I'll get in the SoFi action.
Yeah. What's the buying power?
$300 or $500. Yeah, $500. They do have earnings in that cycle, but it's a directional trade, so it's not going to really matter too much if you get a $1 move to the upside. $2 move. I'm in at 106 in May.
Beautiful.
When is Tom going to pair up with a sports betting site so we can have a 2-hour sports betting broadcast, you and I? Listen, I'll tell you right now, if they do, we're going to barge through that meeting like the Kool-Aid man and be like, we are the people you want on this show.
Yeah.
So if it happens, it'd be fun.
Yeah. That would be interesting.
I got filled at 107 for SoFi.
Ooh, you got a penny? Darn. How do you manage all of your open trades? Do you group them? If so, how do you group? Many thanks.
Don't. I
don't.
I make sure I
can
have the
group
trade
them.
price column like in my portfolio, and then I kind of just do the mental math from there.
Yeah.
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 But to group it, you have to have the group buy.
Yeah.
Not on order chains, because order chains will automatically group them for you.
Yeah.
So you have to change the little drop down to custom, and then you'll have the ability to group the positions yourself.
Yeah. So you can group these together. Group positions. There we go. We could call this the Strangle. I think I have like $3 on this, but I'll just write in there here. You click group.
Beautiful.
And so I like to do that. 365 is what I have in the Strangle. So I like to do that on some of my positions too.
All right.
Quick way to, see a rolled position. But you can also use the order chains if you want to use the order chains. But some of them, when you have multiple trades and all sorts of stuff.
Yeah. Yeah. Fair enough.
Yes.
All right. Who else do we have?
Wow, Natty Gas just completely reversed. Are you kidding me?
Is it up
Are you now? Kidding me?
I was trying to. I had a working order to close that put spread for a 60-cent or 70-cent winner, and it didn't fill. It was right there, and now it's a loss.
I waved the flag on that one yesterday. Said I would rather take, a $300 loss today than a max loss tomorrow.
Frickin' Natty Gas.
Freaking commodities, man.
We're at the bottom of the chat. We got a couple minutes left here. Any other Lulu trade ideas, people? I'm sticking with the Iron Condor. I think if you're defined risk, you go to April or May. I don't really mess around with the one-day defined risk because you just have no defense if you're in the money.
Who did the GM? I saw it. MU, too.
Yeah, MU short put. GM.
I just got filled on both of mine.
Sweet. I saw.
Sweet.
Because I am the all-seeing, all-knowing monitor of the
GM at 158, MU at 330. Thank you for the short puts, peeps.
Yeah, IBIT's another one. It just has a little bit elevated buying power requirement, but there's still plenty of premium there relative to the notional value of the stock. 50% IV, getting decent premium for taking risk in there.
Vol is relatively low, though.
Right now, yeah.
We talked about it with Ryan
We need a monster green candle to bring that volatility back.
Yeah. I did a crab type trade here. Bought the 50 strike in June.
Okay.
Sold 2 of the 55s in May and bought the 65 wing. So a little bit further on the wing, just so I didn't pay too much on that option. It uses a little bit extra buying power. Only $600 in buying power here. $1.80 in debit. You got a $5 wide spread on the upside.
Okay.
An interesting one if you're
looking
to play.
55, 65, 50. Okay.
Yes. You're just looking to sling them, Katie. You know who to.
Who to call?
You know who
Gonna
to
call
call.
him?
Yes.
You know who to call.
Just show some
Ghostbusters
analysis here. You can see as time passes, you get that little bit of decay on the upside. On the upside short premium position. You don't necessarily need a move in the stock, but that obviously helps. And it's a high upside trade. High upside if you do get this move to the upside.
50 call in June.
Yes.
What'd you get filled at?
I did it the other day at 182. It's
Okay.
you probably have to pay up to like 185-ish.
All right.
Markets are kind of funky in here sometimes. But it's a cheapie. It's $180 or 100 wherever you get filled
I
at.
got filled at 187.
Your background on your desktop just flashed on the YouTube. You can see it for like a moment. And it's the Three Musketeers or whatever it is. It's just like a split second. But I noticed it. I'm like, are you kidding me? This.
Like the actual
Because
Three
we're the
Musketeers?
Three Musketeers.
Yeah.
That's cute.
Actually, Liz and Jenny were talking about it yesterday. They're like, what is this background? So if you see it on the YouTube, you can see it, the flash of that picture. It's literally just like a picture of 3 guys holding swords. I'm like, what is this?
Oh, that's cute.
Yeah. If you're bullish, is there a benefit to a long call spread over a short put spread? I wouldn't say benefit, but you can manipulate a long call spread more in terms of your max profit. A short put is you're selling the premium that's there. You can define your risk however you want, but there's less flexibility in creating a risk profile. A long call spread, you can slide the call in the money. You can slide the out of the money or the short call out of the money to create a higher max profit. So I think it's easier to manipulate the profit potential on a call spread, debit, versus a short put spread for a credit. That's pretty much it.
Comes down to where you place the trades.
Yeah.
They're synthetically the same. So a short put spread that's out of the money is the same as the long call spread that's in the money. These are the same exact trade. The difference being the width of the bid-ask spreads and where we typically trade them. We trade short spreads out of the money. We spread long spreads you do at the money or out of the money. Typically want the short option out of the money on all of our trades. That's generally.
Coinbase put spread 160, 150 in May.
Coin.
Yeah. I got the 175, 160. So I'm with you.
160, 150.
They gotta be doing cash money right now. Volatility in the crypto space.
Sure. Big volume.
Yeah.
Mr. Densmore got long CL at 55 for July.
What up, Dre?
What up?
Been a minute.
Yeah, it has. That it has. CL in July.
I have on that free butterfly still in crude. So maybe I'll add something else to it just because I don't have any other energy exposure right now. But I have the 61, 62, 63 put butterfly in April. Whew.
Ranch is looking at a 1-day butterfly in Lulu at 345. So looking for a literal non-move.
Almost like a little Thursday special, like the old days.
Intel 22 naked put.
Ooh, yes, I was down again
TC?
today.
50 days out, so May 22. Yeah, I like that one.
Yeah.
Picking up $1, slinging the premium.
Sure, I'll do this. Why not? 55 IV rank, break even at 20-ish. Wheel this if you need to. Why not?
Naked put in Nike.
I have on a leftover long call from some type of your face. From some type of trade that I put on with you boys.
I don't know if it was me.
77 and a half, 75.
Yeah, but that was a cheapy call diagonal.
Yeah.
This was like a little nothing trade. I remember that one. 232.
When's the last time I was trading at 66?
Yeah.
That's the question.
10 years ago?
You might be right.
Yeah.
Actually, you're wrong. 2020, COVID was the last time I was trading at 66. So, yeah.
Can't believe it's been 5 years.
It's been
So I
something.
have to go do the show in my bedroom.
I remember I was doing the F45 workouts on YouTube.
Yeah. I was doing Les Mills workouts.
There you go.
On YouTube.
Those workouts are no joke.
No, they're not. Yeah. They're. Oh.
Stonk Messiah, just do both the long call spread and the short put spread.
Oh, the double bowl, the Super Bowl.
The super stonk bowl.
Yeah.
Is there a way to find out the time of earnings calls? On the NASDAQ website, there's just a morning or evening note from what I saw. There is a website called, what is it, Earnings Whisperer?
Earnings Whispers.
Yeah. They have the date, or they have the time on that, if you just look at the calendar.
Yeah, I don't know if they include they just have like the earnings release. I don't know. The conference call stuff is variable.
Yeah.
I think I think that's just like day of. I don't know really why you would tune into it unless you were like a long-term sizable holder.
Yeah.
You know? I think once the numbers come out, the markets move, it tells you all you need to know.
Right.
Which one of the Musketeers are you?
I don't know.
I would like to think of myself as Zorro.
Is he a musketeer?
No.
Yeah, that's not the totally different thing.
We should also do this exercise for Huey, Dewey, and Louie. We wanted.
Mm-hmm.
Let's see. According to Google, Athos is the noble and reserved leader, Porthos is the strong and boastful friend, and Aramis is the handsome, romantic, and somewhat indecisive musketeer.
Ooh.
Toughie.
I don't know. I got to think about that
I think
one.
we've got threads of those in all of us.
Yeah,
There you go.
We're a combo of all of them.
Yeah, I'd say so. So funny.
Amazing.
Justin Timberlake expiration, it's gonna be May.
Gosh.
You like that one? That was good. I just watched the Dirty Pop docuseries on Netflix.
Oh,
One of the most insane things I've ever watched.
really?
Yeah.
I have not even heard of it.
Yeah. There would not be NSYNC or Backstreet Boys if it wasn't for a blimp company.
Oh,
Think about that.
okay.
It's really actually
massive
insane.
Ponzi schemes.
Yeah. It's insane.
I knew he was the guy that kind of helped form them, was
A little
wrought
not-
with controversy.
Yeah,
I will
yeah.
say.
Ooh, a 20 strike put in Unity. You.
But everybody's trying to. Everybody's
Sling it.
getting. Everybody's like, sell these puts, sell these puts, sell these puts. Scared now. I got a lot of puts.
Yeah.
Let them short them. Unity. That's a tough one.
I think that's it.
Low vol.
It.
Low vol there.
I think that's it. That's
All
the
right.
bottom of the chat. We did it.
Dope. All right, well, that wraps up this edition of Options Trading Concepts Live. Thank you for all the ideas and questions in the chat. If you have anything that you want to see in future episodes, just tweet at us. I'm at Trader Katie, Mike is at Trader Mikey B, and Nick is at Trader Nicky Bat. Don't forget to sign up, tastylive.com/events for our digital collectible this coming Saturday, March 29th. In the meantime, good luck, good trading. Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Move with the rhythm, shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Oh yeah. Tasty Nation, good morning.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
are back. It is Thursday, March 27th, 2025, one of the best days of the year. I'm your host, Chris Vecchio. He's Thomas Wisswater. This is Futures Power Hour, sponsored by CME Group. Thomas, it's opening day. Who cares what's happening in the markets? How are you?
Yeah, it is opening day. Seeing a lot of billboards around here for it. Doing good. You know, the market, it's kind of boring right now. I mean, we're down a little bit, but nothing crazy.
No, it's not anything crazy. Yesterday afternoon, the auto tariffs were announced by President Trump. We ultimately see that stocks traded lower out of the gate last night. They did rebound a little bit. They actually traded into positive territory this morning for some time, but then they have since changed their tune and have traded back to the downside ever so slightly. It's a little bit of a mixed day, meandering type of day in equities. So this is a market that is ultimately digesting the auto tariffs. You'll have to forgive my penchant for enthusiasm for Major League Baseball. It is opening day after all. Let's go Mets. We don't like the Yankees in this household, and neither children will be raised with a Yankees fandom. I'm doing my part to make the world a better place. So 4:10 Eastern today, first pitch. We will be on overtime. If anyone wants to feed me game scores during overtime, very appreciated. But let's talk about the real things that are moving the market, Thomas. Today's jobless claims. People have been expecting a spike. Why? Doge has been cutting jobs left and right. The Trump administration is shrinking the size of the federal workforce. As we've seen in recent data from private companies like Challenger, they've looked in at job cuts, and they've seen that roughly a third of all job cuts that have come down the pipeline in recent months are related to the government. 2/3 of the others are private sector. So perhaps there are knock-on effects. When we look at the data that's been coming out, it's really not there, at least in terms of a consistent rise. Initial jobless claims are effectively flat at the midpoint of the 3-year trend, Thomas. There have been little wiggles and wobbles. We certainly haven't entered this year as low as we entered 2023 or 2024. But by no stretch of the imagination are we seeing the actual hard data, at least for now, produce the type of cataclysmic outcomes that sentiment, when you see some of these surveys that have been released, are suggesting they would. How do you square these two inconsistencies, if you will? It feels like there's a little bit of dissonance going on here. Why aren't the hard data reflecting what the soft data are so fearful of at this point in time?
I mean, the job cuts are still ongoing, right? They're announcing the Treasury Department's doing layoffs. There's a few other agencies that haven't even really started yet. I don't know. Like you said, there's been an expectation that this will show up in the data. It hasn't really manifested too much that yet, but other indicators more sentiment focused are, perhaps more anticipatory of weakness in the labor market. How long does that need to hold if we don't see weakness in the actual hard labor numbers show up? Will the sentiment bounce after these layoffs have gone through their cycle in the next couple months?
Well, that is, one of the considerations. This is still gathering pace. You mentioned more job cuts coming down the pipeline. We just heard some from HHS today as well. But in terms of like this big domino effect, thus far, it's not necessarily here up front. Now, there are other data that are due the rest of this week that could potentially stir the pot. Tomorrow, we're going to have the PCE index. According to the Cleveland Fed inflation tracker, we're looking at 0.19% month over month for both the headline and the core PCE readings. That's a number that's wholly consistent with the year over year returning to 2% Fed's target over the medium term. So in terms of a data set, will it stir the market? I don't think it will. This was probably the last meaningful one for this week in terms of jobless claims, but it's not going to hold the Fed back from thinking that it may be able to do more on the easing front if we ultimately see that inflation is on a path towards being defeated, even if we take into account what could be a one-off price hike like the tariffs. At least according to the Fed modeling, they consider it a one-off price hike. So the market's digesting these auto tariffs. The companies themselves, Ford, Stellantis, GM, they haven't been having necessarily a great time of things. Broader stock markets are down slightly now. S&P up by 0.25%, 57.45. The Nasdaq down by 0.38%, 20,041. Dow Jones 0.36% lower, and your Russell up by 0.43%. Yesterday looked like a pretty big technical rejection, Thomas. Today it seems like we're trying to stage a bit of a bounce, but it's not necessarily coming together. I'm not feeling any better today about having this short put spread on an ES. While I haven't made any adjustments to it yet, it feels like we're kind of at the line in the sand right now. If we go down to that 4-hour time frame, if the market is going to hold, this band that we got rejected from has put us back into the uptrend off the lows, and that's what we're struggling to hold on to here. It's a 26.8 IVR, so it's not like volatility is through the roof or creeping up dramatically. What do you think about the stock market at these levels? Do you feel like it's at risk for a deeper pullback?
Man, I think, yeah, it is. But the technicals, you got to watch those. These levels, if we breach them, it could introduce some additional selling. For right now, it kind of seems like this is more of a holding pattern. I'm not too concerned, with a 0.3% drop in the SPOOs. It could get constructive if we consolidate a bit more, through next week. And then I think it gets more to where the longer we consolidate, the better chance of upside, I think, at these levels. Since we're just not getting the bears pressing some of the weakness here, I think that speaks more to, better chances of a bullish retracement in the next week or so. I kind of like Chinese equities right here more than anything. I know we don't have a good futures product to trade that directly, but things like FXI, I'm looking to get long in. China did come out. They said they were going to issue more bonds this quarter than they have. I think it's actually a record number, 200 billion. I'm pretty sure that's either near or at a record. Some encouraging signs from the Chinese front. The U.S. market not really focused on that right now because how much can it do to help the U.S. economy if we're going to get this labor market weakness and economic downgrades and things like that. So right here, I'm cautiously optimistic, I'd say.
Cautiously optimistic is, I'm increasingly cautious and less optimistic as the technicals unfold here. The closing level for Friday on the chart was 57.20. We gap opened on Sunday's open, and of course, we actually hit a gap fill this morning where we hit a low of 57.20 in today's session, and we staged a little bit of a bounce. There were some comments made by the Mexican economy minister today suggesting that goods that transit the border multiple times as part of the a process like an automobile that goes from US to Canada, or US to Mexico, back and forth, will not be subject to tariffs upon every border crossing, which, if confirmed by the White House, is a meaningful development. It lessens the impact of the tariffs, but the tariffs are considerable, Thomas. Just in terms of a quick summary here, we see that there's a 25% tariff on all vehicles imported into the U.S. effective April 3rd. And the stated goal is to bolster domestic manufacturing by encouraging foreign automakers to establish U.S. production facilities. But what will the impact be? Just aggregating what my own thoughts alongside others, the median point seems to be that there's going to be an increase in vehicle prices. Auto analysts have been putting out reports over the past 24 hours saying that it could be in the range from $2,000 per vehicle to $12,200 per vehicle, depending upon the model. We're seeing that some of the notes that have been passed around, including through the Dallas Fed survey, the energy survey that we were discussing in overtime yesterday, Thomas, you were sending it over to me this morning too, as some things caught your eye. You could see here that automakers are already discussing potential shifts in production strategies, including constructing new manufacturing plants here in the U.S. Hyundai, for example, they import over 80% of their vehicles, so they would be particularly hit hard if the tariffs come into play here. The supply chain is obviously at risk. The market volatility for these companies are seeing, a jump for GM, for Ford, for Tesla, actually, which is weathering the storm a little bit more. But there is an understanding, at least, that there's going to be an increase in production costs. And whether or not they're going to stick around for a long time is wholly up in the air. So we've made our move lower. All of that enthusiasm from the end of last week that we gap open higher, no semiconductor or auto tariffs, we could say that's been erased. That little bit of the rally has been negated. So I guess the question is then, net since last Friday, we really have done nothing effectively. Is that a good thing? Are we just leveling out here and taking a breather before the next leg lower, or should we be a little bit more optimistic? I know you say you're cautiously optimistic, but what would change your mind about just being a little bit more optimistic, generally speaking?
I mean, if we see more rollbacks on the tariff rhetoric, that would, of course, be good for the market. You mentioned automakers. Tesla it was up about 6% earlier. We're up about 2.5% right now. So it's almost erased the March losses. I think that's pretty positive if you're trying to get on a long side trade there. But yeah, I think it's this hard data that's going to come in over the next couple weeks. Is it going to, even if it falls relative to a year ago or quarter over quarter, if it's above expectations, that's showing that the market, these expectations have been lowered over the past month and two. So now are we getting to a point where things like the City Economic Surprise Index, even though data is getting worse, we start trending higher above expectations? And is that going to translate into a sentiment recovery?
57.51 right now here in stocks. It's a 0.16% move lower in the S&P 500. The NASDAQ has a similar looking chart where it's not quite ready to give up the move off the lows, but it's not looking that pretty either. We'll see what transpires from here the rest of the day, but just on a shorter term basis, this is a 12-hour chart, so not exactly any rhyme or reason for why the moving averages would be there besides the fact that they're Fibonacci numbers. But just in terms of the behavior, right on the way down, you could see how we hold in the envelope. As we bounce up, we try to layer ourselves through. Here again, we're beginning to respect the EMA cloud as a little bit of resistance. We break down yesterday. We've tried to rally 1, 2, 12-hour candles in a row and haven't been able to hold up. Now, granted, it's a doji. Dojis after downtrends are a pause. So this is a pause at the uptrend. I mean, just speaks to a lot of chop, quite frankly, as what to expect in the short term through the end of the week. I don't know that we have a significant directional signal here. I don't know if volatility is all that appealing that, when we were getting into this 20,000 level, for example, in the NASDAQ back on March 10th, IVRs were what, 50s, 60s?
Yeah, they're up there.
Yeah, it's just, right. It's just why try to catch a falling knife right now when the market has shown a loss of momentum as opposed to a bottoming out and gaining of momentum. You're kind of swimming against the tide right now if you're establishing long deltas. If you do, though, the low that we have today is the place to put it, because if we lose today's low, then you could see an easy flush, in my eyes, down to 19,600 and, save yourself the 350 points or so in the NASDAQ. So today's low is the place where I would keep any risk if I'm establishing new long delta positions. Otherwise, if I want to be short, I guess wait a little bit longer. We have this potential evening star candlestick cluster against that 1 month moving average, against the former support from the beginning of October, November. If we break the uptrend, then a move back down below 5,600 looks like the path of least resistance fairly easily. And as was discussed yesterday with you, Thomas, among the equity market futures, we never saw any capitulation on the way down. Traders actually were getting more net long, which is unusual. Usually, future speculators are trend followers. So this time they were fading the move. They're stubborn. So if you get another leg to the downside, you may actually see the capitulation, people throw in the towel and start to get off their long-only bias, which has clearly dominated speculative thinking for many months now.
Yeah, I mean, tomorrow's COT update is going to be interesting because the data goes up until this Tuesday, right? So Monday we had that big increase in ES and NQ, and that's going to be captured in the data because it is up to Tuesday. So are these longs going to have continued to build? Are they going to have gone out a little bit, which would show that it's a short profit-taking move? If longs decrease, that's kind of bearish in my view because it shows that, we get a small retracement and then it's being sold by speculators, right? And then you get to where that position, longs continue to get out if we go down because, they've gone out on that profit-taking. Where does that leave us then in terms of sentiment going forward?
Right.
So I think that comes out at 1 o'clock tomorrow, I want to say.
Yeah. 3:30, so 2:30 Central your time.
Okay.
Yeah, right before the market closes. The Russell, by the way, here in a very similar situation. When we think about that positioning data coming up across the board, people just aren't, not ready to throw in the towel yet. This move here that we see off the lows, It's starting to look like a bearish rising wedge, which puts 2K back into play for the Russell, which, again, it's had this streak of normative determinism where it seems to want to achieve its namesake and not just name, but also price. It's a bad joke, Thomas, but it's one that continues to perhaps be a useful guidepost when we think about the technical setup right now. Bearish rising wedges typically see a return to the base. The base here is the swing low that you have on the 13th of March. That's down at 2002.3. Ugly action out there. Sector rotation today, Mr. Westwater. Is it any better? Are we seeing some resiliency in semiconductors and tech and telecom? And are we finally seeing staples pull back? That's not necessarily the case. Semiconductors are the worst. Staples. Gosh, staples and gold miners. Not exactly the leaderboard that you want to see. Consumer discretionary is bouncing there. Then again, there is a large Tesla component to that. So you could put that in the back pocket, but also retail. XRT is doing well. On the flip side, telecom's down, banks are down, real estate's down, technology's down. It's not exactly the healthiest mix. It hasn't been a healthy mix on a rotation basis for a few weeks at this point in time. And while there were green shoots emerging in the midpoint of March, it's not exactly like those green shoots have flourished, right? The leadership has started to change hands again in a way that's not consistent with a strong bull market move. Is there any particular sector that you're thinking about right now that draws your interest? If even as stocks struggle, there's a particular place where you'd like to have long equity exposure?
I mean, technically XLE, it failed to close higher than that January swing high, and now we're getting down back towards that late February secondary swing high. But I don't really like oil right here. So, I think it's a short probably, but if you push through that late February swing high around 93, I think you get more downside there. And we were talking about the Dallas Fed survey yesterday. Producers, they're just not really happy with where, oil prices look like they're going right now.
No, they do not. Before we hop off the equities train here, a quick look around some of the automakers. You see Stellantis is down 1.88%. Ford, this is down 2.28% now. GM here is up by 6.83%. And then, again, American auto manufacturer, which is probably less exposed to the tariffs than anyone else, Tesla is up on the day 1.98% and helps explain why you see discretionary is leading the way up, at least being one of the leadership groups. Some resiliency afforded to it by Tesla's outperformance. Thomas, what's really unique about the market the last 2 days has been this refocus of bonds away from growth and back on inflation. It feels like, as we've learned from the Federal Reserve, that they're at least open and willing to cut rates if things evolve in that manner. That's what they told us when they lifted their unemployment forecast and reduced their growth forecast. When they tell us, at least when Fed Chair Powell tells us at the press conference, they're not concerned with the inflation that comes as a result of the tariff. They're more concerned with the second order effect, which is a decline in real economic output. That speaks to them thinking that growth is going to be an issue. And that's an issue that subsumes inflation. But the data that we've seen in recent days has not comported with that. And so if the backdrop is the Fed is able and willing to cut if economic growth slows, the growth hasn't slowed. And the news flow has been one that speaks to potentially higher inflation pressures, if only temporarily as a one-off, but still nevertheless higher inflation pressures that could evolve as a result of this. We see here from all these automaker reports that have been released since the tariffs were announced, $2,000, $12,000. Prices are probably going to rise per vehicle somewhere in that range, depending upon where they're made. Bonds here reflecting that. We see a deeper pullback now in ZB, which being short the 114, 116 put spread, I'm not exactly having a great time these past few sessions. It's a very interesting decoupling between stocks and bonds in recent days where February onwards, bonds and stocks traded as counterparts, stocks down, bonds up. Now that's not necessarily happening. Do you feel like we're going through a regime change here? Is this the end of the long bond trade, or is there still opportunity for this market to pull itself back together?
I'm still in my short put spread on ZB 114, 115, so I think it's the same trade as you. I think I got to take this thing off. I think the trade's dead for at least the short term. The price action is just pretty telling right here. It's not pretty, the technical chart. I'm going to look to get out, see if we consolidate around another level. I don't think it's going to be an extended pullback. Economic conditions, they deteriorate, inflation expectations increase. That has more of an impact along the 10 and 30 year. Then you get the 2-year, which is more sensitive to those interest rate changes. So, yeah, I'm just not really enthused as I was last week on trading the long end of the curve. I'm still going to stay in my ZN position. It's holding up just a little better, but not as much as I would have liked it to. So I'm probably going to have to reassess that before the weekend as well.
Yeah, this week we've had some various auction results come out. They have been mixed today. They actually tailed through. The 7-year note auction results tailed through by 0.6 basis points. The bid to cover ratio is only 2.53, which compared to the prior 6 auction average, it was 2.69, so lower demand. Not great. And I think if you're, if we take a look at this now, turn and how the auction results have evolved in recent sessions, you're looking at an investor class that's saying, I don't know if this is enough compensation to hold fixed income, right? After all, if I'm going to be holding a treasury, the only way that I get the yield is if I hold it to maturity. So, right, if I don't want to lose money, if bonds are going down, I'm going to have to hold this thing to maturity. So do I want to ride that out and watch this, loss effectively accrue on my balance sheet to go, don't worry about it, I just got to hold it for 10 years or 7 years in this case? Probably not. I think the market's speaking for itself. The market doesn't like, the bond market's telling us it does not like what the tariffs do for the near-term path of inflation, more so than what the concern is for growth right now. That puts us in a difficult spot. I still have my long deltas on here. ZB is looking in a tougher position than ZN. ZN right now is not breaching the uptrend off the lows. It has yet to break down through recent swing highs. But if ZB is going to be a leading indicator here, then ZN probably has some trouble ahead of it. Some of the recent levels that we've operated around, like the 110, 12.5 figure, that started to slip today. So depending upon where you close, right, there's kind of like with natural gas when it started to dip below, $4 the other session. There's no reason to hold on to a long. And yeah, natural gas is up, but it's down to $3.98 right now. So cutting it was ultimately the right thing to do. There's no reason to hold on to something that doesn't fit the criteria of being long, even if you have a strong fundamental opinion. The technicals are the timing tool, and the timing just doesn't seem right now. So go back to the drawing board as far as I'm concerned on the directional long trade. That may be the most prudent course of action.
Yeah, I mean, if consumer sentiment continues to trail lower here, I would expect the 10-year to continue moving down probably. So this is not looking like the best long side trade you could take right now. If we don't get any substantial change in tariffs or the rhetoric around it, this trade could unravel.
The administration has frequently said that it's focused on yields. Did you notice that President Trump yesterday said that he didn't look at the NASDAQ when asked about the impact of tariffs on the stock market?
Yeah, I think he said that before. He's not looking at the stock market. I mean, I'm sure that comes up in their talks, but they're saying they're not looking at it because it's not doing good, right?
I mean, I'm trying to square this, right? In his first term, you would see tweets every now and again whenever markets hit a new all-time high. And, it's fairly clear that there seems to be an understanding that what they're doing will lead to lower equity market prices, which is why they're saying that they're not using this as a measuring stick right now. Because if they use it as a measuring stick, then they're going to see that it's, the voting and weighing machine that are stocks is casting a vote against them. So, it all seems pretty deliberate. Yields, they're crossing this 3.3 or 4.35% threshold on the 10s. In the past few weeks, we've had comments made right around this area that have triggered a steeper pullback in yields. I wouldn't be surprised if Lutnick or Besson is out on the wires sometime soon, speaking to some of this, although Lutnick has been quieter recently, ever since those comments about Social Security and his mother. I'm going to stick with this for a little bit. Patience in a lot of things, even on pullbacks, has been rewarding. And given the economic backdrop, you talk about these surveys, people are tightening their belt. They're saying they're making like last minute purchases before they tighten their belt. I mean, I know personally we're looking to get a car. I've only been looking at cars that I know are made in the U.S. that would have the most minimal impact of any tariffs if and when they came.
Yeah, we have to get a car too in the next month here. So also kind of keeping an eye on all this and seeing, how it's going to impact that. But, it's a good thing for the executive branch to actually not look at the stock market or be too focused on it. The problem is they've kind of flip-flopped on that a few times. But as a trader, you don't really pay too much attention to that. It's just in a scenario where if there is a deep and protracted market pullback, then are they going to change their rhetoric based on that?
And listen, it's consistent political messaging, at least. The working class in this country doesn't really own stocks. If you say that you're doing things for the working man, why would you be paying attention to the stock market? Right? At least there's consistency there. Can't fault them for that. But we can't put our money in the stock market. We're going to have to put it somewhere to hide. You know where people have been hiding, Thomas? Gold and silver. Today, gold hit a new all-time high. We're up at $30.90 right now, $3,090, 90 cents an ounce. New all-time high is established at $3,102.20 an ounce in today's session. I'm in the process of trying to roll out my gold exposure. I am looking to kick it out now, long-term, as discussed in recent days, getting out 28 days and going to extend this, looking for a long entry at 3,200 and shorting the 3,250. Gold continues to build. It has been, all things considered, volatility is really low. Pullbacks and volatility have often preceded pullbacks in price. So being well aware of that, I need duration if I'm going to ride out any pullback, particularly if it's a pullback to 3K. But this is a good place now to rotate. It's a week out from roll time. In any event, because buying call spreads isn't the typical tasty trade, now that we set a new cycle high, I want to get myself that duration. There's no reason to play with 7 more days of trading, right? You get a pullback of 30 or 40 bucks by next Thursday, and then I have to roll, and then it goes up Friday. I'm gonna kick myself. So I'm rolling this right now. Gold's been a winner. It continues to win. The extension from the move here, we can talk about the swing low in December that finally starts the triangle breakout, move to the highs in February, pull back to the late February low, gives us an ultimate target of about 32.25 here in GCM5. So I would like to be playing for a move north of $3,200 an ounce. And that's what I'll be doing moving forward.
Yeah, I got long SLV this morning, call spread. Couldn't really structure the trade I wanted in SI. So just went over to SLV. It's a very liquid product, so that's fine with me. I'm kind of playing for this catch-up trade in silver with this gold-silver ratio pulling back from highs recently here. So that's just my simple thesis there.
Well, it's a good thesis. We've seen that actually play out here today again. Gold-silver ratio, which I believe was flagged this week in Cherry Picks by Nick and Dr. Data. Tom's been talking about it all week long. It gets up near 90. It's an opportunity to look for a pullback. Gold-silver ratio right now in spot is 88.92. So silver is outperforming gold. Silver exposure today, in fact, I made a move there as well. We did poke up to new monthly, new yearly highs. And so the long call spread that I had on SIK5, I did close out and I rolled it up from the 33.5, 34 call spread into 61 days to expiration. The long 36, short 37 call spread in SIN5. If we head over to SIN5 here, that would be pointing for a move effectively back to the highs that we had last year in October, which a few weeks ago we were talking about what happens if this market begins to break out. If the market does ultimately break out, then we want to play for a move back to the highs in a triangle breakout. So that's now been established with this swing up here today. It's on a different time horizon than gold because I think it's going to play out sooner. Either way, though, Thomas, the metals are working. We've been long-term constructive on them and have basically exclusively traded them to the upside, and that has been we've been rewarded for that here. So if it's not broken, don't fix it. Volatility's cheap. Longer duration's your friend if fall off in volatility is a precursor to any potential pullback. But in the world that we're in right now, gold and silver make a heck of a lot of sense from where I sit.
Yeah, I mean, 3 months of higher highs, higher lows. You buy on the pullbacks, you sell on the rips. It's working until it stops. So I say the same thing. Keep doing it.
Now, you've been trading in and out of copper as I have been for most of this year. I haven't been lucky to catch the recent move. You were, but copper has a decent looking topping candle formation coming together here today. We haven't closed below our 1 week moving average going back to March 10th. So it's been a ripper here over the past 2 weeks. 1, 2, 3, that big inverted hammer yesterday or shooting star is what could constitute the midpoint of now an evening star candlestick cluster, not so different than what we've seen in stocks form Monday, Tuesday, Wednesday this week, which is, again, technical warning signal that a top could be in play. Do you find yourself adjusting what you're looking at with copper right now? I know you've been long in, long out. How are you playing this now after taking some profit this week?
Yeah, I got out yesterday morning. We went higher, or actually I got out Tuesday afternoon, woke up Wednesday, saw it was up 2.25%. I was like, I should have waited a little bit. Then throughout the day, we sell off, right? We get that long tail on the candle. And now that's a hammer at the uptrend, that typically signals that, there's a reversal coming, and that's what we're seeing follow through. So we got this, news a few weeks ago of investigations, or last month, that they're investigating copper tariffs, right? Prices rise, inventories are coming into the U.S., coming out of the LME, it's raising the spread, that arbitrage is there. Now we get the news, so it seems like this is a sell the news event, which kind of makes sense when you get these events happening, sell the news. It's definitely what's happening today, a lot of profit taking there as well, pulling back to the 9-day EMA right now. I think we could go lower. I'm looking for going around 5, something like that. The demand outlook is still relatively weak in China, but we're also getting more stimulus coming out of China now. So is that going to rebalance the market around 5? I think that would probably be your place to reestablish a long position if you want to get long. Otherwise, I think you could stay short for a little bit. But ultimately, the trend is still intact. A 1-day pullback, even though it's over 2%, it's scary, but is there a trend reversal yet? Not necessarily. So I think you just got to be, if you're not in it, perhaps, I wouldn't hate it getting on the short side. I'm not going to do that. I'm going to probably wait, get back around 5, maybe even under that. 4.8 I could see as the place where we pull back the most and then kind of reestablish some buying there. But you have to let all these long positions shake out. I think that's going to perhaps take more than a day.
This is an interesting topping candle, or at least a potential topping pattern here. And I point this out because silver has been very, very good about following these types of topping and bottoming efforts. In fact, I could put another one in here that we start the year with, because it was one of the rationales we used to get long. You see here, you have this bearish outside engulfing bar key reversal back last September. That marks the high for a little while. Here you have the Morningstar candlestick cluster to start the year, which marks the bottom. Bearish key reversal here marks a high. A bearish key reversal marks a high. And now we find ourselves looking into what could be another technical topping signal, this evening candlestick pattern. I point these out because copper, for whatever reason, seems to respect the candlestick game. Natural gas does not. But copper has in recent months. And so they've been viable, actionable signals to trade around. For me personally, I really do like copper still. Tariffs aside, I think that if we are looking for a pullback level, ideally I've been waiting for that pullback down to like 488. Maybe the 1 month near 494 comes into play. But this would be a reason to be a little bit more cautious if you're looking to operate long. I would then flip this into if we are looking to operate in an environment where we already have long gold and silver exposure, there is a way to balance that out a little bit right now. I go to CPER, which has the correct IV rank here of 46. If we wanted to operate with more of a delta neutral, long gold, silver, and offset it with short copper, there is a trade that you could size up here to take advantage of this that's in more of the typical tasty fashion. If we go 61 days out and we look to the recent highs right now, which come up to 540, believe it or not, selling a call spread up in that area, 545, we'll do 550. You're starting to get a fairly healthy probability of profit if you're looking around. Yeah, unfortunately, you have to go out to 61 days. It's not a 45-day strike. But measuring something up in that neighborhood where the market topped off, you can get a pretty decent risk to reward depending upon your risk tolerance. And again, if metals broadly still rise, from my view, I already have long gold and silver on. Those could do well in an environment where copper still pulls back because there is a little bit of a growth wedge between those two buckets. In any event, though, I'm more of a buy on the dip kind of person. I'm waiting for that pullback. This seems to me like it will be the pullback, so we get down to 488, 494 in that zone. I'll look to get some long delta exposure, and hopefully if there's a pump and vol, it can be a short put spread.
Yeah, that makes sense, because if you believe this tariff news is over, or the market's going to move past it and sell the news, do you get copper starting to work more on economic vibes? Go back to the Dr. Copper thing, where it's a proxy for global economic demand. Copper and gold have been correlated, so if that correlation breaks down and you're trading long gold, long silver, and short neutral copper, that's then an environment that the trade is going to work in, and it naturally hedges itself in the structure of the trade. So I do like that.
Even deeper than that, 475, 480, we can't rule that out either. The uptrend from the yearly lows comes into play as we extend this out. Just to be generous, the most recent swing low. I mean, yeah, you get down to 485 or so, that would be ideal, right? Over the next week or two, we get a pullback of maybe 25, 30 cents, and we can engage in a little bit more of an uptrend here. I'm very curious to see what the copper futures positioning looks like after this huge run up. This has been a remarkable run in 2025, but such has been the case for all the metals, gold, silver, copper. Gold today, I'm hoping I can get filled on this. I would like to get filled on this. I may need to break this trade down into two legs where I just get out of my existing position without trying to roll this out as all part of one package, one order. But this is a market that, it's been one where consistently the momentum persists, right? And as a momentum person, as long as those conditions are in place, you just have to keep going back to that well. And you're going to feel foolish a lot because you're going to be buying markets at highs and selling things that are at lows. And that's usually not what people say makes you money, right? You're supposed to buy low and sell high. But this has been pure momentum, so there's no reason to treat it as anything other than that until we get a clear signal otherwise.
Yeah, I mean, positioning on COMEX copper has been interesting. Longs have increased, although we're not even near the levels we were last year around October. Shorts are still, they've pulled back a little bit since we started rallying in the end of November. They're still pretty elevated though. They're above levels that we were trading at in January. So that this move wasn't a huge short squeeze. It was more just longs getting long. Right. The shorts are still, fairly levered in the trade. 75,000 short contracts at COMEX copper for speculators. That's pretty interesting. So are the shorts going to press this now is the question.
Are the shorts going to press this now? There's opportunity, right? That's why it's a similar setup to what happened with stocks. It's not like you've seen a big short covering rally drive the move. No, it's people who have piled in long. So if shorts want to come in, there's ample opportunity for them to do so. Gold's been a real, it's up until the pandemic, and you and I have talked about this for years. We worked together for years. Gold's an animal of real yields. Past few years, it's had a lot of narrative flexibility. Narrative flexibility is the single best thing an asset can have. It means that you can buy it for any reason. Oh, inflation's going up, you want to own gold. Oh, the U.S. is going to default on its obligations, you want to buy gold. right? Oh, there's going to be an audit of Fort Knox. Better buy that gold. Right? No matter what the reason, gold seems to be going up.
Got to refill it.
So, we have to refill Fort Knox. Why are we importing all this gold? Why are we importing all this gold? That it's distorting GDP trackers. I don't think I've ever seen that before in my professional lifetime, where gold imports have been such a distorting factor. In any event, we have 15 minutes left here. Let's talk about these energy markets, which crude here, meandering slowly to the upside again, off the lows. It's a beautiful test of our 1 week moving average here today. That comes in at 69.14. The low for today is 69.12. Since we closed back above it here on the 19th, we have been riding that 1 week moving average. It's now carried us through the downtrend from the January and February highs. It likewise puts us through the 618 Fibonacci retracement of the 52-week high-low range. So oil is looking a little bit more constructive. I would argue that this is probably one of the main culprits for why bonds and notes haven't been doing well. I've long been a proponent of the idea that oil is one of the single most determining or most important factors for what happens in long end treasuries, because it is the day-to-day inflation proxy that we have. And as we saw throughout February and March, when oil was going down, bonds were going up. And now that oil has turned the corner, unfortunately, stocks aren't moving up, but you are seeing bonds come off. Are you finding yourself looking at oil and saying, if I want to stay long treasuries, maybe I need to get some long energy exposure in my pocket? Different time horizon, if you will, so the trades don't necessarily cancel each other out. But is oil going to break higher from here? It looks like this is on the verge of a technical breakout.
I mean, yeah, this is weird, right? So you got supply concerns with Venezuela. You got a truce with the maritime corridor for Ukraine and Russia, which also brings, a lot of that focus is on grains, but it affects oil too. I don't know. This is a weird trade right here with oil right near 70. If you're expecting economic growth to contract, if you're expecting that OPEC still has spare capacity, it doesn't really set up a strong backdrop for a long trade there. At the same time, you're seeing things like the prompt spread, which is the difference between this month's contract and the next month's contract. That's risen along with this rally, and it stayed high actually, despite the sell-off we saw through January into February. So there's still some supply tightness in the market. Some forecasters have shifted to show a surplus through the end of the year. Some forecasters are staying neutral to slightly, on the deficit side. But you're seeing price ranges all the way from like 66 to 77 around there, the median being around, the lower end of that range, 70, 72. I don't think we get back up to the January highs. I think maybe this still has a little bit room to run. Then where do you short it? I think 72, 73 would be a lot better of a place to get short. I'm a little bit short crude oil right now, buying a put spread. But, the EIA numbers yesterday, a bigger than expected draw. That wasn't only for crude oil stocks, it was for fuels as well. You got crack spreads. What are they doing today? They're still elevated. I mean, not really doing anything today, but, the 321 still at 24.5. That's pretty high off the 22.6 we were trading at a couple weeks ago. So more incentive for refinery runs to go through, for producers to still churn that oil into fuel products. I don't know. It's a pretty weird trade right here, I think.
Just adding a little bit more color, by the way, to what's going on in terms of this Treasury auction as I'm seeing it. Foreign demand for Treasuries at its lowest level in 3 years. One of I've tweeted this out previously, but one of the knock-on effects of the trade war is that if we have less foreign trade, then we're sending fewer dollars abroad for goods to come into the country. Okay, stated goal. But one of the knock-on effects is that foreigners then, because they're holding fewer dollars, they need to recycle fewer dollars into U.S. denominated assets. Frequently, why is Japan such a large holder of U.S. treasuries? Why is China? Why is Great Britain, France, UK, Germany? because they take the dollars that they have from us and they recycle them back into the treasury market. So if there's less trade moving forward, less dollars to recycle, foreign demand could drop off, and foreign demand for U.S. assets has been a significant reason why you've had lower yields in the U.S. than many people would assume otherwise, or you've had stronger equity markets compared to the international peers. There's been no alternative. I digress, Thomas. You were talking about oil here. I'm looking at a 12.8 IVR. I'm seeing us near the midpoint of this 52-week range. At these levels, I'm going to do something a little bit different. When we get to the 50% mark of this range, which we're getting pretty darn close to, but if we get to the 50% mark at 70, 95, we'll call it 71 just to be a round number, I'm more intrigued by looking out, say, 49 days and doing something like a long iron fly, which would be to suggest that we expect volatility to go up and us move away from the current midpoint in price. It's basically, it's not the greatest risk to reward right now. Hopefully it can be a little bit better when the time comes. But the idea here would be that the market is going to move away from the current midpoint. And I know range trading has worked out really, really well here, but a 13.1 IVR, that is not enough juice for me for a short iron Condor position. I'd rather just say this thing is going to move towards the range highs or lows sometime soon. I don't feel great about it, but it's an idea that I'm toying with.
Yeah, I don't hate that. I think you're right. It's not probably the time to put it on just yet. It would be great to see more volatility in the product, but that hasn't really happened. We haven't gotten much juice there.
Okay, so natural gas. We're in it this week on the long side. Then I was out. You've been short. I don't know if you're still short here. This reversal here today against the swing high that we have on January 16th, the swing low that we have here on March 3rd, it's beginning to shape up into something more than just a bounce off the low. Above yesterday's high of $3.95, you have a bullish key reversal here. Would that inspire you to cut short any short delta exposure you currently have?
A little bit, because, the EIA came out with their numbers this morning for the weekly report. We built 37 billion cubic feet. Traders were looking for 32 billion cubic feet build. So more of a storage build than we were expecting. That, is naturally bearish. We sold a little bit on that news, and now we're higher just a couple hours after that report. So despite a bearish EIA report, we're still getting upside. That speaks to the deficit that we have to fill from this winter, and there's a lot of it. So there's a lot of nat gas that has to be produced. At the same time, LNG flows are expected to stay strong through the summer, and we could potentially get some, storage disruptions with maintenance season coming up here. It's even looking like Texas could get as hot to where it's going to actually add cooling degree days, which will increase energy demand prematurely in April. That's pretty early. So you're getting these conflicting narratives, yet the bulls are taking a little bit of an advance here. So yeah, I think if you're short, it's probably a good place to cut that exposure, especially looking at this technical setup we have. And perhaps make another leg higher.
If we can get, I was just fishing in this well a few days ago. Clearly, I haven't learned my lesson. But if we find ourselves looking at a key reversal here today, that would also likewise bring us back above the 1 week moving average. This is a real solid level technically to work around from a long delta position. And with a 45 IVR, given natural gas's distinct lack of correlation with nearly everything else in the market, it's a very tempting thing to put onto the books. So I'll be watching this very closely today. It is on my watch list. We may have something to talk about later on last call when Tom and I are there looking at how this market is going to wrap up for the session. So crude, there's something in an idea in the hopper. Natural gas, a little bit more imminent potentially. It goes into the queue today if it can get executed. Hopefully gold gets filled. We need to do something with currencies, though, because this is, again, maybe my bias from my professional upbringing, Thomas. Currency is a $6 trillion a day market. It is the largest, most liquid market in the world. When currencies move, there's usually something big happening. And when something big happens and currencies don't move, it begs the question, was that thing that happened actually important? One of the prevailing pieces of wisdom, one of the common ideas out there, dare I say the public view, has been that tariffs, generally speaking, would be good for the US dollar. Why? At least in the short term, you get higher inflation. It prevents the Fed from cutting rates. Ultimately, it's more money circulating within the US economy itself. So structural inflation could be up slightly. Again, the Fed has told us that they see inflation as a straight line going up. You get a tariff hike, it brings it to a new level, and it continues along its preset course. But that does mean more structural inflation. So instead of 0.2%, you get 0.3% month over month, yada, yada, yada. That should help the dollar. So we're getting these big auto tariffs right now, and yet our beloved greenback is finding no reprieve here in today's session. The pound's continuing its strong run after the budget news yesterday, warding that off and bouncing right against its 1 month moving average, the yellow line. It's also the swing low that we have on March 10th. The euro here has found its way to the upside once more, catching its 1 month moving average today as support. Hasn't been able to quite be able to climb through the 1 week, but it's getting there. And even the Australian dollar. You mentioned China before. On this day today, when we have metals doing what they're doing and energy markets making their way back to the upside, the Aussie's holding gains as well. It's not exactly a day of dollar strength. In fact, the weakest currency on the board right now is the Japanese yen among the majors. And that's considered a safe haven, a liquidity haven. So not exactly a bad thing that the yen is losing ground once more. Although Canadian dollar, yen, Mexican peso, those are all big auto manufacturers. So tariffs right now, they're a big deal for those specific currencies. But in terms of a broad market reaction, I guess we're still waiting to see what shoe drops for the Eurozone or the European Union. Trump has been issuing some blistering warnings against Canada and the EU in recent days. If they work together, he's going to bring more tariffs against both of them for coordination. Do you have any particularly strong views right now on the US dollar? It feels like it's been Ilya's had some success recently. We've had a bit of a rebound. Do you try to get short again now after what's been a few days of a good rally?
I mean, I'm long the euro, I'm long the yen, thinking about getting long the Aussie. If you expect yields to continue to move higher, bonds to sell off, you'd naturally be cautious about getting long non-US dollars. But this may work in your advantage right now if the price action, the divergence we're seeing holds right now. You're long non-US dollars. If you're long treasuries, it's going to kind of, if we get this price action continuing, it's going to kind of hedge those positions against itself. So I think I'm going to stay long my euro, stay long my yen. The yen's underwater. The euro's not doing too much for me lately, but technically the euro's in a fine place, I think, to stay long. The yen a little more concerning. If the yen doesn't rebound soon, I'm going to take this position off and just eat the loss, but I'm probably going to stay in my euro position until at least next week.
I mean, I'm just looking at the euro chart, right, or rather the yen chart right now and comparing it to the bond chart here. That looks pretty darn similar, Thomas. Right, and then again, this is an animal of yield differential, so trying to find a catch here at the 1 month moving average again just didn't work out last time. I still have my long exposure here. They were cheap out of the money calls for the 007, 0071. I'm perfectly content that this is falling apart. It's a small loss if it plays out that way. I'm going to hold on to it still. But this is obviously not looking good. So if you're looking for the yen to turn around, what do you need? You need weaker oil prices. You need lower U.S. yields. Yield differentials, of course, big, but Japan's an energy importing nation. Over 90% of its energy still comes in from abroad, and it's billed in dollars. So when energy prices go up, when oil prices in U.S. dollars go up, bad news for your yen. Higher yields, higher energy. That's been the story of the yen's bitter trading conditions for the past week. It's all the same trade right now, Thomas. In many cases, you're looking at mirror images of various iterations of the same story. Growth on, inflation on, growth off, inflation off. And it's, today, it's the auto manufacturers and FX that are biting the bullet. What's next on the calendar for tomorrow? It's the PCE day. It's usually a report that doesn't stir much of anything for markets. We already know what's going to go into the report because we've seen CPI and PPI. If it's an outlier move, it could stir things. But right now, Cleveland Fed's tracking it at 0.19% month over month. Consensus forecast is for 0.3% month over month. If you're in between those two numbers, we'll call it 0.2 to 0.3. The market probably doesn't react. The far more telling numbers, spending, income, what are people doing with their money? Is this all tariff front running? It's a question we keep asking. And then, oh, by the way, Michigan consumer sentiment. Fantastic. There's actually some things that could move this market on Friday here now that we take a closer look. But you know what will be open tomorrow throughout all of it, Thomas? Futures markets. Today we're talking trading hours at the end of the show. It's my favorite part of why I like trading futures. It's the best part of trading futures. It's the fact that the markets are open basically all day long. If you head over to tastylive.com, top banner, learn beginner futures, you can find this great coursework put together by the fine folks on the Tasty Live research team. Effectively, we're 23 hours, 5 days a week. Sunday, they open up at 6 Eastern, 5 Central. They go until Monday at 5 Eastern, 4 Central, close an hour for batch order processing, and then they reopen and do it again for the next 23 hours. There are lots of opportunities to get in and out of the market overnight. If it's news from the Middle East or from Asia, there is a market that you can trade and not have to worry about the New York Stock Exchange opening. Dolly Parton said, we work from 9 to 5 to make a living. The New York Stock Exchange does it even less, 9:30 a.m. to 4 p.m. That's no way to make a living. Trade futures. It's basically all day long. It's my favorite market to trade. I think you'll enjoy it too. Just make sure you learn about all the risks. And you can do that by going to tastylive.com, top banner, learn beginner futures, or by clicking the link here at the bottom of the slide. It takes you there directly. Thomas, we're done. Thank you for coming on the show to fill in for Jamal, who's on vacation this week. I will see you later today, or talk to you later today. Up next, we're going to have Dr. Jim Schultz with From Theory to Practice. I'll see everyone on Last Call with Tom, and then Overtime with Ilya and Radigan. See you soon.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And Tasty Live does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Thursday edition, opening day edition, Go Bo Sox edition of the program. Thank you guys so much for being here and being a part of what it is that we are trying to do. If you're watching over on the Tasty Live Network, then I would bounce on over to YouTube because you can join the conversation and you can join the discussion and communicate with your brethren in real time. You can celebrate if you are a gold bull. You can commiserate if you are a gold bear. And then everything in between. Of course, it is a good time had by most. But let's pop in. John, bring us into the market. So a little housekeeping. We have an extra long show today. So extra long. We're going all the way to 3:15 Eastern, all the way to 2:15 Central. And so we have the extra wide lanes, a lane Bennett style. You can expect many, many trips off the reservation. In fact, I don't think we're going to spend much time on the reservation today. But let's take a look at the overall market, guys. It's not looking good out there. It's not looking good out there at all. EMEA S&P is down 17 on the day when they were a little bit green this morning. In fact, someone even tweeted when they were green that they were going to close 30 or lower. Interesting. Down 30 or lower. Very interesting. Very smart guy, whoever tweeted that out. And so we got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, down 85. Yikes. Got the boomers down 170. Got the Russell down 9. Got bonds down 14. You got notes down 2.5. You got UB40 down 22. Man, there is nowhere to hide except for, let's even grab them their own color, my shifties. Man, look at my shifties. Gold up 44 points. Look at silver. Look at the Hunt brothers, man. Like they're taking all that extra capital from all the pizza sales, and they're just funneling it into more long silver contracts. Silver up 91 cents on the day. A pretty crazy day. Man, I don't know if anybody told you guys to get short metals, but that's crazy talk. I've been long metals since day one. Y'all can check the tapes. That is 100% accurate. So metals up huge. No, I've been short metals for a while here. It's pretty bad. It's pretty bad. But all right, so VIX futures up 19 cents. So volatility futures are strong. That makes sense on a day where the market is a little bit weak. And then, of course, we have the old VIX, little spot volatility, which oftentimes does not even matter. We have to wait for the tweets from VIX HQ to know if we can even count a given VIX print on any given day. 18-cent rally on the VIX so far today. So, all right, so what I want to do is market's not looking too good. I mean, so this morning market, I want to go through a couple things in the portfolio, maybe even get a new trade on or two. And then of course I'm going to see where you guys are at in the chat, man. Where are you guys at? I got 700 people watching the show. It's crazy. That's unbelievable. Got Emmett Morrison in the house, YouTube Jim's in the house. Man, Sam L, Junior Mac, Rob Banks, Daniel Perkins, Sparky Dog in the house, and many others that I'm skipping over, of course. But I'm just glancing at whoever I can see in the moment. I appreciate you guys so much. So, all right, what I want to do though is, so the market was kind of, it was kind of strong earlier, where if we look at the ES here, you can see that, is that like a minute? Yeah, I don't want to look at a minute chart. Let's look at, well, actually, no, that's fine. We can look at our Earl Coleman settings. So you can see, so on the open, so the market opened like right around here. Right? Market was just kind of chopping around in the pre-market, right around there. And then there was some weakness on the open. I actually had kind of forgotten about that because all I could remember was kind of this deal right here. And so this obviously must be because, the tariffs are off, like Alabama's off, Florida's off, North Carolina's off, South Carolina's off, right? And everybody is happy. But then all of a sudden it's like, well, it looks like Florida and Alabama are back on, right? A little bit of a relief rally. But then all of a sudden, looks like North Dakota, South Dakota, they're getting slapped. They're getting slapped with a few tariffs. Now, I don't know what North Dakota and South Dakota make. Probably like potatoes or something. But, man, they're going to get hit pretty hard with some Trump tariffs. But don't you worry. He has assured us that it is all for our benefit. So even S&P is only down 9 now. So you got a little bit of a rally. So maybe South Dakota has been spared. But you just never know. And so I don't know. Where are we going next? I mean, nobody knows. Right, we could go up here. That's possible. We could go down there. That's also possible. I have no idea. I think we're going to finish weak. I tweeted about it earlier. And, of course, if we don't finish weak and we rally back strong on the close, I will just go in like the internet furu that I am, and I will delete that tweet. And so, or I'll just edit it and make it a long tweet, which is actually, that's a way more sophisticated way to do it. And so we'll probably go ahead and do that. But EMEA S&P is a little bit weak, still down 8 points on the day. NASDAQ's going to be a similar story. They tend to follow each other pretty closely. I mean, the correlation between the two, I'm going to say, is at least 90%, if not even higher than that. And so you've got, weakness on the open for the NASDAQ. You've got the rally. You've got the dip. And then the rally, dip, rally, dip, rally, dip, rally, dip. And I don't even know, like, which wave are we in for my Elliott wave bros out there that are watching the show. Like, this is like the third wave, the fifth wave? I mean, we're at like the ninth wave at this point. This is like a Fed day move. This is like an NFP move. Like, only the suckers think the first 9 waves are legitimate. It's that 10th Elliott wave. That's the one you really got to be on the lookout for. And so NASDAQ a little bit weak. And then, of course, you got the boomers, you got the Russells, you got, all the other things. But if we go into the portfolio, let's look at a couple of positions and let's see where you guys are at after that. All right, so number one, what do I have on my list here? Amelia May wants us to talk about Apple. She wants us to kind of fill you guys in on what we are thinking for Apple. If you're brand new to the show, welcome aboard. I'm glad that you are here. You're in good hands if you want to take more of an active approach with your portfolio, specifically using derivatives, options and futures. You're in a good spot, man. I mean, on the network, we have so much content for you. So much content for you. It can feel very overwhelming, of course, in terms of, where do I start? Like, where do I go? Like, where do I go with all this content? I'm a little bit biased, but maybe start with the crash courses. Like, I'm a little bit biased, but, if you're on the YouTube channel right now, then start with the crash courses. If you're actually on the Tasty Live website, there's a dedicated page with all the crash courses on there too. Shout out to Lindsay for getting that together for us. That was maybe 6 or 7 months ago, I think now. So whenever people reach out to me and they're like, hey, where can I find your crash courses? I just send them that link to the Tasty Live site. It's got all the crash courses in one kind of, one page. You have all the links. It's very, very nice. It was really, really well organized. So I appreciate Lindsay for doing that. So if you can't find the crash courses, by the way, just shoot me an email. Shoot me an email, jschultz@tastylive.com. I will send you a link directly to the Tasty Live site, and then you can watch all the crash courses right there. So if you don't know where to begin, like, I think it's as good as any other place to begin. And so maybe that would be a place to start. But if you are brand new to the show, welcome aboard inside of the Tasty universe. So what I'm going to do, though, is let's take a look. What are we looking at here? Oh, yeah, Apple. So Apple, we're at 21 days to go. So obviously, and it's weird to be at 21 days to go. Like, it doesn't feel very feng shui to be at 21 days to go on a Thursday, right? It's like, why am I at 21 days to go on a Thursday? Like, that never happens. 21 days to go is a Friday thing. Like, this is like going in on like a Thursday and hitting hamstrings. Like, that doesn't make any sense. Like, that doesn't feel right. There's obviously what I hit this morning, and it never felt right. Not from the very beginning and not all the way through to the end. And so it's the same type of deal here. It's like Thursday, this should be a shoulder day or maybe an off day, right? And then Friday, obviously, is going to be your arms day. This is basic bro science type stuff. And so having a 21 days to go in the cycle on a Thursday, very, very kind of off-putting. But it's because of Good Friday, right before Easter coming up in a few weeks, and the market is closed. It's a U.S. holiday. And so that's why we have 21 days to go in or on a Thursday here in this April cycle. So we're at 21 days to go. So what are we going to do? Okay, we talked about this a little bit yesterday, or maybe it wasn't yesterday because I was with Errol on Wednesday. But on Tuesday, we talked about this a bit. But let's talk about it a bit more right now. So we've got $9 in credit to work with. You've got our strikes on the straddle are 220. So that means my break-even points, I know we went over this the other day, but it's very relevant right now. So I'm going to put it back on the screen. My break-even points are 229 and 211. Right? I'm just taking my $9 credit, I'm adding it on to the 220 strike, and I'm subtracting it from the 220 strike. Essentially, anything in this region is going to be pretty good for me. Like, I'm going to be okay one way or another. Now, obviously, the closer to 220, the better, because that essentially, brings me to a point where the strikes are closer and closer to being at the money, which is the best I can hope for on a straddle. You're always going to have one strike that's always tested where that strike is in the money unless you're perfectly centered at the money, the 220 mark. But even if you get there, of course, you're not going to stay there very long. So what are we going to do now that we're at 21 days to go? Well, the problem, the fly in the ointment, as they say, is if you look at the trade page here, you can see that Apple has earnings on May 1st. So I don't really want to, I don't want to take this April cycle. And like normally right now, under normal circumstances with no earnings, like no known binary events like on the horizon that I would have to kind of fiddle with, I would go ahead and kick this guy right out to May with 50 days to go and not think twice about it. I would just say, hey, let me push this out to May. I can pick up a credit. I can do all these wonderful things. And then everybody's happy. Like nobody gets hurt. I'm not going to do that right now simply because I don't want to take this strategy through the May 1st earnings. I really, really, really do not want to do that. And so I'm kind of thinking, man, if this thing hasn't figured itself out by May 1st, then we just got to cut it. Even if it has figured itself out, we just got to cut it, right? So one way or another, we are going to be cutting this position because I don't really love the idea of taking a trade that is a losing trade and taking it through earnings, because I feel like you're asking for something that is maybe a modest loss or something that's kind of like, it's got a mild level of sting. And then all of a sudden you're going into like ghost pepper level sting. You go through earnings. Like you're going into like habanero level like sting, like the Scoville units, like they get ramped up really, really quickly, right? You go into earnings. I don't really want to do that. Like I'm not much of a Scoville unit guy myself. And so I think we stay in April and we just kind of sit tight for now. Now you could make the case, and this would be a reasonable case to be made. What about rolling it from April 17th to April 25th? What about adding another 8 days onto the trade? It's possible. It's something to consider. It does, add some time to the trade. It does kind of, extend the duration and bring in a bit more credit. I don't know. Maybe we'll consider it. I wasn't really going to do that. But since we do have so much time and the lanes are so wide on the show today, let's give it just a quick little gander. So if I go in here, market's making its way back to unched, man. Look at this. Look at this, man. This market, it looks like, man, the North Carolina tariffs must be off. The South Carolina tariffs must be off. You got silver now almost up $1. You got gold up 45 points, getting close to 3,100 again. Man, that's crazy. That's crazy stuff. But if we look at Apple here, let's go back into, I got a bit distracted because the market has been strong. It's been whipping around quite a bit though. And so this may or may not last. You never know. If we go into April, or if we're going to Apple here and we roll the expiration to the the April weekly with 29 days to go. So it looks like, wow, that's not too bad. We can get $1.48 credit on the mid price. Now we may have to give up a few pennies when we go to get filled here because the markets are, that's unusually wide for Apple. A 15-cent wide market is pretty wide for Apple. Apple is normally 5 cents or less. I'm seeing 10 cents, it's 10 to 15 cents on both sides. That's pretty, that's pretty wide. I'm pretty surprised by that. I still think I'm going to do it though, because I do kind of like getting this extra credit. I'm prepared to use the time all the way up until the earnings day. Like I don't feel the need to get out, 2 or 3 or 4 days before earnings necessarily. Now I am going to potentially have to, let me think about that. No, I'm not going to be in this trade for earnings, right? That's kind of what I'm trying to avoid. Given the fact that this option expires, the one I'm rolling into, 29 days, April 25th. All right, so let's stop for a second because this is kind of a bit of a jumbled mess. So right now, I'm in April 17th. I'm in the monthly cycle. I'm considering and probably going to do a roll into the April 25th weekly cycle. I'm going to add another 8 days to the trade, and it looks like I'm going to pick up approximately $1.50 for that. That's kind of nice. That'll bring my total credits collected to over $10, widen the break-even points. Like there's lots of benefits to that. What would the drawbacks be? Like where's the gotcha? The gotcha is probably, things are going to slow down a little bit. I'm not going to necessarily get paid as quickly in terms of, the rate of theta, in terms of potentially volatility contractions. Like all these things are going to slow down a little bit. And so that's okay though. That's not necessarily a super negative for what I'm trying to accomplish here. But with 29 days to go, April 25th expiration, that's going to get me out long before earnings. So there's no rolls beyond this point because the next cycle would take me through earnings. I'd be holding into the earnings day, and I'm not going to do that. And so we're going to be out of this trade probably. I probably won't hold it too much inside of 21 days to go at the April 25th weekly. Now we may hold it a little bit inside of 21 days to go. Like, again, this is our little secret. Nobody has to know this is even happening. So we may go to 18 days. We may go to 16 days. We may even kind of skirt with the Reaper, go to 14 days, go to 11 days. I don't know. But we're not going to do anything super crazy and go to like 4 days, 5 days, 3 days, things like that. But yeah, let's roll this thing out. Pick up $1.50. I mean, it kind of makes a lot of sense. We're not going to be kind of flirting with the earnings date because it's not in this cycle. And so, man, I like it. Let's roll it out. We'll pick up a little bit more. $1.40. All right, so we got filled at $1.47. So even though the markets are wider, you guys can see it for yourself, right? The the call strike is 15 cents wide. The 220 call strike in the April 25th weekly is 15 cents wide. The 220 put strike is 10 cents wide. That's pretty wide for Apple. Apple, again, is usually less than a nickel. I got filled immediately at the mid price. And so even though you have wider markets in arguably the most liquid individual stock in the market, I mean, Meta could maybe be in the conversation. Tesla could maybe be in the conversation, but Apple is like right there, man. I would actually probably put Apple above both of those two, Meta and Tesla, simply because it's a lower price than both of them. Although Tesla and Apple are kind of similar, but because the liquidity is so high, the activity is so high, you can still get decent fills even if the markets are somewhat wide. And so we got filled on Apple, a nice little adjustment there for that position. So all right, that's Apple. I want to talk about that now. Let's take a look at Chipotle. So Amelia wanted us to take a look at Chipotle. What I meant to say earlier, I totally got sidetracked. I mean, we're way off the reservation at this point. If you are brand new to the show, I have a trading assistant. I have an intern that works for me. She only works for me, and I'm the only one on the network that has an intern working specifically for them. It's Amelia May. She does all of my trading analysis. She's very good at what she does, right? She does all of my trade analysis. She puts a nice little analysis sheet like on my desk in the morning. Now it's usually like a picture of like princesses, and it's all in crayon and things like that because she is also my 5-year-old daughter, but she does a really, really, really nice job. And so I'm very proud of her, I have to be honest. And so Amelia May says for Chipotle, you got the stock at 51. We just rolled this thing out in time, right? I remember we rolled it into the weekly because Vinny finally got the monthlies available to us, but they did no help for us because we wanted the dollar-wide strike flexibility that was only to be had in the weekly options. But what's interesting about Chipotle, let me bring up a daily chart of Chipotle. Let's do a daily chart. Let's go back a few months. If you look at Chipotle, you can see just a few days ago, it got down under 50. Which is our put strike, right? It got down to let's say 48. The low is around 48, maybe a little bit less than 48, but that's fine for our purposes. And we were trying to make a decision, what are we going to do? Are we going to roll out in time? Are we also going to, roll out in time plus rolling up the put, like a little combo, a little value meal type of deal? What are we going to do? I decided at the time to just roll out in time and keep my strikes the same. Okay. There's a time and a place for all these adjustments, rolling out, rolling up, rolling down, all those things. In my humble opinion, though, I think that rolling out reigns supreme in terms of the adjustment that you can kind of always count on. In terms of the adjustment, that's kind of the thing that you always want to keep in your back pocket. I mean, rolling up and rolling down are there too, don't get me wrong. But if you're ever kind of in a bit of a pickle and you're like, hey, what should I do? Rolling out should almost always be the first consideration. And so because we were getting close to 21 days ago, or we were getting, kind of the DTE on the trade was getting whittled down, it's rolling out is an easy decision. Rolling out is an automatic play here. Then if I also want to roll, the untested side in a little bit, which in this case would be rolling the call down, then I can do that. Now I decided not to do that, and that so far has proven to be a good move. But the point I'm just trying to make is, when you want to make an adjustment on a strategy in a position, there's always a number of things you can do. You can roll out, you can roll up or down, you can add a tranche, you can do a bunch of different things. In my opinion, rolling out in time for a short premium play should be the first thing that you consider. Now, is there ever a time when you consider that and you don't do that and instead choose to roll up or roll down? Yes. And let me give you 2 examples that are maybe kind of one example with 2 kind of parts to it. So number 1, if you have a situation like I have in Apple right now where you don't want to roll out in time because you don't want to engage with the earnings that are coming up and the known binary event, that's a very good reason to bypass rolling out in time and instead maybe choose to roll up the put or roll down the call and kind of go that route instead. I like that move. Second move, that's kind of similar to the first one, but if you already have a lot of DTE in the current cycle that you're in, so let's say you still have 39 DTE or 44 DTE or something like that, you just put the trade on and boom, you're tested. You just put the trade on and boom, your call is breached, your put is breached, whatever. This happens to us all the time. If it hasn't happened to you yet, it's going to happen to you very soon. And so what do you do when that happens? I don't necessarily love rolling out in time in that scenario because now you're going from like 42 days to like 70 days, which is not necessarily a bad thing. But the big gotcha there is the rate of decay really does slow down. Like if you look at a decay curve, it really begins to pick up steam right around that 45-day marker. That's why we like to enter our trades around 45 days. So if I'm in a trade and the DTE is still like 40 or 37 or something like that, I may not roll out even if I am in a pickle, and I may choose to either A, do nothing, which is always a move that we can make, or B, roll the untested side and stay in that cycle. And then if another week or 10 days kind of peels off and I'm still in the same pickle, then maybe I roll out in time. Now maybe I add the duration and I kind of, build up some credits that way. And so a couple of things to think about when it comes to the adjustments that are, available to you. And so that to me, I mean, that's what selling premium is all about. I mean, to me, and I know that I differ. I've had this conversation with Tom and Tony and even Errol before, I think. And I'm pretty sure I stand alone in my feelings on this. When it comes to the 3 stages of a trade, I'm curious. You guys let me know what you think. Which of the 3 stages do you think is most important? I'm curious. Let me know in the chat. Trade entry, trade exit, or trade management? Like, which of the 3 do you think is the most important if you had to choose one? I don't want to hear this "it depends" garbage. I don't want to hear this, well, blah, 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 blah. No. You got to pick one. You got to pick one. Trade entry, trade exit, or trade management? You let me know in the chat. I'm very curious. For me, it's not even close. For me, it is head and shoulders, far and away, trade management. Not even close. Trade entry and trade exit even, those can kind of be, in the words of a Tom Sosnoff, commoditized. Those can kind of be like, all right, you can get not totally black and white, not totally automatic where I just kind of set, my Grok bot on automatic and he just kind of flies blind and does whatever he wants. Like, I don't think it's going to be like that per se. But man, the trade management, it's so gray. There are so many decisions that you have to make. Like, you have to draw on skill, you have to draw on experience and acumen and just, risk tolerances and account sizes and portfolio risk levels and just so many different things that are happening at any point in time that you can't just set your Grok bot, to autopilot and just let it run. Let it roam free. You can't do that. You can't get away with that. You've got to make some human decisions. And so to me, it's trade management, by far and away. And so, and I don't even think it's close. And if you disagree, then it's, you're probably going to get blocked. And so, all right, so we talked about Apple. We talked about Chipotle. What's next? Oh, what I want to do now, I want to do one new trade because obviously, you've got a bit of a volatility spike today. Not a huge one because the market has rallied in the last, since we started the show, the last 25 minutes. And so the VIX, VIX futures are only up 10 cents now. And then the VIX is only, it's up 29 cents. I think it was about the same when the show started. And so it's hanging in there. Like volatility's hanging in there. But if I go ahead and if I go into MES, so I was like, man, let's get, because we've got a lot of earnings coming up. We got, Apple on May 1st. You got all the others. We got, in fact, here, let's even look at it. If I go to Tom's watch list and I sort by earnings, I mean, look at this, man. Look at all these earnings coming up. You got JP Morgan coming up. JP Morgan. Oh, you know what's funny about JP Morgan? I don't know if this is JP Morgan's, but somebody, and I can't remember who this was. I was emailing with one of you all the last day or two, and sending me these high yield, like these high yield, or I don't know, was it high yield or was it? I know we talked about the covered call guys, and you guys sent me like the JEPs and the JEPQs and whatever. This was something else that was I don't think it was high yield. It was, I wish I could remember. It was some kind of like, like premium selling, like dividend paying, like, selling puts type of thing, whatever. I'm not sure if it was JP Morgan. I think it was actually, but it was one of the big banks. They put out this fund, right? And I had never heard of it. I knew that these things were out there, but I wasn't sure of like the specific tickers because I'm like, all right, I know that that's a scam. Like, I know that that's a scam. And I don't mean like an illegal scam, but I just mean like a scam that's like, all right, you probably shouldn't do that. Well, anyway, I wish I could remember who I was emailing with, but I can't. So he said, hey, check out this ticker. And so I checked it out and I looked into it a little bit more. And dude, it's a total scam. Like, it might not even be legal. Like, this is crazy stuff. Like, if you look into it, like, to give you your return, your quote unquote return, right? They'll send you like if the stock, I think it was a Tesla thing. Oh, that's what it was. It was a Tesla thing. It was like a Tesla covered call fund. This exists. Like, this is how, guys, let's have a conversation. we got to be so close to the top. And I know we're like 10% off of all-time highs, but guys, it's got to be really close to being over. If we've got Tesla covered call funds now, we've got NVIDIA levered covered call options for income funds now, it's like, this is crazy stuff. But this is what it was. It was some Tesla fund, covered call, like whatever, guaranteed income. And I'm not sure that that's what it said, but it was something like that, right? So I looked into it a little bit more. It's so crazy. It's so scammy. So scammy. To give you a return in any given, I don't remember what the frequency was, quarterly, monthly, daily, hourly, I'm not even sure. To give you whatever the returns are that are in the prospectus, they're going to send you like the capital appreciation of the stock. So if the stock does well, you're going to make money, right? If the stock doesn't do well, then you've got the short calls that you're selling that are going to be able to, kick in. I mean, all the things we're already familiar with from selling calls ourselves, right? So that's all good. That's all well and good. But you're still exposed to 100% downside risk. So if Tesla goes to 100 or 80, you're going to absorb essentially the full weight of that. And what they're going to do is they're going to return the actual capital contributions of the investors if there is no stock appreciation and like the short calls don't do very well. Like they're going to return the capital that you've put into the fund and they're going to call that part of your quote unquote return. Is that not a total scam to you? That's a total scam. And I wish I could remember the ticker symbol, but you can look it up. It's whatever the Tesla one is the one that I was looking at. And I'm like, this is crazy. This is crazy. And so I'm like, man, so that's why you see these things and their prices over time just get whittled down. And they end up having to like reverse split and whatever. Like all the things that have to do that, like, your UVXYs and then, the S&P 500 one, like there's a bunch of other ones, all these levered funds with these daily resets. It's like, man, you're fighting an uphill battle. You're fighting an uphill battle. And then with this Tesla one, it's like, this is crazy. You don't have daily resets and all that kind of stuff, but they're just going to return capital. And I'm sure legally they can't call it a return. They probably give it some other fancy name. Like, it's capital preservation or blah, 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 some other garbage name that's just like, man, you all are just ripping me off. But anyway, I would steer clear of all those funds because you can set up whatever leverage point you want, by the way. The fund, if you're hearing me say these words, you've already been we have a little bit of survivorship bias that we can use to our advantage, right? If you're hearing me say these words, then you are in one of two camps. Number one, you have been doing this for a while. You have been actively trading. You are, familiar with derivatives. You're somewhat skilled in derivatives. Like you have some ability. You have some tools in the toolbox. Or number two, you want to have all those things. It doesn't matter. If you're in either camp, here's the beauty of what you have at your disposal. You can do all the things that those funds could do for you, and you can customize it to exactly the way that you want it to be. And you don't have to get ripped off by super high expense ratios. And you don't have to get ripped off by returning capital back to investors or whatever. You'll have a much better handle on what's going on because you're doing it yourself. But anyway, I digress, man. These super long shows, there is some gotchas that are kind of hidden in the middle of these, and you guys are experiencing one right now. All right, so we got E-mini S&P's down 7, got the NASDAQ down 50. So it's kind of hanging in here. Obviously you got gold still up, for $1 million. You got silver still up, I'm pretty sure I saw positive infinity a second ago. Oh yeah, so we're getting pretty close to positive infinity, but maybe just a few ticks away. So silver up $1.02 on the day. And so let's go ahead and let's see here. If I go into MES though, let's go to May 16. We got 50 days to go. And I'm thinking, let's not overthink this, guys. Let's just do a kind of standard Betty Crocker short strangle. Nothing crazy. Let's go 16 deltas on both sides. Let's see if we can get a decent little something on that. All right, so we'll get 64 points. And remember, with MES, it's $5 a point. And so that's not that bad. Only $1,000 in buying power, which is really nice, obviously. So let me think here. If I do, I think I want to roll it in a little bit. I think I want to bring both strikes in a little bit. Let's see if we can't kind of muster this thing up to, closer to maybe 80 points. Let's bring the 60.25 into 6,000. And let's bring the 53.50 up to 5,400. We're still not quite there yet. So the 5,400, the 6,000, 5,400, 6,000. I'm a 5,400 put, 6,000 call, of course. That is selling for $76. I'm sorry, 76 points. It's $5 a point, of course. I want to get 80 points though. Okay, I'm going to bring in the call side Yeah, there you go. That's going to do it for me. Still have a really nice pop. They won't give you a P50 on the futures options. Scott Sheridan and the boys going to make you work for it. Going to make you calculate that thing by hand. And by hand, of course, I mean just pop it in a grok and they'll do it all for you. But 83 points on the credit. That's not too bad. And, I mean, the buying power is still looking mighty fine. That's pretty solid. Yeah, I mean, I like everything about this trade. The markets are fairly tight in MES. You can see we're only a few points wide between the bid and the ask, so that's pretty good. So let's see if we can get filled here. Looks like Autumn maybe didn't pay the internet bill. It wouldn't be the first time. And so hopefully she gets that score. Oh, there you go. So she probably just paid it. That's good. And so better late than never is what I say. So let's go ahead and let's ship this guy. And we should be good. I mean, I don't really see anything super crazy happening here. Let's go to 83.5, 82. Let's do 82.75. That should be fine. All right, so we got filled at 82.75. All right, so we got in an MES strangle. We got a little premium working for us. And yeah, that's good. And so let's go ahead. Let me see here. We did Apple, we did Chipotle, we did MES. There isn't anything else we want to talk. Look at Starbucks though, by the way. Look at this thing, man. Man, look at Starbucks. Look at Best Buy. Man, this is it, guys. This is what we have hitched our wagon to. Kind of, the two horsemen of the apocalypse right here. BBY up 36 cents. SBUX up 73 cents. And you can bet your bottom biscuit that, when the market closes today, this is my routine every Thursday. I drive down to my chicken guy because Thursday is cooking up some daddy's chicken day. So Thursday, when the market closes, Red Sox first pitch is 4:05. Red Sox Rangers first pitch 4:05. I'm going to shoot on down to downtown St. Pete, head down to St. Pete Meat and Provisions for everybody that might be in the St. Pete area. It's the best meat in the city, in my opinion. It's very, very expensive, but man, it is worth it. It's absolutely worth it. Ask for Joey. Tell him I sent you. Right? Tell him I sent you. He will take care of you. Go down there because I go in there every Thursday. I can walk away with like 12 pounds of chicken. So he knows who I am, like we are on a first name basis. And he sets it aside before I even get there. Like he knows I'm coming. And so I'll just go in there and I pick it up. And I basically give him all my money. But it's a good trade. So I'm going to come home, but on my way down there, I'm going to get myself a little oat milk latte that I'm going to enjoy while I'm making my daddy's chicken, and I am enjoying the Red Sox opening day. And so that's what's coming on down the chutes for me, but Starbucks up 73 cents. That makes sense. That makes total sense because they know I'm coming today with my grande oat milk latte with 2 Splenda. And so, all right, let's go ahead. We got Best Buy looking good, Starbucks looking good. All right, we're all good. Nothing else to talk about in the portfolio. Nothing super exciting. Let's go to you guys, though. You guys got to have all kinds of exciting stuff. Oh, by the way, I'm just going to scan. What did you guys say about my trade question? Okay, I see some people. Trade entry blocked. Trade entry blocked. Trade entry blocked. Rick Castellini gone. Brandon R gone. T-Port gone. Daniel Finnegan management. There you go. Harsha management. There you go. Martin Shima entry blocked. Right, that's obviously incorrect. Rob Banks says trade management. That's correct. Right. Rant says a good entry requires no management, double blocked, because that's completely false. And so let's go ahead and no, that might be true, but I thought it'd be fun to say double blocked. All right, let's go ahead. Let me see where you guys are at. Where are you guys at? All right, so here we go. Let's see how many we can get through in the next. What do we got? About 40 minutes to go. All right, let's see what we can do. Don 721's in the house. What's going on there, Don? Don 721 says, "Hey, Dr. J. During the Tuesday from Theory to Practice show, I noticed that your XBI strangle had a greater than 50% profit. What was the reason that you chose not to close it then? That was the trade that your boy Down 721 told you about. Man, look at you, referring to yourself in the third person. That is a power move, my friend. So nicely done. I honestly didn't even see it. So I didn't even see it. That's the only reason why. Had I seen it, we would have certainly closed it out. And so given the fact that, we're still up, an economically significant amount here, we're up about $1.02, $1.04 on the trade. We're about 25 cents away from 50% of max profit. So we've kind of let this one slip out of our grasp a little bit. But I'm going to go ahead and close it today. And, we lost, I guess, 25 cents off of getting 50%. But that's okay. That's fine. We'll close it down. We'll move on. And we'll search for greener pastures. So thank you, Down 721. I really appreciate you very much. You didn't take me down, like Anka frequently takes me down. Emmett now frequently takes me down, but down 721, I don't know that you've ever taken me down. And so let's go ahead. Let's go $1.59. Phil there, $1.59. Nice trade there, down 721. I appreciate you, my friend. Thank you so much for the XP. And thank you for the reminder today, because I don't know that I would have even looked at it again, because it wasn't on my radar, because it wasn't at 50% when I was scanning the portfolio before the show. And so I missed it the other day, but we were able to come around and get it done today. So thank you, my friend. Sam L's in the house. Sam L says, Dr. Jim in the house. What's going on there, Sam L? Appreciate you. Doc says, I told you it was a trap. The tariffs are back. Who's next? Alaska, Hawaii? I think Alaska and Hawaii have been spared so far. But I have a feeling that, again, nobody is safe, right? Like I think we're going to acquire Greenland, and we're going to tariff them at the same time. So that's going to be part of the acquisition deal. It's like, hey, listen, you're part of the U.S. now, but you got to give me 30% off the top. Right? 30% to the big guy. Like, forget this 10% stuff. 30% to the big guy. Right? And you can pay in Trump coin, of course. So that way he gets paid both ways. And so it just makes sense. I mean, this is basic stuff. And so I don't know there, Sam L, but nobody is safe. And so David Gallimore in the house. Thank you, Dr. Jim, for everything that you do and teach us, man. I appreciate you, my friend. I hope you're doing okay out there. And it's good to hear from you. And I'm so thankful for your support. I mean, I think you're here pretty much every day. And so thank you so much there, David Gallimore. Really appreciate you, my friend. Sparky Dog. Hey, Doc. Market a little shaky. Might need your help. Yeah, I'm not looking to help it today. I'm kind of hoping my Twitter prognostication rings true. I wouldn't mind seeing ES down 30, NASDAQ down 120 on the day. I mean, we're pretty close. I mean, we are absolutely one Alaska tariff away from boom. There you go. Down 30, down 120, and it's done and dusted, and we can just kind of move on from there. And so, Sparky Dog, hopefully the market rallies back for you, my friend, and I hope it works out. Daniel Perkins says, rough day, Dr. J. Man, maybe so. If you're short the metals, yowzers. That's pretty bad. It's pretty bad indeed. Don't listen to anybody that tells you to do that kind of stuff. That's some pretty bad stuff. Rob Banks, good day, Dr. J. I hope all is well. I hope all is well with you too, my friend. Thank you so much for being here and being a part of what we do. I could not do what I do without you guys, so thank you guys so much. Junior Max says, good morning from Australia. GC, what is going on, mate? Man, I don't even know. I do not even know. I think our only hope now, guys, this is it. Like, we just got to do this ourselves now. Like, we can't rely on the charts. We can't rely on the fundamentals. We can't rely on the macros. We can't rely on any of that. The only hope that we have left is going to be the Fort Knox live stream. That's all we got left, which I don't even know if this is going to happen anymore. But this is our only hope. Our only hope is the Fort Knox live stream, right? Which I think, and I don't remember what the number is, but they're supposed to have something like, 30,000 tons of gold or something. It may be way more than that. I don't know. Whatever the number is, though, 30,000 million tons of gold or whatever it is, we need them to go into Fort Knox. And I kind of think we need them to have like triple that. We need them to say, man, we've been stockpiling gold when nobody was looking. Like, I think they're not going to have any of it, but we need them to have like triple of it. So that way the supply goes way up, the price comes way down. Again, this is basic economics stuff. And so this is our only hope, though, right here. It's the Fort Knox live stream. And so keep an eye out for your Forex Factory economic calendars. They should show up on there before anywhere else. And so YouTube Jim's in the house. What's going on there, YouTube Jim? Greetings, Dr. Jim. Hope all is well. How about selling some vol in FCX April 17th before earnings? Thanks for all your help. All right, let's take a look at it. What is FCX? Is that Freeport? Yeah, Freeport McMoran. I don't even know what they do. I should know probably. But I don't. I can't remember what they do. And so it doesn't really matter, though. So they have earnings. Ooh, look at that. They have earnings on April 22nd. And YouTube Jim wants to go into an April 17th cycle. And, I mean, I don't hate it. I don't hate it at all. The only thing I don't love about it, though, is it only has 21 days to go. So if I was going to do something in here, I don't want to do something undefined risk, because that doesn't really make a lot of sense, right? It's like, we usually like to enter our undefined risk trades around 45 and get out at 21. I don't want to enter at 21. And now it's like, well, what do? I'm already behind the 8 ball. That doesn't really make a lot of sense. If you're going to do something in here, maybe do something defined risk. Like if you want to take a shot for earnings, or take a shot in this cycle before earnings, I should say, maybe do a little something defined risk. As I look at this, though, because this is such a low price stock, it's only a $40 stock, and the premiums are not too bad. Like, you can sell a 39 put for $1.17, and the buying power is only $700. And so I think, YouTube Jim, I think I'm going to pass. I'm going to pass because I would want to go in here and do something that's undefined risk, because it's going to be a better use of the capital, in my opinion. Because it's already at 21 days to go, that doesn't really make a lot of sense. And so maybe we'll do something for earnings around April 22nd. Remind me, when the earnings get closer. And maybe we'll mix a little something in there. Mix up a little something in some Freeport, McMoran. And maybe in the meantime, I can figure out what they do. Again, not that it matters, but it might help for a little bit of the commentary around the edges. So Sam L says, I have a covered call on Rivian, March 28, 25, March 28. Oh, so it expires tomorrow. You said March 28th, 2025, which is tomorrow, of course. 12.5 call, 100 shares at 11.78, and the stock is flying today. What's the move there, Doc? Okay, so let me look at this. Probably just close it. Yeah, it's done. It's over. Unless you want to hold it long term, and I can't gather from what's going on if you do want to hold it long term or not. If it's just a trade, it's over. It's over. It's over, Johnny. Like, the trade's done, and it ends up being a good trade for you. I mean, you got stock at 11.78, and you're going to essentially be able to make all the way up to the 12.50 in stock appreciation, plus whatever you sold the 12.5 call for. And so this is a good trade for you. And so I wouldn't overthink this. I wouldn't even underthink this. I would just appropriately think this and just close it. Like, you can be done, and it's a great trade. Now, if you wanted to keep this as like an investment, I mean, we have a little extra time. Let's just entertain that for a second. If I am, let's see here. If I go to the 12.5 call with 1 day to go. So if I was going to buy that back, which is what you would be doing, obviously, if you're going to extend the life of this trade. And let's say I'm not even going to mess with April. Let's go all the way out to May. I knew that was going to happen. They don't have the half point wide strikes. That's okay though. Yeah, that's okay. Because look at the premiums in here. Yeah, this is nice. So you can actually, if you want to, right? This is going to be totally up to you. You can buy back the 12.5 call with 1 day to go. Again, if it's a trade, it's over. It's done. Close it. Great trade. Move on. Find something else to do. If it's an investment, though, that's very different. That's like what I'm doing with Starbucks. It's a longer-term project. There's more decisions to be made along the way, things like that. With the 12.5 call, you can buy that back for about 80 cents, it looks like. Then you could go into May with 50 days to go. So this is not even like a crazy cycle. Like, I'm not in like a leap with like months to go or whatever. Like, I'm in May with 50 days to go. This is very much in line with what, we would typically do for, entering even like a trade style type of position. You could sell the 14 call for $1.19. So you would be able to pick up a net credit of 41 cents. Now look at what's happened here. You've been able to move your call from being in the money to where it's now out of the money, not by a lot, but again, you're talking about a $13 stock, right? So we're only talking about, you still have an 80-cent difference between $13.20, the stock price currently, and $14, which is the strike price. So that still gives you 80 cents of potential upside in stock price appreciation, and you're able to do this by improving your basis by another 43 cents. This looks like a really nice adjustment if you want to hold this stock longer term. Okay, but it doesn't even stop there. If you want even more upside, you could actually do the 15 call. And now you only get a 10-cent credit in the premium. But now I'm looking at upside potential between the stock price of $13.20, $13.18, whatever, and 15, the strike price. So $1.80's worth of stock price potential to the upside. Which of the two do you choose? You have to make that decision. It's gimmies and gotchas. There's no clear-cut winner, in my opinion. It kind of just depends on how you feel about the company. It kind of just depends on, how much runway you want to leave yourself, for that stock price appreciation, or the potential stock price appreciation, I should say. The one thing that I would probably use to help me make this decision is, how long-term am I going to hold this position, right? If this is like a mega pint long-term position, like I'm going to hold this thing indefinitely, like I love the company, I'm looking to hold this thing for many, many, many years, I would usually opt for the further out of the money call strike to give myself more room to run to the upside, especially when you're able to do it here for still a credit. It's not much, but it is a 10-cent credit, and these little bits kind of add up over time. So I would want more runway to the upside. If it's something that's like, okay, this is longer term, but I can be moved off of my position for the right price. Like I can be moved out of this investment, if the numbers start to make sense. Now all of a sudden, maybe you just do the 14 strike. You're picking up more premium. You're less reliant on direction, things like that. So that's how I would go about making the decision. And then hopefully that gives you enough, it at least gives you a couple batteries for the flashlight, and then you can make your way through the forest yourself. So, all right. So that is Rivian. Great question though, Samuel. Hopefully that helps, my friend. Daniel, man, you guys got some great questions today. Man, look at you guys. Man, opening day is just bringing it out of you guys. Like it's 100% bringing you out of you guys, as it should, right? Because the Red Sox have to go up against one of my favorite Red Sox pitchers of all time, Nathan Eovaldi. I was very upset when they let go of Nathan Eovaldi, but he is who we're facing today. And so it's not a great matchup for us. But Daniel RV says, hey, Dr. Jim, I have a Palantir short call spread, 95-105. For the April cycle, 21 days to go, okay? Rolling doesn't give me more credit. Currently down 50% of the credit received. Close or hold. Yeah, this is an easy one. Hold it. I would 100% hold it. I just had this conversation with Errol yesterday on today's assignment. So if you want like a longer discussion and with a second person, kind of some back and forth with a separate position that could be helpful for you, and maybe highlight some points that I kind of forget right now or skip over, go back and watch today's assignment from yesterday, because we went over all this with a couple of positions that were on in his portfolio with this exact question that you have. Like, should I hold it or should I close it? For me, you always hold it. For me, when you put out a defined risk strategy, like, a vertical spread like you have on right now, you size it correctly, right? You size it such that if it hits max loss, you don't have to completely change what you're doing. You don't have to completely start to reorient, kind of your pathway forward through the forest. Like you can keep going, business as usual. It's just part of the game. It's just cost of doing business. Because of that, it gives you the freedom to take the trade inside of 21 days to go if you have to. Again, we like to roll at 21 days to go if we can, but if you can't, it's not that big of a deal. Because the spirit of the 21-day rule is really more meant for undefined risk strategies. It's really more meant for the strategies that are going to be overly exposed to the increased gamma as you get closer to expiration. Defined risk strategies, by definition, are not overly exposed to gamma because they have a longer leg to cover the short leg. And so the presence of the long leg itself is mitigating just how bad gamma could potentially get. Not to mention, you have your max loss known. So it's not like you're going to walk into a 9 standard deviation move, right? Which apparently they tell me is not even possible, but it probably is possible in this market at least. Again, I just caught word that Alaska is on the table for tariffs. So 8 standard deviations is coming your way very soon. But when it comes to vertical spreads, I would sit tight, I would do nothing. You sit tight, you do nothing, you just let it play out. Especially if you can't roll for a credit, you don't really want to roll for a debit because now you're adding risk to the trade, and that's not really something you want to do a ton of the time, if ever, really. Now, if it's a 2-cent debit or a 4-cent debit because it's going to give you a little bit of extra time, hey, I won't tell anybody. Like, go for it, man. I won't tell anybody. But generally speaking, we don't like to roll for debits. And so I am contractually obligated to make that my official response. And so Steve F., oh, here we go. I'm ready. Steve S. says, establishing a GoFundMe page for Dr. Jim, GYM, buying a razor. Man, this isn't even like, this is like a 2:30 shadow. This isn't even like the 5 o'clock deal. Like this thing gets a lot stickier. And so, man, if you think this is bad, you're not going to want to tune in tomorrow and probably not even Monday because it's about to get a whole lot worse. But I appreciate you there, Steve F. The Composol, that was probably a C+. You can do a little bit better to kind of hit that B- range. YouTube Jim in the house says, still learning the tactical trades. Hey, we all are, my friend. We absolutely all are. And so that's good news to hear. You're in good company. You are certainly not alone. Sergio's in the house, says, greetings, Dr. Jim. What's going on there, Sergio? Thank you for being here. Thank you so much for being here. And so I appreciate you. Rune says, is TSLL a ticker that you will trade? Okay, was this the Tesla one? This was, or I think the Tesla one. Hold on, was it TSLL? What is this? Hold on. Are they going to tell me? Yeah, this is it. This is what I think. Wait a minute. This is not the one I looked at the other day. Does Tesla have multiple? Do they have like a family of funds? It's not even just one fund. Like you actually have like several funds. Like you could do a Tesla 2X. You could do a Tesla 3X. You could do a Tesla income strategy. Like this is crazy stuff. I think the one I looked at yesterday was TSLY. That kind of ring. Does that ring a bell to you guys? TSLY. Yes, this is it. Oh my gosh, this is it. Look at this. This thing, it's not, no. Like they're going to try to tell you it's TSLY. No, man. It is SCAM. That's the new ticker symbol that we are going to give it for this program. Because look at this. They even got it in the name. Option income strategy, right? That's how you know this is going to be some rigmarole. That's how you know, like, all right, something about this, I'm about to get steamrolled, right? And so look at this. They got yield max. I mean, they're just layering on superlative after superlative. They've got yield max. They've got option income. Like, I think you even get an extra 20, 30 points on your credit score. Like, it's all there, man. Like, it's all there, and it's all a 100% scam. And, of course, by scam, I mean it's probably all legal. But, man, they're going to get you. They are going to get you. Again, you guys read the prospectus for yourself. Like, I read it the other day, and I was like, this is crazy. This is crazy stuff. And so I would not. So Rune, thank you so much for being here. And thank you for the question. I wouldn't do TSLL. I wouldn't do TSLY. I wouldn't do anything from the TSL family because I really think that, again, I mean, for the average investor that doesn't have the skills that we either have or are hoping to have one day, it's like any type of exposure you want in Tesla, you can manufacture that yourself pretty easily. Like you can situate your portfolio with shares and with calls and with, even some, poor man's covered calls, poor man's covered puts, short options, whatever. Like you can do everything you want to have exactly the delta that you want, exactly the decay that you want, exactly the extrinsic value that you want. You can wait for volatility spikes. There's just so much more flexibility. Whereas when you go into a fund like this, you kind of, they're kind of square in a circle in a lot of ways. Like you've just got to take what they give you. You don't really have that flexibility. And so I really do not like these funds at all. And so TSLY, I'm going to pass. TSLL, I'm going to pass. But again, I'm just some rando on the internet. Take it for what it's worth. And so Rune, I appreciate you, my friend. Emmett Morrison's in the house. Good afternoon, Dr. Jim. What's going on there, Emmett Morrison? I appreciate you, my friend. Appreciate you very much. Thank you for being here. JP Van Ash in the house. What's going on there, JP? Appreciate you too for being here. Semi is down big the last few months. I think that might be right. Let me think. The Semi it's not SMH, is it? I think it is SMH. Is that the ETF for semiconductor? Yeah. So if I go to the chart, I mean that's pretty bad. But it's following the general market, right? I mean that's basically this is the same little deal that you've seen from the overall market. Right, I think this is a cup with a handle with a pretty broken handle. Like that handle, that thing's definitely gotten chipped, at least in a couple places. And so when you look at SMH here, the semis are, they're looking a little bit weak. I think NVIDIA, which by the way, if you are new to the show, is pronounced NVIDIA. Same thing. I mean, so I didn't even have to change the drawing. I mean, it's the same thing, right? If I I'm going to bring up the market. It's going to look the exact same, right? Boom, same thing. Right, you bring up QQQ, same thing. Right, you bring up the boomers, right? Same thing. Yeah, I mean, it's a little bit of a stretch. You bring up IWM, same thing. Right? I mean, they're all basically following the same general pattern, which I mean, that's what usually happens. I mean, all these stocks and indexes are all, they're highly correlated to one another because remember, I mean, the indexes are made up of the stocks. Right. And the stocks go into the indexes. So there's obviously going to be very much an overlapping Venn diagram in a lot of ways. And so but yeah, they have gotten beaten down. So I mean, I would say, if you were going to take a directional bias on like a NVIDIA right now, I mean, I would probably say you play it to the upside. Like I would say there's going to be more opportunity to the upside than the downside. Like if I had to pick, and I don't feel as confident about this prediction, like not as confident as my short metals prediction, to give you a reference point for reliability, I would say that I would see NVIDIA at 130 before it goes to 100. Right now it's at 112. So I see 130 before 100. So what does that mean? That means you need to be buying a whole bunch of out of the money puts. That's what that means. Like, and if you've been following the show for a while, you probably already bought them. You had your finger on the trigger. You were just waiting for me to say something like that. And now you're going to make a whole bunch of money. If you are brand new to the show, let me decipher all that for you. You should do the exact opposite of everything that I say. And so my track record, it's not that strong. It's just not that strong. Like we've got our career average about 210, about 220. And so we've certainly seen better days. But JP Fan asked, I would probably play it to the upside. Not that you even asked, but there you go. So Manny TP's in the house. What's going on there, Manny TP? Hey, Dr. J. I'm in an April 17th SPX Iron Condor, 5,700, 5,800, 5,840, 5,940. So let me think. Okay, so the shorts are 5,800, 5,840, and the longs are 57 and 5,940. A bunch of rolls with a net credit of $59. I'm still quite a bit underwater on this. What would you do? Thanks. Let's take a look at it. Let's see how far underwater you are. Okay, you got the stock at 5,700. Yeah, so you're basically fully in the money on the put side. You picked up $59 on 100-point wings. And so your maximum loss is only $40. I mean, I say only $40. It's obviously quite significant. But when you're looking at $100 wide wings, normally you might put a trade on, normally you might put something like that on for, $35 or $40. So with your adjustments and with your rolls, you're up to almost 60, 59, 60, let's say. That's not too bad. I mean, you've been able to whittle down the max loss. That's obviously very, very impressive. What could you do now? So what's interesting about a pretty wide iron condor like this, 100 points wide, is fairly wide for SPX. Or maybe, I don't know. I mean, that's like a $10 wide SPY. So it's maybe not as wide as you might think at first when you actually kind of standardize it for, something that we kind of can convert it to, that we do a little bit more regularly than SPX. What should you do? When it comes to iron condors, I almost irrespective of their width, I almost always lean on and end up settling on the do nothing strategy. Now, you've obviously done a number of things already because you've built up the credits, and that's how you've gotten to 59. And so you might be thinking, well, I'm glad I didn't do nothing from the beginning, and that's a fair point. But now that you've done this, I'm like, hey, you're kind of bullish. You've whittled down the max loss significantly. At a certain point in time, the do nothing strategy is something that you should strongly consider. Now, you said you're in April, right? Yeah, so you still have 21 days to go. You have 21 days to go. The good news, Manny, is if it doesn't come back, your max loss is known. Now, again, don't get me wrong, $40 is going to sting. $40, and it may be more than you want to lose and things like that. Like, I understand that. But it's not a strangle. It's not something undefined risk. So you know that the 40 is the most you can lose. In fact, here, let me look at this. Obviously, you're not even down 40 right now. You're going to be down less than that because that's the nature of how these things work. In terms of spreads will never sell for their max value at any point before expiration. It doesn't matter if you're long or short. It's just the nature of the spread. Like, the only way that the spread reaches max value is two things. Number one, it has to be fully in the money, and number two, you have to be at expiration. There has to be no extrinsic value left in the strategy. And so if you're at any point before expiration, the spread will be selling for less than its maximum value. That helps you when you are short a spread and it goes in the money, like your case right here, Manny. It hurts you when you are long a spread and it goes in the money because you don't get paid maximum profits as quickly. And so obviously it's gimmies and gotchas. It goes both ways. But let me look at this. 5,700, 5,600, you said. Oh, wait, no, I'm sorry. 5,800. Right, 5,800 put, 5,700 put. That's your put side. And then the call side is 5,840. I'm going to say, and I don't even know what this is selling for. I'm going to say this is selling for, I'm going to say it's $87. That's my guess. So I'm going to say it's like a $13 savings off of max right now, $87. So it's only selling for 72. Wow, I was way off the mark. Did I get that right? Wow. So hold on a second, Manny. Hold on a second. So this is interesting. So if you wanted to just cut it right now and be done with it, you would only lose $13. Now I say only, that's significant, obviously. But relative to the max loss, right? It's not too bad. Now, you guys know how I feel about this. This is a very interesting situation, Manny. Thank you so much for bringing this up, and hopefully this is helping you kind of think through the different options that are available to you. We just had this conversation. Somebody who just brought up hold on a second. It was somebody was just asking me about another trade. And I was talking about Arrow and staying in it. Oh, it was Daniel. It was Daniel RV. Right, okay, and I just got done. I just got off my soapbox talking about Daniel staying in the trade, blah, blah, blah. Now I got Manny TV. I'm like, hey, get out of the trade. Cut it. Like, you can save a bunch of money. Okay, let me unpack what I mean by that, because that's obviously very confusing, because they're very different in the sense that they're polar opposites. So if you when it comes to this strategy, specifically, this SPX strategy, when you get into any defined risk strategy, you want to have your position sizing in check. So Daniel RV, Manny, everybody else. We want to have our position sizes in check. We want to be 1% of net lick. We want to be 3% of net lick, all those things. But I understand, I recognize, I've experienced myself situations where I'm not exactly a robot. Situations where my emotions, my overconfidence, my bravado, as they say, gets the best of me, and I might ratchet up the risk a little bit. I might be at 5%. I might be at 10%. I might be at 29%. Again, just hypothetically, right? If you happen to be in that situation right now, Manny, and you're like, man, this thing is really kind of stinging me a lot harder than I wanted it to, not only because of the position it's in, but because of the position I've put myself in because I sized up too large. Now, that may not be your position, Manny, so I'm not trying to layer this on you when you didn't even do this. But I know a lot of people do this, so if it doesn't help you, I know it's helping other people out there. If that's the case, in my opinion, you cut it now. You cut it now. You got a get out of jail free card, my friend, where you're only going to take a $13 loser. You can recover from that. That's not something that's going to be catastrophic. That's going to really take down your account. Whereas if this thing balloons up to its $100 max value, that's going to be another $28 that you're going to lose, right? That can be really significant because you're layering on a max loss with an oversized position. Okay. If, however, you did size correctly, and you are at 1%, 2%, 3% of net lick, that's usually where we like to live, 1% to 3%. If you're in that range and you feel good about the position, then I actually wouldn't do anything. I would not do anything. You've got 21 days to go. In this market that we have now, especially with all the things that are happening, you've got the end of the quarter, which is coming up in like a couple of days. You've got obviously, Trump's tariff day on April 2nd, whatever that's going to be. Then you've got NFP on April 4th, right? And this is not any old NFP. This is the most important NFP we've ever had, right? So this thing's going to move the market. You've got lots of opportunities for this thing to come back. And if you've sized correctly, if it doesn't come back, then you're okay with that. So that's what I would do there, Manny. Hopefully that helps. And man, really, really interesting situation. I'm really, really glad that you brought that up. So Adam says, hey, Dr. Jim, I got some January 2026 GameStop calls. That's what I'm saying. Man, this is what I'm here for. I needed some GameStop. Man, are they still in business? Nah, there is no way. Hold on a second, Adam. There is no way. Down $7 today. All right, so we're close. We're close to being gone. And I'm sorry to hear that for you, Adam, because it looks like you said you had some calls, which is not obviously amazing. But it says you have some calls. You'd like to unwind 17 strike. All right, so it could be worse. I was thinking to roll closer in and down and then roll up week by week, but some of the later options are looking good back and forth. Okay, so a couple of thoughts. So the way that I'm reading your question, thank you so much for tuning in and putting that question in the stream. I appreciate you, my friend. And yes, I thank you so much. If you have a naked call, which is how I'm reading your question, there's not a ton of great things that you can do. And so when you have a naked call, one of the huge drawbacks to that is whenever you want to add time to the trade, you have to pay for it. Like whenever you want to add time to the trade, you have to pay for it. That's the nature of, having to buy more extrinsic value, having to buy more time with naked long premium. And that's how I'm reading your question here. So as far as rolling out, I don't necessarily love that. Now you also brought up rolling down. So you've got the 17 call. Did you say what expiration you're in? You did not. So I'm just going to assume you're in the April monthly. And again, that may not be right, but I'm just going to assume that that's where you are. If you have the 17 call in the April option, obviously today's a tough day for you with GameStop down $7. And so I didn't mean to rain on your parade with, my jokes about GameStop being insolvent, but come on, they're obviously going bankrupt within, it could be hours at this point. But GameStop, you've got a 17 call. You don't want to necessarily, I don't know if I'd want to roll it. I don't know if I'd want to roll it down. Because if I roll it down, you're selling the 17 and buying like a 15, right? You're going to have to pay for that. You're going to have to pay. You're going to have to add to your overall basis on the trade, to give you more potential upside. And when you look at this, it's like, man, I'm paying $1.90 for picking up, another $2 worth of intrinsic. That's only like a 10-cent savings. But now I'm adding more risk to the trade that if GameStop goes down another $6, $7 tomorrow, then that's obviously not going to be great. And so, to be honest with you, to be perfectly frank with you, Frankie Walsh with you, I would just close the trade. I would close the call because you run into all kinds of problems with finagling and managing calls like this when they don't have some kind of spread component to them. And so this is one of the reasons why we don't really like naked long premium like this, because it just becomes really problematic for making adjustments as we're kind of seeing right here. Now, can there be an exception to that? Of course. Like if you want to do something that's like a deep in the money call where you have which you kind of have right now, I guess at the 17 strike, where you want this as like a stock substitute, that can work at times. And maybe that's what you have here. If that is the case though, I would just treat it like a stock substitute, and I wouldn't try to get cute, and I wouldn't try to get fancy where I'm trying to necessarily roll up and down the strikes or even necessarily roll out in time where I'm obviously adding to the basis in the position. And so I would probably close it. It looks like you have a decent trade on your hands, even with the big drop today. Again, I don't know where you got in on the trade, but hopefully it's still green for you. That's what I would do with the trade. I probably would cut it and maybe think about other more strategic ways to play GameStop in the future that aren't necessarily so reliant on direction. Like a call would be. Although I have to be fair, a deep in the money call as a stock substitute is not that bad, not that bad of an idea. And so hopefully that helps and gives you a couple of things, Adam. Cynthia's in the house. What's going on there, Cynthia? Cynthia says, Dr. Jim, is there any way to go back in time and cancel the closing of a position? I should have waited more. Yes, the do-nothing strategy strikes again. It always strikes either in the moment or after the fact. It will get you one way or another. Sadly, there is not. Again, if you restart your computer a couple times, that should get the market back to green, but that's not going to get your position back. Sadly, that guy is gone. So you're going to have to learn from that and hopefully be better equipped next time. But I'm really sorry to hear that, Cynthia. But thank you so much for being here and being a big part of the show. I think you're here every day now. So that's really, really, really awesome. Good luck to your because you're in Philadelphia, I think. So good luck to your Phillies this year if you're a Phillies fan. And so the Phillies they're a juggernaut, man. Every year they're a juggernaut. And so good stuff. David C's in the house. Hey, Dr. Jim. Is this the signal feed for the show, or do I have the wrong app open? You got me there. So I don't know that much about the signal story. That's some pretty crazy stuff, though. That's all I'll say about that. That's some pretty wild stuff, but it's always wild stuff. It's all just theater, man. It's all just theater. Don't treat it as anything more than that would be my best piece of advice. And by advice, I mean just completely discard everything I say that might be politically related. It's all in good fun. But yes, I think you are in the right spot, and I do have the Atlantic reporters. They also have the link. And so everybody's here. Everybody's where they need to be. And so Kimberly's in the house. VIX only at 18 today, taking its sweet sloth time. VIX at 26, she says. Man, VIX at 26, Kimberly? We're going to scare the children there. You got to be careful with that kind of stuff. People are not ready for that. People are not ready for that. And not only that, if the VIX does hit 26, we don't know if that's real. That could be a flash sideways from Lost Season 5. We don't know. We can't really follow along, much like Lost Season 5. Still the best show ever created, but Season 5 was a little slippery to follow along with. But yeah, VIX at 26, that would be pretty crazy. Let's see. Rand says April 2nd will be telling. I agree. I totally agree. And even the lead up to it, because you've got end of the quarter, you've got obviously all the anticipation. So there's going to be lots of dialogue heading up to it. Trump's not going to be tight-lipped. There's going to be all kinds of things coming out. We have to kind of decipher, what does that mean? How's the market going to respond? And so, obviously if you're an active participant in the markets like we are, it's an exciting time to be a part of what we're doing. And so Frank says, Dr. Jim, what have you done to gold? Yes. Peter Schiff, again, I'm the biggest Peter Schiff fan you will ever meet. I've got the poster in my bedroom. I've got the action figures. I've got all of it. And so, he was right. He was 100% right. His call in 1984 for gold to hit 3,000, my man nailed it. Absolutely nailed it. And so I was dead wrong. I said to get short gold at, about 3,000. And so, I have to take that one on the chin. You got to just absorb that one. And so I was wrong on gold. I was wrong on silver. It wasn't the first time, and it won't be the last time. Like, for example, if you watch tomorrow's show, there'll be some fresh new ones for you. So don't even worry. Like, if you miss these the first go around, don't worry. There'll be more tomorrow. You don't have to worry at all. But Kimberly says, hold your gold and silver, folks. CL going higher too. The war trade, higher oil, higher gold, higher silver. That might be the war trade indeed. Justin says ABC. I can't remember what that might be about. Grumpy Mike says apple pie is good. I'm more of a pecan pie guy myself, but that's some good stuff. Apple 224 is a speed bump. Perhaps it is. Let's see. Ben R. Oh, here we go. Man, look at this. Ben R. Man, I appreciate you so much for putting this in the stream. And I'm going to send you that cash that we talked about. I'm sending you that Trump coin that we talked about. Anytime someone asks me about how to learn about options, I send them to your crash course. Man, I appreciate you. I appreciate you, Ben, so much. So very, very much. Guys, stay tuned. This next crash course, I'm serious. It is going to be, man, like y'all think that this upcoming NFP print is important, which it is. It's the most important one we've ever had. This is the most important crash course that we've ever done. This is the most important crash course that we have ever released. It is going to be awesome. I can't even wait. I'm so pumped about it. And so let's see. Damon S in the house. I see Kimberly's in the house. Man, I got to get you guys to Tim Knight. Man, I missed so many of you guys. Look at you guys. I see Genio. I see Adriel's in the house. Theta Trader snuck in there. Got a few back alley root canals, and then he hit it up. That's good stuff. Kilgore's in the house, man. Look at you guys. I appreciate you guys, but I got to run and get you guys to Tim Knight. Guys, come back tomorrow. We have an extra long show tomorrow, too. I'm going to need you guys, provided that we do have a stock market, which is only about a 20-30 delta at this point. But if we do, then I will be here, and I hope that you are here, too. But if you guys ever want to reach out to me, I'm more than happy to help. Please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hello, Tim Knight, and it is Thursday. Boy, this week goes by fast. We've got a kind of a nothing day on our hands, but it's been a really good day. The ES is currently up 0.03%. So I guess people are waiting for the PCE tomorrow morning, the Fed's favorite inflation indicator. But as I say, for my own portfolio and for the stock picks I've been sharing, it's a good day. Almost every single thing is red. And let's talk about charts. Let's jump in and explore what's going on prior to wrapping this week up. Again, I cannot believe how fast this week has gone by. Here we have the spider. And of course, yesterday was the big reversal. Today, we're just kind of hanging out, barely changed at all. Market not quite sure what to do with itself on the heels of the yet another tariff announcement, which who knows how long it'll last. I honestly have no idea if there are any tariffs planned at this point. It's been on, off, on, off, on, off, on, off, on, off. I don't know if anybody does, but I think, unless they change their minds already, that there's a 25% tariff on any parts or cars from overseas. So that shook things up yesterday and last night. But the spider, as you see, has just barely changed. Just been hanging out in very tight range today. And tomorrow, I suppose, maybe if they don't rescind the tariffs again, and maybe if they get a scary inflation report, we could get all wave 3 about it. We'll see. XLI, thanks, I suppose, to the tariffs, is a little bit in the red. And we have respected this resistance line. And we have not completed this pattern, really. This is a bit of a tease here, but should wave 3, a la Elliott wave through 3 ever arrive, I suspect it'll move quickly and be a bit shocking to people. Isn't here yet. IWM, the small caps, barely changed. I came into the day with a big short position on this. I covered it at a profit, and I'm just kind of in wait and see mode on IWM. It's a very, very nice little pattern. Presently, the neckline, we're going to call it right there. Hope it sticks, because should it be that this week's high was the end of the bounce, that would really make a lot of things a lot easier. As I say, though, cars were the big deal, and you've got a big difference depending on which car maker you're looking at. So one that was sharply affected was General Motors, and I saw this coming and I missed the boat on it. What I mean by saw it coming is the gap. This price gap took place way back in January, and we got closer and closer and closer and closer. And yesterday, the gap itself, 53.94. Yesterday's high, 53.29. So a few dimes away, but I didn't do anything about it. Well, the opportunity, I think, is kind of gone, because this thing gapped down hard. We're down almost 7%. And GM is usually about as dynamic as a passbook savings account. I mean, it doesn't do anything. So this is a big, big move for them. So that's down hard. In contrast, Tesla, which makes all its parts here in the US of A, is doing just fine. It's green. And as I say ad nauseum, the Fibonacci is going to be the ceiling on that, I would say, around 300 or so. But it's benefiting from this. And of course, I guess Saturday is still scheduled for Tesla takedown. 500 dealerships, we get protests and so forth. What a mess that's going to be. But I don't know how, there's bound to be some mayhem. I mean, with all that activity, there's going to be some ugliness, I would suspect, over the weekend. Another boat that I missed, but I saw, was AppLovin. APP is the symbol. And in the past, really just a couple of days, we've moved down hard on this. This was an instance where, this thing had gone up hundreds and hundreds and hundreds of percent, just an explosive move from a single digit stock to $525. So that's probably thousands of percent, actually. And it peaked on the 13th, over 500, like 525, plunged to well less than half that, and then went blasting higher, peaking on Tuesday. It got as high as 352, and right now we're at 285. So it's lost, about $70 in value just in a matter of hours, if you think of it in terms of trading hours. So hard reversal on this very, very richly valued creature. But a little less dramatic, but still down, is the brokerages, like Interactive Brokers, for example, IBKR, down 3.33%. It also, same shtick, fell like crazy, bounced, pooped out on Tuesday, and then has been sinking since then. Over in semiconductor land, which I think is crucial to keep an eye on, because it led the market up, and I think it's going to lead the market right back down again, and has been doing so. AMD down again. This one peaked, ancient history at this point, a year ago at 227. We are well less than half that now, and it rallied mightily got terrifyingly close to wrecking the series of lower highs, but it didn't. That was just yesterday. This peaked at 115.90. The rectitude would have been just a few dimes above that dashed red line. But we fell hard yesterday, and then today we're augmenting the dip. So we're over 3% down on AMD. Broadcom, also down over 3%. This one, amazingly, lower than it's been in this entire cycle. Most stocks bottomed like around early in March. We're well below that now. So Broadcom's got some serious problems. And so it's just been a whole series of lower highs and lower lows, like so. On semiconductor, kind of the same idea where the recovery was feeble. This peaked way back in the summer of 2023, and it's dropped from like 111 down to about a third that level. And the balance of its recovery was like boink, like so. That was it. And it's just kind of bleeding out again. So all in all, SMH has been doing quite well. And I had drawn earlier the resistance like so, which worked out very, very well. That peaked at the beginning of this week, Monday's high. But I've pulled this down, tightened up that stop to this level. And of course, tomorrow will determine if we get more fun and games down here, or if once again it tries to mount some kind of recovery. So that's the wonderful world of semiconductors. Now, precious metals, all day long, it's been just about only green on the screen. I'm looking at the front month now. We're at about $3,100 an ounce on gold on the front month, which is great. We'll get to that in a moment. Silver, which is, as they say, the poor man's gold. Silver is doing just fine, up over 3%. And this is a long-term continuous, adjusted continuous contract on silver. I wrote a book. I've written a couple of dozen books. One of them was about the history of the financial markets called Panic, Prosperity, and Progress. And there's a chapter dedicated to this craziness here, the Hunt brothers, the silver, trying to corner the silver market. That was an amazing tale. And after doing that, it spent decades burning that off, kind of healing itself, and really bottomed down here, just at a few dollars an ounce. And of course, everybody hated silver back then. This was back early in this millennium, and had a great run higher, got smacked down again, but then it's been kind of getting a new lease on life. And ever since this base here, it's been sloppy, and it's been a lot of fake outs, but it has been moving higher on the whole. And so gold, as I mentioned, having another great day. If you want any idea how the Fed's doing and what the prospects of the Fed are, just look at gold. Gold is declaring inflation will just stay nice and hot, and the dollar is just worth less and less. But yeah, another record high for gold. So that's really cool news. And one thing I don't think we've ever looked at, there's a leveraged instrument, Nugget NUGT, which is a ultra bullish instrument based upon the gold miners. And as you can see, it's emerging from a pretty impressive base there itself. And just this year, it's moved from around 35 to the lower 60s. It's about a 60% gain just in the past couple of months. While we're talking about commodities, crude oil. Crude oil, as at the moment, the front month on that is up about 0.33%. Crude oil hasn't been, we used to have these like giant moves, and lately it's been these little pipsqueak, smaller and smaller patterns. And I, as I've mentioned, have been bearish on oil producers, not crude oil directly. That's finally starting to work out some. Hopefully this is it. I mean, this thing's been moving up for weeks, but crude oil's up a little bit more right now. But I've been very focused on XOP, which in spite of oil being up today, XOP is down almost 1%. And this, I've moved this dashed line down, this resistance line, but we had a nice little shooting star yesterday, like so, and then we're moving down a bit more today. So a little bit of hope emerging on the horizon for XOP bears. That could be a really good one. And then I've also got puts on COP, ConocoPhillips, which, tends to move almost exactly the same way. And here too, we had a shooting star. This little, not very impressive, but there's a little shooting star on there. It did not violate this line, the line being the former lower high. And so we got a red bar yesterday and a red bar today. It's progress, baby steps. I've also re-entered an old favorite, XHB, the home builders. You've seen this channel countless times, and we're still pretty lofty in this channel. And a nice tight stop on this one, right like so, 100.66. It's not very dynamic, but I got September puts on XHB. Well, talk about crypto a little bit. It's always in the news in some way or another. This is the Trump coin. I only bring this up because it was very interesting what happened earlier this week, because there was the president sent I just say tweet, but a truth out, just along the lines of, Trump is my favorite coin, so cool, something like that. Based upon that, people took their dollars and bought coins. And so you can see this enormous gap, because at the time, I glanced at this stuff from time to time, it had this huge, 11, 12% instant rise. I'm like, what was that all about? What's going on? Well, it was that tweet, so to speak. And then it's just burned it off. And we basically undone the whole move. I don't know what would possess anyone to hurl money at this based upon someone saying that my coin is my favorite coin. Slope of Hope is my favorite website. I don't know if that'll get me any subscribers, but it's the same idea. This is self-interest. I believe it, but it's kind of a self-interested proclamation. But yeah, that was a little silly. Over the long haul, it's just a blip. This was the announcement right there. They're these kind of putting the old electric paddles on the chest from time to time, here and here and here. As you can see, there's less effect every single time. I'm sure we'll be in the single digits on this within weeks, if not days. But a little more popular stuff, Ethereum down. Importantly, it's below this blue level, which I consider important resistance. Back in the day, there was talk of Ethereum going to, $100,000, et cetera. It peaked just under 5,000 years ago, and it's 60% less than that right now. But more importantly, the blue line, that's the dividing line with support and resistance. We're below it, so that's bearish. And Bitcoin also down just a little bit. I think it'll be more of an outsized move tomorrow once the inflation report comes out. But the $90,000 level is something important to keep in mind as a psychological barrier and a very important level of charting resistance. And oddly, and we'll just close with this, GameStop, GME, they made an announcement a little earlier this week about they too, just like MicroStrategy, they were going to buy $1.5 billion of Bitcoin, I believe the announcement was, and the market loved that. They ate it up. The explosive move higher, got up to almost $30 a share. Well, that didn't last. I haven't scrutinized the news, but I think what happened is that the management said, oh, cool, let's sell lots more stock to raise cash, and they did. And so that's everybody who bought into the whole, GameStop will be like MicroStrategy, got a bit of a surprise. So big wipeout there, 23% drop on GME. Not so good. Anyway, that's the bottom of the hour, and tomorrow we'll wrap the week up. Hopefully, we'll get a nice swoon, but we'll see. We'll watch for that PCE in the morning. So thank you always for coming by, and I will see you on Friday. Bye-bye.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. What is going on over there,
Girl.
His hat was a late entry today. He came in. Oh, it's all jaunty now. You gotta move more towards your left.
I hate when that happens.
Your other left.
Like when you can't get your
you
can't get your bangs right. Oh, I hate that.
I know. You know.
I hate that.
What's going on with you? I'm watching you walk. What did you do? Did the corned beef king of Chicago get taken down by his own corned beef?
Looks like it.
Is that what happened?
Looks like.
You gave yourself the gout, so you use your phone to take a picture. Like if the print on like a bottle or package is too small, if you take a picture of it, you can make it bigger.
Yeah, I do that all the time.
That. My eyesight's perfect.
We literally tweeted a photo of you out this morning.
Put that photo up.
Be so for real right now. Oh my God. You can hear them laughing. You can hear them laughing.
Studio, but that's Tom right now. That's my view of Tom. Beautiful. He came in wearing that today.
Wait, what does the back say? Does it have your name on it?
No, I would never wear a shirt. Now, I'm glad you brought that up because only the biggest loser in the world would wear a jersey with their name.
Hey!
JJ, put him up.
Only the biggest loser.
There they go. Scott, what's up, my man? How's Japan?
Scott, you better have not worn the jersey with your name on the back. Nobody wears a jersey with their name on it.
Look how good that looks.
That is so lame. I'm sorry. You can't do that. I'm so embarrassed that JJ is wearing that jersey.
What does it matter to you what someone else wears?
There's a code.
What is the code?
It's all right.
There's a code. In Chicago, if he wears a jersey with his name on it, somebody's gonna throw a beer on him.
Would you like to say hi to Mr. Tom Ricketts?
We're having an argument on air right now, and you got to put it to bed for us. JJ's wearing a jersey with his name on the back, and we're arguing whether or not, according to the Guy code, you can wear a jersey to a game with your name on the back if you're not a player.
Mr. Ricketts, sir, my argument was that these beautifully crafted jerseys were a gift from your organization and that it is an honor to wear the jersey with your name on it.
And my argument is no guy in the world should wear a jersey with their name on it and not expect to have a beer.
And I'm trying
not expect to have a beer thrown on them.
I'm trying to stay out of it so I get one of those jerseys one day.
I think it's okay.
Yeah!
I've gotten jerseys. I think it's okay. If you're a big Cubs fan and you go to a lot of Cubs games, having a jersey with your name on it is 100% fine.
There you go.
Did you see Ricketts after we talked to him?
Yeah.
We asked him if he thought it was okay if you wore a jersey with your name on it.
I did see that. He said
and
yes.
He said he would never do it, but, you know.
No, he did not. He said yes.
I think it's okay.
Yeah!
Okay, revisionist history. It's recorded. I saw it.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody. We are back. I'm Tom Sosnoff. I'm here with Chris Vecchio. Hey, Chris. All right. Give it to me. What do you see today? Today was a tough one for me.
All that glitters is gold, Tom. $3,100 an ounce. Silver up at monthly, yearly highs. I'm happy.
I was a little short gold. That did not work. I was a little short copper. That did work today. Mm-hmm. So I think it was the tale of two metals.
Tale of two metals. Copper came back in hard action. Near $5.40 per pound yesterday. It's now back down to $5.1195 at 2.37% loss. A lot more in the equity market here. There are 24 minutes left to go, and the S&P is flat on the day.
Can I tell you something that brings just a little bit of that makes me feel like there are some people out there with rational minds, and there are some people out there that actually listen to what we talk about here on the show. Yesterday, I did this piece with Dylan about GameStop and about Ryan Cohn with that insane model of just saying, I'm going to go out and buy Bitcoin. And after the earnings announcement came out, which wasn't that great, came out and the stock was like $3 higher. And I just, for the life of me, cannot understand how people could buy a stock. It just, and we talked about it. You and I talked about this. And I'm like, that is not a freaking model. You can't go out and say you're taking your available cash because you can't innovate and you can't do anything with the money except buy Bitcoin. Is the dumbest thing I've ever heard. Today, the stock's down $6.50.
22.5%.
Okay. Which totally makes sense to me because that was such an asinine moronic thing to say yesterday. And it just drove me crazy how in 2025, anybody is dumb enough to buy a stock because the company says, I'm going to buy Bitcoin with the money. Like, I just don't get it. It's not a strategy. And finally, the market was what I kind of thought it should have done yesterday. But, obviously their bond offering didn't go too well or whatever else happened, but I don't really care. The whole point is that's not a strategy. Anyway, I'll leave it there. I'm done. That was my big speech.
Someone on our internal teams yesterday who doesn't work in our New York office messaged me like, hey, should I tell Tom tomorrow that I have a plan to get us to expand our Bitcoin treasury and tell him I wasn't listening to you? I said, yeah, but let me know what you want in your obituary. So...
Exactly. I mean, it was blowing my mind yesterday. I'm like, who in their right mind, who would buy this stock because they're buying Bitcoin? Like, it just none of it made any sense. None of it. And today I'm like, I feel a little vindicated. I feel it validated, I should say, about what we talked about, because it just didn't work for me. It didn't make any sense at all. All right.
Yep.
Yeah, I mean, and sometimes you just need the market to do what you think it should do so that you can turn around and say, okay, okay, guys, this makes sense. And this makes sense. All in all, I'd say this was a pretty unimpressive day for the markets. They had one rally, Chris, but for the most part, couldn't hold any rallies. Very much bear market tape action today.
Yes.
They goosed them up a couple times, and every time they goosed them up, they met with selling. I mean, it's a little bit of a nervous market. I don't think anything's going to happen. Obviously, until tomorrow morning. I just bought some bonds here, but I really don't think there's a play in the stock market other than going home kind of flat. What do you think?
Yesterday, my alarm bell started to go up, not just because of the news, but the tape action looking pretty ugly. If there's a line in the sand, if the rally's going to hold off the lows, this is a really good place to do it. We kind of reset the board this morning when we fell to 57.20 in ES. That represents a gap close from where we were on Friday before the news over the weekend propelled us higher out of the gates. So we've kind of leveled the playing field again. If we lose the uptrend, that short put spread that I have on kaput. Going to say goodnight to it. Otherwise, until it breaks down, data burn helps. So if we continue to chop sideways, that doesn't hurt me. It's obviously not ideal, but right now I think it's just a market where you need to be patient. The technicals yesterday looked terrible. You're not seeing anything fantastic come together today. It's no big rebound. And then you look across the board individually, a lot of defensive names are leading the way to the upside still. So the rotation internally is kind of crappy. Our very own Frank Walsh was sending over some numbers. It looks like a lot of people are banking on tomorrow's options expiry, though, Tom. The 0 DTEs, or will be the 1 DTE right now, and the March 28th expiry. You look at some of these figures here, the volumes relative to some of the open interest, 10 times the open interest there in the trading volumes today. So it looks like people are playing for a potential big end of the week here, even if today's been a nothing burger.
Yeah, I mean, I think most of the volume was in the futures. Most of the volume was in the options. The futures actually traded pretty good today. They traded 1.3 million cards, which is good. But the Yeah, there was a lot of individual stock action today, and it was really mixed. Like Apple was up and Amazon was up, but Meta was down and Nvidia was down and Palantir was down and Google was down, and they were all down pretty good. But then, Tesla was up and Microsoft was up. So it was just like, it was super mixed with the I guess the NASDAQ a little bit on the heavy side is the way I would kind of call it today. NASDAQ on the heavy side. And man, other than that, I don't know. Some stocks took it on the chin. United Airlines, the airline stocks, the auto stocks for sure. I feel like I'm a little bit long airline stocks here. And I don't think there's ever a time I wanted to buy Ford in the last 10 years until today. I didn't buy it. But I looked at it about 5 different times today, and I'm like, should I just buy a bunch of stock here just for the hell of it in Ford? Because they're going to call these tariffs off in just a day or two. I mean, it's just a matter of time. It's definitely not going to last. It's a matter of time. So, all right, I'm going to buy some. I haven't bought Ford. I'm buying some Ford.
I mean, I saw a headline today that probably is going to ring your contrarian bell. It was on CNBC. What was it? Detroit bleeds while Tesla leads, relating to the reaction to the tariffs. Ford, GM, Stellantis not having great days, but Tesla's up over 2% right now. That feels like a sentiment extreme if they're talking about Detroit bleeding out on the front page of CNBC. It's not quite markets in turmoil, but it's similar language.
It is kind of a very weird, the conflicts are too great to ignore. That's all I'll say. Like, I mean, unless you choose to close your eyes and be blindfolded to everything, the conflicts are too large. And anybody that doesn't see that, it's just, they're intentionally, they're not being objective. Conflicts they're almost nauseating, but whatever. Rest of the market today, and again, I don't buy Ford or GM. I'm a little bit long GM here. I'm a little bit long Ford. I think it's kind of the contrarian play, but I wouldn't go, I'm not going insane here. I'm going home a little bit long bonds. It's weird. They look like they're going to close on the high of the day, which is, well, not the high, but close. And I don't know.
I'm looking at this GM chart right now, and I'm looking at where the recent swing lows were to kind of blend the technical quant perspective here. Going all the way back to September, lows around 44. It's a 61.6 IVR. You're looking at risking $1.60 for every dollar you're looking to make gain here. But probably only profit 79%, the 42-44 put spread right now. I see that there's not a lot of liquidity here in the 42, but if you wanted to bump that up to 43 or go 44-45, 2-1, somewhere in that neighborhood, there's some juice to squeeze here out of some of these automakers on a day like today where, again, a very emotional market, seeing some very extreme headlines, but volatility is pumped into the space now. And you think the tariffs are coming off soon, this is a day to do it.
Yeah, the most interesting, I've looked at these GM puts a bunch of times because I want to kind of be short them, and I'm not. But the GM 43 puts here are, they traded a lot. They're pretty liquid. They're mid price of like 105, 106. I didn't sell any all day. I'll throw some orders in right now. Throw some in at 106. Throw some in at 105. Nothing done on either price. So we'll see. GM's not the greatest trading vehicle, but I'll throw some puts in there, just see if we can get lucky and maybe get a fill before the close. And other than that, I've gone up and down my watch list a couple times today. And you're right, kind of gold dominated the scene in the futures market and in the stock market. It was just a total mixed bag of tricks, like absolute mixed bag of tricks. Big moves, but completely mixed bag of tricks.
What are you doing with gold here now?
I got shorted today.
$3,099. Okay.
I got
compels
shorted
you to do
today.
that?
I sold some futures at 3,100 just because it's a round number, and I also leaning my option position a little tiny bit short. So I'm a little tiny bit short. It was also our worst performer of the day.
I'm trying right now to roll out my gold position. I still have on in the GCM5 contract 30, 25, 30, 50 call spread. I'm looking to roll this out well beyond the typical tasty window. Going to a, is it working still? Yeah, 123 days to expiration along the 3,200, 3,250 call spread. I likewise rolled my silver exposure out from SI K5 today, where there were 28 days to expiration, but it hitting a new yearly high. Why wait a week and risk giving some of this back? I kicked that out as well into the SIN5 contract, where I'm now looking long the 36, short the 37 call spread here, 61 days to expiry. So gold and silver have treated me well this year. It's been just a function of rolling up the call spreads every time we hit a new high, and I'm a momentum guy. So us being at yearly highs doesn't faze me. In fact, it tells me that I should be buying more.
That's what makes a market. I couldn't think any differently. I sold futures naked today, and I sold some calls and call spreads naked. So, yeah, I'm definitely looking at it a different way, but we'll see. I'm not convinced that they've topped out. I just think you have to be short. I thought you had to be short at 3,000. So at 3,100, it just makes me a little bit more confident, but we'll see. You need an intraday reversal in there for it to be interesting to me. We haven't seen that yet.
No, it's been gold, silver have been firm. But you mentioned you were short copper here today. That among the futures names is one of the bigger movers. It does pull back over 2% right now. Volatility is starting to come in a little bit. I think the IVRs in there, the true IVRs are around 45. You still think there's an opportunity here to fade off some short call spreads right now?
I covered today because I got the move I wanted. FCX. No, I think if you look at the IBR on FCX, it's actually 66. So I think FCX is a pretty good measure for HG. So you could still absolutely still put positions on there. I'm going to wait for a bounce tomorrow and then reload. The IBR on the platform is stuck at 14.1. So don't look at that, but just look at the FCX IBR, which is 66. So it's definitely tradable. But just stay small in copper. It's a big contract and it's a little thin.
What an ugly chart, by the way. Gold's at highs, silver's at highs, copper's at highs, and FCX is trading where it was back last August near the lows.
I know. It's weird. I agree with you. It's super weird. There's a lot of stuff like that, and it's sometimes these stocks lose their premium, like Coinbase. Coinbase has lost a lot of its premium. MSTR has lost a lot of its premium. Some of these commodity-based underlyings or anything that's tied to some other kind of asset, their premium levels go up and down. They're not consistent. So, we'll see. I don't draw a lot from today other than we're getting towards, we have a number tomorrow morning. We're getting towards the end of the quarter. We're at the 21 days to roll. I think this is kind of classic, just a lot of choppiness. I don't think there's anything huge to take away from all this. That's all. That's kind of my take. I just don't think there's a huge takeaway. I think it's just it really is a trader's market, and I think you'll see premium get crushed tomorrow. I think you'll see it get annihilated after the number comes out. And by the way, the expected move tomorrow, let's take a look.
46 points to the end of the day.
Well, we're going to look on the opening tomorrow just for the, let's see, SPX. Do we have an AM settlement tomorrow? I guess we don't. We don't, so I can't tell you.
Not mañana.
No, 45 points. 45 points for the end of the day. There's no AM settlement, so I guess the AM settlement would probably be. Is there one Monday morning? No. Okay. All right. I wasn't sure if they do quarterly AM, but they don't. So anyway, 45 points by the end of tomorrow. That's not too great.
Less than 1%. That's not exactly calling for a bang into the end of the week. What's been the most surprising? What's been the most surprising turn of events for you this week so far? stocks are basically unchanged now from Monday open until today.
The most surprising events. I mean, if you're talking about individual stocks, it would probably be the weakness in NVIDIA would surprise me, I think, more than any others, just given the size. And you got to remember, NVIDIA is, the size of the GDP of most countries. So when I think about NVIDIA, I think about something that's a little bit bigger than a bread box. And so if I was thinking about a specific stock, it'd probably be the weakness in NVIDIA. It is crazy soft. None of the earnings trades surprised me at all. I mean, yesterday the GameStop news surprised me because I couldn't believe people bought it up, but they completely they reversed everything today, so that gave me faith in humanity.
Sure.
I'm not sure. I mean, yesterday's sell-off, the magnitude of how high they got, what'd they get up to? 58.30-ish or something? I don't remember the exact number, but 58.30 was pretty rich if they got close to that. I thought they got close to that, but I don't know. And that number got pretty rich. Well, they've sold off a little since then. And, an 85-point sell-off since they'd made the highs, that's about 1.5% in the market. That's pretty good. Mm-hmm. Maybe that surprised me a little bit. The tape action in NVIDIA would probably be my number one surprise. The tape action in Tesla, which are the two most actively traded stocks, would probably be my second surprise. That stock was crazy strong today until just about 15 minutes ago when it completely gave it up. Mm-hmm. And I mean, it might not even close up on the day. And other than that, I don't know. Is there something else out there that you see?
I'm not seeing anything that's remarkable. I mean, Tesla, it really has come back in here as we go into the close. It's now, you mentioned, just only up by 0.4%. It's been a little bit of a drop off here as the day's gone on. No, I don't know how, I mean, for me, the way that I operate, I find myself looking at the action and feeling like this is a bear market rally still. The bounce has been very weak. The distribution hasn't stuck around when there's been a rally. People are selling into it. And then looking over the futures positioning data, which we're going to get an update tomorrow afternoon. But during the pullback in stocks, speculators were adding to their long position, and that's just not typically what happens. Very stubborn behavior. They're supposed to be trend followers, Tom. So if you're adding on the way down, it tells me that you're adding to leverage longs. And if this market begins to lose favor once more, people still have room to capitulate, right? So we need something good to happen. It's not good happening, and Tesla's about to go flat on today's session. We're looking at the options volume for tomorrow, 1 day to expiration, 300 strike, 262,000 volume today. Open interest is only 58.8K. So it feels like a lot of people were hoping for a continued Tesla squeeze, or they're playing it, and it's looking a little bit less likely right now.
Yeah, so I'm thinking my thought process all along for tomorrow was slightly higher. That was my thought process for all day today. I kept thinking that the path of least resistance for tomorrow on the number is higher in the bonds, therefore higher in stocks. And I'm going to stick with that until proven otherwise. So that's why I didn't get short today at all. But I think the path of least resistance is slightly higher for tomorrow. And I'll just leave it there. Chris, let's bring in your boys, your overtime crew. They're waiting in the wings. We have Ilya and we have Dylan. Mr. Radigan.
Hello, sir. Nice to see you. How are you?
Well, we got a little bit validated for our discussion yesterday, Dylan, on GameStop because they took the stock down $6 today because it didn't make any sense to me yesterday, and I was ranting about it. Today, it made total sense, so thank you.
So it restores your faith in humanity. You're starting to lose. I felt like you were starting to really question, whether you could believe in the American dream anymore. At that point, you're really starting to question the whole situation.
I was questioning everything at that point. Yes, mm-hmm. and then I said, "What would Ilya Spivak do?" And there we are.
He would short that shit. He would short that thing right now. He'd be shorting that thing.
I mean, with all due respect, the last time I shorted GameStop, I had to add a zero to the amount of money I lost, and I don't like adding zeros.
But don't you think realistically that this thing is all nothing until we get through the whatever tariffs to be or not to be, and for that matter, jobs report next Friday, economic catastrophe to be or not to be. Like either at this point, it's like when you get yourself in these sort of like suspended animation positions, Tom. You know, what are you even supposed to do here between now and April 2nd? I feel like I need to go bake a pie or something. I don't even know what to do with myself.
Well, the funny thing
this is what we learned today.
I have never bought Ford in my life, and I just bought it, and I just sold puts in GM. So the ultimate contrarian in me is buying Ford. Can't get any more American than buying Ford and General Motors into the close on a down day. I mean, that's as patriotic as it gets.
I mean, that's better than any American. That's better than apple pie or a hot dog on July 4th. Selling a put spread on General Motors.
No, I'm not selling a put spread. I'm just selling naked puts on General Motors. I'm filled, and I'm just buying naked stock on Ford. And I mean, it's opening day. It's opening day. I mean, I don't have an apple pie, unfortunately, but I mean, I feel like it's opening day. I'm going to watch a little baseball. I'm going to buy some General Motors. I'm going to buy some Ford, and I'm going to be all in on America.
All right. I like it. And you're short Donald Trump's tariffs, which I also agree with, which I appreciate.
I'm short the tariff. If I could sell the tariffs, I would sell the tariffs. I would mortgage the house to sell the tariffs.
You and me both. I tried to bet Chris Vecchio $100 yesterday that the tariffs are not going to happen.
Did you?
He wouldn't do it.
You got a better chance. You got to there's two things I would bet that TikTok is never ever going away, and the tariffs will never last.
I couldn't agree more on both counts. And Vecchio refuses to make markets on the other side. He said he wouldn't even bet $100 that he said the tariffs are happening, and then he said, but I wouldn't even bet $100 that the tariffs are happening.
Ilya?
Calvin Ball, man.
To Chris's point, when tariffs are installed, they are very difficult to then uninstall. So
are they?
We'll see. Well, I mean, look at the first Trump administration gave us a bunch of tariffs, and Biden didn't take them off. Because once it's there, then you want something back to give up your leverage. So if they jump from administration to administration, they get sticky, which is not good, obviously.
We'll see.
Sure.
Which is why you don't want to do them in the first place. But I digress.
Okay. What do you like here for tomorrow morning, Ilya?
I think I'm with you here. I think we have gotten this sense really from the beginning of last week that the market does not think it's going to get any kind of, oh my God, we didn't know, we'll stop now from the White House. And instead, they've looked to the Fed to say, we're not getting relief over there. You're going to have to come out with cheap money. And the Fed basically commiserated with them last week. And so since then, they've been sort of crawling higher. Look at how they shrugged off the auto tariffs here over the past 24 hours. Okay, did some damage, yes, but the up move from the lows last week, that's intact. The bonds held, stocks held. I think as long as we get permission from PCE, which should be easy because those numbers are always pretty close to forecasts. The markets don't typically see surprises on those. You get a move higher into maybe the middle of next week before everybody starts to go, will NFP really be a bailout? Will we get our confirmation? And so there's a little fuzz ahead of the data. But I think it's higher for stocks and higher for bonds near term. I still want to be a bear in stocks, but at a higher level.
Well said, Ilya. I will let you guys go have a party on your own. And I will see you guys. We'll see everybody tomorrow. Ciao. Have a good evening. And looks like
Spain near to your pets.
Yes.
What Bob Barker would say.
Ciao, boys.
Ciao.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. Right? This is easy, but you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
We're opening a Spite store here on Overtime today. It is Thursday, March 27th, 2025, and this is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in San Francisco. No, that's Milan. And Ilya Spivak in San Francisco. Almost landed the analogy. We're here to take you through the rest of this hour as we wrap up the futures trading day. And what a day it was, I guess. 25% tariffs announced after hours yesterday. Major U.S. auto manufacturers take a hit today. Well, except for one. You can guess which one that was. Ultimately, stocks.
It was Ford. No.
Stocks settle on the downside. NASDAQ off by about 0.5%, S&P off by about 0.25%. The big news, of course, comes in the metals market where copper reverses very sharply, but gold and silver continue to just run and run and run higher. Gold tops $3,100 an ounce for the first time ever in the futures market. We see silver topping, moving up to a new yearly high, pressing those 2024 highs. Beyond there, bonds trade heavy. We have GDP this morning, initial claims this morning. We'll look ahead to the PCE reading tomorrow, as well as another Michigan consumer confidence report. Guys, it was a messy day in these markets. Not even the dollar could get a bid after the tariff talk, and 25% auto tariffs went into effect, or at least signaled to go into effect on April 3rd. But Dylan, you are here grinding my gears, telling me that these tariffs won't go into place, and I'm too much of a wimp to make a $100 bet with you, which, that might be a fair characterization of our discussion.
You want to make the bet right now?
Yeah.
$100, there's no tariffs by the end of next week.
By the end of next week. End of next week is April 4th.
4th. It gets you Liberation Day. You own Liberation. Your long Liberation Day, my brother.
Yeah, I think the tariffs are going into effect initially. And if they're walked back, they'll be walked back by April 4th. So
you know what? Instead of $100, let's make it a muffin and a coffee at your favorite bakery the next time I see you.
Well, the last place we went, Ganja Gyms, shut down. So I'll find something that is a little bit better for both of our palates.
Maybe you'll come to Italy. Maybe you finally bring your Italian.
That's what I'll do.
You all are just trying to rip everything off from San Francisco.
Well, where they have a fine baked good is in San Francisco. They're Portola crowd. They've got a high quality baked good. I mean, it's a point of pride.
We take our baked goods very seriously.
We've heard. Okay. So you got your little bowl with the chowder. You got the bread bowl. All this anyway.
Oh my God, so obsessive. I love it.
Wraps it in a little tea towel. It's like, come on, man. Come on.
Listen, it's pretty good though. I'll tell you what, it's one of the best baked goods in the world.
There are croissant wars in this city for who can Paris more.
I understand. There's one place in the Tenderloin in anyway, I forget the name of the neighborhood. It was where it was like a gentrifying neighborhood with a fine bakery whose name everybody probably knows, but I can't remember right now, with a line around the block.
Oh, for sure.
Just for a cinnamon
You're probably thinking of Arsicle, and it's magical.
Once there's a line around the block for a cinnamon bun, I think all of society is lost. It's just a cinnamon bun. What are we doing? What does it come to that we have to wait an hour for a cinnamon bun? Anyway, Chris is trying to run a proper financial program. I apologize.
I'm really not. But the S&P 500 did close the gap here today. We closed last week at 57.20. We gap open higher on Sunday with the news that there wouldn't be auto or semiconductor tariffs. We trade higher at the start of the week. Surprise yesterday, tariffs are coming, and they're coming today. Today we digest the news and we hit a low of 57.20. So in effect, the deck has been cleared from the enthusiasm that tariffs wouldn't be implemented. Now I guess it's really to see how long they're implemented for. The big losers, when you think about today's session, we can head over to General Motors, which is down 7.34%. We could take a look at Ford Motor Company, which is off by 3.79%. We could take a look at another big manufacturer, Stellantis, which is down not as much, 1.17%. But perhaps away from the traditional big three, Tesla. This does close higher today by 0.39%. Granted, it's off of its highs. Dylan, you've been someone who is selling put spreads or puts down here during the sell-off. It's had a nice rally. How are you feeling about your trade now moving into the weekend?
I mean, I like it. I mean, I think the trade discussion, the speculator's delight, I won't call it the madman's delight, but the speculator's delight at this moment, and we heard it from Tom, is the tariffs and to be or not to be. So you want to be long Tesla, then you're short the tariffs. You want to be long Amazon, then you're short the tariffs. You want to be long Ford, GM, you're short the tariffs. You don't want to be, you're long the tariffs. And so I think the question you need to ask yourself is, one, where am I on the probability of tariffs? Whether it's in the Mag 7 or the automakers would be the two obvious places. in addition to that, where am I on the, or do I want to get involved? Do I want to meddle with this nonsense? Where do I want to deal with this business? Or do I want to stay more macro E, as my friend from San Francisco might, and to say, listen, I don't know from tariff, no tariff, but I know this whole tariff, no tariff to be or not to be routine is not good for global economic activity. So I'm long the bond, and I'll wait the rest of it out. Personally, I'm enjoying a little bit of a long Tesla position synthetically via the short tariffs. I'm enjoying my Amazon position. These are all little trades, but they're at least any trade that is more favorable is more fun than one that's not. I mean, Amazon pulled back here, but fortunately, you're the one that talked me into the Amazon thing on Monday. But I look at the Amazon's behavior, or any Mag 7 behavior, or any car behavior as tariff to be or not to be.
Is this a Romeo and Juliet kind of market?
What is that supposed to mean? Is that?
Well, you said to be or not to be.
I mean, I think the issue that we find ourselves with now that we sort of see what's
That's
happened.
not Romeo and Juliet. That's Hamlet. Yeah, no wonder you're like, what the hell are you talking about, Chris?
I'm like, I don't know. Different play.
Feel free to correct me.
I mean, if anything, I'm thinking more like in As You Like It terms, because it's a comedy and a farce more than anything else. But again, I digress. I look at what we've seen here in response to this latest tariff volley, and it seems like the market, again, it didn't like the news. Yeah, fine. But it didn't fall apart. The bonds didn't run away. The dollar didn't surge. And so you look at all of this and you go, yeah, they're looking for the Fed now. They've basically written these guys off. The market is not attempting a forcing function on fiscal policy. It's not saying, hey, we don't like this. Listen. They're just saying, you know what? These guys are going to do the things that we don't like. Okay. We know that now. And really what we need is the sweet, sweet, cheap money that the Fed is going to give us to ride all of this out. And that's a conversation about the PCE number to some extent, although I don't think it's going to be a terrible market mover. And really the jobs report, because what we heard from Powell last week was, we want to see all of this consternation in hard data, and then nobody be concerned, we're coming. We just don't want to get it wrong. And while it's in the soft data, we're fine-tuning our growth and inflation knobs. We don't know. We don't want to jump the wrong way. Probably shouldn't have used the word transitory in that spirit. But so it goes. The Fed is cautious. That makes sense. The Fed doesn't want to jump out the window on anything immediately. That makes sense. But they told the markets what they wanted to hear, which was, you're not crazy. We see the same survey data. We've also sat up in our seats, and we'll come and fix this with what we can do, or to the best of our ability, if it shows up in the hard data. Mm-hmm. There's no hard data really of strong potency, in my estimation, until NFP next week. And so you are basically in wait and see mode, and you get from the markets that they're not really caring so much about the tariff announcement, because they won't make a new low on it. They won't break down on it, either in the bonds or in stocks, because they're saying, look it, yeah, we know. But the Fed's coming, so whatever. Do your thing.
What do you make of the action here in ZN and ZB today? It feels like the market is, as we're getting this first quarter data, and it doesn't seem like recession's imminent. Jobless claims are effectively in the middle of their 1 year, 2 year, 3 year range, right?
Yeah. Well, and the GDP number was a revision. So, I mean, that was kind of an afterthought, I think, already.
We're trading a little heavy here, though.
A little bit.
Is the market challenging the Trump administration's desire to have lower yields, because it feels like yields are moving the opposite direction that they've been hoping they would move?
Well, anytime they announce tariffs, right, what do we get? There's a wiggle in the bonds lower because the markets go, tariffs are inflationary. There's a wiggle in stocks lower because the markets go, this is bad for growth. Right. This was sort of what the Fed said when Powell was explaining their SEP revisions. They were asking, well, how much inflation is going to come from the tariffs? He's like, I don't know. But I can tell you that the reason we wrote our SEP this way is because historically, tariffs are something that's inflationary and something that's bad for growth. So since we know they're coming, we just don't know when, how, and to what extent. We're in the same boat as you all, markets. But since we have a good sense that they're coming, we moved our forecasts within reasonable bounds, lower on growth, higher on inflation. And when the tariffs actually come and we see their works, then we will know if this particular instance of tariffs is like the history or isn't. And I think that's kind of the framework that the markets are operating on. Like these tariffs, at best, even the ones that are already in place, they've just occurred. It'll take some time for inventories to work through, for menu cost adjustments, as it were, if you're an economic nerd, as I am. And with that, you'll see sort of over months and quarters how much of a ripple effect they're having. But in the meantime, the operative playbook is more tariffs is inflation and less growth. So that's kind of what you see in markets today, be it bonds or stocks, but nothing runs away because, again, it seems like the markets are saying, yeah, but a Fed put is getting written.
What's your most confident trade, Ilya? Still long that bond? Can I get you anything? Can I get you into anything more interesting? Not that that's boring, but anything else I can tempt you with? Can I tempt you with a tariff to be or not to be trade, or you're gonna let it play out?
So yesterday I got a little bit short the euro because it looked like it was breaking down, and today I flipped it over. So it looked like what was an attempted breakout yesterday was maybe a false breakout, because today, especially if you look at, let's say, a 4-hour chart, you see the breakout is completely overturned, and then you get back into the range before it. So I'm a little bit long the euro again, because I think all of this is kind of one thing. It's telling that yields don't stay up and the dollar doesn't stay up in the wake of this tariff news, because if you're onboarding the tariff news as bad for growth, higher for inflation, you go, okay, well, the Fed's not coming as soon, maybe not as hard because inflation. So, okay, higher dollar, higher yields. You get that for a while, and then it completely unravels. So, to me, this was enough to take a little stab short dollar again, because if it won't go up on this, it's kind of stuck.
You notice that the currencies that fell versus the dollar today, Canada, Mexico, Japan,
yeah,
all currencies with significant manufacturing, automobile manufacturing, that if...
Well, and amazingly, the euro didn't, which is also an automotive importer, obviously, of heft. So that you're absolutely right. That was another one where I looked at it, I'm like, this euro is very resilient. Now, of course, it also helps that I wrote a very, very long-term bullish euro article yesterday and waxed about it for a half hour on macro money. So as we've said before, confirmation bias is the most satisfying of all the biases. Mm-hmm. So maybe that skewed my thinking subconsciously today to get long, but I don't hate it.
Dylan, I guess the same question that you asked Ilya. What's your most confident trade right now on the board as we make our way through this tariff talk and automatic meltdown?
The tariffs. I'm now at the point. I've now approached maybe misguided. Certainly could be misguided. But Remember the confidence that I was conjuring last year whenever there'd be an oil spike on news of World War III, and I would be like, oh, that's short oil. I have now approached that level of confidence on the short tariffs concept. So I like my long Amazon. I like my long Tesla. I like Tom's long Ford. I like Tom's long, GM. All the things. So I like being short Donald Trump. How about that? I think this man's a clown, and I think he can make money on it. I think he's a predictable clown.
I mean, I'm looking at this. If this was just all for show, we've already seen, stories coming from freep.com, which is the Detroit Free Press website, how automakers are, and like even union shops are readying layoffs as a result of these tariffs. So, I mean, like if they even go through for a few days, it sounds like some people are going to lose their jobs. And that's kind of the problem here, that even if they're done for a negotiating position, there's going to be some potential collateral damage on the local level. This is happening right now in the lumber industry here in the country, where China has been telling us that they can't accept imports of our lumber because they need to make sure it's properly fumigated.
This is what you call a non-tariff barrier for those who are playing the home game.
Yeah, like, so China's not even
playing the home game.
Yeah, it's like, so we're not even saying like, yeah, we're not even going to respond. We're actually going to invoke something. We can say, actually, we think all your wood is infested with pests. We're going to turn down your shipments moving forward.
Yeah, we're not tariffing this. It's just your wood sucks. Okay, bye.
And like, how can you disprove? And so China actually, there's a story going around right now. You can look it up. China asked then to turn around for these various loggers to get USDA certification that the wood that has been shipped that was already on the water, doesn't have any of these pests in it. And the Trump administration said, no, we're not playing your game. We're not going to certify these pieces of wood. And so China turned down this wood and it had to get rerouted to Vietnam. But Vietnam is now accepting all this lumber, and it has like 10 times the amount of lumber in its ports that it usually does. I have to find this link to the story, and I was looking to bring it up here on overtime, but I lost track of where I put the link. But things like that, right? There are disruptions to businesses. And if you're cutting wood and it can't land in a port, then what do you do with it? Right. We can get off the forward chart here. NASDAQ, S&P, they all still show that technical damage from yesterday. You have those evening star candlestick clusters coming into play up against the 1 month moving averages. You get to close yesterday below your 1 week. There is continuation here after the gap opened lower. We cover the gap in the NASDAQ and then fade the rest of the session. Your biggest loser, semiconductors, SMH off 1.92% here, closely followed by telecoms off 1.11%. Gas energy is a touch weaker on the day as well. You also see XLK. So semiconductors, telecom, technology, regional banks, these are among your biggest losers for our Thursday here. On the flip side, I don't think it's going to surprise anyone, aside from some of the typical defensive names like an XLV Healthcare or an XLP Consumer Staples, which are up. GDXJ, the miners, are the ones that are your top of your leaderboard. GDXJ up 3.12%. The seniors, the regular miners, up 2.44%. So guys, let's take a gander into the part of the market where I'm feeling much better than I do when I'm talking about stocks right now. $3,100 an ounce, gentlemen. When does this stop? Felt like gold was meandering the past few days, and it's kind of pulling my hair out. How come this thing isn't going up? It feels like it should be going up. It finally does. Mm-hmm. Where does gold stop? Are we just checking benchmarks on the way to $4,000 an ounce at this point in time?
We'll take a look at where it's landed here today. At least looking at sort of whether it closed or not. It's
ignore the New York close, the midday close, how it's marked up on the daily chart.
Yeah.
You have to go to like the 12 hour to see where it's actually closing by the end of the future session, which will be through, right? We will be through the former high of 3092.80. We're up
because
at
on spot you didn't do it. So, but obviously futures and spot, not exactly the same thing. I do always look at gold spot though, because obviously that's a highly speculative instrument unto itself, and people do look. So I'm looking at this and going, okay, well, if it broke, then the next stop is kind of 3,100. If you take a very sort of near-term extrapolation of the move. If you want to look a little bit sort of broader, and it certainly shouldn't surprise you, Chris, I'm basically looking at fib extensions here because we're in no man's land. Then it's like 31.25, and then on to 32-ish would be the 200% extension. That green line that you have up there. So just above 3,200 becomes your bogey if you've really and truly taken this out. It does give me a bit of pause that when you look at the oscillators, I look at RSI, you've got others here, but the story is exactly the same as it usually is.
Some divergence.
There's divergence here, and momentum isn't looking great. Now, maybe that's because we just went through this consolidative period, right? Divergence is not a directional signal. It's a momentum signal. Maybe we've already seen the fading of momentum that needed to be seen here. Maybe that digestion is already over. I think if we get a poke through this to really cement the break, even if it's a 4-hour, 8-hour close here overnight on GC, thank you, futures markets, they're going to be open, then I think you've got something to work with here. And on the 4-hour, it looks like you're maybe already there.
Gold is very kind to me today. I tried to make an adjustment today and it just didn't quite work. I'm still long the 30, 25, 30, 50 call spread in the 28 days to expiration. I'm trying to roll this out to 123 to go into the GCQ5 contract and get long the 3,200, short 3,250 call spread. That was not successfully filled today, but I am looking to put in the pocket some of these gains now that we've moved up to a cycle high and we're within 1 week of the typical 21 days out cycle. So no reason to be greedy and wait another week. I can just simply move on from this and buy more duration. I do note the divergence though, which is why I still want to have long gold exposure. I'm willing to take a step back to $3,000 an ounce, but I'd still like to have a longer dated calls in there, particularly when they're this cheap. The IVR is 27.7. Same thing for silver. Silver today, I actually did execute a roll in the position. Now out of the SIK5 contract, now into the SIN5 contract, playing for now a return back to the 2024 highs. We did get that acceleration here, and I think confirmation that we're going to cross $36 an ounce. So I'm playing the long 36, short the 37 now. In the tastylive follow count at 61 days to expiration. So in the event that we continue this oscillating type of advance where we go up a bit and then down to a higher low and then up to a new higher high, I have the exposure to continue to just ride it through. I love the metals right now. They're all weather. So much narrative flexibility, Dylan. Narrative flexibility, I think, is the most important quality any asset can have.
I mean, but I feel like a fool because I'm very comfortable being long silver because I have this idea in my brain that it has some industrial relevance, some macroeconomic relevance, something more than just being not the dollar, not crypto, something more than being some version of binary risk off because it has some supply chain relevance. And so I'm like, oh, I can buy silver. I can never convince myself to buy or sell, to do any. I've never bought, sold. I've never done anything neutral, long or short in gold because I can't walk myself into an opinion that has any resonance with me intellectually, and yet I'm happy to buy silver, which I suppose is more an insight into my psychology than anything having to do with trading, because certainly from looking at the charts at this moment, there's basically no difference. In fact, if you ask me, well, why is silver up so much? I'd be like, who knows? Risk off, dollar, they don't like the dollar. They don't like Bitcoin. I don't know.
I found a funny Twitter account today. I think it's called Mr. Slammy. It's a guy who tweets every morning that he's going to slam gold and silver prices. Apparently, there's a conspiracy in the gold and silver trading community that there are silver slams every single day. It's not something I've ever noticed, but I'm not a scalper, so that's not something that would really catch my attention. Curious what people think about that, if that's true. Also, a very odd Twitter account if you happen to come across it. So not a recommendation, but either way, though, this continues to build, right? Gold and silver, if it's Chinese central bank buying or central banks globally that are buying right now, I am concerned about the pullback in vol. Pullbacks in vol and silver typically precede pullbacks in price, but that's not playing out here. And we're actually starting to bump back up a little bit. Today was a good day to roll out. It's a 16.7 IVR. Calls are cheap. These trades have been working. Stocks are being outperformed by gold and silver over the past year. Not going to get off the train right now while the world seems like it's moving into a currency space where, bottle caps from the game Fallout may have credence moving forward. Gold and silver, I think right now, again, I'm looking at $40 or silver. We're bumping up our gold targets to 32.25. If it works, it works. I'm a momentum guy. Not going to get off the train just yet. It served me right so far. Ilya, what's the biggest risk to being long gold and silver still? I like to buy high and sell higher.
I think if you look at sort of what would be the natural thing, you'd look over the past week and you go, well, why today? Why does gold stall after the Fed ostensibly, if you looked at stocks, gives the markets their dovish thing that they wanted? Why does the dollar, after that dovish thing, go up? And why does gold go nowhere? And the immediate kind of thought process is the stock market is, as ever, a temperamental child. And what was going on in the bonds and in the dollar and in gold is the macro sensible two-way market reaction. That is to say, those are bigger markets, more liquid markets. They had already discounted what the Fed was likely to do before the Fed did it to a much greater extent than stocks did. So the Fed comes out there a little bit more dovish. Stocks go, hey, wonderful. And gold goes, yeah, I know. And the dollar goes, yeah, I also know. We already made these moves. And they actually fade. So you sort of see this speculative interest come out of them as though the Fed has basically validated a speculative thesis that was already in the price. And so you see gold pop today and you go, well, if you were going to run on the dovish Fed, you would have done that. But you didn't. What's different today? Why this all of a sudden now? And it feels like it's more a knee-jerk tariff kind of a thing. And if that's the case, and the real story is more about the Fed, I don't know how much legs this has. But that's not.
Well, what would the real
that's
story
not a great
be about
argument.
The Fed? How relevant is the Fed right now, actually, in this moment? I just
very
feel like
relevant.
The Fed is,
I think it's the only thing. I think it's the only thing that's relevant.
You think the Fed is more relevant than the president right now?
Yes, because I think the markets have lost faith in their ability to discipline the White House. I don't think they believe at this point that the White House is amenable to market discipline or market consternation affecting their behavior. And so they've moved on to say, well, their behavior is just going to be what it is, and we want cheap money to ride it out. I think they've turned to a different release valve now.
Meaning, okay, the Fed is the reason we're going to survive Trump is because of the Fed.
Yes.
And the Fed is going to be the shock absorber to this madness.
Yes.
And we want,
or at least that's what they hope.
Yeah, that's the dream. And when is the next window to verify or discredit that hope?
NFP.
The jobs number?
NFP. Yeah. In my mind, it's NFP. I mean, obviously, there is a revision of consumer confidence data. Maybe it's wild. There is the PCE numbers. Who knows? I don't think they're going to do anything. They don't usually do anything, but it's not impossible. It's macro event risk, and it's certainly the case that sometimes macro event risk is notable not for its substance, but for its passing. That is to say, the market doesn't want to have conviction until the macro risk occurs. Then it occurs. There is no substance, but what it gives is permission to the markets to do what they wanted to do, but didn't because event risk was in front of them. So who knows? Maybe after PCE tomorrow, the markets go, okay, la-di-da, event risk is out of the way. What was our default? And they do that. So I think the substance, where you really get a sense of will the Fed ride to the rescue maybe as soon as May, is what happens with the jobs data. That's the next big one, because that would be the kind of quote unquote hard data that Powell is talking about.
Wait, so if we have a bad non-farm payrolls report next week, the markets are going to feel comfortable that we may get help on May 7th?
I think if you get a really bad number next week, if you miss by a decent margin, then you get the sense from markets that maybe the Fed is not going to cut in May, but what it's going to do is it's going to give you all the requisite squawking to tell you that when they go in June, first of all, they'll go in June. Right now it's July-ish, but they'll go in June. And when they go, they'll revise the SCP dovish and give you the intent to firefight this thing. And that the messaging in May will meaningfully change. Because there will be a statement, there will be a press conference. Powell will have the ability to get in front of a microphone and do his song and dance. I think they're going to start to speculate that more easing is coming. That maybe this year it's not a 2-cut year. Maybe it's a 3-cut year.
So playing with some modeling here from the Atlanta Fed's growth calculator, if the unemployment rate stays on hold at 4.1%, the economy needs to add 113,000 jobs. To get the unemployment rate to bump up to 4.2%, we'd have to lose 53,000 jobs. The margin for error is actually not that big. There have been previous unemployment reports where it's like, well, the unemployment rate's going to go up if the pace of jobs growth slows down to just a 50,000 per month increase, right? But now it's saying like we're on the precipice where we just need to start losing a few jobs to start to see the unemployment rate go up. It's not that the economy has so much slack in it anymore. That's not necessarily a great sign, but I don't know. I feel very much the opposite, Dylan. I care less about the Fed now than I think I ever have in my professional life.
That's how I feel. That's why I was interested in Ilya's perspective. Ilya is saying that Trump is such a lost cause, and that that basically the only thing that matters is the Fed's ability to serve as a shock absorber to whatever happens, which is obviously a argument that is easily seen to have merit. I view it in a different way, which is I think the market I believe the market is capable of disciplining Trump into some form of predictability, and that whether it's Lutnick or Bessent or whoever the signal boys are on the chat room over there, that they are, that 10% is one thing, but 20, 30, 40% declines are available if they choose to behave like the fruitcakes that they are. But I don't think they want that. And I think that the market is the correcting mechanism more than the Fed. But I also can see the merit of Ilya's point of view.
And by the way, maybe they will become amenable to market discipline if there is a 20% sell-off, let's say. I think everything obviously is a moving target with this bunch. But when you sort of look at what they've been saying so far and how the markets don't sell off on the auto tariffs here like they have, or like they could have, they ultimately hold up. I think you listen to Bessent and he goes, yeah, we don't care. Economy needs to detoxify, blah, 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 blah. And then you get the same kind of vibes from Lutnick. You get the same thing from the president himself, who's like, you know what, stock market, this or that. There's a great study from The Economist suggesting that the way that the electorate has changed actually suggests that this particular version of Republican administration is much less amenable to the stock markets because their electorate is not made up nearly to the extent that it was in the past of stock owners.
Interesting. I made the same point today with Westwater from a completely different point of view.
Yeah. So The Economist did this really interesting study where they said, well, the new Republican coalition is made up of people who own far less stock, if any, than the new Democrat coalition. And
the Republican coalition right now is working class to the degree that this is going to shock people. You look at the actual numbers, you go into a voter database.
Yeah.
Trump's coalition is the most diverse working class coalition since Obama's 2008 win.
Yeah.
On paper.
And so, yeah.
Does this group of people own a lot of stocks? No. And so if you're going to be a champion of the working class and they say, hey, did you see what's happened to the stock market today? You say, haven't even looked.
Don't care.
Doesn't matter to my voters.
Don't care, but I can finance a car cheaper because interest rates are down. And that gives you a sense of how disciplined the markets can make this administration. Oh, and more specifically, which markets? Now, it certainly might become the case that we learn that, tariffs are inflationary. Who'da thunk it? And people rebel. And then you get some market discipline if the bonds really crack lower. But for now, they're not. And again, when you see the response to this today and you go, okay, the bonds don't really crack lower, the dollar doesn't really rally even against the euro. Okay, stocks don't really break down. What is it that's going on here? Well, there's a logical through line here. Is the market goes, why shouldn't stocks be afraid? Because the Fed is going to come backstop us from this madness. And if they are, it's with dovish policy. So the dollar shouldn't strengthen and the bonds shouldn't collapse. That's my story until, right? And Chris, you and I are going to talk on Futures Power Hour tomorrow. I'm completely open-minded to the idea that tomorrow the White House is going to say some other thing, and the narrative is going to change. Who knows?
Yep. Very possible that tomorrow we are having a completely different conversation.
Strong convictions loosely held, as it were.
Matters more than ever. Right?
Yes.
As traders, we're not
marry nothing.
Marry nothing. Speed dating. Exclusively here.
You know me not to be an erratic trader for over a decade now. I got short the euro yesterday and I flipped it over today. Very uncharacteristic for me, but you got to do what you got to do.
I have to check the polls, but to your point, 54% of Americans have exposure to equity markets. There is 90% of financial assets are owned by like the top 10%, but moreover, given the voting demographics of the Trump coalition, you'd be actually looking something closer to like 47% of Trump voters own equities, so below the average nationwide. And again, like in terms of political messaging, that's actually incredible discipline to say that you're going to be the president for the working class. You're doing these tariffs. Have you seen what the tariffs are doing in the stock market? I don't care about the stock market. That's a rich man's game.
Yeah.
It's very powerful messaging, very consistent messaging there about what your principles and beliefs are, even if the tariffs are ultimately going to bring down jobs. I saw the UAW president, Sean Fine, was talking up the tariffs yesterday. I tweeted it side by side with a news article about how a UAW plant was laying off union workers because of the tariffs. Mm-hmm. So we may be bringing more automobile manufacturing jobs back to the country with this, but at least up front, the first reaction by corporations has been to say, nope, turn off the lights. Too expensive to do business here. Not worth it. We can produce this stuff elsewhere. And that's what was in the Dallas energy manufacturing survey that came out yesterday from the Dallas Fed.
Every business in the world is trying to figure out a global strategy ex-US. That is not a speculative statement. It's a fact. Okay.
Oh, yeah, I mean, so if you hear it from every corner.
And now there are businesses that are not able to make a global sales strategy ex-USA because the USA is the world's biggest market. So President Trump and the American government are not incorrect in saying we have a lot of leverage. We're the world's biggest market. If you want to sell in the American market, you got to pay. However, when you combine the aggregate market value of everything on Earth minus the United States, it's not a bad way to run a business. And so there are many businesses, in fact, every business that is able to do it is already engaged in or is actively developing a global strategy ex-USA, because even if they're not under tariffs right now, they're aware that at any moment they could be tariffed.
Mm-hmm. And by the way, as we talked about,
go ahead.
Yeah, I mean,
sorry.
No, please finish.
No, I just as sure as it's entirely within the rights of the United States to say if you want to sell in the U.S. market, you got to pay an entry fee, tariff. It's in the rights of every business on Earth to say, okay, is it worth it for us to pay the entry fee for the U.S. market, or is it more efficient for us to do a global sales strategy ex-USA and wait this out?
And by the way, what a time to do such a thing when Europe is about to spend all kinds of money on defense and stop being so tight with finances, including in Germany, and now there's all this money about to swirl around. In fact, if you look at European bond markets, you notice break-even rates have bumped up, so inflation expectations are rising, and it's mostly happening for the 2 years. They expect the hit soon. They don't expect a big inflationary jump in 5 years' time, 10 years' time. It wiggled higher and then came back in. The 2 year, though, stayed up. They think the spending is coming now. That's one thing. And second, there is no way that this strategy isn't going to be disruptive for the simple reason that it doesn't make sense to flex your leverage against anybody who you don't do a ton of business with, i.e. not allies, not people in your orbit. You only have leverage with allies. You only have leverage with people you do a lot of business with. Otherwise, there's no leverage to say, I'm the biggest market. You better listen to what I'm saying. So there is no way that this approach isn't disruptive to things that the supply chain for American goods depends on. In fact, that's a feature. It's not a bug.
Feature, not a bug.
Which is why I believe the relative leverage of every business on Earth developing a non-U.S. growth strategy versus the United States demanding tariffs at this moment, I believe that at the very least that leverage nets out neutral to short-term negative for the U.S., and which is why I believe being short the tariffs is a good trade, because I don't think they're going to happen. And I don't think they're going to happen beyond some symbolic or theatrical way in keeping with the former host of The Apprentice, who's the president of the United States.
Okay, but if they don't happen,
right? Fired people in a theatrical way. You're fired from a TV show business that doesn't exist. You're tariffed from a fake president who doesn't really mean it. Like, it's all just a performance.
Interestingly, Elise Stefanik was apparently fired today. So
no,
we
not
got
fired,
a little
not fired.
Withdrawn.
She was withdrawn because the Republican House majority would be at risk if she went through and got confirmed. If you've been watching the special elections that are taking place in rural areas right now, Republicans are getting trounced. In Pennsylvania,
this is the interesting thing. So do we have then discipline of some kind?
That that is one of the considerations here, right? So there's a string that you can pull on. Why would you pull this nomination? Stefanik is one of the top Republicans in the House. She clearly would get confirmed. The only reason why you would do so, being a New Yorker,
this one was a layup, I thought.
You're convinced that there is a risk of losing the seat. And when you only have a 3-seat margin, you can't afford a 2-seat swing, right? If Stefanik goes down, okay, now your margin's 2, and it goes to Democrats, now your margin's 1. So the fact that they pull her nomination for UN tells you that they're more concerned about their congressional majority. And this past week in Pennsylvania, what did we see? There was a Senate district in Pennsylvania that in 2024 was to the Republicans and Trump by 15 points. Democrats won it by 1.3. So that's a 16.3 point swing in the span of 6 months. And that kind of thing wakes you up. It's in the middle of rural Pennsylvania. It's in Pennsylvania. It's not exactly happening in Philadelphia. So if that can happen there, then who's to say it can't happen in blue New York? I think that, that's one of those little ear to the ground moments for me. They go, oh, there are people that are talking within the administration now. Our policies are unpopular, and we won't be able to prosecute the MAGA agenda if we don't have a trifecta in government. It won't happen as smoothly, of course. Trump can do things by EOs, which will be challenged in court, and whether or not he respects the court orders is another story. But without a Republican trifecta, it becomes a lot more difficult. So you got to hold on to that thin House margin, and they don't feel like they can hold it. Some real politics in play there. And it sets up a fascinating, set of circumstances now for how the administration proceeds. But Dylan, I wanted the tariff situation there. Mark Carney, the new Prime Minister of Canada, came out today and said it's clear at this point that the U.S. is no longer a reliable partner. If we take the tariffs off, does that make us any more reliable? No, it makes us look.
Sailed.
It on again, off again, snip, snap, snip, snap. The world doesn't want to deal with the Michael Scott tariffs. The world is Michael Scott in that example, by the way, right? Michael Scott is frustratingly saying on again, off again, snip, snap, snip, snap. You know what that does to a person? That's the world saying you guys are putting on the tariffs, U.S. You're putting off the tariffs, U.S. Vasectomy on, vasectomy off. Make up your mind. And what happens to Michael Scott and Jan in the office? They break up because it can't take the volatility of the on again, off again. Also, the surgeries. Can't imagine going through that. But that's kind of what Canada's position is right now. Like, we don't want to keep going under the knife. We can't. We're going to have to take a timeout. It's best if we separate and see other people for a little while. But in macroeconomics, you don't just date around for a little bit. When factories get moved, when manufacturing processes and supply chains are shifted, they don't come back. Why would they come back here? Canada, I think, has a better is there a better shot of Canada joining the EU in some sort of trade deal than for Fortress North America to come true at this point in time?
Possible. I've been thinking about it.
That would be a major blunder by the U.S., subordinating our position from empire. And I think by the way,
they're having the conversations. This is not
already happening.
This is not like tinfoil hat stuff. These conversations are happening now. They're being reported on. That
I had lunch with an Italian defense contractor Monday that was solicited by the Canadian government to basically build an Italian materials factory in Canada, cost at Canada's expense.
Yeah. And it's not long in my mind before South Korea, Japan start to look at all of these kind of ex-US, call it the TPP ex-US type of arrangements and go, yeah, we want in.
Trump is playing a game of mafia leverage. When you play mafia leverage, the other side, whether it's the Japanese or the Canadians or the Germans or whoever, they also play the leverage game and they also have leverage.
And to be clear, there are people in all of our allied countries that do not like being subordinate of the United States. They don't like considering themselves as like a little brother to the empire. The U.S. has been an empire. I think this is one of the things that we don't want to acknowledge. The U.S. has been an empire for the entirety of all of our lives.
Because we walked into it accidentally. One of the great ironies is that Russia really wants to be an empire and can't, and we sort of are finding ourselves in one, kicking and screaming.
So Andrew Carnegie was a big anti-imperialist. He really stuck his neck out to be anti-imperialist. Wrote letters to Congress, wrote letters and papers. William Jennings Bryan is anti-imperialist in the late 1800s.
Yes.
You get Theodore Roosevelt come in and he goes, actually, the empire is great. We are affording people freedom and liberty. Freedom and liberty from what? From violence. And so there's a strain of Americans who believe firmly at the time that empire is a good thing and that we should be imperialistic because it's better to be under our security umbrella and have us running things than to be under the umbrella of the British or the Spanish or the French or whatever other power was rising at the time. And so, we went out there and we're like, we will have Spain. Here's $20 million. We will happily buy the Philippines from you. Spain's like, your problem now.
All of that empire, though, is basically child's play because at that point, the U.S. is near third world backwater. We don't really get to doing empire building until essentially the consequences of World War II. And that, I would say, is a kind of magnanimous thing where we say we don't want territory, we don't want to occupy anything, but we write the rules and we run the shipping lanes. Everybody be cool.
One thing that really bothers me here for undoing the empire, Dylan, if you read history, how did living standards in the UK evolve after the Suez Crisis? Or how did living standards in Spain evolve after the 1900 defeat in the Spanish-American War? What about for the Dutch or the French or the USSR, Russia in the 1990s? How did Russia do after the USSR collapsed?
I was there at the time. I can tell you it was not grand in the early 90s. Not grand at all.
While stocks figure this out, gold and silver are having a good time. I'm going to sleep real easy tonight, given what's going on here. Unfortunately, overtime is out of time for today and this week, though. We'll be back on Monday, same time, same place, right after last call, 4 p.m. Eastern, 3 Central, every Monday through Thursday. For Dylan Radigan in Milan, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. After this, of course, Ilya is back with Macro Money. Stick around after the break.
See you there, everybody.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. What is going on over there, girl?
His hat was a late entry today. He
Girl.
came in, oh, it's all jaunty now. You gotta move more towards your left.
I hate when that happens.
Your other left.
Like when you can't get your
Yeah, there you
when
go.
you can't get your bangs right. Oh, I hate that.
I know, you know?
I hate that.
What's going on with you? I'm watching you walk. What did you do? Did the corned beef king of Chicago get taken down by his own corned beef?
Looks like it.
Is that what happened?
Looks like
You gave yourself the gout, so you use your phone to take a picture. Like if the print on like a bottle or package is too small, if you take a picture of it, you can make it bigger.
Yeah, I do that all the time.
Do that. My eyesight is perfect.
We literally tweeted a photo of you out this morning.
Put that photo up.
Be so for real right now.
hold
Oh
on.
my God. You can hear them
There you
laughing.
go.
You
Yeah,
can
you
hear
don't
them
have it up here in
laughing.
studio, but that's Tom right now. That's my view of Tom. Beautiful. He came in wearing that today.
Wait, what does the back say? Does it have your name on it?
No, I would never wear a shirt. Now, I'm glad you brought that up because only the biggest loser in the world would wear a jersey with their name.
Hey!
JJ.
Put him up. Put him up. Put him up.
Only the biggest loser.
There they go. Scott, what's up, my man? How's Japan?
Scott, you better have not worn the jersey with your name on the back. Nobody wears a jersey with their name on it.
Look how good that looks.
That is so lame. I'm sorry. You can't do that. I'm so embarrassed that JJ is wearing that jersey.
What does it matter
There's a
to you
code.
what someone else wears?
There's a code.
What is the code?
It's all right.
There's a code. In Chicago, if he wears a jersey with his name on it, somebody's gonna throw a beer on him.
Would you like to say hi to Mr. Tom Ricketts?
We're having an argument on air right now, and you got to put it to bed for us. JJ's wearing a jersey with his name on the back, and we're arguing whether or not, according to the guy code, you can wear a jersey to a game with your name on the back if you're not a player.
Mr. Ricketts, sir, my argument was that these beautifully crafted jerseys were a gift from your organization and that it is an honor to wear the jersey with your name on it.
And my argument is no guy in the world should wear a jersey with their name on it and not expect to have a beer.
And I'm trying
not expect to have a beer thrown on them.
I'm trying to stay out of it so I get one of those jerseys one day.
I think it's okay.
Yeah!
I've gotten jerseys. I think it's okay. If you're a big Cubs fan and you go to a lot of Cubs games, having a jersey with your name on it is 100% fine.
There you go.
Did you see Ricketts after we talked to him?
Yeah.
We asked him if he thought it was okay if you wore a jersey with your name on it.
I did see that. He said
And
yes.
he said he would never do it, but, you know.
No, he did not. He said yes.
I think it's okay.
Yeah!
Okay, revisionist history. It's recorded. I saw it.
Get the full scoop by checking out the archives at tastylive.com.
So, Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling lower and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
We get more tariffs, but the markets seem to take it, dare we say, in stride. What does that mean, and where are we going from here if this is what's happening? That's what we're going to try to unpick here as we look down the barrel of another bit of macro event risk. U.S. inflation data again in front of us. This is Macro Money. I'm Milius Spivak, head of Global Macro here at Tasty Live. And we are going to unpack what the price action here seems to be saying, and what we might see then in the wake of these new announcements and as the data starts to hit markets once again. So let's first consider here what has occurred when we got this announcement of new auto tariffs, and we're less sort of concerned with the substance of the announcement. It's more so the market reaction. And we start here from the S&P 500 just to get a sense for overall risk appetite. And needless to say, we sort of have our bearings here. This was the rally last year going into the election. We can see it held up through the election and then stalled going into the new year, gave us a consolidative period from early December through basically the end or middle to end of February, where we got some disappointing economic data that suggested recession fears are building or have reason to build, and we've had a massive sell-off. And about the beginning of last week, we started to crawl higher. And as we discussed then, that appeared to suggest that maybe what we're looking at is the market saying, okay, we're going to get some untoward policy from the administration. We don't like tariffs, and more importantly, we don't like uncertainty about the tariffs. We don't like uncertainty about government staffing levels. We don't like uncertainty of any kind. It would be much better if there were a longer-term agenda that were delivered that we could benchmark against, value assets accordingly, and move on. But since we're going back and forth here, we don't have that. And we tried to discipline officials with market action. Of course, we can see that here. Get the first round of tariff headlines, there's a lurch. The tariff uncertainty starts to show up in the PMIs and the consumer confidence data. There's a sell-off. But the message from the administration has been, this is fine. This is a necessary adjustment. The economy will not careen into a ditch here. This is the markets kind of onboarding this hard change in policy that we're implementing. This is normal. And the message is coming from credible sources. Certainly, the Treasury Secretary, Scott Bessent, as a macro hedge fund investor that grew up under the tutelage of the great George Soros, who really knows this architecture and these mechanics, possibly better than anyone or certainly one of the great practitioners of this possibly ever. So when Scott Bessent comes out and says, yeah, okay, you know what, this is fine, the markets take those comments as earnest and say, yeah, they're really not going to react. But of course, the markets want some sort of out because the uncertainty lingers. And so going into last week's Fed announcement, there seems to be this sense that, well, okay, we're not going to get a response to market discipline from the administration. So instead, we're going to need the Fed to come and ease monetary policy and give us the cushion of cheap money to withstand the volatility until the dust settles. And that seems to be the motivation behind this rebound into the Fed and then the rise after the Fed. We get this data on the PMIs this week, and it's almost as if we get some reinforcement, and that helps this pop to extend. Here's the numbers we get. They're not great, certainly not like where growth was last year, but they are encouraging. So the composite showing faster overall economic growth than expected, 53.5 versus 51.5. So the expectation was that growth would remain, but at a slower rate. It came out faster. That occurs because the service sector ends up seeing faster economic activity growth than expected by a significant margin, 54.3 versus near standstill expected. This PMI logic, 50 is neutral, above 50 is growth, below 50 is contraction. And the faster you go, the further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So mild contraction on manufacturing ends up being a little bit worse than expected. But the essence of overall growth, in that it's powered by services, ends up looking better. And so we get this rally that extends. Then, of course, the auto tariffs come. The whispers of them appear during market hours yesterday. They don't get confirmed until after, but there is a sell-off on those grounds. That makes sense. Markets, much as the Fed, are waiting to see what these particular tariffs do. Nobody knows yet, but they do know that historically the tendency is for tariffs to be bad for growth and to be an uplift on inflation. And so while nobody knows what any of the tariffs that have been implemented since the beginning of 2025 will ultimately do, because they haven't really worked their way into the markets and through inventories yet, what we do know is that the history has a precedent, and until we know otherwise, that seems to be what the markets are operating on. So not surprisingly, stocks come down. But notably, they don't break the bounds of this move higher. They hold up. This former cluster here, where the market was stuck after the Fed, then broke cleanly higher, it's been retested, but it hasn't been overturned. And so the series of higher highs and higher lows here remains intact. The market pointedly didn't like the news, but didn't think enough of it to really restart the down move. Fast forward to bonds and you get a similar story. If historically, again, the benchmark is more tariffs are inflationary, it makes sense why interest rates would go up here. This, of course, is the 30-year bond. It's down a bit, meaning interest rates are up a bit, and it doesn't sell off back into this more ominous area. It sort of holds its recent swing highs, much as on a backtest as support, that is. So again, the market doesn't run away with the announcement. It doesn't like it. It follows a familiar sort of playbook for what it thinks tariffs will do, but it doesn't want to have the big move at this point. Same thing for the dollar. Typically, more tariff news has been positive for the dollar. On the risk aversion, of course, dollar is a go-to haven asset because of its unrivaled liquidity in times of risk appetite stress. Also, there is the expectation that if you tariff imports, then demand will shift to the extent possible to domestic firms, and so less money, as it were, is flowing out through the trade channel, and that's somewhat supportive for the US dollar. So when you get a tariff news headline type of a thing, typically the dollar has strengthened, at least in this recent go round. But not only does it not strengthen, it weakens, and even so against the euro, considering that the auto tariffs hit specifically at countries and regions that export a lot of cars to the US, and of course Europe is very much on that list. Just list all your German automakers and you can see why. So the markets have a curious response. They don't buy dollars. They don't crash the bonds and run up interest rates in a very dramatic way. And stocks manage to hold up. it is as if there is reinforcement of this idea that if the White House is not going to respond to market discipline, then everything's okay and can be weathered as long as the Fed does, as long as the Fed comes and rescues everybody. And the message from the Fed was, of course, we see what you see. We commiserate with your concerns about this uncertainty. We don't see signs of economic weakness in hard data, though we also see the survey data that you see. So we know the concern. We've sat up in our seat, as it were. We see that there's been a clear level change in U.S. economic growth dynamics, looking at the survey data from here, all of the second half of last year, to here, essentially the lower part of the kind of post-COVID settling range here. So if we see it in the hard data, the Fed says, we will act. Therein is the focus going forward. We can see that in the wake of the Fed, the markets have basically aligned with its policy prognostications. So if we look at what is currently baked in, the markets see 92 basis points in rate cuts between now and the end of next year. They're narrowly expecting more of them to be front-loaded, 60 basis points on the menu for this year. So full 2 cuts and a little bit less than a 50-50 shot at a third one. And next year, 33 basis points, so at least 1 cut with about a 50-50 shot for a second. All in, that's about 100 basis points, 92 specifically, but almost 100. So 3 cuts erring on 4 that are currently baked in. And we can see the markets have been relatively steady in that through the run-up into the Fed and thereafter. And of course, that lines up with what the Fed's expectations have been. As we just said, they too don't know what this particular round of tariffs, those instituted so far in 2025 and still coming, will do, but they do know what the history is. And so in the last adjustment, we get lower GDP growth expectations, higher inflation expectations, but the path of rates remains unchanged, as though the Fed is saying, well, we have to do this for the forecast because all we have is the look back. We don't know exactly, but on policy, we're going to have to wait for the hard data and then we'll see. But as we can see, from 4.4 to 3.9 this year, that's 50 basis points. And then for next year, from 3.9 to 3.4, that's another 50 basis points. So 100 basis points for the Fed, 92 for markets. Take away liquidity considerations and speculative fuzz, and this is basically alignment. So now the key question operating in markets is, will the Fed in fact ride to the rescue? That, of course, then becomes a question of monitoring this quote-unquote hard data. And the first inflection point here, near term, is this. This comes at us over the next 24 hours here. This is the U.S. PCE inflation data. This is the Fed's favored gauge of price growth. And so, needless to say, an important consideration for the markets. And so it will be very interesting to see if, in fact, what we are going to see here is going to be some sort of a reflection of what the markets think the Fed might do. And this is then really where the rubber meets the road for markets. Because one thing that, of course, we know about the PCE numbers is the market is generally pretty good at benchmarking them once we have the data from the CPI and the PCE releases that come, or the PPI rather releases that come out with the same sort of period, but are released earlier. And of course, we've had those releases already. So now markets ostensibly have what they need to construct a pretty significant and accurate forecast of what this data might look like. And this is then, from a speculative kind of perspective, the key question here. Does whatever come out in this release have the ability to really move markets if it's not going to surprise very much? And therein, you sort of get the duality of economic data. On the one hand, of course, it can be significant for its substance. Data comes out, it's a little bit different than expected. Things change. Markets have to reprice for different expectations. And so we can see here the expectation isn't really a meaningfully dramatic one. 2.7% on the core is a little bit of a wiggle within a familiar range. 2.5% at the headline is unchanged. Doesn't look like we'll get much substance if these forecasts hold. Then, of course, the question becomes, okay, well, if the forecasts hold, if the data is not controversial, might it still be market moving? And the answer is yes, if the markets already have a default in mind and they're just waiting to get to the other side of the event risk. They don't want to front run it because they don't know what the data is going to say, but as long as it says what they think, that will be a way to get event risk in the rear view and have confidence to go do whatever the markets wanted to do. Just now with event risk out of their way. And how that might work here and what the default is, that could be an interesting consideration. So if we look at the Cleveland Fed's forecasting of these numbers, we can see that generally speaking, the numbers for the headline hew very closely to forecast. This is that quality forecasting that we're talking about. For the core, it can veer a little, but as we can see, most recently we're sitting right in line. And so the expectation is we go a little bit lower on the core. We go a little bit lower on the headline. That's a little bit clashing with expectations for the core. That might be some kind of a substantive deviation, but as long as it's not a big one, it need not sort of meaningfully uncouple Fed policy expectations. As we said, the expectation is that you go from 2.6 to 2.7% on the core. And when you look at what's being implied in this view from the Cleveland Fed model, you're looking at a little bit cooler on the core, closer to 2.6, so maybe unchanged rather than higher. And for headline, the forecast is 2.4, not 2.5. So again, a little bit lower. We'll see if that's the kind of surprise we get here and what the markets make of it. If it's a really dramatic surprise, then of course recession risks come back because that implies some sort of a deeper concern about the economy. But if it's a modest surprise, much as we saw with the CPI report, well, then the economy is creaking along, but the Fed is more likely to ease. That's good news. This is what we saw from the CPI report, where the core was a little bit lighter than expected, 3.1 versus 3.2. The headline was a little bit lighter than expected. And of course, that was the beginning of the markets looking at their anticipation for the Fed and say, okay, we can start to come up off this bottom a little bit because the Fed is going to look at these CPI numbers and help us. If the PCE does something along those same lines, then that becomes a sort of reflection of the default. If we consider the annualized dynamics here, which is what the Fed looks at very closely, we can see that we've basically started to inch a little bit lower on the 3-month annualized rate, but the 6-month is still looking a bit elevated. So from a near-term dynamics perspective, as long as you don't upset the apple cart and you come in a little bit, but not a lot, you start to get the sense that, okay, the markets are going to look at this as benign disinflation, not hair on fire, the economy is falling apart, decline in price impulse. And so that could be something that's sustainable here for risk sentiment. That same CPI report, though, did have a little bit of an interesting nuance, and this might be some of the hard data that the Fed is looking at. If we look at what happened with the CPI data, we can see that it's certainly declined, both at the headline and core, but not because of anything in goods or not because of anything in food, and the contribution from energy was negative, but relatively small. This, however, is very interesting indeed, because it suggests that most of the disinflation we saw came from the same place where most economic growth is coming from, and implying a weakening demand pull impulse on prices. That is to say, if the core services sector is weakening such that there is less upward pressure on prices in that sector because less demand, so less competition for supply, so weaker increase in prices, well, then that's exactly the hard data that you'd want to see to tell you the economy is beginning to roll over. Why is core services so important? Well, that shouldn't be that much of a surprise. Again, look at what's driving growth here. The composite index that tracks the overall economy is following services. Manufacturing is kind of over here by itself. And that's because the overwhelming majority of U.S. economic growth is generated through services. The overwhelming share of employment is in services. And of course, most inflation then is in services. And so if we get the internals of this report, and it seems like there is a significant reshuffling such that core services looks like it's weakening, and that's where the downside surprise or any downside surprise might come from, well, then the hard data for the Fed may be there. And if it's a really significant adjustment, then we go back to recession fears, and this is bad for risk. But as long as it's tolerable and it beckons the Fed into action without really raising alarm bells about the economy beyond where they already are, and it sort of echoes this, then you start going down the major assets and get the sense that going into the U.S. jobs report next week, the sense might be, oh, the Fed is going to ride to the rescue. And indeed, that might explain why stocks might bounce, having held here, why bonds might bounce and interest rates come in, having held here, and why the dollar, which has already started to weaken, may actually see more of that and at least come into this area on the euro as a more dovish Fed expectation moves through the market. And that is macro money for today. As ever, we are here Monday through Thursday right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris tomorrow, as I am every Friday for Futures Power Hour, back with Victor Jones and Tom for First Call on Sundays. That's coming up at Market Open next week. On with Victor for The Price of Truth on Tuesdays. Back with Chris for Futures Power Hour Mondays as well. Writing for the news and insights portion of tastylive.com. Opining at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Happy trading. Macro Money is back next week.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
We built Tasty Trade for today's traders. See it, click it, trade it. Customized charts with hundreds of indicators. Actually see your potential profit and loss. Quickly roll to the next expiration. See gains and losses even when you roll. Cancel, replace, duplicate, or invert orders with just a few clicks. The tools, the data, the knowledge. See it, click it, trade it. Join the club, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Veneta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
What is going on, and welcome back to another segment. Today's Thursday, one more trading day of the week, but we're back with Gus. Gus, how are we doing?
I'm doing good. I must admit I'm a little bit stressed out right now. I have a flight after this stream. I'm going to the airport, and they moved it up 40 minutes. I didn't know they were allowed to do that, but it sort of messes with my scheduling a wee bit that I had so carefully planned. So that's 40 less minutes that I have, but I still should be able to make it without issue. In other news, someone has moved a Tony dressed as Waldo cardboard cutout, very life size, into this room with me, and so I got Waldo Tony staring at me while I do this stream. Like it. So it's a fun one. It's been an eventful day.
Nice. Well, on the bright side, I like that jacket, by the way.
Thank you.
I peeped that. That's pretty dope. Yep. Yeah, moving the flight. I just Googled it over here. Apparently they can do that. That's never happened to me. And that's unfortunate. When it comes down to flying, traveling, and you're so meticulous with the timing and the schedule, I didn't know they would do that. So I hope everything works out on your end.
Yeah, still should be fine. Hoping for light traffic on the 55. I'm flying out of Midway, not O'Hare, so that should help with security and overall stress of the operation. Slightly smaller airport, so yeah. We'll see. But I'm optimistic.
They're not. I hear they're definitely not pushing flights up at what is the other one?
O'Hare, yeah. They only push flights back at O'Hare.
They only push flights back. No, what's going on, everybody? Thanks for joining us today. Gus and I wanted to get into a little tour to market and then also building a custom watch list specifically labeled risk reward. What we were previously talking about earlier. Gus, why are we making a watch list called risk reward? We got something coming.
We're making a watch list called risk and reward because the whole show is about to be called risk and reward. We're doing a full rebrand, which is going to be here hopefully Tuesday. I'm going to say hopefully because I'm not involved with the moving parts on the graphics side, so I don't want to put anybody on too tight of a timeline. But hopefully Tuesday we're going to be rolling out a full rebrand, and we will have our own show. You guys will no longer have to see Julia straight into me. I know how disappointing that can be. So it's we're very excited, and we and you, the audience, along with us, are going to build a risk and reward specific watch list. So all of you hanging out here today, you get to be a part of history. You're gonna be looking at this watch list every time we stream for a little while. So it should be a fun one.
Yeah, definitely. And then when we get into that watch list, bro, Tesla has been the talk of the town. I think that's what has been carrying most conversations lately. And then even just looking back to what people were previously talking about on the other segments today, Elon Musk, tariffs, Trump, and companies that build vehicles. That's like the talk of the town. So maybe we've got to throw Tesla in on that watch list. But before we do that, we'll check out some of the positions. Another volatile day in the market. These are the few that we have on. Gus, it was only right I got on DraftKings.
I'm being told by chat. I'm being told by chat that the cutout is named Flat Tony. My apologies, everybody, for it's a play on Flat Stanley, not Where's Waldo. Issue. I would like to issue a correction, retraction. If you guys want me to cry, I will. Just let me know. But yeah, my bad. Sorry,
I do know the cutout you're talking about. You said the cutout was running around, or what happened to the cutout?
It's just gotten moved in here. Yeah, it's just Tony's just staring at me is all it is. So yeah. I got the spirit of Tony guiding me along this stream here.
I think Flat Stanley was one of the first stories as a kid I think I learned about and was reading. Flat Stanley,
Flat Stanley was fire. Yeah. Our second grade teacher actually made us make and then mail off Flat Stanleys to, it could be a relative or just anybody you really? chose. They were supposed to write a note and send it back. And I sent mine to then Bengals quarterback Carson Palmer. He didn't get back to me, so Carson Palmer can. I
thought you were going to say you got back to me. I was like, no way.
No, he didn't get back to me on my Flat Stanley, and then he was mean on his way out of Cincinnati.
That is proof though. You've been a Bengals fan for some time, because that did throw me off last time when we were talking, and you just brought up a story from second grade. So
yeah, I got receipts.
I got you. But yeah, no, DraftKings, it was only right? I know you were checking out March Madness. I think it was last weekend. I know you said that went pretty well. That was really dope. But it was only right to get on DraftKings. I know even the CEO of DraftKings was out on CNBC and other headlines talking about their app, because we know speculation goes crazy, especially during this time in March. So I wanted to take part in that volatility a little bit. There are a few different underlyings I could have went through, but I ended up going to DraftKings, sold a naked put on it. Right, it was a cheaper underlying, so I was like, you know what, we'll sell a naked put. Didn't cost too much. It was $1.90 or it was $1.84. So I'm gonna have to be a little bit more on top of this position in terms of managing it and just keeping my eye on the volatility with DraftKings. But we haven't seen anything too crazy yet. I don't know what's really going to get this thing moving, but March Madness is upon us. Any thoughts on any of those underlyings in that industry and just March Madness as a whole, Gus?
Yeah, I got two resources I can point anybody to who wants to hear more about this. This week's edition of Luckbox is primarily centered around the gambling sector, and there are good pieces on DraftKings, Caesars, Flutter, whatever you so desire. Flutter being FanDuel's parent company. And I also posted a number of TikToks last week detailing March Madness and how it affects the gambling sector. And the truth is that your sentiment is correct. These companies do generally see their biggest increases in Q1 each year, and that's because the Super Bowl and March Madness both happen in that same quarter. So yeah, wagering volumes are going to be high. I would expect a good upcoming earnings. I don't think theirs is until next month or something like that. But bullish on the sector in general. I mean, like I've said before, if something is not legal in all 50 states and probably will be legal in all 50 states pretty soon, it's free growth. So macro, I like it. And micro, I think I like it too. I wouldn't be surprised to see some kind of sentiment run up begin to form even as early as 2 weeks before that earnings call starts to go down, because everybody and their mom knows that the gambling revenue is going up right now. So yeah, I think that should be something that you're able to bring home.
What is the hype about with these speculative stocks and apps, right? There's always some game going on. There's always a sports game going on. Depending on the season, it might change what sport is going on. But March Madness, is it what is the hype in terms of speculation for March Madness? Is it the brackets, the fun around, the speculation with things like DraftKings, or is it just the frequency of speculation that you can have, and then the relevant of that specific tournament? What is it?
Yeah, I think the volumes are a big part of it in general. It's just it consolidates on opening weekend. I believe it's 48 games into a 3 or 4 day window. And everybody has their eyes on them, and everybody is, wants to be a little bit more invested, and that's what sports betting allows people to do. So the volume definitely ticks up, and also I think that something that's really helping this sector is live betting. DraftKings specifically, I know in their last earnings report, it was actually north of 50% of their total volume wagered is live bets now, which is pretty absurd as somebody who doesn't live bet hardly ever unless
live bet. Yeah, as in somebody streaming their betting decision.
No. Like while the game's in progress, like taking action while you're watching a game. So you can be flicking through the channels during March Madness and then see a game that's close, and then all of a sudden you can pick a team to win and really have a dog in the fight, even if there's only 5 minutes left in the game. An increasing amount of all of these companies' handle is coming from live bets more and more, and they're doing more and more to flush people towards live bets because they also have the highest VIG, which is like the percentage that the book keeps, the hold, some people will call it. So usually there's about, let me do some quick math in my head, like 40 to 50% more VIG. You move from say 4% to 6% VIG when you place a live bet. Right. So the books want people to do it, and they're doing a really good job of getting people to do it.
So a quick question. I'm really showing my lack of experience with the sports betting side of things, but isn't all bets technically live? Like you can't bet on something if the event isn't going on. Or correct me on that if I'm wrong.
No, I mean, you are correct, but live betting, the term specifically refers to taking action on a game while the game is already in progress. Everything else, that's just regular sports betting. That's what you've been able to do forever when you bet before. What it was, in Vegas and even on these apps for a long, long time, I mean, until 3-4 years ago, really, was that if the game started, you were out of luck. And then if you were in a sports book in person, sometimes lines would open back up at halftime. Like you'd get some second half lines and a couple of things that you could take, but it was only during stoppages. But now, like, you can see a guy make a three and say, oh man, this team's getting hot, and just throw money down without even thinking about it, which is perhaps a detriment to society. I don't even know if I would say perhaps, maybe definitely a detriment to society. But it's something that you can do, and these books are making crazy revenue on it.
One thing that I think is really funny is how in tune a lot of these athletes are, whether it's the NFL, MLB, basketball, or even the college students, the college athletes right now. I think it's really interesting how they're very in tune to the fact that people are betting on their performance for the night. And I'm sure they keep up with it. I'm sure they see all the chatter online, but there's such a dramatic shift of the sports betting element. And then just the players just being involved with that and knowing what's going on. It's just a different type of environment I don't think we've ever seen when it comes down to sports betting, and people knowing that, I know people want me to drop X amount tonight, and I know people are going to be upset if I come up short tonight. And then they get even more backlash and more critical of their performance because of the sports betting arena now.
Yeah, and you make a great point in terms of how betting is starting to seep more and more into how sports are played in general and viewed and everything about it. And I would add that these sports leagues love all of this, because when you have money on the game or you throw down a live wager in the middle of the game, you're going to keep watching it, and those eyeballs help all of these leagues, and that's why they're so prone to, every single league has an official gambling partner nowadays. You can't watch an NFL game without seeing a gambling commercial every commercial break. I mean, it's pretty crazy. And I mean, they have the money to throw around, and it's I mean, I think it's an industry that's only going to grow unless people start to get wise to the fact that this is not really a beatable game in the long term. There are professional bettors and there are people who can do it, but that is their full-time job. I mean, they spend 8, 10, 12 hours a day diving into things, mulling through advanced statistics and doing all this stuff just to find little 1.5% edges. And that's something that I would always throw around, and I throw around to my friends sometimes, is that you can't define what you think your edge is to me. I don't think you're going to be profitable long term. And that doesn't mean you shouldn't gamble. It doesn't mean you shouldn't have a little fun. But don't think that this is going to be a career if you don't have a model and you can't even quantify the amount of edge you think that you have.
Right. Absolutely. At least adjusting your expectations towards that.
Yeah. I see Bob in chat saying, avoid the live bets because the VIG is too high. It is a lot of VIG. And you got to be really sure of your convictions if you're going to do it, because you are just losing edge on that. It's way, way harder to beat. But I made lots of money. I made lots of bets on DraftKings today for MLB opening day. Heck yeah, Bob. I got a few out myself. Unfortunately, Mets was my biggest play, but everything else is going well.
Yeah.
Cruising towards 3-1 at the moment.
There we go. And then now these referees, umpires, they're under a microscope, because you're getting calls wrong and you're messing with when you're messing with people's money, just know you're going to have a different type of reaction.
It's true. And
the criticism.
I would also say, guys, don't death threaten players when they don't cash your parlay. Sorry, I don't know why this needs to be said, but it's becoming a heavily increasing issue. All these athletes are coming out and talking about their DMs. You made a bad bet, dog. If you lost, you made a bad bet. Yeah. It's not that the guy played bad or whatever. It's that the spots didn't present themselves. And sure, sometimes a guy plays bad. Yeah. You took that risk, so don't be mad when that tail of the variance comes out to play.
Yeah. The market's going to do what the market's going to do.
Yeah, you got tail risk. You always have tail risk. Whether we're talking options or whether we're talking sports betting, tail risk exists. And when it comes to bite you, you don't get to death threaten somebody. It's crazy town.
Absolutely. Words of the wise. Hopefully we see something in DraftKings. I know it's still a little early. Not much movement from DraftKings, so we'll see what goes on in that side of things. Market overall down. SPY, S&P 500 down about a point and a half on the day. We got a position in QQQ as well. That's down a little bit more than SPY today, to almost 2 to 3 points on QQQ today. And then also we have Meta. These ones were looking really well, Gus, and I got to start managing these ones probably by tomorrow. I was talking with Dr. Jim yesterday a little bit. He's more leaning towards holding these for the next 3 weeks for a type of pop in the market to then exit these. Even a break even at this point is a W in my book. But we have these three on. Still need to start managing Meta and QQQ specifically. And then May 16th cycle, we have DraftKings, which we sold the naked put in. So we have these three right now. And again, QQQ, the thing that I said yesterday with Dr. Jim, I was like, you know what, maybe tomorrow I take off Meta or I just take off QQQ. But then he was advising like, well, whatever you do, whatever your process is going to be, he said he would keep it the same and the same kind of thought process and decision-making process amongst the two rather than doing one or the other. So you have just a consistent process. So we have these three. Gus, I don't know if you're in QQQ or SPY or any of those, but another sell-off in the market. I don't know if it was just a little bit of a relief rally that we saw in the beginning of the week and maybe we start to make new lows again. But this market is volatile. Definitely a different environment we've been in since the first couple months of the year, or even ending the year last year, coming into November and December.
Yeah, I do. I have some Qs and some IWM exposure right now, both long delta. Okay. My Qs, fortunately, are 95 DTE, so that's pretty much just back of my mind.
95.
I would need it.
Oh, you're chilling.
Need it above 485, 95 days from now. So hopefully we can get that move. Although I don't know anymore. And then I have a little crab trade on IWM that is in the green right now. Yeah, just slightly green. Actually, $1 is my P&L since open. I'm $1 in the green.
There we go.
But that's going on as well. So I have two April 17th and then a May 16th in there. Obviously, would need to take some kind of action before the April 17th go. So that's 21 DTE. I didn't realize as I was doing it because they were all added gradually, but I have a lot of April 17ths cooking. So in about I don't know, maybe Monday is when I'll start to give some of those a nod, or maybe I'll let it get closer to 14 DTE depending on market conditions. We'll see. But yeah, only trade that I've made this week was Chewy. I took that Chewy earnings play that I mentioned on Tuesday. That really could not have gone better. They had good earnings Wednesday morning. I was promptly up, and I didn't even bother letting it run until Friday. I took 80% profit and headed home. No reason to take the extra risk for the last 20%, in my opinion, especially when I play.
What was the expiration on that one?
Friday.
Was that a weekly or
it was a weekly.
This Friday. It was a weekly.
Yeah.
Nice. Any of the underlyings that you have on right now that you think are going to throw in this risk reward watch list once we start building it out here in a second?
Yes. I would say so. Okay. There's nothing, I don't know if there's anything that I have options open specifically on, but I do have some things that I would like to add to the watch list that I have shares in. I'll give a little spoiler, or we can just transition in now. I've made fictitious indices here. I have a disaster index, a war index, a plague index, pandemic index. You're
not optimistic. You're not optimistic.
And then also Also, my favorite one, which I'm calling a sin index, or we could call it the bad index or something. But that's gambling stocks. I also figured out that there is an ETF with the ticker BAD, BAD. And that stands for betting, alcohol, and drugs in this thing. Oh, wow. It's just it's gambling companies, alcohol manufacturers, and cannabis companies are the three that are going on.
I like those. I like how you group those off.
Yeah. So I needed a way to kind of break it down, but we can dive into the intricacies in a minute. But those are those.
Yeah.
Yeah.
Thank you, Mike. Some of those into the risk supported. If we come over here to the watch list section, I know we have AI stocks pulled up right now. That's another new watch list that you can check out on the platform. Just go to the drop down menu. I was peeping that. I was like, okay, we have a certified watch list for AI. But over here to create the watch list, really easy. Come over here to this add button or this plus button. Click on that. And then it's going to just bring up the windows to create the list name, and then you can add the symbols that you want to add. First one off the bat, I just got to do it. It's the most controversial underlying right now in the market, and I have to do it. Risk. Let's add this in there first. Risk and reward.
Rocking with the ampersand. Yeah, I'm agreeing. That's what it's called.
We gotta have it in there. It's one of the most relevant underlyings right now that is like in play almost all the time, and it also has a lot of conversation around it.
Damon, I like it, but should they all be combined into a 4 horsemen of the apocalypse index? That's true. Maybe you could just call this whole watch list that we're about to make the 4 horsemen of the apocalypse index. I don't know.
Oh yeah.
I did realize that this is what I've put together is sort of a gloom and doom sort of list here, but
it is a gloom and doom.
We like risk. You want to take a little bit of risk. The most volatility comes through in the most uncertain times. So,
oh yeah.
Okay. Also, boring ads. Do we want any ETFs? We want to SPY or Qs or AWM, anything like that?
I think we have to. It's only right. I'm gonna lean towards SPY was always Old Faithful, but it's been turning into QQQ now. So we can go SPY or QQQ. Which one do you lean towards?
Yeah, we can do Qs. I'm fine with that.
Okay, let's do it. Let's roll with the Qs then.
Yeah, generally, kind of all three are pretty interchangeable to me.
If we can add this.
And yeah, throw stocks out, guys. If you guys have anything you want added, we'll add it. We don't have a lot of structure going here. I would float Waste Management as my favorite sleeper stock, old WM.
Really? Okay, that's a sleeper build.
Yeah, I'm telling you, WM's an earner. I feel like having it on this watch list. There's going to be some days where everything is red except Waste Management, and I get to say, "There's my goat."
The other one, QQQ. Who is your GOAT? LeBron or I don't mean to start this right now, but I'm just curious. LeBron and careful, you know where you live.
It's true. It's true. I got a very concise argument on this, so I can give it real quick. I think that Jordan is the GOAT. I think that he is the greatest player of all time, but I think LeBron is the best player of all time. But
what does that mean?
I think that LeBron is the best player to ever touch a basketball, but I think that greatness is a broader term that involves accolades that being 6-0 in the finals contributes to, and doing all of the winning stats. Everyone likes to always say, "Oh, well, you're just counting rings." Is Bill Russell the GOAT?
Right.
But yeah, Jordan, what he did in the era he did it, undefeated in the finals. I think he's the greatest. But I do think LeBron is the best basketball player ever. That's my take.
Oh, that's a good take. It is a good take. There's a fine line in there. I think that and I just got one question. What is the best player, as in skill wise? Like Jordan, he got another level of skill, a different level of tenacity than we've seen in the game of basketball.
That's what you're saying?
I was saying, is that in the ballpark of what you were saying, or where were you getting at?
No, I'm saying kind of the opposite. I think that LeBron is more skilled. I think that if prime LeBron and prime Jordan played each other, I think LeBron would win. But I think that there is more than just skill that goes into greatness. So that's kind of my whole argument, is that LeBron is the most skilled. We've never seen anybody better than LeBron pick up a basketball. But Jordan is the greatest because greatness has, like Alexander the Great. If Alexander the Great was 4 and 6 in his battles, they wouldn't call him Alexander the Great, would they?
That's true. That when you put it that way, that ends the debate altogether. I just threw in DraftKings so we can keep an eye on the speculation market. So we threw in DraftKings. I threw in NVIDIA as well, just because NVIDIA is another one of those stocks that I feel is still relevant and it still has a lot of volatility.
I agree.
But that's what we have so far.
I agree. How about some VIX? How about some VIX? Good.
Some VIX. Yeah, I got to pay attention to VIX.
Yeah,
you were over here trading VIX. You were buying some spreads on VIX. You were making money on it too.
I will trade VIX.
Bro,
yeah.
Every time, and it's funny because you're trading the VIX. I remember I would ask Nikki sometimes or Dr. Jim, be like, yo, do you guys ever just trade volatility sometimes? They're like, no, if I try to get exposure to volatility, I usually do X, Y, and Z. And then we're hopping on. You're just long in VIX.
I'm the opposite. I'm simple brain. I want exposure to volatility. Right. I'll just buy or sell the volatility. It's right here. I can just trade it.
Yeah. Alexander the Mediocre. Okay.
Yeah, exactly.
They're a LeBron fan.
You get it, Mike. All right. How about what else we got? You want to do I got cannabis ETFs listed on here.
What you got? Most relevant cannabis ETF. Let's throw one in there.
There's two. Well, there's three, but I've excluded the one that has a lame ticker. So the two that we have to choose from are YOLO and MJ.
Okay. Michael Jordan or YOLO. YOLO just brings me back to middle school. It just brings me straight back to middle school.
Y'all ever heard the motto by Drake? Oh man.
Oh, I can word for word.
I could go bar for bar.
Bar for bar, word for word, stock for stock, underline for underline. Everybody's probably like, "What are they talking about?" The motto.
Y'all gotta.
It's one of those you have to be there to know.
That's that old Drake. That's that pre-Kendrick beef. That's way
pre-Kendrick beef. We'll go with. I just went with MJ, so we got a marijuana underlying in there. I think another one that we could do. We do have Tesla. I really liked Rivian. I'll stick to the top EV for now. We got VIX in there. We have, and let us know if you guys have any more suggestions we could throw in here.
You want to get some like foreign, like a China or Europe ETF going here?
Yeah, let's get a China ETF in there. I want to throw in BABA too. I know it's not the ETF, but
sure.
I'm gonna throw in BABA in there.
It's China NVIDIA. What do we got? Anybody got a China ETF for me? iShares China ETF. Give me the ticker. MCHI.
You could do the semiconductors ETF as well. I believe it was SMH.
That's right. Yes, SMH.
Right. We'll keep an eye on that sector as well.
Yeah. Speaking of some SMs, how about give me SMR? Let's get some nuclear in here.
SMR. Nuclear Power Corporation.
Yeah, SMR is
some SMR.
Yeah, small modular reactor is what they manufacture. I like a fitting ticker. FXI, I'm not sure. I gather that IEUR is going to be Europe, and I'm down for that. You want to throw that in?
Which one is that? IEUR.
Yeah, I assume that's perfect. FXI, chemical industrial company. iShares China large cap ETF. Yeah. FXI. throw that on in there. Google wanted to tell me about Fomex Innovations. So shout out Fomex Innovations for your matching matching ticker there.
We got a few in here. We got time for one more. Let's get one more in there. And then we'll pay attention to these underlyings week in, week out. We'll even put on some of these positions too.
Yeah, let's go. Let's get some pharma. What do you fancy? Novo,
Big pharma.
Lilly, Pfizer.
Let's go. Let's go Pfizer.
Sure. And then
let's go Pfizer.
I'll sneak in Lockheed Martin as well. Give me some LMT to go in there.
Some LMT. Well. We can get that in there.
Got to have the military industrial complex working for us here.
Okay, so we got Tesla, we got Waste Management, QQQ, DraftKings, NVIDIA, the Volatility Index, MJ, marijuana stock, BABA, some exposure to Chinese companies, SMR, SMH, semiconductor ETF, some Pfizer, and some LMT, some Lockheed Martin. What is Lockheed Martin?
They're a military industrial Lockheed Martin. They do like the F-22 is their plane.
Okay.
F-35. Those are Lockheed things. They make missiles and bombs and guns and you name it. Lockheed.
When we wrap back around to the next segment, we can throw Disney in there. I like that one too. We'll get some exposure to Disney. We'll do that. I know we added Apple as well. I was debating on Meta. But I know those Mag 7s. I was like, do I really want to be that guy right now?
Yeah, I'm kind of the same. Like, I feel like if you got Qs, like you're basically just just the Mag 7 ETF at this point. It's whatever.
Absolutely. Anything to add before we wrap today, Gus?
No, nothing to add. Hoping I can get out of here and get to my flight. Everybody, prayers up for low traffic on 55. That's what
praise up for Gus. Everybody praise up for Gus. But no, that's gonna wrap it up for today's segment. Again, whenever we circle back around here next week, we will have the risk and reward segments that we'll be getting into. Gus and I have some ideas that we're excited to talk about, and then we'll keep checking out our risk and reward watch list. So, if that's gonna be it for today, thanks for taking the time to hang out with us, and we'll catch you guys next time. Peace.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Oh, yeah. Tasty Nation, good morning.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing is moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Oh, yeah, it is Thursday, March 27th, a little bit after 5 p.m. Central Time. The best time, you know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile application. But if you want to be part of the discussion here, did we get it? Did we get it? I don't think so. If you want to be part of the discussion that you're going to see on your screen at some point, I just missed it. That was my fault. My apologies. I always forget which finger to use. I always forget which finger to use. If you want to be part of the conversation that's happening on your screen, then do us a favor. Head on over to Tasty Live's YouTube channel and hop in the chat. Start bashing your skull, phalanges, metacarpals, whatever is available to you. To start typing in characters and spoof the Google algorithm into putting us in front of as many people as possible. Resharing the screen for the people in the booth. My apologies. Thanks for your patience. Teams is making me nervous, man. This thing is not looking like it wants to have a good time today. But speaking of the people, we should say what's up to the people. What's up, everybody in the chat? Catan, I see you. Brian, the YouTube goat, how are you, my friend? Victoria, great to see you. Sleepy Mocha, all the degens, I agree with that. Soul Train, Eric O, what's up? Shout out to you. Ton, Zebra, and all of you savages. Shout out to all of you. What a day, what a day. I almost panicked. I'm not going to lie to you. There was a point at today where I kind of kicked myself, like, why didn't you just sell futures and bring your portfolio deltas down? Like, why are you flirting with this? But they let me get away pretty easy today. So not a bad day. S&P down 1/3%. Soul Train says tomorrow update. All right, before I get going on my whole shtick, that's all I want. Let's do this binary predict the future. It's a 50-50 chance anyway. Do me a favor, everybody, in the chat, tomorrow, up or down. You don't need to tell me 1/4%, 0.5% in either direction. We don't need to do the magnitude of the move. All I want is your binary direction. End of the trading session tomorrow, up or down. And we'll go S&P just for kicks because I know there's some variance between the majors. S&P up 1/3%. The NASDAQ was down 1/3%. Nice job, Victor. The NASDAQ down around 2/3%. The Dow Jones, your grandfather's favorite index, down 1/3%. And the Russell down a little bit more than 1/3. Let's call it 2/5%. VIX, my babies, a little bit elevated at 1869. I don't like to do the percentage change of the vol. I think it's a bit silly. because it's already an annualized percentage measure. So we'll just say it was up to 1869 here today. And VIX, Forward VIX future, the active month, J, up to 19. Take a quick look at the VIX term structure, which I had up a little bit earlier before we started the show. But again, very, very normal VIX term structure here. And I would call this an elevated VIX term structure as of today, right? 19 is the lowest, and this sort of elevates itself up to 20. You could make a case that the long-term historical average somewhere around 18, maybe a little lower, maybe a little higher, but let's call it 18. So you've got a VIX term structure that is in some way elevated above normal from now until the end of the year. Which personally I think makes sense. I think we had a little bit of that conversation yesterday. I want to say Chris brought up the point on term structure. I think he was talking about both price and whether or not it makes sense to be in contango versus backwardation. I think it probably makes sense right now to be in contango. I see no real reason for like this super elevated fear right now that would bring us to backwardation. It doesn't seem like you have real capitulation out there in the market, real fear, real reach for protection in a meaningful way for the market to see that fear dissipating within the next 3 months, which is what you would need. So I think the normal term structure makes sense. The normal term structure above long-term average also makes sense to me. And when I say makes sense, it means it's probably at like, somebody gave you an over-under. You could go over, under, or push. I think the market found in my personal opinion, your opinion might be it's always at the right level. My personal opinion is it's at the right level. It's not cheap. It's not so expensive that you just have to sell it. You just have to pound the short side of like VIX futures or just vol in general. So I think it's probably found a decent level here. And what do you expect at a vol of like 20? What's that? A little bit more like 1.25. Basically, 1.25% moves is the annualized rate of volatility. You should expect 2 out of every 3 days. We should see 1.25%. So I do think if we string together a couple of more down days of like 0.5% to the downside, even if you're moving to the downside, the magnitude of move would not justify a volatility level in the area that we're at. Let's see what you guys were saying about the directional change. The directional change bets. A lot of you don't want to play this game, apparently, but I'm okay with that. We're just having a little fun here. Brian Watson says flat. Brian Watson is the guy at the cocktail party. You flip a coin, you say, Brian, heads or tails. And there's the statistical probability it could theoretically land on its side. And Brian Watson is the guy who calls that as the outcome. Because why not? Just to make statistics a little bit better known in the room. Todd says up. Damon says down. We don't really have a directional bias here. It's a 50-50 world, which I kind of think makes sense. Honestly, that's why we have a long portfolio deltas. But here at like 58, 59, thought it might get choppy. Where do you play it, man? Do you play the chop up or down? I don't know that I have a strong directional bias yet, and that's probably it's gonna come back to bite me. Really, here's what that's telling me: the lack of confidence I have in my in the directional bias of the market. It probably just means I haven't sewn up the risk in the portfolio enough to be comfortable. So I probably need to do some risk management, quite frankly. Catan says it lands on the side. See, Brian says on the edge. I told you, you guys are you guys are those kind of people. I'm not mad at it at all. The bond move, honestly, I've loved it. I've loved this bond move. Slightly down maybe 4 out of the last 5 sessions. Bonds at 120, 115 and 23/30 seconds. And we've fallen very quietly from the 119, the upper 119 handle. Very, very quietly, this long end, man, it's lifting, and the short end's not going anywhere. Not going far. We have risen a bit from the 390 level. We're back up at 410 in the short end of the curve. Or I should say 4 for the 2-year. But ever so slowly, that long end has been lifting. And again, I'm curious for all of you that are going through and doing the math to figure out the term premium, all that stuff. I haven't looked at it. But to me, it clearly says one of two things very easily. It either means the growth concerns were overdone a little bit, that the market's, I don't want to say overdone. I think that the market is seeing the potential of growth concerns over the long run, or growth over the long run, and or the market is pricing in inflation over the long run, starting to price in inflation over the long run. And this is sort of what happened last time we went through this cutting cycle of September. As soon as you start dropping rates, what does everyone think is going to happen? Well, the whole curve is going to cooperate, and the whole curve is going to shift down. What actually happens, you start cutting rates, and the long end starts lifting. The yield curve steepens. We move further out of sort of this weird inversion territory. The 2s, 10s aren't inverted, but we still have some part of the curve that's a bit goofed up. That's a technical term. And but we seem to slowly be working our way out of this. And the market in the short run, like the 2 years, are expecting rates in a couple of years to be at 4%. And in the Fed funds rate and the very short end of the curve, we're at 450. So in order to sort of uninvert that, you would expect from some point between now and the next 2 years that your Fed funds rates are going to be lower than 4. And the question is, as they continue to drop those short end rates, do you continue to see long end lift? And I have no real reason. I know there's some theories here and elsewhere about it depends on what the cuts are. I don't know that I buy that. I think the long end keeps going up. It's I just think the long end's going to keep going up, and it's going to keep going up because we've never found ourselves in this really awkward is the best word I can find for it, fiscal condition or fiscal position to the extent that we are now. Maybe you can make a case that once we had a similar condition, but not at this level of global leverage. And I think, every penny that we got to borrow, the market's going to want us to pay up. And, I saw something, Ray Dalio went down to Washington to try to have sort of a bipartisan discussion to try to get some commitment on both sides of the aisle to make a push towards getting the debt to the deficit to GDP ratio, the deficit down to 3% of GDP. That's the easiest way to say it. And it seemed like he used a lot of positive language in the post. Maybe I can show it to you guys real quickly. I won't show you the video, but at least the post here in a second. This is funny because this was always the rule that Warren Buffett had said. He said that he could fix spending in Washington very easily. You just say if Congress spends more than 3% of GDP, they have run a deficit greater than 3% of GDP, then they don't get paid, and they're all not eligible for re-election. And then you effectively align their incentive structure with fiscal responsibility to the American people. And I remember, I've never forgotten that line. And so now I have Ray Dalio. It says, I'll read you the full post. I was in Washington, D.C. this week speaking with economic leaders of both parties to go over the mechanics of the serious debt problem to see if they can agree on it and to see if there can be agreement on what to do about it. While I'm happy to report that they all appreciated going over the mechanics and agreed with the need to cut the deficit to about 3% of GDP, they are now in the middle of their debt limit and budget fights, which need to be resolved before they can undertake discussions about how to hit the target. He's basically like, they heard me, but they're in the middle of their stupid bickering. And so once they get done with that, I can come back here and see if there's any adults who are ready to have this conversation. That's how I interpret that, all those lines. Interestingly, there was some openness to have people make the 3% pledge and even setting up a bipartisan commission to figure out how to achieve it. Stay tuned. Yeah, man. So what are we running? I think we're running something like 6 or 7%. I think it peaked 7, but I think we're somewhere in the ballpark of 6%. So that's cutting it in half, man. And you know what that is? That's wealthy people saying, I'll fund your expenditures, but you got to make a commitment to get this under control. And without that commitment, I'm going to fund it, but I'm going to fund it at rates you're not going to like. And if you're trying to avoid the debt doom loop here, you better play ball. And the question is whether we have, do we have government participants that understand at some level the debt markets tell you what to do? At some point in time, you might think you have some very powerful government position. But whenever you are, there's this movie that I love, this old school movie, and in it there's this line I never forgot. I saw it as a kid, probably too young, and he said, in this world there are buyers and there are sellers. And that was a very impressionable line on me as a kid. And then when I got older, I realized really there are debtors and there are creditors. That's like the buyers and the sellers line is a good line to get you to learn to be an entrepreneur. The debtor versus the creditor, you learn that part, you've learned how power dynamics work throughout the world. And like, bro, you might think you got a really important job as a U.S. senator or House representative or even a president. But when the bond market starts talking, you better shut up and listen. I think to some extent, the bond market is now starting to whisper. And if we don't yell, it's gonna raise its voice. And I don't think anyone wants to see what happens when we get to that point. And the unfortunate thing about it is with certainty, the path that we end up on is cutting services. We've already gone down that path. But the very likely outcome here is cutting services, and likely, this is the thing that I don't think enough people talk about. I've tried to talk about it a few times here, but like there's this, sometimes in markets you go, oh, I didn't see that coming. That was a black swan. There was no way I could have known. And I think about Social Security out there on the horizon. And I've tried to talk about this a few things. There's just this massive cliff that's out there on the horizon. So the CBO says sometime in like 2033, I think was the latest estimate, 2033, 2035, something like this. We basically can't pay those bills. And we have all these boomers that are now in the tail end where they, they're twilight years. They're going to need a lot more health care and, expecting pensions and Social Security. And at that exact moment, in 5 years or so, let's call it 5 to 10 years, we're going to go broke. The Social Security account's going to go broke. We're not going to be able to pay it in full. And we have to decide what to do then. So at that moment, we have to decide, unless we've hit some miraculous growth trajectory, we have to decide at that moment, are we going to tax citizens more somehow, either spread it around, tax the wealthy, or you just print money to cover the liabilities. You want to take a guess which one of those is the most highest probability outcome? And I think it's the most obvious. It's one of the most obvious problems that we have coming up, and nobody's talking about it. Nobody wants to talk about it. And it's nobody's just going to go tax it, right? Nobody's just going to go say, okay, hey, you have money, I'm going to tax. I'm going to take it. Because what the other side, what capital's going to do is you go, even if they would be open to this idea, it never comes without strings. That's the debtor or creditor trap. Nothing is free in this life. So you know what happens? You want money to fund your current Social Security expenditures. You're going to reform it in the future, and you're going to change the retirement age, and who knows, probably something else, probably some other give-ups. But that's what happens, man. Our government's not just going to go take it from somebody. These people fund their campaigns. And that's why I love this story. There's a story about Ken Griffin. I've told this on this channel before, but there's a story about this conversation between Ken Griffin and J.B. Pritzker, who were sworn political enemies while Ken Griffin lived in Chicago, the wealthiest person in all of Illinois. And there's this story that was printed in one of the Chicago business magazines, from Ken Griffin himself. He said this was the story. J.B. Pritzker denies it, that when J.B. won the governorship, he comes in to have a meeting with Ken Griffin, and he effectively said something like, what can I do to make sure to earn your support? It wasn't like that, but it was something to that extent. And what Ken Griffin says is, he said, if you do something about pensions, which meant you need a amendment to the state constitution in order to adjust the state pension plan, which is one of the reasons we sort of have debt. We had debt downgrades. We have a really bad pension situation here in Illinois, and it's reflected in our credit rating. And so the stated conversation was, you do something about that, about the pensions, and then you have my support. In other words, and he goes, not only will I not get in your way, I will support you. And in that reading between the tea leaves, he's effectively saying, you reform pensions in a way that restores creditworthiness to Illinois, and if you do that, I'll freely give you the tax money that you need. I'm not going to stand in your way of an additional wealth tax or whatever the case may be. And this is, again, Ken Griffin's accounting of the story, according to the Chicago magazine, which you can look up. J.B. Pritzker denies that this was the conversation. And the story that I've told on this before, it doesn't matter if it's true or not. The fact that Ken Griffin tells you the story is it's telling you how he thinks about the problems that are out there, which is that if you want more taxes from me, you've got to tell them to give something up that is of equal value. And that equal value is you need to reform existing commitments. And not only do you need to reform existing commitments, but you probably need to change the retirement age and change this whole system to something that makes sense, and from his point of view, on a go-forward basis. And I ultimately think that's what's coming up, man. This cutting stuff around Medicare and all this stuff, that we're flirting around the edges, but none of this stuff is going to get us to 3%. And if they are going to make a pledge, both sides of the aisle, to get to 3%, you need to understand what comes on the other side of that. And we got this big ass cliff of Social Security hanging out there in a few years. You need to understand Somebody's got to do something about it. If not now, then at some point in the future. Anyways, but I keep things that keep me up at night. Victor, what keeps you up at night? Social Security's going to run out. We're only going to have enough money to pay. Is it 30 cents on the dollar or 70 cents on the dollar? I think in 2033. I don't know. The CBO keeps changing it. Anyways, I think I haven't put this on, but the more I start thinking about the steepener, the more I like it. The problem is we're already at 40 cents on inverted, so I don't think you're getting value here. You're already like at an extended point in the steepener. I think 41 cents might be as open as we've been, might be near or at highs for the last few years, since prior to 2022. So I think if I get the opportunity, if the curve flattens out a little bit to somewhere around 30 basis points, which seems to be the midpoint, something like 20, 25 basis points seems to be the low, 40 basis points has been the high. If I can get into 30 basis, we can get into 30 basis points again, I think I like the steepener again. I don't know that this is going to be a big trade or a big winner, but I do like the idea of putting myself on the steepener side. The more I think through this, and I especially like it after that bond rally up to 119. If I was a smart guy, I would have put it on at that point. I've waited a bit, so I'm not getting great price. So I'm not going to go FOMO here and just jump into the trade. But if they give me 30 basis points again, I think I'm going to hop in on the steepener trade. Let me see what you guys are saying real quick. Shout out to everybody. I just kind of went on my own thing for a while. So like when a member of Congress says once that they support term limits and then never does anything about it or mentions it again. I know, man. Bro, it's so obvious. It's so, I mean, that's the hardest thing, you know. The hardest thing about knowing like a handful of things that are like the obvious things that we need to do. And it's overturn Citizens United. It's impose term limits. It's align remuneration of government with the outcomes of their term. It's raise the remuneration. In my personal opinion, I think these people shouldn't make 195 grand. I think they should make a lot more. And I think if we pay them a lot more, we've got a better chance of making it a job that some of our best and brightest who go to school, maybe they're not creating sort of new forms of financial innovation. Perhaps some of them are coming up with policies to make the governed lives a little bit better. I think like there's just a handful of things that are sort of obvious low-hanging fruit, but it goes against the interests of those that back those in power. And that's why it's so damn difficult to get those things done. But it ultimately means, again, to go back to the prisoner's dilemma, that those that you elect have to be willing to go against their own long-term interest. So if you elect them and all they care about doing is getting reelected, that they're going to act in their own self-interest. But if you elect them and they care about being accountable to what you elected them for, then perhaps you get movement in this stuff. But it has to be like it's a nationwide movement of accountability of the people, which means that there has to be some awakening in the consciousness of the electorate. Give me odds on that. Is that a 5 delta? Do you sell that to your hands bleed? I'm guessing you would. I remember learning as a kid. Oh, I'm not going there. Neither a borrower nor a lender be. I always thought the cap on Social Security earnings was stupid, realized it was crap when I first exceeded it. And the payments, too. I mean, just such simple stuff we could do. Always change the definition of rich to include you. Yeah, that's very true. Though the skew of wealth right now is so obvious. They kind of have. I listen sometimes. I would listen. I don't want to go. Sorry, I slipped into this little political rabbit hole for a second. I will get myself out of it. But I remember being on one side of the aisle. I had always been a registered independent, but I had always, like 100% of the time, voted one direction. And I remember that there was a time when I'm like they're talking on my behalf. They're talking on my behalf. And then there became this point in my life where I'm like, shit, they're talking about me. It's like, we need to do that to people that make this amount of money or that amount of money, or people that do this, like they trade in the stock market or whatever. And I'm like, oh my, you guys don't like me now. You know what I'm saying? Like, I can't not like myself. What kind of logic does that make? And there was sort of this weird awakening. It was like, bro, like, how did that happen? The only thing that keeps VJ up at night is this woman. That's probably fair. Both a good and a bad way. The government can always... Yeah, I already read that one. What is your fair share of someone else's income? Thomas Sowell. Shout out to the GOAT. I do think that's true. But I think people don't understand. I think people really do not understand that the game theory of sort of the game theory of the way a lot of like traditional conservatives think about capitalism, you are at late stages, bro. You are at a very, very late stage. People have figured out how to pick the lock. And money is not rotating in the economy to the extent that people think. I tried to explain this. I was explaining this to my wife the other night. Yeah, I don't want to go that direction here. It is a hard problem to fix. And it is a hard problem to fix while keeping our values. But it is a problem that must be addressed. We are simultaneously, living in an age of abundance while also cutting services for the poor. And we're doing that under the guise that there's all this fraud and waste and abuse. And it is true. But you need to understand that's not the poor's fault. If I'm poor, I wanted help, and some person created a nonprofit to skim off government money and left me with crumbs. The problem is still there. And so by cutting off taxpayer money to all these, these people that just sit and feed on the government teat and don't really pass it through to anybody or solve the problem that they intend to solve, it's good for people that don't have to waste tax dollars to do it. But the problem, the underlying problem is still there. And that's, I think, what we're forgetting. When people are cheering all this cutting of quote unquote waste, fraud, and abuse, nobody's going, hey, but what about the actual problem? We're not doing anything about that. And that's going to, it's likely going to get exacerbated here. Mark says, I'm thinking Elon Musk should pay the same percentage in taxes that a plumber pays, especially where his job creating tax cuts are being used on H-1Bs. Call me silly. I don't know if you guys have read or have been following this guy, Gary Stevenson, at all. If you haven't, he's a pretty interesting person to follow. I don't agree with everything he says, but he's an interesting guy. A former trader at Citibank. who left the bank, has now started a YouTube channel called Gary's Economics with the explicit sort of intent to try to teach people about the underlying dynamics in the economy from his point of view at a simple level. And his message is pretty simple: tax the rich, a wealth tax. And I know it probably makes a lot of people in this chat sort of recoil. But I think he's got a really interesting perspective. He's worth listening to. It's just if nothing else, a contrarian voice. Jack Murphy, VJ is making too much money now. It wasn't just that. It wasn't the income thing, though I did hit some income trip a long time ago. And yeah, I would hear like some of those guys, they would call out numbers and be like, oh man. But it wasn't just that, Jack. It was just like, okay, it was like an entrepreneur, a trader, a market participant, a homeowner. So like at some point in time, it was like, I'm on the opposite side of all the things that people find that there's a problem with. And it's like, man, you don't make me an enemy, bro. I've always been on the side of like this liberal sort of side, and then all of a sudden, you know, I was trying to get out of the same condition. I didn't want to be in the condition I was in or my family was in. So I made choices to get myself out of that position. And then somehow by doing that, I'm no longer allowed in the club that raised me. It was such a weird experience to go through, bro. So weird. What about all of us that paid into it? I'd be happy with all my money back with SPY returns on my investment. I know. Go do the math, too. That'll blow your mind. If they would have been, when they dropped rates to zero, and the Social Security Administration was effectively issuing these, because these bonds, the coupon on all of these bonds went to the dirt, but nobody talked about changing the investment allocations at that time. And now, after the market exploded, because that was implicit, almost explicit monetary policy at the time to create an asset boom. You know, that plan did not participate in it at all. And we never had a conversation about it. That's so crazy to me. Anyways, we'll go back to a few of these underlyings. Tesla had a decent day. It was a wild day, quite frankly. Up 0.4%, but not so much for the other automakers. GM down 7.3%, and Ford not as bad, but down about 4%. Sub $10 Ford. Do you take a stab? I think it's kind of brutal. They don't pay a lot in terms of premium, but some part of me goes, you got to take the flyer. And I'm going to tell you why you take I think it's a decent bet. Because if we go around imposing auto tariffs on everybody else, and then our auto manufacturers go under, you know, I think the incentive structure is against that outcome. So at some level, if these stocks get cheap enough, and I know I shouldn't just be doing price, I should be doing market cap, but if at some level these stocks get cheap enough, there's probably the incentive structure to buoy them in some way. We're on the hook now. Do you take a stab at any of these things? I know a bunch of Tesla bros are going to say, no way, man. Ford is a $40 billion company right now. Is it any way, any of you thinking about Ford or GM as interesting either short puts, or just adding to existing longs or going a net new long here. What do you think of Tom's short tariff trade by buying Ford? I think I didn't see his rationale here, but I like the logic. I think the hope likely is whatever numbers you're hearing today, whatever numbers or outcomes you're hearing today, the goal is to get them at least half as bad. So if they're threatening 25% tariffs, I think the goal is probably 10, and you start at 25. My wife and I were buying something, I think a piece of art. She wanted this like big piece of art, and she was like, "What should I? It was listed at a certain price," and she goes, "What should I offer?" And I said, "All right, well, you probably want it at least 20% cheaper, and so if you want it 20% cheaper." Then you gotta take it down even further from there. So you start the negotiation lower, and then you've got room to give up and land at your 20%. And she goes, okay. And she ended up sticking her number exactly, and she was so excited about it. And I think that's kind of the way these guys are working right now. I think they start at 25. They'd be willing to go higher, but that's the worst case scenario. And I think their best case scenario is to land with something probably in the middle. I think the world where they don't put these on at all, I don't think that world exists anymore. I put it this way. That's a bold statement. I would say that's no longer the base case. I think when we came into this was a negotiating tool. There was a base case that you get out of this, which is pure negotiation and very low levels of implemented tariffs. I think that was probably the base case of the market as implied by pricing and volatility. I think the deeper we've gone, the base case now in the middle of the distribution is tariffs will be put on, but they'll be put on at half or more than half lower level than the current numbers that are being thrown around. So if the market starts to believe it is going to be 25% or worse, we've got work to do to the downside. But if the world starts to believe we're going to land somewhere in the middle, not going to be 25, it's going to be somewhere in the middle, I don't think we've got that much upside in that scenario, because I actually think that's the base case scenario in the middle of the distribution right now. But I like the idea for several reasons, because even if it does get implemented at its current at half, so let's say at 10%, I think it sort of puts this administration in a weird position where they're wearing GM and Ford. They now own that position. You know, once we implement these auto tariffs, we're gonna own that position, which means we're sort of pot committed to positive outcome for GM and Ford, which scares the hell out of me, because the last time we did this, guess who that company was? You know, and it didn't turn out too well. It was Intel, and you know, we wrote them effectively a blank check for tens of billions of dollars. We haven't deployed it all, but we did write a blank check with loans and direct. With loans, what were the three tranches? Now I'm forgetting. We gave them three tranches of money, of cheap money, billions of dollars of guarantees, and it didn't work. And we're wearing that position as taxpayers. Let me pause for a second. Own Ford forever. Just scale up and down in the shares and sell strangles around them. U.S. would just buy more Ford GM and bail them out. My GM, see the only, and I'm not disagreeing with you. There is still risk though. So let me be very clear. Even if what I'm saying is true, and there's some sort of like implicit backstop in these companies, given the the protectionist policies that we're implementing, even if that's true, right? You still have opportunity cost that is your biggest risk. Because in a world where you're bailing some of these people out, you need to we got to understand what other growth assets or hard assets are going to do in that world, which is Moon, and the likelihood that these underlying companies in those scenarios are going to perform at that level is very low. So we're talking about currency devaluation, and we're talking about losing purchasing power, being invested in an underperforming asset. So just to be very clear, there's still risk there. I want to be clear. Even if it's not your traditional straight price risk. Cigarette tax was effective at reducing underage usage, cancer, and had overall helped human health. Yeah. You know what I wish they would do? We should tax alcohol more, tax weed less. Do you think I can get elected on that platform? I think I could. I actually think I could. I'm surprised Ford's payout ratio is only around 50% on a 7% dividend yield. That's the other thing. Like, when are these companies going to stop paying those dividends? It's hard because you stop paying those dividends, and now you're going to go through like the same thing. Who else went through that? Wasn't it GE? Who had to stop paying those dividends and got murdered because of it? I think it was. I think this was that point where they stopped paying those dividends. Love the crypto comment, Moon. Oh yeah. I mean, I'm going to be 39 here soon. I try not to do the cringe style where you try to use all the language that the Zoomers use and try to keep yourself young in that direction. I'm not a big fan of that. No disrespect to anyone who does it. But I think I work too hard for these brain cells to try to pretend I don't have them. Put that on a t-shirt. Bitcoin at 87.3. This is another reason that I'm not so sure. They just want to dump equity risk here. At some level, Bitcoin has been a slightly leading risk barometer. And, we're just kind of hanging in this range at 87. They're not puking them. They're hanging in this range tough. If not, we're at the upper end of the range. So if at some level this thing is a little mini leading indicator of risk sentiment, it's not going anywhere. So I kind of still think we're sideways chop market. But I will be honest with you, at down like 2/3 of 1% today, something like this, 0.5% in the S&P, I was like, maybe I should short them, and which is horrible because I never think that way. I never want to short the whole. I always want to be opportunistic. If the market was up 0.5% into a resistance area or a stretched area, or the slope of the market movement was too much, or in my personal opinion, too steep, I like to short those levels. I do not want to be shorting something that's already down most of the time. Speaking of which, GME got obliterated today. Absolutely obliterated. This one, though, I think on dilution, though, right? I think they're going to sell some stock to pay for Bitcoin. So, which is really interesting, right? Because they make the announcement of the new strategy, market gets excited. Then they lean into that liquidity, which then they're going to take in reinvest back into their strategy, which is to take that money into to buy Bitcoin. And so if the move was bona fide, why would you not be just as enthused today as you were yesterday? If it was a move that made sense, I'm going to be very careful the way I say this, because I'm not hating on the move and I'm not hating on the participants. I'm just saying from my own personal perspective, if you loved the strategy as an investor and it wasn't just a pure gamma squeeze, it wasn't just a pure let's ride this thing to the upside, then them doubling down into your liquidity to buy the Bitcoin, in theory, bringing Bitcoin's future returns into its net present value, you should be more excited about that today, in theory. I'll read you a short snippet. This is coming from CNBC here. The meme stock plunged 22.1% following an almost 12% rally the previous session. The reversal came after the video game chain announced plans to raise $1.3 billion through the sale of convertible senior notes in 2030 to buy Bitcoin. Under the sale, a round of convertible debt will require issuing 46 million additional shares of GameStop. There it is. There's the dilution. Okay. 46 million additional shares of GameStop, bringing the company's cash up to $6 billion from about $4.8 billion, according to a Wedbush analyst. We suspect share price will drift lower prior to the issuance of the convert, particularly given that the convert investor will receive a zero coupon. Is everybody going to, this is crazy. A zero coupon, and will be required to have faith that the GameStop meme phenomenon will persist for another 5 years. I do think we're setting ourselves, dude, if they're going to cut rates here, man, and the long end doesn't go nuts, I just don't get, how are we not priming ourselves for another just straight up asset boom? Not yet, but like at some point, how is this not where the game goes? With GameStop already trading at more than 2 times its cash holdings, it's unlikely that its conversion of cash into Bitcoin will drive an even greater premium, Pachter said. Oh, that makes sense. Sailor's strategy, says Lone Sovos, turned into a meme that other meme companies want to employ. Wowza. Yeah, man, I just think the game theory of this, if we can't get out of this, if we're in a situation here where our fiscal situation is going to continue to deteriorate, companies are going to look to protect the purchasing power. Now, here's the problem. If you put your money to work in CapEx, well, you're putting your money to work in capital expenditure in a highly uncertain environment. If you put your money to work in stock buybacks, which is possible, you're going to have another or a continued bid in the market. If you put your money to work, say, I'm not going to hold these high levels of cash, let's find a way to hold this in something that will maintain its purchasing power or even be accretive, like even get the street excited about how we're holding this. Then you start talking about Bitcoin. And I just think it's a monkey see, monkey do. Why would you? Companies in dominant market positions are not going to don't necessarily need to take that risk, and they likely won't. But if you're in a mid-tier position, or anything below that level, why wouldn't you take a flyer? And I think they will. I think this will continue to become a trend. this is not going to end with just Michael Saylor and MicroStrategy. States are looking at doing this. If you're running a surplus and then other states in the union aren't being as fiscally responsible, and the federal government's not being fiscally responsible, and the surplus that you're running and the cash and the reserves that you're holding on behalf of the people are getting smoked, what are you going to do about it? And we could go down the line with all different nation states and things of this nature who will likely be presented with that same decision point. And I'm not saying it's a good decision, but I'm saying if you present enough people with that choice, you're going to start to get more people that move in this direction. And if they're positively rewarded for moving in that direction, well, what do you think happens then? And then you set this chain reaction off on this asset with limited supply. Kyle Hamill says, if you're still playing in GME, you deserve what you get. Yeah, man. I mean, there's no part of me that's like in the AMC apes category or still trying to fight against some set of short sellers on behalf of some like overall cause. I'm not going to do that. But if GME, just like any other stock, to me, the underlying collateral, it does matter for a longer term investment, but as a trade, as something that I'm going to appropriately size and put a chip on the table and say, let's roll the dice. The underlying collateral, it only matters to me if there's liquidity. If there's liquidity in the underlying collateral, I don't care what it is, and I don't care what the history is. If there's liquidity in the underlying collateral and there's a volatility profile that is interesting, and a strategic way to participate in that volatility profile and liquidity, I'll do it. I'll do it probably 10 times out of 10. I would not be afraid of coming in here and fading GME or selling GME puts if it got cheap and vol was crazy expensive for whatever reason. I don't think that's the case right now, But I do agree with you. But I think that point, Kyle, probably applies to anything. If you play anything, you deserve what you get. You deserve the consequences of your choices because you get to keep. It's like everything's a mirror, right? It's a risk and reward. If you get to keep the reward of your choices, then you got to wear the risk. So I do agree with what you're saying, but I would apply it more universally, quite frankly. Diamond hands. Oh my God, I could have gone the whole rest of my life laid back trader without ever hearing that phrase again. Thank you for bringing that back, that blast from the past up. It's funny to think about sort of human nature, how we keep doing these stupid things, not only in politics, but like in price. We just keep doing these stupid things like those NFTs. And the only reason I got to the top of my mind is because of this diamond hands thing. We tend to mistake technology. We tend to misprice when there's an introduction of new technology. And sometimes, like it's if you see things through first principles, it's easier not to get caught up in that hype. And when people kept coming to me and talking about NFTs, what did I think about them? This is the question I asked everybody. I go, if you wanted to buy a painting and the painting was $1,000, a USD, and then you ask somebody what the painting cost, and you found out that they were pricing the painting in yen, would it somehow become more valuable to you? They were like, well, no. I said, okay, what if it was euros? If you found out that they priced the painting in euros, would it be more valuable? And they said, no. I said, okay, well, if you have a piece of art because all art, the original piece of art, is a one of one. And this technology is that you have the ownership as a digital token now, instead of, just maybe in olden days, it might be something like a certificate or something of this nature. So the technology has changed, but the art, the thing you are evaluating is the same, even though the technology's changed. So does the technology changing or the currency used to value the underlying object, does it change the value of the object? And I think that, to me, that was so clear and obvious, that just because you tell me this is priced in ETH doesn't mean it should be more expensive than a doodle that my daughter does that looks exactly the same. Like some smiley face on a piece of paper. And so I think that's where people kind of lost their minds. They forgot about that. Like, it's still a piece of art. What's the value of the art? And if there's no value there, then it doesn't matter how it's priced or what it's priced in or what technology you're utilizing to validate authenticity. None of that shit matters. You have a shitty piece of art that you paid a lot of money for. And so I never got on that train at all. But who knows? Maybe I'm just an old guy and I don't get it. That's possible. I leave that room open for that possibility. It's all subjective. It is, Kyle. It is subjective. But when the demand is coming not from the subjectivity of evaluating the art, it was just coming from excess liquidity and money that was hoping that if you buy any random thing, it would just go up. And unfortunately, money doesn't work like that. Let's go here. Let's talk about some of the movers for today. I thought what was interesting about today, we had this discussion about the consumer yesterday with Chris. Massive pop in Dollar Tree. And so, you've got these signals right now, man. You've got these signals that, and maybe I'm reading this wrong, right? But Dollar Tree runs 11% in one day. Meme stocks are doing the meme stock thing. The long end of the yield curve is lifting. I don't know. If I'm using my old playbook, by the way, copper's going crazy to the upside, gold's at highs, silver's doing its thing. If I'm using my old playbook, this is exactly what happened the last time they pumped these things. The last time we started easing and this thing went crazy, these were the early signals. The commodities on your screen were going higher. Rates were going higher. Short squeezes were occurring. Gamma squeezes were occurring. I'm not convinced, maybe we weren't there yet. Dollar Tree just got too cheap at 65, and now it's normalized its price a little bit. Maybe that's the case. Maybe I'm making too much of just a few random data points. But I guess I'm just telling you what I see. I'm not jumping out of the window yet, but getting a little spidey sense. Dollar General was also up 3%. So this one's been on a nasty run to the upside. So again, that growth scare, that crunch of that low-end consumer, at least some of that since the early part of the year, man, they're taking that out. Very slowly, very quietly taking that stuff out. No real other, there were some other pops, but nothing super crazy today. Everything between 2 and 4% on the day. On the drop side, obviously, General Motors, SMCI had another ugly day, down 6%. Palo Alto was down nearly 6% as well. PNW. That's sort of an interesting point. 175. Earnings coming up May 19th. These don't look so bad. Maybe we should jump in the water in Palo Alto. PANW, some short 150s or 155, 160, something in that range. We've got 50 days. Earnings after the next cycle, so we don't got to worry about earnings. Kind of like this one. Airlines. You know, I never told this group this. I never told the chat this. I scooped up a little bit of home builders. I'm probably going to betray a bunch of you by saying that. I scooped up a little bit of home builders I think I did 2 different purchases. It's not a big position. It's very small. But some part of me wonders. Some part of me wonders here. If this thing gets out of control and they've got to either drop rates or drop rates more than expected, it's going to change the complexion of the housing market. So here's the problem. Let me give you some perspective on why you should change the time frame of your charts. Because if I just look at this, which we've been watching, this 1-year daily chart, and we've been sort of trading off of this into September, we had this thesis that once they started cutting rates, that the long end would lift. Once the long end lifts, it's actually going to make housing less affordable, but houses don't respond in price that quickly. So you've got a just expensive house that's going to have higher borrowing rates. And if that happens, how can you have home builders trading at highs when you just made houses more affordable and you just made borrowing costs more expensive? How can that happen? And it took some time, but by the end of the year, that thing played itself out. And now, here's the thing. If you're still looking at a 1-year daily chart, it kind of looks like, oh, is this an interesting place to take some risk? Maybe it is, but here's the problem. If I zoom out a little bit to XHP over like a longer period of time, you can see we went on in like 2022. We went on this absolutely sick run. All of these home builders, no matter which one you bought, if it was Lennar, if it was Pulte, KB Homes, all these things went on a sick run for 2 years straight. And so is a, what's that? A little bit more than a 20% correction, maybe 25% correction off highs. Is that enough of a discount? It probably depends on your time frame. I bought a very, very little, and it was specifically for this reason. I like to set up a little bit, but I don't want to be wearing this if the real value area of this trade is somewhere at 60. But on a very short time frame, I wouldn't mind starting to throw some shekels down. That was sort of my thinking. What say you, Chad? I still think it's probably too early, but I figured I should at least put it out there because I'd squawked so much about my thoughts on housing. And the flip side is becoming true as well about these airlines, which they went on this nasty run, and they've now almost fully retraced all of that. All that Trump bump got taken out of all this stuff. Do you think airlines are cheap enough? Chat, what say you? Lobo says Tim Knight is thinking home builders going lower due to it just breaking the neckline. Yeah, I'm definitely not going to pick the bottom. That's not my game. I think that's Tim Knight. Definitely, he's the guy to listen to. For me, it's more I just think about risk reward. So I'm never ever, unless we're talking about like scalping, and I'm talking about where I want to take risk, go long or short the S&Ps or go short vol like VIX, go long bonds. Outside of that, when it comes to stocks, I just start accumulating. I pick a point where the risk reward is interesting, and then I start accumulating. I'm not going to be a pick the bottom guy in stocks ever. Victor pondering reminds me of my granddad. Play on, let me see this. D-chat, what's the last time you're referring to? Sorry, man. What did I say? Give me the full statement. I don't remember what I said that triggered that last time. O'Reilly and AutoZone popped today. No earnings, no news. Both were excellent defensive plays in the great financial crisis. God. It's not cheap. On a price basis, not cheap, but I don't know. It's multiple or valuation, so who knows? On O'Reilly, AutoZone, AZO, same thing. God damn, look at these things. How have I not seen this chart a single time? There's a few charts in the world that like are so good, you know? One of them being like Intuitive Surgical. It's this absolutely beautiful chart. It was this beautiful chart for 2 years post 2022. The home builders after 2022, up until those cuts, were beautiful charts. This is like, could you get anything better? Straight up and to the right with such little variance. Where have I been? The thesis on people. It's a play on people keeping their cars longer and repairing them. I like the idea. I don't know its valuation. And I don't love buying stuff at all-time highs, especially after a 4% dip or 4% spike in price. But maybe if the vol's cheap enough, you can buy cheap out of the money calls and just keep rolling them. Nobody here wants to do that stuff, though. Maybe that's the way. Buy these May 39s. I don't know if I love the boxing myself into May, though. At some point this year, we're going to get on the other side of this tariff scare, I think. I don't think it's going to be as bad as people are. I don't think it's being as bad. It's going to be as bad initially as people are afraid of. I don't know what the long term will be. I just don't see it being as bad as people's worst case scenarios. I might live to like somebody could clip that and like play that in 2 months and it could have been the exact wrong thing to say at the exact wrong time. I'm just not buying it yet. Anecdotally, property taxes in Nebraska are so high, folks are renting instead of buying unless you're buying $1 million home. I think that's the tough part. That's the tough part about this whole home affordability thing is that, like, it's not just the cost of the home and it's not just the cost of financing. It is also the cost to insure the home, which has gone crazy over the last couple of years. And it is also the cost of taxes in many of these places because governments are so stretched in trying to find money in the couch cushions that have also gone up. And so, like, it's all of this stuff. George Gammon, if anyone is familiar with him, he runs a channel called The Rebel Capitalist. He did a pretty decent video the other day about whether or not home prices will crash based on the executive order that a few executive orders that the administration put out around housing and home affordability with this idea. I think the executive order was to decree that some commission shall come together henceforth and create some plan to evaluate housing supply, home affordability, and it's like a five point or 5 tenant plan outlined in the executive order. And in the video, George Gammon outlines, and these statistics are out there, but like there's this statistic out there that about something a little bit more than 20% of the cost of a home right now is added due to regulation. And you can argue whether those regulations are good, those zoning and building codes, like all of that stuff creates more safer construction. You can make that argument. I'm not here to have that debate. I'm just here to speak to the estimate that around something like 20 or 25% of the cost of a home is coming from the cost of regulation, and 40% of the cost of multifamily homes are a direct input of the cost of the regulatory burden. And he does some interesting things with that number, sort of back of the napkin assumptions. If you could cut regulation and you could assume you could bring out at least that portion of the home, what would happen if housing prices, a new home price, you could get lower by 20%? Because his premise is that we price homes at the margin. So even if you have an existing home which is worth, I don't know, let's call it, depending on where you are in the country, I'm trying to use a median number, but it depends on where you're in the country. So let me just say $350,000. Your home is worth $350,000, but if the comparable down the street that is similar to your home sells at $275,000, well, guess what just happened? The price of your home. So if the new house that is going to be built in your neighborhood is 20% cheaper or a little bit cheaper, guess what that does to the value of your home? And he made this case. It's a really good video. I don't want to speak to it too much. I would just have you guys go, if you're interested in working through or sort of ideating down this potential outcome. It's on George Gammon's Rebel Capitalist channel. But he basically makes the point, like the housing market value, the total housing market value is like $50 trillion relative to the GDP, which is what, a 20, 30 trillion, something like that. So we're at like a 166% value to GDP ratio, which is pretty close to what it was right before the housing bubble popped back before the great financial crisis. I think it was 164% as outlined in that video. So it's food for thought. It's a lot of food for thought. Anyways, I kind of like this AZO play, but I got to figure out what the how to think about it as in value. You're not getting a great price here, and that's not my game. I like the theme, but apparently so does the market, and the market's loved this theme. And the other thing is, why wouldn't you see car life extend as we get closer and closer to autonomous driving? If I had to buy, let's say, if I had to buy a vehicle now, would I buy a vehicle that didn't have a self-driving mechanism? And if you do, you have to know that, like, it's going to become more common soon. Right, which will probably drive the price down, and then what you're going to have a model that's going to be obsolete, and if on a decent time frame, I don't know if it's 2 years, 5 years, 10 years, but would you buy a model, a car that does not have a self-driving mechanism in it today? That would be that would be a hard thing. If I was going to buy a new car today, I don't know what I would do. I think we're in this weird in-between area where on the other side, if you buy a car, it's actually an income earning asset. You know what I'm saying? Like, we're very close to a car going from some depreciating asset, and it will still be depreciating, but it can earn an income and not you can drive your car as an Uber driver, but there's only one thing you can do with your time if you're an Uber driver. But owning a self-driving car means you could be doing something else with your time, earning income, and this thing can be a mechanism for passive income if it can just go pick people up and drop them off on its own. So we're in this in-between period where that's not here yet, but it's on the horizon, and you don't know how long off it is. I don't know if it's enough that would be enough to change my consumer behavior. It depends on how far you think it is off into the future. Brian Watson says, I wouldn't buy self-driving, too expensive to fix when it breaks. Chris Conley, I'm going to go back to the self-driving thing. Chris Conley on housing, communities oppose new housing. This is a known problem. Blue and red communities, Americans prioritize single-family housing as an investment, so they oppose new, higher density construction. What's that? The NIMBY, not in my backyard. Is the phenomena you're speaking to, Chris? But I think this is what I keep talking about, this concept of game theory, the prisoner's dilemma, that if everyone acts in their own self-interest, if we're all going to snitch on the other person in the other interrogation room for our own benefit, then we need to understand that these conditions and these problems don't get better, they get worse. Home affordability gets worse, not better. Homelessness gets worse, not better. Crime gets worse, not better. Inequality gets worse, not better. If nobody plays the game effectively as a collective, the trajectory is obvious. So if people care about home affordability, like if the 60-ish%, I think America is at like 60-something% homeowners. So I'm going to use 65%. So let's say we have a 65% home ownership rate. As soon as you buy a house, the only thing you want that asset to do is appreciate. So your rational self-interest means that anytime something comes up at city council to build some